and let's look at that because Wall Street ended Wednesday's trading session a bit lower, where we saw Dow actually closing with losses of 136 points, while the S&P 500 closed nearly 0.5% lower. Looking at the tech-heavy index Nasdaq, that also closed 100 points lower in trade in the red, while we had three major averages which ended the session lower after the Fed actually paused the interest rate cutting campaign. Now, CNBC's Steve Leisman is bringing us a report on Fed's decision to leave the rates unchanged. Let's go across to him. Okay. Let's also, listen into the Federal Chair Jerome Powell talking about Fed's policy stance, progress on inflation, and more.
We are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy is in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Okay, and responding to the questions on President Trump's demand to cut interest rates, Fed Chair Powell said that it is not appropriate for him to comment on President's remark, and he is not in touch with Trump. Let's listen in.
I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Okay, let's also listen into what David Zevos, chief market strategist at Jefferies, had to say on Fed's latest decision.
I thought there was a chance that Jay could have broke that tension today and maybe said something like we're looking at what deregulation means for inflation. We're looking at what the tariffs and immigration policies mean. We're kind of coming up with our own versions of it. But he really is playing it as low-key as you possibly could. He just did not want to talk about anything related to the new administration. We're going to have to step up and start saying things sooner rather than later. And, we're going to be watching these Trump tweets post-FOMC meetings probably closer than we're going to be watching the SEP and the statement in the coming months.
Okay, let's go across to CNBC's Steve Leisman, who's bringing us a report on Fed's decision to leave rates unchanged.
The Federal Reserve maintaining the funds rate in the range of 4.25% to 4.5%. They did say that inflation remains elevated as it had last time, but they crossed out a line this time saying that inflation has made progress towards the 2% objective. Not 100% sure what that means. Perhaps we'll ask Powell about that. Is that hawkish or just getting rid of a tired old phrase? They say labor market conditions remain solid. They had said that they had eased, so they did an upgrade of the condition of the labor market, also noting that the unemployment rate has stabilized at a low level. The economy, as they said last time, is expanding at a solid pace. The committee is watching risk on both sides of its dual mandate. The statement says the committee is still considering the extent and timing of additional adjustments. No hint as to when that might happen or by how much, and no change to the balance sheet reduction plan. They'll keep reducing the balance sheet as they have been. As the statement has said in the past, it says they're prepared to adjust policy as appropriate if risks emerge. And we have a unanimous decision with new voters for the new year. January 2025 is when they turn over. We have Schmidt from Kansas City, Collins from Boston, Musalem from Kansas City, and Goolsbee from Chicago. So a bit of a Midwest contingent voting this time, sans Minneapolis.
Okay, on that note, we're going to step into a very short break, but we'll tell you about how these overnight cues will impact the Indian market after the break, so stay tuned in.
create history as the first woman finance minister to present her 8th consecutive union budget. From replacing the colonial-era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her leadership. Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The credit guarantee scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this scheme provides collateral-free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme. Announced in the budget 23-24, this initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers taxpayers a chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of measures supporting MSMEs and businesses were introduced under this initiative during the pandemic, emphasizing self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an attractive destination for global investments. The optional personal tax regime, or the new tax regime in 2020, now simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes.
Sure.
Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. Now we have our research team joining in with us to set you up for the trade today. How is the trade set up? What are the important stocks to watch out for? As well as what are we expecting in the world of F&O? So let me start with you, Vivek. Good morning. How is the market setup looking like? Nifty implied open is indicating a very, very flat start as of now.
That's right, Winnie. Good morning. First up, like you mentioned at the start of the show, so many overnight cues of Fed pausing rates, US market ending slightly lower, whole host of companies, especially in the US, mega stocks or mega companies that have actually delivered their results. So quite a lot to digest before market opens today. But overall, slightly muted handover as far as US markets are concerned. Oil prices too slipped yesterday, after the brief respite they saw on Tuesday, once again fell, and Brent now hovering around the $76.50 a barrel mark. Well, Indian markets yesterday enjoyed a very strong session, and the key highlight was the fact that there was a very strong bounce back as far as the broader end of the markets are concerned. Mid-cap and small-cap indices bounced back very sharply yesterday, and that is something that made portfolios feel a lot better. Advanced decline ratio in yesterday's trading session was very, very strong. Now, yesterday you actually saw outsized reactions to good earnings, and that is something that the market will look for even today. So TVS Motors, Syrma, KPIT Tech, CG Power, Deepak Fertilizers, all of these companies reported earnings as the day first day, post-market hours or yesterday during market hours. All of them saw very strong up moves. The other set of stocks that were in focus was the pharma pack. Remember, pharma pack sold off very sharply. This is after there was a pause as far as funding was concerned. There was also worries about tariffs coming in. After that, there was a very sharp sell-off. But yesterday, the entire pack did very well. A sharp bounce back as far as pharma was concerned. Earnings reaction today. Some of the key stocks include Tata Motors, Bajaj Finance. Key results today: L&T, Steel Cement, whole host of other companies too will be declaring their results. Asian markets, GIFT Nifty, all indicating a very flat start for our markets today.
Okay, Vivek, thank you so much for that. But let's go across now to Hormaz, who's here to tell us which are the important stocks that we should be keeping on our radar. Hormaz, I'm sure there's a long list of earnings that are there in this list.
Morning, Vinny. And if it's not a long list, it's problematic, right? During an earnings season. So yes, it is indeed a long list. Tata Motors to start off with that overall results were a miss on expectations, but the commentary is something that the street might take some heart from is that they remain JLR wholesales will improve further in the fourth quarter, and they are on track to achieve the profitability and cash flow targets in FY25. But they remain watchful of the demand situation, particularly in China, and there have been some brokerage downgrades that have come in as well. Bajaj Finance's results saw double-digit growth on the NII and the net profit front. Asset quality was stable, but for the FY26, they expect net profit to grow between 22 to 23%. They expect AUM growth of 25%, and they also see credit costs at 2% in FY26, provided that the fourth quarter credit cost remains between 200 to 205 basis points. And they also said that they are on track to cross 100 million customer franchise by the end of FY25. Now, Blue Star's results were either in line or above expectations on a year-on-year basis as well. Sees healthy growth in revenue and margin expansion as well, so you keep an eye out on that. Raymond's revenues were up 40%. Margins also saw an expansion of close to 300 basis points from last year, so another positive result on the operational front from Raymond. Aarti Drugs said that this API segment faced some pressure this quarter because of lack of demand and reduced market prices as well. However, they said that they remain confident of double-digit revenue growth and 13 to 14% margins in FY26. SRF's results, where the chemical business finally saw some growth after a slew of disappointing quarters, but they said that they are seeing gradual increase in demand for the chemical business, and the fluorochem business also saw support for refrigerants as well. Remember, the stock was higher yesterday after Gujarat Fluorochem said that refrigerant gas prices may increase in the future as well. Restaurant Brands Asia, well, their net loss widened from last year. Margins also narrowed on a year-on-year basis, so keep an eye out on that. JK Paper, the struggle continues there. Net profits are down almost 70%. Margins are down almost 1,000 basis points from last year. It'll be interesting to see what the management has to say on this. And lastly, Sona BLW, where they've signed an MOU with the E-Plane company to develop powertrains for eVTOLs and drones. And lastly, GR Infra, which has emerged as an L1 bidder for a Western Railway project worth 260 crore rupees. Back to you.
Okay, Urmas, thank you so much for all the stocks that we should be keeping on our radar this morning. But on that note, let's go across to Sudarshan, who's here to tell us what's going to be happening in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So both domestic and global cues are looking mixed after a strong day of trade that we saw yesterday. We saw mid-cap index closing with gain of more than 2%, while it was a healthy gain for both Sensex and Nifty. For today, GIFT Nifty is indicating a very flat start. Talking about the flows, FIs continue to sell. Yesterday, they sold more than rupees 2,500 crore in the cash market, while DIs have bought nearly rupees 1,800 crore. But in the index future side, in the index option, FIs have bought nearly 21,600 crore, and in the stock futures, they have bought nearly 2,900 crore. Now in the last 6 days, they have bought in stock futures nearly 10,000 crore. But talking about the index futures, they bought yesterday 166 crore, and they have reduced long positions by 6,850 contracts. Also, they have reduced short positions by more than 19,000 contracts. With this, FI's long exposure now stands around 25%, and on the client side, long exposure is around 70%. On the option side, two calls, 23,400 and 23,000 calls were active, and now looks like on the downside for Nifty, it's capped around 23,000. So support is now seen somewhere around 23,000, and resistance is now at 23,350. That is also 20-day moving average. Two stocks that will be in focus. First, KPIT Tech. Earnings were mixed, but guidance, they had raised EBIT margin guidance, and even in the commentary, company has given a very strong commentary, so stock will in focus. Second is Laurus Labs. Previous two sessions before yesterday, stock had seen a big fall, but yesterday you saw that stock moved 7% higher after US government announced that executive order that government announced a few days ago. Now it has paused that executive order. That's the reason we saw a big move in Laurus Labs. So keep an eye on these two stocks.
Okay, thank you so much for that, Sudarshan. But on that note, we're going to slip into a very short break. Up next, we'll get you what's happening in the world of commodities with Manisha Gupta, so don't go anywhere.
such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments. The abolition of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. Now it's time to go across to Manisha Gupta, who's here to tell us what's happening in the world of commodities. Manisha, crude, are we seeing a decline here today? What is the trajectory coming in there?
Well, absolutely. It hasn't been such a great time for the crude oil prices or crude bulls for that matter, because since the U.S. President Trump has come in, he's been talking prices down. So much so that we are now trading at the lowest level in 2025. Also, the U.S. crude inventory is gained more than expected by 3.5 million barrels. Libya also has returned back to its normal exports. Libya, remember, has an ongoing civil war, and there are some disruptions from time to time. But at this point in time, the exports are back to normal. Also, the markets are watching out for the OPEC and allies meeting, which is on 3rd of Feb. As of now, the U.S. president has asked OPEC and allies to increase production and ensure lower prices. OPEC has not responded to that, but Feb 3 could be important in the sense on how OPEC deals with this. So this is what is weighing onto the markets right now. But on the other side, most of the metals also are trading weaker. The U.S. has held its rates steady, has given very little guidance on the future rate cuts as well. So that is what is bothering the street. But we have seen a rate cut come in from Bank of Canada, and there is an expectation that European Central Bank could also lower rates this week. The meeting is on Thursday, that's today. You have seen the gold prices come off its highs. Silver fell 0.5% yesterday. Aluminum prices have continued to decline. Copper is trading at a 3-week lows as well. So as far as metals also go, there is really no direction coming in from the U.S. markets right now. What happens on 1st of Feb in sense of tariffs will tell you on how the future would be. But for the next 2, 3, 4, 5 days, it's going to be perhaps very, very volatile.
Okay, surely volatility is what we're expecting in the next few days at least. But thank you so much for that, Manisha. Now moving on to some national news updates that we have. The stampede that took place at the Mahakumbh festival claims at least 30 lives and leaves over 60 injured. The stampede took place at the Sangam Nose in Uttar Pradesh, Prayagraj, as large crowds thronged the ghats for a holy dip on the occasion of Mauni Amavasya. UP CM Yogi Adityanath has also set up a 3-member commission to run a judicial inquiry into the stampede that took place at the Mahakumbh festival last morning. Congress President Mallikarjun Kharge blamed a VIP moment and half-baked arrangements. Samajwadi Party Chief Akhilesh Yadav urged the state government to help those affected. And the unfortunate incident in Mahakumbh, however, has not deterred devotees from flocking to the region. Given the massive influx in pilgrims, airfare prices have soared, after which the Civil Aviation Minister chaired a meeting to discuss the airfare prices to and from Prayagraj. Government sources tell CNBC-TV18 that airlines have requested to ensure a return ticket from Delhi to Prayagraj does not exceed 24,000 rupees. Airlines have also assured the Ministry of lowering airfares on other routes to Prayagraj. Okay, with that, we are absolutely out of time on this edition of Power Breakfast on CNBC-TV18. Thank you so much for tuning in. Up next, your Basan Morning Call.
It's incredible. I saw it 20 years ago in the middle of the summer, and this is a very different look. Obviously, it's a little brisk out here, but we wanted to take a little detour and come and see it in the middle of the winter.
I've seen quite a few waterfalls, but this is something else.
प्रातः 1 बजे से 2 बजे के मध्य मेला क्षेत्र में अखाड़ा मार्ग पर भारी भीड़ का दबाव बना और इस भीड़ के दबाव के कारण दूसरी ओर के बैरिकेड्स टूट गए और भीड़ के लोग बैरिकेड्स बांधकर दूसरी तरफ ब्रह्म मुहूर्त के स्नान का इंतजार कर रहे श्रद्धालुओं को कुचलना शुरू कर दिया। यद्यपि प्रशासन ने तत्काल राहत और बचाव कार्य करते हुए ग्रीन कॉरिडोर बनाया और एम्बुलेंस के माध्यम से लगभग 90 घायलों को
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay, with me Nigel D'Souza and Prashant as always. And what we've got is a fairly sort of calm morning and nothing unexpected. And sometimes, Nigel, that's not such a bad thing, right? Long expected lines.
Well, that's right. Surabhi, good morning. And in fact, if you wanted action, you've got plenty of it today. You've got earnings that are coming out there.
Yeah.
The global markets as well will be reacting to what the Fed had to say. There's the monthly expiry that plays out, and it's 2 days ahead of budget. So, fasten your seatbelts. You've got plenty of action in the next 2-3 days.
Already dizzy. So much going on, right? But at least, the events are getting done one by one. So last night's event obviously was the Federal Reserve meeting, went along expected lines, no change in rates. Some volatility on Wall Street, a little bit of a sell-off, but then finally a recovery. So again, while the picture on the street was negative, there was red color, but it was off the lows of the session. So that's the good news. Lots to talk about today. Prashant, good morning.
Morning, Surabhi. Morning, Nigel. And Fed was a non-event, right?
Yeah.
Absolutely non-event. It's very few times that you have a Federal Reserve meeting and, people are saying, well, okay, so what? Is that kind of a... But it was expected that it's likely to be a non-event, and thankfully that's the way it panned out. So that's point number one, because there are a few other cues that we want to get through as well. Equities initially reacted to the hawkish tone of the statement, the Fed FOMC statement, because they removed the phrase, inflation is making progress. Yields went up, equities were down more. But then during the press conference, a couple of times, more than a few times, Chair Powell indicated that the removal was not meant to send a signal, a specific signal. I mean, the phrase inflation making progress, removing that is not a signal that inflation is not making progress. He then went on to explain how, the rental component, etc., is softening. That's the more sticky part, etc. So markets took note of it. Equities actually came back up, and I'll get to the price action in a bit. The other was mega cap tech earnings, which came through as well. And these are tentative stock reactions, all post-close. Microsoft 5 down, Tesla 4 up, and Meta about 2% higher. And I think over the next 1-2 hours or so, because there were conference calls which were happening, and I think the full import of what happened in those calls, etc., will come through. The number one talking point in those calls, of course, is going to be DeepSeek, and whether these companies which have guided for tens of billions of dollars in capex will need to pull some of that back. Because you don't need that much capex. As the Chinese have shown, you can do a lot with a lot less. So I think we'll have to, this is still an evolving story in that sense. This is, the change post-close, and those numbers are changing as we speak. Now, the overnight close of the main indices, S&P down 0.5%, NASDAQ about 0.5% lower. This is, of course, much improved compared to where we were at one point in the US session. Dollar, again, 2 days now, dollar is flat and the 10-year is flat as well, nothing at all. And of course, oil prices 0.5% here, 0.5% there, nothing meaningful, which then gets us to where we are here as far as India is concerned. So we saw follow-up buying, and we closed around the highs of the session, unlike the previous session where actually the market came off quite sharply from the highs. So 23,163 is where we left off. And I said this yesterday that, time for a little bit of sort of repair and recovery, and I think that is essentially what we've been seeing for the last two sessions, from the lows day before yesterday and from the start yesterday. So next levels for the Nifty, at least just markers, are 23,356 20-day, and then the 40-day exponential, which is 23,600 roughly. These are the two numbers on the upside. And I don't think, for today we need to worry about the lows, but I think because there are big events, which can cause big swings, like for example, the union budget day after, I mean, that low still is in reckoning. 22,786 is that number on the lower side, which should not be broken. Nifty Bank closed around the 20-day moving average yesterday. So the pace has been quicker here because the RBI intervened on liquidity. The 20-day stands at 49,191. We left off about 30 points under that level. And the next number is 50,077, which is the 40-day exponential moving average for the Nifty Bank. Low, corresponding to the Nifty on the Nifty Bank is 47,844. So that's broadly the picture. GIFT Nifty will tell you what the open is looking like. It's absolutely flat. 10 points or so higher is what we have. Lots of individual stock action, which we will get to in a bit from now. Surbhi.
Yes, Prashant. Sometimes uneventful is good. I think the markets had a lot of noise and news. So the fact that the Fed meeting was along expected lines and we didn't have too much of move in either equities or, treasuries or the dollar perhaps, that's quite okay. This morning, cues across Asia are thin because of the Lunar New Year holiday. Plenty of the markets like, China, Hong Kong, Taiwan, South Korea, most of them are shut or are, only partially working couple of hours. The big ones are showing up a mixed picture for the time being. Australia is the one market that's been trading, and the other ones, the Nikkei in Japan. And those markets have been extremely range-bound. Nikkei is absolutely flat. Australia isn't doing much either. So not too many cues from Asia. Which brings me to the oil markets, actually. I was watching the oil inventory data out of the US, and there was a drawdown. Stockpiles were, however, still higher than what was anticipated. And that's been the case last couple of weeks. And if you map what Brent has done, yesterday oil was, by the way, down over 1%. Now this morning it's flat. If you map what oil has done in the last 2 weeks, it's quite dramatic. Brent oil moved from a high of 82 to just about 75 now, which is fantastic news for us here in India. That's an 8-9% drop in a matter of 2 weeks. So pretty significant. So let's keep an eye out on that. Coming to the situation here back at home, yesterday was a much needed relief for the bulls, a day of recovery and a very broad-based recovery. It wasn't just the Nifty, it was spread across sectors, it was spread across market capitalization. The mid-cap market did very well. We had the market, thumping the table on good numbers, and we haven't seen that in a while. So numbers made you feel good as well. And the bulls will hope for more of that. The only caveat is today is Thursday. It is not just weekly expiry, but it's also the monthly expiry. So brace up for some volatility, especially in the second half of the day, perhaps. Let's come to the flows picture. FIs are still selling. Nothing has changed here. Almost 2,600 crores of selling yesterday, and about 1,800 crores of buying from the domestic institutional side, which is telling you that yesterday's recovery was hinging more on the other category, the unmapped data, so to speak, individuals, large HNIs, family offices. Perhaps that's where the money is also finally beginning to come through. Lots of results in focus, and just sort of a quick curtain raiser to our top 10 segment. On Bajaj Finance, people are going to now argue. They've guided for lower growth next year. They're talking about 25% AUM growth. There's a minor sort of, increase in the gross NPA levels, slight increase in credit costs. So let's see how the market deals with this. Tata Motors is an operational miss. There's pressure on the margins, not looking too good. But at least they're retaining their targets on JLR in terms of turning net cash positive, etc. So let's see. Blue Star is strong. It's a good set of numbers. You'll hear from the management on the show as well as we go along. And the margin beat is almost 40 basis points. So it's looking really good. Voltas is a miss because their unitary cooling product segment, which is basically their AC segment, the revenue is fine, but there's a serious pressure on margins over there. So we'll try and find out what went down over there. And SRF, very interesting. I'll watch for the chemical stocks because Nigel had flagged this off yesterday in closing bell. A couple of the chemical stocks like Deepak, as well as Ami Organics, I think it was, they all came out with good numbers. Now SRF is keeping that trend intact. Good numbers from this one after a while. So let's see how the market reacts. So I guess a lot of individual stocks in focus, but Nigel, then it's also expiry day. Anything can happen.
Well, that's right. And the thought that came to my mind yesterday because it went viral was the great Rakesh Jhunjhunwala, what he used to say, right? When a stock doubles, you need to have patience out there, and you need to have conviction. But when it halves, you need to have the stomach to take that. So you need to take the blows if you want to have those multi-bagger. Just thought I'll put that on board as well. But today, well, it's a big day, as you said, weekly expiry. But before that, the government intent is giving you signs that maybe, in fact, this budget could actually be good. And I'm just latching on to something that came in from the Finance Ministry overnight. They said that they have approved a scheme to strengthen the MSME manufacturing sector. Well, you could say it was expected. Well, you could say that, in fact, it's only been approved. But at least it's giving you that intent that the government is focused. The government is focusing on capex, on the revival as well. And they're noting that there could be a bit of a problem on ground and they need to do something about it. So that's raising hopes that maybe this budget 2025 will have something to offer both for the economy as well as the markets. Let's get to the data points then. Today's the end of the series. The January series hasn't been a great one, but we have pulled back from the recent lows in the last couple of trading sessions. We're going to end with a cut in all probability. But can the bulls end with a flourish? They like to do that. So we'll have to keep an eye on that front. Rollovers a little bit higher, both on the Nifty as well as in the Nifty Bank in comparison to the average of the last three series or so. So both of them come up for you on the screen. What do the FIs do? Well, again, the net short positions have come down. But as I've been saying, there's an element of short covering, yes. But there's also that element where, in fact, the lot size has been regrouped. And for the next month, for example, the Nifty lot size will be 75. And for this month, it's around 25. So that's why that element of, of a change in lot size as well is in there. Shorts continue to remain at around 75% or thereabouts. So these FIs are still net short. If you can get some positive news, you can get some couple of announcements coming in there, monetary policy as well as support in the budget 2025. These FIs are going to get stumped on the wrong side. That's the hope, at least as of now. Options data comes up for you, and the nearest two strikes that were active in trade yesterday, they come up for you on the screen. And since the 23,150 call was fairly active, the levels on the upside are very, very important. So the Nifty Bank yesterday did quite well. It clawed up close to around 300 points or thereabouts, and it ended at around the 20-day MA. So that's important. You'll want the Nifty Bank to build on from here. While the Nifty, it's around 150, 200 points away from its 20-day MA. The bulls would like to get closer to that mark. So these are the crucial levels. The recent lows become your reference point. But as I said earlier, the intent coming in both from the RBI as well as the government, I would take that as a positive. If we are seeing a slowing economy, you want the intent to be positive. And that's precisely what we've got.
All right, Nigel, thanks very much for that. Well, the Fed left its policy rates unchanged. And of course, there was not very much new to learn from what he said. It's largely a wait and watch stance. Listen to a quick soundbite of Fed Chair Powell.
We are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Well, there were lots of questions about, President Trump asking him to do stuff and lower interest rates. And as expected, he didn't say very much. Not appropriate. And, that's to be expected. Well, Drew Pettit is with us, Director, U.S. Equity Strategy and ETF Analysis and Strategy Research at Citi. He's with us. Drew, great to have you back on the program. Thanks very much for your time. So I don't know if you should even touch upon the Fed. Is there anything new at all? Did we learn anything new?
I think you guys pretty much nailed it in the open of the show. No, it did feel like a non-event. The one thing I would say is that's really good news that it was a non-event, because I think leading into this, the U.S. market was actually more susceptible to a move higher in rates than it was maybe, say, a month or two ago. So honestly, non-event in rates after you had a little bit of that volatility in the middle of the day. But we kind of saw once it settled back down, equity markets came back off the lows of the day.
Okay, so what's keeping you busy in terms of tracking markets? Is it? By the way, let me ask about this entire AI thing after DeepSeek. I mean, what's the view? Latest, where are we at in terms of evolution of that view? Initially, it was a shock. Then it was like, okay, it's going to democratize the use of AI, lower costs for everything. We've had numbers from Meta, Microsoft, Tesla. I've not seen what they've said during conference calls, etc. But what's the view?
So honestly, our view hasn't changed. I think if you're going to position in a disruptive and new technology, you want to have exposure across the value chain. The thing is, when we think about the U.S. market in stocks, we've been talking about NVIDIA and semiconductors for over 2 years now. But what we were seeing is opportunities in the creators, let's call it the application layer, like software, for example, and then some of the end users. That can be industrial companies and other types of companies that are going to take AI products and integrate it into their own products. That could be a car, that could be a better robot in manufacturing, that could be in navigation, for example, and make their products better. So what ended up happening on Monday is that AI trade punished the enablers. anyone building data centers themselves, or semiconductors, it didn't really hurt the software creators making applications, because as you said, lowers your cost base, makes development easier and faster, and it actually helps some of the end users who were up on the day. So it was an AI sell-off, but it was a very concentrated sell-off.
Sure, yeah, and it's always, someone's loss is someone's gain, as they say. So even if you move to lower chip prices, the rest of the AI chain can probably benefit. And I completely concur. I've been hearing that view as well from a couple of experts. So understand that, Drew. But tell us, where are you putting the money? Beyond U.S. equities, are you looking at any other market? How are you looking at the rest of this quarter, say, in terms of just, your deployment strategy?
Yeah, so funny. I'll give you something within the U.S. that I think is really interesting. Healthcare. So it's funny here politically, people have been worried about the healthcare names, but honestly, they're not priced for any good news. I think some of the pharmaceuticals in the United States basically just have to sell their current portfolios at expected rates to really make these stocks work. So I think healthcare and pharmaceuticals in the United States are an interesting trade to think of throughout this quarter. And then thinking globally, to answer your question, I think barbelling the United States with Europe, that's been our call. I think that's where you get value. Europe provides you value. Its revisions have really stopped moving lower. I think that is the opportunity, if we get a bit of a cyclical rebound there at really low valuations, to get a tactical bump if the U.S. hits some volatility like we expect near term.
But that's really interesting, Drew. So to play that tactical balance, you're looking at Europe and not, the original favorites, emerging markets like India or China, which are both not doing well. I mean, we take that. But Europe over some of these other themes?
Yeah, honestly, it really comes down to revisions have not been worse. Positioning also very, very, very net negative. So if you're looking for a value trade, that's where you have the most leverage. I really think our colleagues in Europe have really spun this very interestingly, because right now, like if you're looking for growth in the world, the growth engine has been US mega cap. It's been in the US indices. So in a sense, emerging markets gets you more cyclical structural growth. The United States, it really gets you this tech and thematic growth. So the barbell with the most leverage, honestly, we think is Europe right now.
All right. Hi, Drew, and good to see you, Ben. And you've maintained that stance, right? Neutral on emerging markets, while you were relatively more positive on US as well as Europe. Where does India fit into this piece? Because from the time you had that neutral stance on emerging market, and India included, we have pulled back a few percentage points. What will make you turn your attention to India?
Honestly, I think a lot has to do with how really Trump and U.S. policy plays out from a global trade perspective. Honestly, when we think about markets globally in the U.S., right now it's kind of currency volatility that gets us nervous. And it's not so much backward looking, it's what can happen, forward looking with tariffs. Because honestly, we don't think markets globally have really priced in tariff risk. India could be a big beneficiary of that. Especially if China, for example, I would say gets targeted more aggressively in tariffs, which seems to be the rhetoric. But honestly, right now, I think a little bit of a wait and see, more of a neutral stance in emerging markets makes sense until we really work through some of the potential headline risk coming out of the U.S. government.
Absolutely, Drew. And we just want to end with that, exactly that, whether you've been able to do the math around this and put any numbers to the tariff headlines that we have right now. So 25% Canada, Mexico, then I think he's at 10%, China to start with. What does all of that do in terms of just the implications and the impact on U.S. equities? What's your base case model on tariffs and the market impact?
So a little bit of back of the envelope math, because the problem here, when we think about the U.S., it's really a stock by stock problem. A lot of people have gone down the path of, some companies buy a lot from international sources, maybe they're targeted, but if they're buying from an international source, manufacturing and selling in an international country, it actually doesn't get tariffed. So it's a little bit messy. Services don't get tariffed, goods do. So that's another thing we have to factor in. But high level, we think for every 10% increase in import price inflation, you should get 200 to 300 basis points of gross margin impact in the US market. We're going to have to narrow this down on a stock by stock basis. But where I think investors and where we want to look near term for impacts is in DXY, the US dollar index. So as the dollar index strengthens, we actually think that's a net negative for stock markets near term. And on top of that, let's go a step further. Keep an eye on implied volatility on the dollar.
Right.
Because I think if that rises, which it's come down in the past week or so, but we saw a little bit of noise around some of Trump's speeches, dollar volatility rising on top of a stronger US dollar is all equity negative. So I think we really have to kind of work through the headlines and see both of those come down to really be off to the races in equity markets again.
All right, Drew, thank you very much. Good conversation as always. Thank you for sort of taking us through all of that. Look forward to our next one. Well, what's lined up here? Lots and lots of corporate interactions, essentially. So 8:35, just to give you a quick sense of what's coming up. We'll have the management of Quest Corp joining us on the third quarter earnings. 9 o'clock, we'll have the management of Brigade earnings and outlook. 9:20, Gautam Shah. We talk technicals. He's a market master of the day. 9:30, the management of Blue Star. About their third quarter numbers. We'll have KPIT Tech, which reported earnings. And as always, the management with us at 9:40. Hitachi Energy, the stocks, of course, sold off quite a bit. Third quarter earnings and outlook here as well. And, of course, it's the economy. 10:15, Lata in conversation with, folks from Stancy and Axis Bank. And, of course, the FOMC decision and the RBI next week.
Well, time to slip into a short break. A lot of stock-specific action to track for you in our special Top 10 segment. Here's the list. Bajaj Finance, SRF, Hitachi Energy, Blue Star, Allied Blenders. All of them will react to positive news flow. Add to the list, Solar Industries. On the flip side, you have Tata Motors, Maruti, Voltas, Wipro, Whirlpool, apologies. All of them will be reacting to negative news flow. So we'll keep an eye on them. Slip into that break, come back. We'll get into further detail on all of these stocks.
परंतु इसमें से दुर्भाग्यपूर्ण तरीके से 30 श्रद्धालुओं की दुखद मृत्यु हो गई है। 30 इनमें से 25 की पहचान हो चुकी है और शेष की शिनाख्त की जानी बाकी है। कुछ लोग बाहर के प्रदेशों के भी इनमें से हैं, जैसे कर्नाटक के 4 लोग हैं, असम से 1 है, गुजरात से 1 है। कुछ घायलों को परिवार के सदस्य को लेकर चले गए हैं तथा 36 घायलों का इलाज स्थानीय मेडिकल कॉलेज में चल रहा है।
Welcome back. You're with us on Bazaar Morning Call, and the queues this morning across Asia are pretty thin because of the Lunar New Year holiday. We only have like Japan and Australia, the 2 major markets that are trading. Implied open is suggesting that we'll have a quiet start, but if the bulls can build on yesterday's big pullback, they will definitely like that. Let's talk about stocks because lots and lots of numbers have come through, and our team is standing by with the CNBC-TV18 list of top stocks to watch. As morning to all of you, Sudarshan, Tata Motors, how is it looking?
It's a weak set of results. earnings have missed estimates and margin has missed estimates despite PLI benefits coming in Q3 FY25. EBITDA is down 15%. Margin has come in at 11.5% versus our poll of 13.7% and against 13.9% in the same quarter last year. And that's mainly because of the demand, not only in the domestic business, also in China and Europe. For JLR, EBITDA margin is down 200 basis points and it has come in at 14.2%. EBIT margin has made a minor improvement of 20 bips and it has come at 9%. As far as outlook is concerned, JLR EBIT margin outlook of 8.5% or more has been retained. Also, companies say that cash flow positive, on the guidance on cash flow positive also for JLR is maintained. As far as brokerage are concerned, they're largely negative. Jefferies has downgraded to underperform. Target is to be 660 per share. It has also cut FY25-27 EBITDA estimates by 7 to 11%. UBS has a sell call and target is to be 760 per share. It says it has ambitious Q4 amidst uncertain FY26 and 27. MS has an equal weight call, target is 853, while CLSA maintains outperform call and target is 930 per share.
Okay, all right. Thanks a lot for that. Sudarshan, not so good then for Tata Motors. But Abhishek, Bajaj Finance, good enough?
Well, a very strong set of numbers are coming in from Bajaj Finance. They have beaten our poll both with respect to NI and the PAT. So their capital adequacy ratio has remained stable despite the fact that annualized credit cost has increased for them to 2.16% from 2.13% in the previous quarter. The management did indicate in the con call that the worst is behind and now they expect the credit cost to moderate to about 200 to 205 basis point in Q4. Calculation shows that the net interest margin was largely stable, a decline of only 2 basis points sequentially. The asset quality has seen slight deterioration. Gross NPA is up to 1.12% versus 1.06% in the previous quarter. In absolute value wise, 12.8% gain on gross NPA on a sequential basis. NII and PAT is ahead of our poll. Key con call highlights, they have given FY26 guidance wherein they estimate PAT growth of 22 to 23%, AUM growth of 25%, credit cost to be maintained at 2% provided that Q4 is around 200 to 205 basis points. A key highlight is the management transitions that they do anticipate. So they expect the board to take a decision on Rajiv Jain's at the group level by Q4 FY25 and that will be keenly watched by the street. Back to you.
Okay, all right. Abhishek, thank you very much for that. So Bajaj Finance in focus. Let's go back to auto, right? Tata Motors not so good. What about Maruti? Sud is here with details. Sud, back to you.
So company announced earnings yesterday. Earnings were absolutely in line with estimates, but commentary is not looking that great. As far as demand is concerned, company says demand remains subdued, and especially on the urban front. In Q3, rural areas saw a growth of more than 15% or say 15%, while in urban area growth was just 2.5%. Also, retail growth for industry in FY25, earlier guidance for industry was 3 to 4%. As of 9-month FY25, company says industry has seen a growth of 3.5% and also expects in Q4 the growth to remain in the same range, that is not range, exactly at 3.5%. So demand remains a concern. Brokerages are largely positive on the stock. HSBC has a buy call, target is 14,000 per share. It says it sees domestic demand remaining muted in 2025, but export may be key driver in FY26 and FY27. MS has an overweight call and target is 14,942 per share. Nomura has a neutral call and target is 13,290 per share. It says domestic weakness is a risk to watch out for Q4. So earnings were in line, but commentary is muted. That's the reason I'm going with minor red for Maruti.
Okay, of course, respect for them because they're saying it as they see it and not sugarcoating it. But yes, from a market perspective, got it. Sudarshan will keep it in mind. Maybe some pressure this morning on Maruti. Let's talk about brighter things. SRF. Upasana is here with us. Upasana, numbers better than estimates after a long time, right?
Certainly, Surbhi. Well, good morning. Companies reported good set of numbers above street estimates. This good performance was mainly supported by companies' chemical business. Now, after several disappointing quarters, companies reported a 14% top-line growth. coupled with margin expansion of nearly about 120 basis points in company's chemical business. Now, overall EBITDA was mainly supported by packaging films business, which was offsetted by muted performance that was seen from company's technical textile business. Now, coming to numbers, revenue stood at 3,491 crore with an uptick of 14% above street estimates. EBITDA stood at 619 crore, up 9%, certainly above street estimates, and which led to a margin expansion of nearly about EBITDA margin stood at 17.7%, down about 18 basis points on a YoY basis, while street was estimated somewhere around 17.3%. PAT stood at 271% with an uptick of 7% on a YoY basis, and mind you, management has indicated that it is seeing gradual increase in demand in the chemical business and has also indicated that fluorochem business saw strong support from refrigerants. So overall, good set of numbers from SRF.
All right, thank you very much for that. Let's talk about Hitachi Energy next. And by the way, you'll hear from the management a little later in the program as well. But numbers first. Vamakshi, morning.
Well, good morning, Prashant. Yes, the numbers look good this time around. It's an operation-led beat. When we look at the revenue, that stood at 1,620 crores. This is an uptick of almost 27% on a year-on-year basis, and it has come in 1% below expectations. But operationally, the performance was very strong. When you look at the EBITDA margin, that has improved close to 500 basis points, coming in at 10.3% as compared to 5.3% in the same quarter last year. When we look at the net profit, on the other hand, it has surged multi-fold, and this is mainly on account of notional forex gain of somewhere around 52 crores. So adjusting for that notional forex gain, the net profit stood at 85.5 crores. But nevertheless, this is still nearly 8% higher as compared to what the street was anticipating. When we look at the ordering activity, that was also quite strong. Order inflow stood at 11,594 crores. This is a massive uptick as far as order inflow is concerned. Resultantly, this led to the highest ever order backlog of 18,944 crores. So overall, when we look at the numbers for the company, quite strong, going with the green for discount on the back of that.
Okay, all right, Vamakshi, got it. So blowout quarter for Hitachi Energy. We'll be speaking with the management as well, Mr. N. Venu, find out how much of this can sustain and how optimistic they are about the next financial year. We had both Blue Star and Voltas report numbers. Let's go back to Upasna for the details. Upasna?
First up, let me start with Blue Star. The company has reported a good set of numbers. Revenue and PAT in line with our poll, while margin stood above our poll. Now, growth was mainly led by companies' EMP and UCP segments, while EPC segment slumped. Now, revenue growth of 25%, which was much above the poll estimates, was led by strong festive season and robust sales in EMP segment. Now let us come to the numbers first. Revenue stood at 2,807 crores with an uptick of 25%. EBITDA stood at 209 crore with an uptick of 35%. EBITDA margin increased by 50 basis points at 7.4%. And lastly, PAT stood at 132 crore with an uptick of 32%. Mind you that the UCP segment, the revenue grew 22% to 1,160 crores on a robust festive demand, leading the overall growth. Now let me focus on Voltas now. The numbers missed the street estimates. This was largely driven by lower than anticipated UCP margins that the companies reported. Revenue in line, while PAT and margin lower than poll. Now, UCP segment revenue growth was in line at 20% on a YoY basis, but margins were weak, down about 240 basis points at 5.9%, likely on higher competitive intensity. Now, coming to the numbers, revenue saw an uptick of 18%, EBITDA margins was down 77 basis points at 6.3%, and PAT stood at 130 crore as compared to the poll of 155 crores. So all in all, weak set of numbers from Voltas.
Okay, all right. Thanks a lot for that, Upasana. And keep in mind, we'll be having the management of Blue Star as well, who will be joining us at 9:30 a.m. Let's hop across to Hormuz. He's here to tell us about Whirlpool. They sold some stake and they intend to sell more. Oopsie daisy. Tell us more Hormuz?
Morning, Nigel. Just a year after they did that, Whirlpool Corporation is back. They announced yesterday that they plan to bring their stake down in Whirlpool India to 20% by the mid or late 2025. Now, they also said is that they currently own around 51% stake. Now, remember, last February, they sold 24% or close to 25% stake in a block deal that was valued at well over 4,000 crore rupees. And even the CEO went on air and said that they sold that stake in the Indian unit because of high valuations. Now, they also said that the stake sale will be to ensure greater autonomy for Whirlpool India and that it will remain relevant to their overall portfolio despite the stake sale. Now, it is interesting because on February 20th, when the block deal happened, their average price was 1,280 rupees. The stock in the next 8 months went up 90%. And from those levels, the stock has already corrected almost 35-36%. So another stake sale in the offing for Whirlpool, an overhang gets created. Expect the stock to open in the red.
All right. Thank you very much, Hormuz, for that. What was that, Nigel? Whoopsie?
Whoopsie daisy.
You know, I hear all kinds of, I don't know, actually I shouldn't say it because I don't know what it means. Womp womp.
What? The whoopsie daisies I know, but I think not quite with it,
lingo,
with the times.
Next gen, new gen lingo, whatever. But, let's talk about, let's continue with our top 10 stocks here. Solar industries, right, is what we focus on. The Pinaka order has finally come through. I mean, if you remember, we had spoken with the management of Solar Industries and they were indicated that it should be out in the next a few weeks, basically, and it's come through. Big one. Upasana is here with details. Upasana.
Certainly a big development. Now, according to ANI, CCS has cleared Army's 10,000 crore Pinaka rocket deal, and this project includes area denial munitions and Pinaka enhanced range rockets. Now, this project will be divided between Solar Industries and Munitions India Limited. And also, it has been highlighted that DRDO is in advanced stages of making 120-kilometer strike version of Pinaka rockets and expects the first test next financial year. So, on back of this development, so yesterday, and I expect a strong up move in the stock today on back of this.
Okay, all right, got it. So, Solar, we will watch out for that, Upasana. Let's go across to Manglam. Manglam, you're watching out for Allied Blenders today?
Always good to wrap it up with a drink, right? Great numbers coming in, firing on all cylinders. I mean, there are no complaints whatsoever. If you thought of a company that reported good revenue growth, that after saw gross margin expansion, EBITDA margins expanded, then the net profit was supported by lower finance costs. And to add to all of that, they've made investments in a new category as well. All of that happened for Allied Blenders in this quarter. Revenues up by 9%. Gross margins improved by nearly 700 basis points because the company has been changing its product mix and E&A sourcing as well. As a result of which, the EBITDA doubled from 6.6% margins. The company has reported 12% margins. And the company reported a 57 crore profit versus a loss of 4 crore in the same time last quarter. Finance costs nearly halved because they had taken money for the IPO to repay debt itself. 13% volume growth is what the company has reported in their P&A segment, and P&A accounts for nearly 42% of sales. P&A is basically prestige and above premium products. Add to all of this, this was a company that made whiskey and a bit of vodka. They've gone ahead and invested 9 crore in a company which makes dark rum, premium rum as well. So all these things should work for Allied Blenders today.
They've all done well, haven't they? From what I remember, United Spirits, I think Radico's numbers were pretty decent, and now Manglam's Allied is also good.
He also said we'll wrap it up with a drink, so we look forward to that Manglam post the budget.
Well, I was speaking about people in general, Nigel, but two things that really worked well for the alcohol companies this time around. One is the seasonally strong quarter. Secondly, Andhra Pradesh opened up as well, right? So that added about 400 to 500 basis points of volumes for all these companies, and then there was some pricing, benefits coming in as well. So all of that impacted their margins too.
Got it, Manglam. Let's see when Manglam opens up as well. Thanks a lot for that. Well, time to do a quick recap of all the stocks we discussed. The ones with positive news flow: Bajaj Finance, SRF, Hitachi, you had Blue Star, Allied Blenders, as well as Solar Industries. Well, the ones with negative news flow: Tata Motors, Maruti, Voltas, and Whirlpool. That's all the stocks that we're discussing, but Manisha joins us to tell us what's going on in the commodity space. Manisha, take it away.
Well, thank you so much for that, Nigel. I'll start with the crude oil prices, where we have seen prices continue to decline, so much so that we are now trading at the lowest level of 2025. Well, we have seen the U.S. inventories gain, and that is what is weighing onto the markets right now. Apart from that, the Libya supplies have come back, and it is the OPEC and allies meeting on 3rd of Feb, and that is exactly what the markets are watching out for right now. But in the metals other sector as well, it really is a decline across. After the U.S. Fed meeting, we've seen the U.S. dollar strengthen And there's little guidance that US is given on future rate cuts as well. But Bank of Canada has cut interest rates, and ECB could be following suit this week itself, and that perhaps is giving some bit of a support to the gold prices. But when you look at aluminum, well, we have seen a decline. Copper is trading at a 3-week lows as well. Iron ore prices have declined too. So not much of a support that we are looking at in many of these commodities ahead of 1st of Feb, and that tariff clarity perhaps could beat the prices.
All right. Thanks very much, Manisha, for that. So that is commodities there in focus. We'll come back with the management of Quest Corp to talk about their third quarter and, of course, outlook going forward. Stay tuned.
भगदड़ की स्थिति जहां खड़ी हुई, मैं उस जगह पर मौजूद हूं। जरा मैं आपको दिखाऊं, ये जरा आगे बढ़ते जाएं आप प्रदीप और दिखाते जाएं। ये देखिए कितना सारा ये फैला हुआ है। लोग यहां सो रहे थे और बैरिकेडिंग टूटा है कि तभी ये सब कुछ हुआ है। आगे भी बढ़ेंगे, पुलिस वहां पर मौजूद है और लोगों को मदद कर रही है कि अगर किसी का कुछ खो गया है तो ढूंढ ले। जरा वहां पर कुछ लोग भी हैं जो अपना सामान ढूंढ रहे हैं, जरा उनसे भी हम बात करते हैं। ये भगदड़ वाला एरिया है, लोगों का सामान देखिए, सारे बैग्स यहाँ इकट्ठे कर दिए गए हैं ताकि लोग अपना सामान ढूंढ सकें। आप यहीं थे उस टाइम पर, कुछ ढूंढ रहे हैं? ये यहाँ पर नहीं थे, आप यहीं थे उस टाइम पर? तो ये क्या ढूंढ रहे हैं बैग में? क्या आपका बैग नहीं मिल रहा है? यहीं पर थे? कैसे हुआ था ये पूरा हादसा? ये भी देखिए बैग ही ढूंढ रहे हैं। आप अपना बैग ढूंढ रहे हैं? आप बैग ढूंढ रहे हैं? यही थे उस वक्त में जब ये सब कुछ हुआ? कैसे ये सडनली हुआ?
सडनली बहुत ज्यादा भीड़ इसी घाट पे आ गई थी और उसके वजह से डाइवर्ट करने में जाने और आने वाले दोनों आपस में हो गए थे। उसी में धक्का मुक्की की वजह से
यही सो रहे थे आप?
नहीं सो रहे थे, तो हम लोग स्नान करने गए थे। 12 बजे के आसपास, 1 बजे के पास की घटना है। और 1 बजे के आसपास ही हमारा भी बैग खो गया।
क्या पूरा रेला आया हुआ था?
पूरा रेला आया हुआ था, बहुत ज्यादा भीड़ थी।
तो ये पूरा अब देखिए बैग पड़े हुए,
बैग खो गया।
बैग नहीं मिल रहा।
ग्रे कलर का बैग था।
तो बैग लोग ढूंढ रहे हैं अपना, क्योंकि सामान बहुत लोगों का खो गया है, तो सभी अपना अपना सामान भी ढूंढ रहे हैं, बैग ढूंढ रहे हैं। बहुत सारे लोग चिकित्सालय में हैं।
हेलो,
ये यहाँ पर लोग अपना सामान ढूंढने के लिए आ रहे हैं।
सामान पूछ रहे हैं कि हमारा सामान कहाँ है, कैसे है। ऐसी में है, अभी कोई क्लियर नहीं हुआ किसका क्या है।
सब देख रहे हैं, सब अपना अपना सामान देख रहे हैं कि
Welcome back. As promised, let's get straight to the management of Quest Corp. We have with us the Group CFO, Mr. Kamal Pal Lahoda, as well as the Group CEO, Mr. Guru Prasad Srinivasan. Hi, gentlemen. Good morning. Thanks a lot for joining in. Well, congratulations. It appears that growth is accelerating because you have closed around 14% on a year-on-year basis, which is better than what you did in the first half of the year. Could you tell us how quarter 4 is looking like? Can you continue to maintain this mid-teens growth? That's point number 1. And also give us some rationale why margins dipped a little bit. Operating leverage should play out, right?
Yeah, very good morning, Rajal. Thanks for having us on this show. Yes, Q3, we did deliver a good set of results. And just to give, despite of headwinds being specifically on few segments, that is BFSI and early dehiring post-Diwali season, despite of that, we are able to deliver a good result. Couple of indicators. By headcount, for a period of 9 months from April to December, we have added a total headcount of about 50,000 net adds, and whereas against compared to the previous year, full year, we would have added about 56,000. So from that standpoint, we still have a headroom, left in Q4. Coming back specific to the margin question that you had, there are a few, specific indicators. First and foremost, we are investing in leadership for the season, and specifically we are getting into verticalization, and it needs more investment on the leadership and strengthening each of the platform. Second, of course, there is a macroeconomic issue hitting us in our international geography, specifically from Singapore, which is slowing down, which is also a high margin business. impacting overall a few basis point on our EBITDA percentage. And of course, IT services being not coming back into shape completely, we are largely focusing on GCCs and other sectors. So these are few indicators as to why margin has taken, but it is still. I mean, I would still say this is an interim dip, but we will be able to regain this as we get end of Q4.
Just a couple of quick numbers. The headcount, as you said, I think it's 50,000 that you've done in the first 9 months. Last year you did 56,000. So this year, what do you end up with? What does it mean in terms of growth? And also in the past, you've done margins of 5% as well. Are you headed in that direction? That, in the coming quarters, you'll get back to around that 5% margin band?
See, look, few specific indicators that we'll have to keep in mind. The GDP is heading towards its low in last 7 quarters, and it is going to impact on the consumption pattern. And most of our resources whom we deploy are frontline staffs, right? So it has a cascading effect. So from that standpoint, we are mindful that Q4 still will be slightly muted. While we might we have open mandate worth of about equivalent about 14,000 open mandates as we step into the last week of January. But however, it's a bit wait and watch. With regard to the overall growth, I think we should still, by revenue, we will still end the year at a double-digit revenue growth and a double-digit EBITDA growth.
Okay, got it. All right. Are you looking to up the contribution, though, of IT staffing as well as international staffing, which have relatively higher margins? I want to also ask you, will Trump's policies impact your international staffing business?
It should. It is a bit early at the moment. As I said, Singapore is going through its own challenge, which is we are the largest IT staffing company in Singapore. We are seeing good traction coming in from Malaysia and Philippines. Middle East is doing well for us. Middle East, we do a combination of both IT staffing and the general staffing there. So IT staffing is picking up well there. These geographies definitely yes. But however, India is still our largest focus. 67% of our open mandate comes from the GCCs. So GCCs is seeming to be the captive centers that are being set up are quite promising, and we are seeing good traction coming in. With regard to US policy, of course, the largest IT spend, the IT market is US. I'm sure, I think, as and when the policies are getting firmed up, I'm sure it will have a positive impact on overall IT staffing, both for India as well as the US market for us.
Okay, all right. Let's wind this down then and let's get a comment coming from Mr. Huda. Thanks, sir, for waiting by patiently. If you could tell us what is the timelines for the demerger, and also I wanted your comment. DeepSeek seems to have, pulled stock markets down, and there's plenty of debate out there. How do you see it impact your business?
Yeah, thanks, Nigel. And, on demerger, we are pretty much on track. This is an important quarter for us, quarter 4, wherein we expect the final regulatory approval, which is the second motion at NCLT. We are hopeful that we should be able to get a favorable order from NCLT in this quarter, which means that we're all geared up for seeing the 3 separate listed companies by Q1 of next financial year. Just to remind everybody, this is a mirror shareholding, so we are splitting the company into 3 parts. So the staffing remains with Quest, and we're creating 2 large companies, Blue Spring and Digitide, in their respective verticals. So we are hopeful that Q4 the demerger should get completed with the NCLT second motion application, and to have these companies listed in Q1 next financial year. On AI, there are considerable amount of things that we are doing, especially in our GTS vertical, where we are amongst the top 2 players in the voice, and we are looking at various AI offerings both to our customers to improve the productivity for the customers, the productivity also for our callers, and there is a significant investment that we have done, and we believe that AI will have a transformation to this industry, and we've taken our early steps by investing in some of the AI offerings for the customers.
Okay. All right, gentlemen, we'll leave it on that note. Thank you very much for being with us and giving us some sense on the business today, that is Quest Corp. Let's now welcome in Deepan Mehta. He's joining us in the conversation to go through this whole raft of earnings that we've gotten over the last 24 to 36 hours. Deepan, great to have you on. Thanks so much. Let's start with Tata Motors first. Obviously, there's pressure, there's weakness, but they're still, of course, retaining their guidance and all their targets on JLR. How would you look at the stock? Deepan, you're on mute.
Sorry about that. So good morning, Surbi, and thank you for having me on your show. I think more or less in-line numbers, but look, there's so much of volatility in Tata Motors earnings, and that does tend to affect the investors' mind. So generally, I would say that Tata Motors is avoided. As compared to some of the other auto companies, I think there are better bets over there. Maruti came with a good set of numbers, better than what I expected. And looking forward to Eicher Motors numbers, I think, which could also be very good. And then, of course, there's M&M as well, which has done exceptionally well, better than Tata Motors as well. So within the auto space, I think there are better choices. But on the whole, the industry is under a bit of a pressure and volumes are still not picked up. So I would not like to, increase exposure to the auto sector. Tata Motors in specific, I think it's better to switch out of Tata Motors and some of the other companies which I just named just now.
Okay. So, just to expand on that point on auto, and since we're talking four-wheelers, Deepan, now Maruti in the con call didn't offer too much comfort. I mean, they're being brutally honest, saying that demand is sluggish and slow. And perhaps, we won't expect too much of blockbuster revenue growth. So, would you look at anything else in four-wheelers, or is it better to look at maybe the two-wheeler makers?
See, I think first of all, you need to be neutral to underweight auto, but I think it's an important industry. It's a cyclical industry as well, and I think it's hit a soft bump at this point of time. So eventually it will get over this sort of slow period. Also with increase in liquidity in the banking system and hopefully interest rate cut, that certainly will benefit the auto industry as well. And they're moving very strongly on the export market and whatever they are selling to Toyota as well. So that's acting as a bit of a buffer for Maruti. I think valuations are reasonable, around 25 times trailing 12 month. I think it's a reasonable valuation. At a time when the earnings can pick up maybe 4 to 6 quarters down the line, if you have like a 2-3 year type of a view, I think it may outperform the market. And M&M also, I think if you look at the kind of strategy which they have in the EV space, it's the best in class. And here also they have the benefit of the tractor business, which has got higher margins. And that also is doing pretty well for the company. So within the auto space, I would say in the four-wheelers, these are two companies which may outperform. But on the overall industry, the view has to be slightly cautious for the next 2-3 quarters, maybe a little longer as well.
Okay. All right. Deepan, stay on. We have more questions for you, but we do have to take another quick break. We'll do that, come back on the other side, keep talking stocks, and of course get you the market to technical setup as well. We'll have Mitesh as well as Sudarshan join in with some trading ideas.
और आप लोग डायरेक्ट कर रहे हैं कि कहाँ किसका सामान है?
हाँ जी मैम। तभी से हैं लोग और वो कोई लोग का फोन पैसा हम लोग खुद रेस्क्यू करके दिए, वीडियो बनाए हैं लोग, दिए हैं लोग पब्लिक को। तभी
अचानक कैसे हुआ?
ये अचानक भगदड़ हुआ है, जैसे कि एक के ऊपर गिरने लगे लोग और सैकड़ों की।
कितने बजे की बात रही?
ये लगभग 1 से 1:30 बजे तकरीबन जी।
तो ये छूटे हुए बैग इस बात की गवाही दे रहे हैं कि क्या स्काउट्स हैं, कि क्या स्थिति रही होगी। लोग अब अपना सिर्फ बैग यहाँ छोड़ गए हैं, कई लोग घायल हो गए हैं, अस्पताल पहुँचाया गया है, जो गंभीर रूप से घायल है उन्हें बाकी अस्पतालों में रेफर किया गया है और जो सामान्य रूप से घायल हुए हैं उन्हें यहीं के चिकित्सालय में देखिए भर्ती कराया गया है। तो ये स्थिति है जब यहाँ भगदड़ मची है, बैग पड़े हुए उस बात की गवाही दे रहे हैं कि कैसे लोग सो रहे थे, अचानक बैरिकेड टूटा और एक के ऊपर एक लोग कुछ सोच पाते समझ पाते उससे पहले ये स्थिति खड़ी हो गई। कैमरा पर्सन प्रदीप के साथ सपना शुक्ला, न्यूज़ 18 इंडिया।
In general, for the portfolio, which is a large India-focused portfolio, it has only 10 to 15 large and liquid stocks. I mean, nothing which trades less than $10-15 million will ever be part of the portfolio. It's a very large and liquid portfolio. We went into an out of consensus overweight on staples right at the start of this month, and an out of consensus underweight, a big underweight on industrials again. So those were the two big calls that we took. Other than that, IT and healthcare are our other underweights. While banks is a small overweight, commodities is the other overweight that we have in the portfolio. we've been quite worried on mid caps for a few months. Maybe we were a little early, but I think if you look at relative valuations on mid caps and the fact that there is some uncertainty around near-term economic growth in terms of, maybe that we are experiencing a slowdown, and with those sky-high valuations, typically they would be far more vulnerable.
Welcome back. We've had a decent bounce yesterday, and from the recent lows, we pulled back a little bit. Are we good for more? Mitesh and Sudarshan, both of them join us on the show. Good morning, gentlemen. And first of all, congratulations. I recall 2 sessions ago, you all were hinting at some positivity after being a little bit nervous. The question is, where do we go from here? Sudarshan, you go first. What's the trade on the Nifty?
Yeah, good morning. Well, I'm very pleased. From Tuesday morning, we have been saying that let's go long. And luckily, this time the market obliged us. I would think that this long trend, this long trade should continue. Traders who have positions which expire today, remember today is weekly expiry, monthly expiry in options. So they should ideally roll over these positions into the next week. Also understand that markets are not stable yet, but the view seems to be that at least till budget day, that means another for 2 more days, we should see some kind of upside. So stay long, keep tight 150 point stop losses. And ideally, what I usually do is on the budget day morning, I exit all my long positions so that I'm not there for the volatility. So that I would suggest again.
Got it. All right. Mitesh, what about you?
Morning, Ajal. So being positive for the last 2-3 days and suggesting that it will be the bank and the Fin Nifty which will be leading the rally. I think that's playing out well. I still hold my view. I believe that the bank Nifty is still showing signs, which could lead us to a significant reversal. Though I think because we have fallen so much, while it's easy to give a pullback on a short covering basis, but with that fall, I think, we have a lot of hurdles in between. So there will be steps, 49,300, 49,800, 750 zone, and then 50,000. I think these are the 3 near-term pivots which I'm looking at. But my bigger sense is that we'll eventually clear 50,000, 50,100 and head towards 51,500. So there is a significant amount of upside which could happen. I'll stay positive very clearly.
Stay positive. Got it. All right. What about individual stocks? Mitesh, you go first.
Najal, I have all buy calls today. Bank of India is a buy with a stop at 108.5 for targets of 115. Kotak Bank is something which I like on the medium to longer term chart as well. In the short term, though, buy with a stop below 1900 for a target of 1960-65. A buy on IRFC with a stop at 138 for targets of 148. And Havells, after a long time, is showing signs of reversal. So buy here with a stop at 1508 for targets of 1565.
Got it. Thanks for that. Sudarshan, what about you?
Chola Finance is a buy with a stop under 1265. TVS Motors, you were all talking about Maruti and Tata Motors. I think TVS Motors also has an excellent chart. It's a buy with a stop under 2400. JSW Steel has been an outperformer. Consider buying that with a stop under 915. And finally, Balkrishna Industries has done well. These are stocks, mid-cap stocks that are emerging out of deep corrections. So consider buying Balkrishna Industries with a stop under 2680. It's an all buy list.
Got it. Thanks, gentlemen, for that. We'll come back to you all for your 9-10 call as well later in the show. For the time being, we slip into a short break. We'll get you pre-opened rates on the other side. And the management of Brigade as well is waiting for us. They'll detail the past quarter's numbers. They'll tell us what's the way ahead as well. Pavitra Shankar is scheduled to join us on the other side.
We clearly have a preference towards large cap over mid caps and small caps. So large caps is clearly our preferred area. In fact, I would say our preferred area is mega caps. If you were to look at our India focused portfolio, we are quite overweight mega caps. I mean, a lot of stocks which are over $40 billion market cap over there. So that's the part in terms of preference within the capitalization. However, on markets in general, we've reached a very interesting point where fundamentally we were seeing that this overvalued period could cause a correction. That corrections happened. We kind of were worried about it right at the start of October, and that's kind of played over the last 4 months. We are down even on Nifty 12-13% or so.
Yes.
Now, interestingly, our proprietary gauge called the sentiment gauge, which tries to quantify sentiment, called the India Bull Bear Index, has recently hit extreme bearish sentiment. In fact, this is the sometime one of the days last week when we saw it, and maybe it will be there somewhere this week as well. Sentiment as measured by this gauge was the weakest since the COVID lows. Okay, so that is a very interesting point. Typically, it has a good track record in kind of whenever sentiment goes to an extreme, to say that now we could have a contra move. This could be a contra move up. The bit that is more dicey is whether this will be, whether this is the end of the correction or whether this is just a rally and a recovery where sentiment normalizes. We have another leg down. But for now, I would want to, for the ones who are kind of
Welcome back. Deepan Matha is still with us. Deepan, thanks for waiting by. Wanted your view on Bajaj Finance. That one did nothing much for the last couple of years. And in 2025, actually, it's showing signs that, hey, I'm the one that has the pedigree, I'm the one who has the class, and I'm the one who's going to, do better in 2025. Can it be the outperformer? How do you like the numbers?
Yeah, Nigel, first a disclosure that it's one of our core holdings, and very impressed with the numbers. Whichever way the stock may open today, I can't say. But, the real number to look out for is the provision amount, and which was growing at 2 or 3 times the previous quarter. I think we have seen 60-70% increase over the last quarter. And hopefully that will start to flatten out. And you may see in the next 2-3 quarters or so, the top line matching with the bottom line, the growth rates. And that will mean that the earnings per share can easily grow by above 20%, more like 20 to 23% or so. And that, in my opinion, should cause a re-rating of the stock in terms of its valuation multiples as well. So within the BFSI space and the banking space, I think this is one stock which can clearly outperform. But as I said, our views could be biased because we have an ownership position. And in my opinion, I think from a safe and from a risk return profile, it could be the best NBFC stroke bank to be invested in right now.
Got it. All right. Anything else, Deepan, that you would like to highlight for us? We've got a lot of numbers from the broader markets. The EMS stocks bounced back yesterday. Some of these solar themes, they have got, hit hard. But some of them are making renewable energy stocks. They're making a bit of a comeback. Your view on any of them?
No, Nigel, I think that whatever numbers are coming through over there are pretty okay, but there is a nice trend happening in the chemical sector, especially specialty chemicals. And after several quarters, we are certainly seeing green shoots over there. And this is certainly not what I expected. Like SRF numbers were pretty impressive. Deepak Fertilizers came with a very good set of numbers. And a lot of other specialty chemicals, API, intermediate companies have reported decent numbers. So I'm just looking at that sector more closely now. It's got some amount of cyclicality in it, but I think we may be seeing an upcycle over there. So it could be something quite interesting maybe going forward, especially when you're looking out for sectors where there is still growth left. And there are very few such sectors at present.
Indeed, that's an important point, because if I look at the entire basket, it started showing some growth, and in the next few quarters, it will have the benefit of the smaller base. So that's what will further enhance that growth that we're looking at. Appreciate you joining in, Deepan. Very pertinent point you make out there. Wishing you a good day ahead. We look forward to chatting up with you in the next couple of sessions as well. Prashant.
All right, well, we have the management of Brigade Enterprises joining us now on the earnings set. By the way, the pre-open is just about kicking off, so it's at the bottom of the screen, the rates. We have, by the way, reported a good set of numbers for the third quarter. Pre-sales continue to grow, but collections have declined sequentially. Pavitra Shankar is Managing Director at Brigade Enterprises. She's with us to take some questions. Look at the stock in the pre-open, 10% higher. But this is the first tick. We'll have to see where this goes from here. Pavitra, good morning again. Prashant this side. So, I mean, third quarter has been driven by successive new launches. Could you tell us what will lead to, what's the growth trajectory looking from here? What is the expectation for this quarter, that is Jan to March, and then beyond that, FY26?
Hi, good morning. Yes, we had a really good quarter this year, and overall 9 months is done much better. For the rest of the financial year, we're just pushing through the new launches. The numbers that we'll be able to achieve are pretty heavily dependent on new launches. While we don't really give guidance, we should definitely do better than last year. But a lot of our launches are coming in over the course of this quarter. So we'll have to see how much time we have in the course of Q4 to actually achieve some of those numbers.
All right. Hi, Pavitra. Good morning. Always good to see you in. Give us a sense about the inventory that you have in your books as of now with regard to the residential space, point number one. And your collections dipped a little bit on a sequential basis. Could you tell us what's the cash flow situation?
So no real issues on the cash flow situation. There may be a slight mismatch in terms of just realizing some of the booking value and then some of the milestones being raised, but nothing really of concern. Collections overall have increased over the course of year over year. In terms of inventory, we have about 4.5 million square feet of inventory that we're selling today, and the demand on ground is still very strong. Bangalore and within our industry, where we have a heavy focus on Bangalore within our own organization, we still see about 12 months of inventory hangover. So it's still a very strong situation on ground.
12 months of inventory in Bangalore, Pavitra, that's what you're saying?
Yeah. Yes.
And that's largely in line with something that you'd want to work with. I mean, it's perfectly fine.
Actually, it's great. I mean, the normal is, 12 months is about 4 quarters, right? The normal equilibrium situation is anywhere from 8 to 10 quarters. So we're definitely in a great market in terms of how quickly inventory is still moving. So not a concern at all.
And in terms of those new launches, could you give us a sense what are you looking at and just some idea?
Yeah, so we'll actually be looking to launch in both Bangalore and Chennai and Hyderabad. So the great thing is that we have inventory across all of our 3 focus markets, and I want to include Mysore as well. Most of the inventory is what I would call upper mid segment and premium housing. This is a trend that we've seen across the markets and within our own portfolio as well. There's an opportunity to expand and do more of premium housing. Overall, pricing in our markets has increased within our own portfolio 40% year over year from a mix of moving more into the luxury and premium segment. So a lot of our launches coming up, we are looking to launch about 12 million square feet over the next 4 quarters, and hopefully launching another 3 to 4 million in the coming quarter itself, January, February, March.
Pavitra, no slowdown at all at the margin or anything, right? I mean, we've had companies, but not from Bangalore, from largely NCR, companies like Signature, Ashiana, Max. They've told us over the last 2 months that at the margin, the sales velocity has kind of gone down a little bit. But that's not also at the premium end, mostly in that sense. And, there've been talk that maybe with the stock markets being a little lower, there could be some impact, some implications. Because at the higher end, one assumes that, there will be, of course, a loan element, but a lot of it also will be funded by, capital gains from equities and things like that. Just your thoughts, Pavitra.
Yeah, so I would say, many times people peg their expectations based on what's happened over the last couple of years. And what we've seen is an incredible ramp up in terms of both sales velocity and absorption, as well as price increase. Now, if you're comparing to that, that's not going to continue growing at the same rates. But to put it in perspective, we are still able to launch, I would say, Brigade, most of the portfolio, about 80% is still in the mid-segment, upper mid-segment. And I think that's kind of where you have to look at if you want to scale in terms of volume and velocity. Premium housing isn't going to fly off the shelves in the same way. I know there are conflicting reports that keep coming out, but the market for that naturally is smaller. So I think it's a balance of both. We are seeing strong demand, but it's not going to be, you're not going to sell predominantly all of your inventory in premium housing within a couple of months or anything like that. So we look at stabilizing the sales velocity for premium housing. We look at wanting to sell that inventory over the course of construction so that we can also, see the gains in pricing over that life cycle. And in mid-segment and upper mid-segment, it's still very strong in terms of the launch reaction from customers itself.
All right, Pavitra, we've gotten on enough about the real estate segment, and you're sounding very, very confident. So we take your word for that. let's talk about the hospitality business. How are things shaping up there? If you could give us a couple of numbers. And I think you had a plan to unlock some value, right, with regard to listing that venture. What's the progress out there?
So yes, we actually did file a DRHP October 30th of last year. And because of that, we're under publicity restrictions. And I can't really talk about the portfolio in terms of numbers or give trends.
All right. But what about, when should we expect this to see the light of day? I mean, in terms of you file the papers, when do we expect the IPO?
We're hoping soon. We are yet to have some more clarity on that, but hopefully soon.
Okay, all right. Let's talk about then your rental income. The next time you join us, I'll push you a little bit more on that IPO because the street wants to know about that, Pavitra. For now, I'm letting you go. But what about the rental income? If you could help us out, the leasing portfolio that you have, I think it's clocking closer around 290, 300 crores or thereabouts. And I think the occupancy number for the last quarter was 95% plus. How do you see this number scaling up?
Yes, so our lease rental portfolio is a big contributor to the good results over the last quarter. The portfolio is fully stabilized, where, as you said, we're 99% leased, despite having a huge component of SEZ rentals as well. So it's stabilized, and that's kind of why we're seeing the cash flow increase quarter on quarter. And we do have about 8.7 million square feet of operating portfolio, and we are building out additional space as well. So as of now, the portfolio is just cash flowing, stabilized, and in a great space because it's fully occupied.
Okay, all right, Pavitra, we'll leave it on that note for this quarter. Thank you very much for joining in and giving us some perspective on the business. That is Brigade Enterprises. By the way, interesting trends are playing out in the market right now. The index is flat. Nothing's happening there. Nifty is just about 6 points higher. On individual stocks, there's lots of drama. Whirlpool, for one, the market is not liking the fact that from 50%, 51%, the global parent is now going to bring this down to about 20%. Look at the pressure. I mean, it'll not happen in one go. It'll happen staggered. And they're saying, probably over the course of this calendar year. But that's a huge overhang. So that's one high drama stock. The other one is Tata Motors. Now, this margin compression, blended margins for Tata Motors have come down from about almost 14% to, a little over 11%. And the market wasn't prepared for that. And anyway, it's been a tough couple of, months in terms of sales as well. So serious pressure on Tata Motors as well. We'll watch out for these stocks and how they do once trade actually opens. But it is time for our 9-10 call. So let's go back to the experts then. Mitesh, what's the stock you're going with?
I'll go with a buy on Kotak for targets of 1960 plus.
Okay. Mitesh, actually, since we have you, just quick fire on Tata Motors and Bajaj Finance. Bajaj Finance, by the way, is up about 1% or so in the pre-open right now. These two big Nifty stocks, levels to watch?
See, Bajaj Finance, my medium-term to long-term view is very, very positive. In fact, I believe this could be one of the stocks of the year. And 7,800 is a pivot which the stock has failed to clear, but I think it might do it today. Then the next target is around 8,100, and I suspect I'm looking at 9,000 plus. In fact, that is a stock I would want to add today in my portfolio.
Okay, all right. Mitesh, got that. Thanks very much. Speaking of Bajaj Finance, let's just go and revisit the numbers and the street commentary after the Q3 earnings print. Abhishek.
Well, to begin with, Bajaj Finance has beaten our poll both with respect to NII as well as the PAT. There were key con call highlights wherein they gave the FY26 outlook PAT growth on the upper side to be around 22 to 23%, AM growth of 25%. They expect credit cost to remain at 2% if Q4 FY25 credit cost is sustained between 200 to 205 basis points. The key highlight in the con call was they expect the board to take a decision largely on Rajiv Jain by Q4 FY25. Brokerages who have been bullish on the stock, 5 of them have raised their target price anywhere between 9,000 to 9,300, while UBS, Bernstein and Macquarie have an underperformance or sell rating, target price ranging from 6,290 to 6,500 per share. Back to you.
All right, Abhishek, thank you very much for that. Let's talk about Tata Motors again. Hormuz tells us that below 707, the Tata Motors stock will be at a 52-week low. But the numbers and what was said, Sudarshan is here with exactly that. Sud, morning.
Morning, Prashant. So Tata Motors is seen opening 6% lower and near 52-week low. And it's after Q3 earnings that were weak. And on domestic front, it was weak because of subdued performance by passenger vehicles, and JLR made a rebound on QOQ, but overall demand concerns remain, especially in China and Europe. So overall, EBITDA was down 15%. Margin has come in at 11.5%, which is down more than 200 basis points year-on-year, also down more than 200 basis points against our estimate of 13.7%. For JLR, EBITDA margin was down 200 basis points, while EBIT margin has seen a minor uptick of 20 basis points, and it has come in at 9%. On the outlook, JLR has maintained EBIT margin guidance of FY25 at 8.5% or more also, but brokerages are largely negative on the stock. Today, Jefferies has downgraded the stock after 3.5 years. It has downgraded to underperform, and target is rupees 660 per share. Also, it has cut FY25-27 EBITDA estimates by 7 to 11% and EPS estimates by 5 to 10%. UBS maintains its sell call and target is 760. It says it has ambitious Q4 target amidst uncertain FY26 and 27. MS maintains equal weight call and target is 853 per share. CLSA though has an outperform call and target is 930 per share, but it has also cut JLR FY26 volume estimate by 5%. So earnings were weak, and even brokerages are negative on Tata Motors after Q3.
And Sudarshan, if you required to buy a Tata car last year in the middle of 2024, you should have bought the car, right? And not the stock, because if you bought the stock, then you would be down 40%. So, we normally relate that, and it's quite popular that if you bought the stock instead of the car, you would be making so much money. In this case, it's good. You bought the car, you'll have the car, you're driving to work and back. The stock, in fact, is likely to open up low. And as you said, closer to a 52-week low. Thanks a lot for joining in.
Just one more stock beyond earnings, a non-earnings mover, Sagility. Watch out for Sagility. Sagility has acquired a company in the US for about 500 crores. And it seems that the rationale, the pricing, and then the internals market is okay with it because stock's up 5%. We'll get you more details on Sagility as we go forward as well. Recent listing, of course, and the stock has done quite okay. Electra Green Tech's numbers are stupendous. All their buses are, everywhere. Selling plenty of them. See them on the roads. And that's showing up in the stock as well. Up about 3% on solid numbers in the third quarter.
Absolutely. Let's look at, you guys were talking about Whirlpool. Whirlpool, the first tranche of sale happened at about 1280 rupees per share. When they sold it last year. That was in February of 2024. Maybe it was the market, maybe it was the stock, but I think it was more the market, right? So the 1280, the promoter sold shares, it doubled from there after a stake sale. The high was about 2450, which was made in October of 2024. From Feb to October, stock doubled after promoter pared their stake down, complaining of rich valuations, mind you. I mean, if you remember that soundbite of the global CEO saying, basically saying you got to take money off when valuations are like this, and then the stock doubled. And of course, it's now back to where it was with this 20% correction, back to, I think, 1260 or so, which is around where they sold stake the first time around. So it's interesting. Well, I think we've got the first a couple of trades coming up on the indices. It's absolutely flat, blinking like a traffic signal. 23,180. It's red and green, but no change to show on it. Nifty Bank is down about 0.25%, 49,070. You've got the mid-cap index, which is up about 0.33%, 52,880. The other stuff coming up as well. We've got 1150 stocks which are higher and about 400 stocks which are down. The rest of the market is opening up. So it's kind of very, very mixed out there, but more up than down, at least on the Nifty, as you can see up on the heat map. That'll also change. Advanced decline is 2:1 in favor of advances, at least with respect to what's opened up right now. Surabhi.
Okay, on the large cap screen, you've got Bajaj Finance up 2.5%. So the market's being optimistic, not getting too perturbed with the slight rise in credit costs and the gross NPA increase, because the guidance is that this will sort itself out. They are not sounding very alarmed on it, and the market's kind of taking that. Even Bajaj Finserv is up about 1.5%. Other gainers include Bharti, BPCL, NTPC, Hindalco, Coal India, there's BEL. So very mixed trends. A couple of consumer stocks like Britannia and Tata Consumer are also okay for the time being. Now on the downside, look at Tata Motors, 8% down. This margin thing, the market was just not prepped for this kind of a margin decline, blended basis and the JLR margins. 7.5% lower on that stock. Sales, we know that, it's been very sluggish, but margins, oops. Wipro, about 1% lower. Infosys is slightly lower as well. L&T, ahead of numbers, is about 0.25% lower. Then you have some of the larger banks like ICICI Bank, Axis. They're all very cautious, slightly negative to flat. Kotak is flat. Let's see what HDFC Bank is doing. It hasn't made up its mind. HDFC Bank is totally flat. Reliance is totally flat. So depending on what let's look at Lever. Hindustan Unilever is also, it's up about 0.5%. So consumer stocks relatively better, but depending on which way the big boys decide to go, we'll have a clearer direction on the Nifty. But the headlines are all beyond the Nifty, Nigel, aren't they?
Well, that's right. A few stocks in the broader markets that are up and about. ACME Solar, I think yesterday the stock was up 10%. Today it's up another 10%. So big move is what we're seeing out there. Sidma, I think you mentioned that one. It's up close to around 7%. It's following on yesterday's big gains. KPIT Technologies, we'll speak to the management in just a bit. Beautiful move up there. The stock is up close to around 6%. You have Suzlon Energy up 5% yesterday. Keep in mind, it's seen a sharp correction from the top. Management is sounding optimistic, though, about business prospects. So that as well has popped up in trade. And Anantaraj, after getting smacked in the last couple of trading sessions, pulled back yesterday and pulled back some more today. So that stock as well is one of the top volume movers in trade today. I think,
Hitachi Energy, 14%. Beautiful numbers, and the stock is flying. It's off to the races. And now that we have final rates on Whirlpool, maybe we can pick that up. There's just a complete, seller's frenzy right now on Whirlpool, 20% down. Straightaway circuit.
A couple of other stocks as well. Blue Jet Healthcare, I think they came out with a set of numbers. Volumes are around, I think, close to around 2 lakh shares traded in the first minute. It's up close to around 10%, so you can't get in if you want to. That stock, it's closed out there. Brigade, I think you mentioned as well. Car Trader is another one that's up close to around 10%. So a decent looking screen as we speak. So a lot of winners from the broader markets. Whirlpool is the disappointment. Techno Electric is down 11%. Voltas is taking it hard. You have, JK Paper as well lower. Eclux is down close to 6% volumes, though not very, very high. And from the stocks that I track as well, Jindal Stainless, the numbers on a year-on-year basis, it looks a little bit softish, but it's more or less in line with what most brokerages were looking at, whether it was Phillip Capital or it was ICICI Securities as well. It was more or less in line.
No, absolutely. And
Netweb, have you guys seen, by the way?
No,
Netweb is
up,
another 9%. Yeah, Netweb.
Yeah. No, I think, market, of course, it had corrected the most from 2,500. It had fallen to about 1,400 or so. And I think it's seeing a bit of a reversal to the reversal in that sense, right? So lots happening, and I think we'll continue to bring up individual names, etc. more. Gautam Shah is with us, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Good morning. Thanks very much for your time. The market structure seems to have weakened, and we are down now. Although we off about 300 points in the Nifty from the lows day before yesterday. What's the broad sort of price action and technical view from here? Near to medium term, Gautam?
Good morning, Prashant. Well, I think the key question that a lot of people are trying to answer is whether this is a correction within the larger bull market or a full-blown downtrend or a bear market that's going to continue for many quarters to come. I think the biggest disconnect for most market participants in India is, for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market, because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets, because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So a deeper cut from current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here and possibly get past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think will be very critical to the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited, but as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited.
That's good to hear, Gautam. That's really good to hear. And you actually partially answered the next question that I was going to ask you. So if you could just elaborate on that, because you're saying the upside potential is large. And that's what I wanted to understand, that while the downside is protected, can we really expect a sharp reversal? I mean, the Nifty is down about 13%. So are you expecting, in the market last couple of years, it's always been a V-shaped recovery. This time we were wondering whether now you get into a longer time correction, maybe not price. But you seem to be suggesting that no, it's going to be better than that.
See, I think for the last 4 years, since the time we started rallying from the COVID lows, every time there has been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a charts perspective, your maximum downside is about 2 to 4% from here, and upside is about 20%. So as an investor, I want to plan for the same.
20% upside over the next 18 months. This is on the Nifty, you're saying, right?
Yeah, that's correct. I think over the Nifty, I do see a possible 20% upside from here. And with global markets continuing to be very strong, and with the US Dow at lifetime highs, I think the going is going to get better there as well.
Okay, we've got a headline there. 20% upside on the Nifty over the next 18 months. Nigel?
Okay, all right. Hi, Gautam. And good to hear you're sounding far more optimistic. So that's good news. I like the way you put it. Downside could be limited from here. There could be some downside, but you're potentially playing for the upside. So you'd like to be part of the uptrend. What are the stocks that will take the Nifty higher from here on?
See, I think a lot of people have been questioning the valuations. Honestly, we've come to a point where valuations are very comfortable. I mean, I'm not a fundamental analyst, but what I hear and what I read and what my team tells me, I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs, and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now, and happy to see what it's doing today, and I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think the bulls take some control. On the other hand, auto is another space that we like. Real estate, I think, has a very good risk reward. And I think metals is something that we've liked for long. And I think the downside from here is limited as well.
Okay. On that point about the budget, I know it's not a technical price action question, Gautam, but isn't the mood sufficiently bad that even if the budget were to disappoint, that should not act as a fresh trigger for a sell-off?
Markets are all about expectations and discounting. And because the expectations are so low, given all that has happened in the last couple of years and the double whammy that we got last year, that I think that 1st February can only get better. And with the markets open, it better be better. So I do believe that, since our issues, the slowdown and earnings, the downgrades and all of that has been homegrown, I think the government has a task. And I hope over the next couple of weeks with the budget and the RBI policy, any positive surprise and the market will lap it up. And I think you will see the change of screen instantly.
It's that season where everyone's trying to predict the mind of the finance minister. I was speaking to someone, from the tax world this morning, and they were saying, no, it's going to happen. The middle class has not gotten anything so far. It's been either the upper class, because the surcharge rate was lowered, or the people at the bottom of the pyramid. Middle has got nothing. They're saying it's going to happen this year, Nigel.
The chatter on social media was quite interesting. I put out some F&O data and people are replying to me, Nigel, are we going to see the Nirmala ma'am candle, You know, and they're calling it the candle. In case she doesn't disappoint, then they're talking about this is a new one.
Nirmala ma'am, candle.
Candle, yeah, the upward candle. You know, you talk about that one.
It has to be bullish candle, though, not a bearish
and a lot of people, and some of them are not replying on Twitter, they're replying personally as well. You know, so I was like, this is a new one. And these are 2 sessions ago, so for them, actually that candle is taking place. Thoda upar.
Gautam, my question was actually the opposite, not whether it will surprise on the. My question is if there's nothing in the budget,
then will we fall more?
Can it act as a trigger for a fresh fall? Because the mood is bad. That was my question.
It looks unlikely, Prashant, because I think most of the negatives are now in the price. I think the kind of decline that we've seen in the broader markets, there has clearly been panic on the screen. The bread data is terrible. Percentage of stocks trading off the 50-day moving average, 200-day moving average. Yeah. And, you know, we handled capital gains and STT so beautifully last year. If we can handle the worst possible news flow, that's probably the reason I'm saying that it can only get better. It can't get worse.
Okay, I love the optimism this morning, Gautam. So I think all the bulls are going to be with you, and they will wish and pray that what you're saying really comes through on the budget as well. But getting back to that thesis, because your thesis is 20% up on the Nifty next 18 months. It's a great time to start building portfolios. Tell us what would be your top longs then in that case?
Well, as I just said, that financial services is something that we like. I think, if I'm not wrong, the Bank Nifty now trades at a PE of about 13, 14. Many of these stocks have been hammered without no logic, and they're all trading at beautiful long-term support levels. So I think financial services will make a top comeback, followed by the IT sector, which I think has seen a lovely breakout on the ratio charts. And I think they've been quite resilient. I'm referring to the top IT names. And I think auto as a sector, auto and FMCG, and even PSU, these 3 baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind you, if you look at the mid caps and small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again, please look at the context of the rise in mid caps and small caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible.
Okay, all right. That's a good optimistic note to have just days ahead of the budget. Gautam, appreciate it. Thank you very much. And now we look forward to connecting again. Let's see what happens on Feb 1 and then we'll pick it up from there. Thanks very much for the advice this morning. Well, that's, the Goldilocks research on the market. Market's absolutely flat. Nifty is doing nothing, just about 11 to 12 points up. Lots of numbers and lots of earnings reactions have been pouring in. So let's look at the next company. Blue Star is the next management on our show. The company reported a pretty good set of numbers for the third quarter. Revenue and PAT were in line with the estimates. Margins actually were above the street poll as well. Growth was led by the EMP and the UCP segments. We have with us Mr. Veer S. Advani, Chairman and Managing Director at Blue Star, joining in to take a couple of questions. Mr. Advani, great to have you on. So, both the segments that I just mentioned, they've really been on a great curve. And even overall, if I look at the blended number, the revenue is up about 25%. The margins moved to 7.4%. So let's start there. Is this kind of a solid show sustainable, specifically on the margins?
So good morning. Thanks so much for having us, and thank you for opening with that. We've had a good quarter. I think you saw revenue grew 25%. EBITDA has grown 35% to 209 crores. EBITDA margin also improved. You would have seen EBIT improvement in segment 2. We moved from 7.1% to 8.1%. That was primarily on account of volumes and economies of scale. And then you saw in segment 1, which is our projects and commercial air conditioning business, very strong revenue growth of 32%. EBIT margin slightly lower at 7.6%, but holding pretty firm. We really attribute all of this to largely due to scale as well as controlling our operating costs.
What's really interesting, Mr. Advani, is that you've done so well in the unitary cooling products, division. Like you mentioned, the top line's been good, the margins are good, but some of your peers in the industry, I was looking at Voltas's performance in the same segment, and they've faced a lot of margin pressure. So clearly the trends are different between different companies. But let's talk about the AC segment. and whether you expect similar growth to continue. So for the year as a whole, what will the growth be, or is this a bit of pre-season inventory filling phenomena that we've seen, and what should we expect from the AC business?
So yeah, room air conditioner business, as you know, is in segment 2. We have the commercial air refrigeration business and the room AC business. So as room AC is concerned, it was a good quarter for the industry. I think industry grew quite well. Blue Star also did well. I think a large number of our competitors also did manage to grow some market share. Blue Star on a standalone basis in Q3, we believe that our market share would have touched 14% for the quarter, which is an all-time high for us. We've been trying to get to 15% on an annual basis for a few years now. We're inching up there. Of course, on a full year basis, we will still not be at 14%, but we're very happy with the Q3 result that we had. Of course, there was pre-buying before the season started. That usually does happen in December, but we're expecting a good Q4 for the industry. Obviously for the full year, it'll be a strong growth because it was such a great summer. But on a ongoing basis, we expect the business to grow at about 20 to 25%. For the industry to grow at that level, and Blue Star should grow a little faster so that we achieve our 15% market share goal. Overall demand is good, and of course there's some headwinds around liquidity and a little bit of consumer uncertainty around spend. That's true of the entire all consumer products, but I think air conditioners have been an exception. We continue to see growth at this 20 to 25%.
All right. Hi, Mr. Advani. Since we're talking a lot about your competition as well, and no doubt your numbers look good. We're waking up today. Your stock is a little under pressure, but you have Voltas that's down 10%, and you have Whirlpool that's down close to around 20%. I need to ask you this. Would you have thought of looking at maybe taking a stake in Whirlpool, since the promoter entity wants to reduce their stake? 75% has come down to 50%. Now they're talking about 20%. And if you thought about it yesterday, today you're getting it 20% lower. So will you all be looking at it? Because you get 30% of some competition here in India.
So frankly, I think we've explained our long-term strategy to you and to the market. Yeah. We are a focused air conditioning, refrigeration, and heating company. We have global ambitions. We don't look at just India as a market. We look at the Middle East, the US, and Europe. So, but we want to stay focused in our area of expertise, which is air conditioning, refrigeration, heating. In that context, moving into consumer durables, a wider portfolio for the Indian market doesn't fit our strategy. And so we're unlikely to make that move. But like we do with everything, we're very keen to stay connected with the larger durables industry. So, we may have a look at what Whirlpool is about, but no intentions of an acquisition.
Okay. Got that. That's pretty clear, Mr. Advani. Good morning, Prashant here. There is just one more thing, not very specifically related to Blue Star, but right. And again, I'm bringing in the competitor Voltas here. How is the view now evolving of actually, outsourcing some of the manufacturing to making it in-house? Because Voltas moved it in-house. Could you give us a sense, some perspective? I mean, from an investor point of view, actually, if anything, it's not really helped them in that sense. How's the view evolving on this?
So, we have been a manufacturer for several years now, now several decades. So for us, it is part of our strategy. It is integral to our growth plan. I think that we've talked about this before. It is very difficult for any organization, Voltas or any other company, to transition from a buy-sell to an in-house manufacturing business model. But, it is a transition that all companies are taking and need to take. So I think, as far as our competition is concerned, we expect that over a short period of time, they should get that whole operation under control. There's no reason why they would not be able to do that. They are an engineering company just like us. So I'm fairly certain that they'll get that right. I think it's the right decision that they have taken to move away from contract manufacturing to in-house manufacturing. There is value addition, there's quality control, there's inventory management, there's so many benefits of it. So I think it's the right decision they've taken. It may just take them a little longer to stabilize that operation. As far as we're concerned, our investment plans, we have two large investments that we're making currently that are underway. One is an expansion of our own room air conditioner production volume in Sri City. We're commissioning phase 2, and then we'll start phase 3 very soon. The other big investment for us is in commercial air conditioning. You may know we've not made a capex investment in manufacturing in commercial air conditioning in some time. So we are now doubling the size of our Dadra factory, where we manufacture VRF systems, ducted systems, and heat pumps. So that's another big expansion for us. So a lot on our table. We have to stabilize these capex investments. We're very focused on return on incremental capital, and that's where we'll stay focused for the coming year.
Okay, all right. So, Mr. Advani, then let's round it up with some numbers and maybe some projections that will help us map the coming year as well. Given that both the AC business, the UCP business and the EMP business both have done so well for you, and you sound quite optimistic, at a headline level, what is the growth trajectory? What should we expect by FY25 end? And blended margins for the company. I mean, I don't know if we didn't get a chance to speak about pricing and competitiveness, but if you could just tell us at the headline level, where do you see margins stabilizing by the time we end this year?
Sure. So it is a hyper-competitive market. Pricing is extremely tight, as you would imagine. Even though demand is strong, every competitor wants to add market share, just like we do. Everyone's made large investments through the PLI, as you know. So everyone needs to get that return in order to collect the PLI. So it's a hyper-competitive market. Pricing is tight. Having said that, on a full year basis, we've always spoken about segment 2 EBIT to be at about 8 to 8.5%. We're confident we'll do that. Segment 1 around 7 to 7.5%. Again, that should happen. We didn't talk about our projects business. That order inflow as well as execution has been good. And so that has also contributed to segment 1 performance. Of course, we're expecting infrastructure demand to pick up as public capex restarts. And we're also hoping that some private sector capex picks up so that we have a strong opening to the next year. I think as far as Q4 is concerned, we're well on track to execute our internal plan. Of course, a lot depends on when the summer sets in. You remember Q4 last year was a very large quarter for the industry. And so we're up against, we have a large base to build on, but we're confident about delivering these numbers. On an annual full basis, I think 20 to 25% is what we're aiming to deliver.
All right, we'll leave it there. Mr. Advani, thank you very much. Really exhaustive conversation and lots of perspective there. Appreciate it here on CNBC-TV18 as always. Well, KPIT is the next one we're speaking with. The stock is up 7%. It had a painful last couple of months from 1950 or so to about 1250, which was the recent low in a few months, and back to about 1450 this morning. Now, strong set of numbers for the third quarter. In fact, they've raised their margin guidance by 50 basis points. But do note, the US business has been slow while Asia has been super strong. We have Mr. Sachin Tikekar, President and Joint Managing Director at KPIT Technologies, with us to take some questions. Sachin, good morning. Great to have you with us here, and congratulations on an overall strong set. So you've raised your margin guidance by 50 basis points. Could you tell us what led to the improvement in margins from 20 to 25% over the last 6 months? And what should we expect on a steady state on EBITDA margins in FY26?
All right. So thanks for having me, first of all. Last couple of years, we've been making investments in improving our productivity through artificial intelligence as well as some of the other tools. Secondly, the business mix, more of licensing. These are the two things that we've made investments in over the last couple of years. So some of it is coming to fruition, and that gives us the confidence that, to increase the guidance that we have given earlier on to be, north of 21% in terms of EBITDA. Going forward, you know how the automotive and mobility industry is. These are turbulent times for the industry, and everybody is trying to. All the car makers and truck makers are trying to figure out how to remain competitive. So there, we do expect that in general, they would expect all their partners to do more with less. In order to deliver more with less to our clients, we'll have to remain focused on artificial intelligence, building more solutions so that we can deliver solutions to them in a faster manner with greater value at a lower cost. We'll try, the effort obviously is to try and do that without impacting our margins. So that's what I could say at this point in time.
Okay, that's useful. But two things. One, will you be able to get to the upper end of the margin, 22% in 26? And second, it's related. From what I've heard, probably not, right? The effort will be to maintain it where you are now, because there seems to be do more with less. There could be some pricing pressure, etc. Are you seeing that?
We have not felt it's, in all honesty, I think we have given a higher guidance because we have not felt the pricing pressure, but we know what the OEMs are going through. And as a long-term trusted partner, we are trying to make every effort to see how we can save costs for them. Not just, the cost, the money that they pay to us, but overall cost of their vehicles, and try and make them more effective and efficient. It all depends on how quickly we are able to build solutions and make that transition from a typical services business to a solutions business. So our hope would be to continue to improve the margins like we have done over the last 18 quarters or so. But we'll see how things unfold. I think from the global OEMs perspective, we'll have the quarterly results coming out now for the most of them. Some of them are out as of yesterday, but we'll see more of them over the next 1 or 2 quarters. 1 or 2 weeks. So we'll have a better feel in terms of their strategy, and we'll continue with our long-term efforts to make sure that we deliver greater value to them at lower cost without compromising our margins.
Sure. No, Sachin, it's really commendable. I think 9 months you have already grown the top line constant currency at almost 21% in an environment which has been challenging, where Europe has been going through all kinds of slowdown issues, etc. In that context, let me ask you, the Asia business is really picking up for you. I think you've highlighted that in the commentary as well. Quite a few of the regional markets which you're optimistic on. So is this a conscious sort of tilt that you're chasing more business in Asia and more of the Asian automakers versus Europe, or how does it move? And then in Asia, we had the big headline, right? Honda and Nissan, the joint ventures. So I don't know how much work you're doing for them and what such a consolidation means for a company like you. So if you could throw some more color on this whole Europe versus Asia mix.
No, I think it's a great question. And obviously, the numbers for Asia look tremendous when you look at year-on-year growth as well as quarter-on-quarter growth. It doesn't look all that great when you look at the Americas and Europe. I have to say, so we believe that Asia will be our key growth driver in future as well. Having said that, I have to say that some of the business that we are doing for some of the European OEMs and some of the OEMs in US, we do it and it's run out of India, and that gets booked under Asia. So it's not how it appears necessarily. I just want to say that there is a little bit of a normalization to be done in terms of when you look at the distribution across the geography. Having said that, we truly believe that the growth will come from Asia. And I will come to Honda and Nissan potential partnership. But let me just say this. I think our deep closures have been higher, more than 20% quarter on quarter, which is good news. And the pipeline also is looking much better. And I just want to give you a sense. The highest pipeline is actually from Europe, followed closely by Asia, and America. So what you've seen this year in terms of our geography mix is likely to change next year. I think we are likely to have more balanced growth across the three geographies. I hope that answers the question.
Yeah, it does. It does, Sachin. And just a follow-up question, since we're talking geographies,
yes.
US hasn't been growing that much for you, like you acknowledge now. But we have a new dispensation in place, and Mr. Donald Trump is all about firing up, the US auto industry. So again, just want to understand what your current relationships are like and how you would perhaps try to, build on that opportunity. How are you looking at US auto?
Oh, absolutely. And we believe that, so there are two things. One is what the new administration in the US has said, that they want to give more choices to the consumers. What kind of powertrain they pick, whether it's battery electric vehicle, hybrid vehicles, or conventional powertrain. I think that's something that the administration has made very clear going forward. What it means is the OEMs will have to invest, depending on their target market, which powertrains they're going to invest in. And we believe that most of them will invest in multiple powertrains. That means there is a greater opportunity for KPIT to help the OEMs based out of US, to work on multiple powertrains. So that's great news from KPIT's perspective. Secondly, we also believe that the new administration is pushing for more manufacturing to be done in the US. That means the global OEMs will also have to invest more in the US market and increase their manufacturing. That also creates greater opportunity. So we are quite bullish. That's one reason why we are bullish on the US. The second reason is we started to invest in trucks and off-highway last year. And the off-highway businesses started to show some green shoots. And we believe that in the second half of next year, we'll see some growth coming from off-highway, specifically from the US. So that's how we really look at net. We do believe that our business will increase in the US and Americas, and we'll have far more balanced growth than what you see in the current year.
Sachin, just last point, how can we not talk about China, right? China has been all the talk of the town with everything which has been happening. Last time you were on, you were saying that by the end of this financial year, which is FY25, that strategy for China, you said, and China for the world. I mean, in terms of what you're doing there will also kick off. Could you tell us what's happening there?
Absolutely.
Yeah, sorry, go on.
Thank you for that question. And we need to talk about China when we talk about automotive. What has happened is in China, the global automotive, many of the global automotive who were present in China was their #1 market. And that's not the case today. So our strategy is to work with some of the Chinese OEMs, also to learn about China innovation, China speed, and also, the ways of doing things. I think there is a lot that we can learn, and we can actually apply those learnings for our global OEMs so that they can become competitive. China, over the last 40 years, they've learned from the rest of the world quite a bit, and they've made some of the things much better. I think it's time that we open our eyes and look at China in a positive way, learn from them, and see how we can help our global OEMs. So that's one part. So we've started working with some of the Chinese OEMs locally to see how they work. And also there are ways through which we can create value for them. So that work has started. We just want to be mindful about, how much we take on in China, because it's a different speed, and the expectations of the OEMs there are very different. So we're going to take one step at a time in China, and that's going to be the mantra getting into the H1 of next year, and we'll see what that means in the H2. So we are keeping our ears to the ground to see what is actually happening in China, And at the same time, you hear a lot about trade barriers from, the US, 100% tariffs and all software related to automotive is banned now. You've seen increase in tariffs in Europe and some of the other countries. So we also have to make sure that we have a strategy for China, and then there is a strategy for the rest of the world. So we have to strike the right kind of balance between the two.
Got it.
Make sure that there is a rounded growth.
All right, absolutely. A great conversation, Sachin, and thank you for all that perspective on your business and your business in the context of countries and geographies like China, etc. I think we'll hear more about that market as well from you in the coming quarters. Appreciate it. Stocks up about 6% or so. We'll take a quick commercial break here. Next up, you'll hear from the management of Hitachi Energy India. They reported numbers as well. Stocks corrected. High quality name. We have Mr. N. Venu, MD and CEO of the company, on the other side. Welcome back. Well, Hitachi Energy is a stock that's surging in trade. They reported a good set of numbers. Revenue surged up by 27%. You had the margins that expanded as well. To detail the past quarter's numbers and more importantly, what's the outlook, particularly on HVDC, and what's the pipeline out there? We're joined by the Managing Director as well as the CEO, Mr. Venu, who joins us on the show. Hi, sir. Good morning. And always good to speak to you. Congratulations. Margins back in double digits. Will it hold at these levels from here on? I recall when I visited you in Bangalore, you had said it's heading over there, and it's happened. So should we get used to now margins continuing in double digits? And also I wanted to ask you, in terms of this HVDC orders, that's clearly started coming. It's more frequent than what we have seen in the past. And as you said, the pipeline is there. There are 2-3 orders in store. By when should we hear about the outcome?
Yeah. No, I think good morning, Nigel, and it's a pleasure talking to you always. Yes, this quarter has been a very solid all-round performance in all metrics. Our orders have surged almost, triple digit, 838%, and driven by a large HVDC contract. And revenues are 31% higher, and our margin EBITDA improved by 380 basis points. And our exports have gone up, and our other lever for growth, service, has done well in this quarter in that. Overall, I would say that this quarter has been extremely good in all the KPIs. And as we have been saying about our margin guidance, I think our endeavor is to see that we improve our margins on a quarter-on-quarter basis, or at least hold on to that. So that will remain in that. And coming back to the HVDC, as you know, that energy transition is a huge tailwinds in India. And as a country, as part of the National Electricity Plan, NEP, they want to add another 30 gigawatt of HVDC lines. And that creates a huge amount of pipeline from now until 2032. In addition to what we have won, we see at least another 3 projects are under bidding stage, and we will be also bidding those things. And if you recall, we have been saying this at least last 2 years, and not only saying this, but we have taken a lot of actions in localizing our portfolio, localizing equipment, opening our new factory for HVDC in Chennai. All those things are now started bearing the fruits.
All right, got it. So, Mr. Venu, as you said, now you're expecting margins to hold in this vicinity and improve from here on. Is that correct?
At least hold on to that. We don't want to give a further guidance on that, hold on to that.
All right, I'll have to push on the HVDC part then. As you said, there are a couple of announcements that could be due on that front. And now it's not one big HVDC order in 5 years. The tenure as well, the frequency has increased. Adani, I think they were selected as the developer for one of them, and they're looking for a partner. So, places you well. And if I look at the global backdrop as well, Hitachi, the global company, has been bagging larger number of orders, particularly the one in Europe, in comparison to Siemens. So that places you quite well. What are you all doing so differently that is putting you all in pole position? And on these orders, the Adani order, the Leh Ladakh order, the HVDC order, should we expect it sometime in the second half of this calendar year to know the outcome of that?
Yeah. So I think HVDC technology, this is a technology we have invented 70 years back. And since then we have been, investing in this. This technology, you need a lot of investments required to ensure that you are up to date on the technology, bringing the footprint, low losses, all those things are extremely important. And we did the same thing in India also. And in India today, we almost manufacture or we almost execute this project end to end in that. What we are doing differently is basically, we are localizing it, we are updating it, we are creating the ecosystems in India to execute the project end to end in that. Today, around 16 HVDC links, including the new one. Out of that, 8 are being done by us. So that clearly shows that we are at pole position when it comes to the HVDC technology. And this is also true for globally. Globally, we have done almost 150 gigawatt of HVDC links around the world in various parts of that. And we have been investing, and we continue to invest in this technology in that. When it comes to your second part of the question, I think we at least one more project will get awarded in the next 3 to 6 months also, and maybe another project in the second quarter of second fiscal of the next financial year is what we are expecting it.
Okay, so another HVDC award probably in 3 to 6 months, and the subsequent one in the next financial year. So you mean FY27, sir?
Yeah, this award means the customers will award. It's not that we get everything. The customers will award one project in the next 3 to 6 months, and one more project in the second 6 months, second half of the next financial year.
Got it. Okay, so now this becomes really important for us to understand. I mean, look at the stock, by the way. Stock is on 20% circuit. And even though the market anticipated this big swell in the order book, right? We knew about the HVDC order, but still the execution and the rest of the parameters have also hit the mark. Mr. Venu, so if we talk about your order book, total order book, I think you're almost at about 19,000 crores along with this wins.
That's right.
How much is ex-HVDC? And so let's take it step by step. And then you're saying another 6 months, assuming if you get some, something there in that award, how do you see the order book position moving, the total order book, and also ex of HVDC? And then we need to understand revenue recognition, because these HVDC orders are very big. So what is the timeline? When will you start recognizing revenue from them? So help us understand both the way the order book will move and how the revenue will start reflecting this.
Right. No, I think, again, thank you very much for your questions. HVDC orders are pretty long gestation period. It'll go from anywhere between 48 months for first half of the things, and next 54 months. That's where we do. The bipole one, 48 months, and 54 is bipole 2. But the revenues will start kicking in slowly after 12 months, slowly, but it'll actually get momentum will come in the second year and third year, and that's where is the thing in that. We don't give the split of our order backlog of close to 19,000 crores. What is HVDC? What is not there? But I can tell you that our order inflow this quarter also, excluding HVDC, also has a high double-digit growth. So that clearly shows our focus on our base orders, our high growth segments I was talking about, the renewable and data centers industries are really growing in this quarter as well.
Got it. So X of HVDC also is growing well. But now the second part of my question, understanding revenue recognition. You said the revenue will start getting booked 12 months onwards. So then help us understand slowly, gradually. So now help us understand the revenue profile. Some idea of where you might be at the end of FY25. And I'm guessing in FY25, HVDC is not even getting booked. And then FY26, 27, when it really starts showing up in numbers, and what's the kind of delta? And I'm guessing it's going to be a big delta that we'll expect on the top line.
Now, FY25 this year, also we have a revenue from HVDC. That's a Mumbai HVDC project, which we have booked, 3 years back. So that's part of the revenue has come in that. So remaining revenue will also come in the next year, and some part of the revenue for the order which we have booked also will start kicking in into the next year.
What's the revenue growth for this year? Top line growth with all these orders and the additional revenue being booked.
You recall, we don't give the forward-looking statements. What all I was just trying. We have been creating the order backlog, and we are sustaining this order growth momentum. And naturally, the revenue is offshoot of those orders. You get the backlog, and you execute it, and you get the revenues. And our focus has been, if you see in the last 3-4 years, to consistently create the highest ever order backlog. And this quarter has been highest ever order backlog, close to 19,000 crores.
Got it. I know you don't say good morning. I'm sorry we had more questions, but we're out of time. But I'll just keep it simple. I know you don't give a outlook, but you can agree or disagree, or agree strongly or disagree strongly. So 24, and because it's a high quality name, stocks corrected, and people would want to know, because on a trailing basis, stock seems very expensive. Not your business to talk about the stock, and I don't expect you to. But so 24, I think you did about 120 crores in profits. 25, about 320 odd crores. I'm not. I think that's the expectation. And 26, it's just under 600 crores in net profit. So we're talking about very big jump in that sense. Sounds in the ballpark, correct?
If the revenue comes up, rest of the things fall in, Prashant. So I don't want to say yes or no for that. If you see here, our 9 months revenue from this year is 4,500 crores. If you add all the 3 quarters put together, which is quite a high, almost 25-26% growth on the cumulative 9 months. I think our thing is to sustain this revenue momentum, and that's exactly what we are looking at it.
Okay. All right. Next time I'll ask. We'll ask more in terms of the business. So very interesting space, and of course with the budget around the corner. I think I'd love to have your reaction post the budget as well, which is of course this Saturday. Thank you very much for joining us and running us through some of that commentary. We'll take a quick commercial break here. We come back. So lots to discuss commodities with Manisha and more when we return.
This is something where one needs to kind of bear in mind that sentiment has gone to a pretty extreme level as per our proprietary benchmark, which has traditionally been very good in predicting the extreme points in the market.
Welcome back. We've got the market, of course, is doing what it is. Tata Motors is under pressure. It's seeing some pain, some downgrades, etc. coming through as well. In the conference call post the earnings yesterday, P. Balaji, the group CFO, told CNBC-TV18 that the China demand situation is affecting the entire industry at large. He also spoke about their business in the US and UK as well. Listen in.
China demand situation is more coming from some of the retailers getting into financial stress, and therefore that's impacting the entire industry at large. And as the retailer financial situation starts improving, we should expect to see China back into growth in the coming quarters is what I would hope for, and that's what we believe is likely to happen as well. As far as UK is concerned, the main one that we need to plan for is earlier we used to have challenges with respect to getting insurance in the market. That is now behind us. We are now seeing insurance availability for people starting to improve, and therefore I do expect Q4 to be UK starting to normalize. At the same time, we are seeing strong growth for our products in the US, because we delivered almost 44% growth in the US, and that should again get back into help us manage some of the pressures that we are seeing, particularly in China.
All right, that's Tata Motors. Stocks been under pressure. Speaking of stocks under pressure, Whirlpool is topping that list, still down 20%. That's because the global parent is looking to cut its stake in the Indian entity. Hormaz back with the details. Hormaz.
Big news coming in this morning, right? Whirlpool now parent company, of course, Whirlpool Corporation, planning to bring its stake down to 20% by the mid of this year or by the later half of this year is what the company said, along with its earnings announcement overnight. And at the start of 2024, they had a 75% stake in the company. Then in February, they sold close to 25% stake in that block deal. And now they are planning to bring that stake down further to just 20%. Now, if you remember, in February of last year, there was this 24% block deal that took place that was valued at over 4,000 crore rupees at an average price of just around about 1,280 rupees a share. And Whirlpool Corporation said that they are going to use these proceeds to pare down their debt and to strengthen the balance sheet at the parent level. And Whirlpool CEO, of course, the parent company CEO, Mark Bitzer, was on air on CNBC on the 27th of last year, and he mentioned that they are only taking money off the table with the parent Indian entity trading at around 50 times and the parent company trading at just around at much lower valuations compared to that. And that still stands, because even at the current price, the FY26 price to earnings multiple for the Indian entity stands at around 41 times, and the parent is just trading at around 9.5 times. And since then, the shareholding changes that have taken place after the promoter pared down stake, mutual funds have increased their stake substantially in the company with the stake that was sold. The stock as well, at that time during the block deal, was trading at around about 1,300 rupees. Within the next 7 to 8 months, it made a high of around 2,450. But if the promoters, the question being whether the promoters have missed a trick, because the stock is now down 35-36% from those levels, and add another 20% in today's session as well. So the stock indirectly is now trading below the levels of the block deal that took place in February of 2024. So the street not liking it, another overhang created, the stock down 20%.
Okay, all right. Got that, Hormaz. Thank you very much for the details over there. Let's quickly shift focus to the commodity markets. We have Manisha joining in with the latest. Manisha.
Thank you for that, Survi. Well, these are the markets that are still awaiting clarity, as other asset classes as well. So it's ahead of Feb 1st, and we're looking at very choppy markets here. I'll start with what the street is anticipating, and there are various statements on whether or not on 1st of Feb we are going to be looking at those 25% tariffs on Canada and Mexico. If that is happening, is it happening at the same quantum that is being talked about? That is a big uncertainty there. In the meanwhile, when you look at the crude oil prices, we have continued to decline onto this one. We are trading at the lowest level since 2025. For the gold prices, we are not too far away from all-time highs. So all that uncertainty has led to safe haven buying coming in for gold. And when it comes to metals, well, we have seen a decline because the global PMI numbers have been on the weaker side. There are demand fears globally if you do see those tariffs come in. I want to take you visually through on what we've seen in sense of many of these commodities in last few years. I'll start with the crude oil prices, and that big gain came in at 2021, 53% on the higher side. Since then, a plus minus 10%, and and then a plus minus 2 to 3% is what we've seen until now. So all those gains that we saw in 2021 is what we seem to be holding at. After that, we haven't done much. Same is the case really coming in for copper as well. 2021 was a huge year for all of those commodities. So we saw 26% of gains then, a decline, a plus minus 7% and a decline there. So as you can see, after those kind of gains, we haven't been able to see very strong numbers there. Last year, of course, copper saw all-time highs, but since then it has been a one-straight decline. That's aluminum for you, and we are dealing with shortages right now. But even with that, the last couple of years, last year for that matter, hasn't done much. We're looking at alumina, bauxite trading at all-time highs. But has a lot of demand come in for aluminum? We haven't seen that. The huge super cycle that we talk about, or the EV demand in the global markets, clearly hasn't supported many of these metal prices. In case of aluminum also, 2021 was a great year, and after that, we only have seen a decline. Not so much support in last many years when it comes to iron ore and steel. We are looking at constant increase in production there. So as you can see, 2021 was a weak year. 23 we did see some gains, but 24 actually washed all of that out. And this year we've started on a weaker note for this one as well. Final chart comes in for nickel, and while a couple of years were great for this one, since then we have seen volume decline, demand decline, and many of these EV markets actually have moved on to proxies and substitutes. So nickel clearly in oversupply there as well. So many of these metal prices are actually waiting for cues from US in sense of tariffs, better data from China. Until then, this perhaps could just about continue.
All right, Manisha, thank you very much for that. So that is commodities as always, primer there. We take a quick break. It's our special segment. It's the economy. My colleague Lata will be speaking with Stephen Englander of Standard Chartered and Neeraj Gambhir of Axis Bank on the overnight Fed decision and of course the upcoming RBI meet next week. Stay tuned.
Esteemed guests and friends, above all today, we express our deepest gratitude to our visionary Prime Minister, Shri Narendra Bhai Modi ji. Pandit Deen Dayal Energy University owes its very birth to his extraordinary vision. All of you are benefiting from what Narendra Bhai thought in the early 2000s. And when he called me and said in 2005 that we have to build one of the finest institutions in Gujarat, right? And that's
Welcome back. The US Federal Reserve paused for the first time after it started its rate-cutting cycle last year. The Fed funds rate now stands as before at 4.25 to 4.5. The FOMC statement sounded hawkish, especially when it referred to the labor market conditions as solid and inflation as somewhat elevated. So, where do rates and the US dollar go from here, and what does it mean for the Reserve Bank and for the rupee? I'm joined by Stephen Englander, the head of global macros for Standard Chartered Bank in the United States. And in a bit, Neeraj Gambhir of Axis Bank will also join in to parse the India impact. But first, Stephen, good evening to you, and thank you very much for staying up for us. It must be very late out there. First, what are the key takeaways for you from the FOMC statement? It says labor market conditions are solid. What did you make of that?
Yeah, the statement itself, I think, was more hawkish than last time. And both the comment on inflation, that it was stable above above the target, and the comment on the labor market that it was solid and unemployment was low. It really, if you just took it by itself, you wouldn't think that they would ever cut. But I think Fed Chair Powell clearly sort of massaged that message into something more dovish, and that's why the market is reacting positively.
Okay, I missed that. But how many cuts have you penciled in, or had you penciled in? Have you changed the number because of the statement and the conference?
We think the U.S. economy is weaker than it looks. We think that the data are going to deteriorate as the first half progresses. And so we still have 4 cuts. You can think of that as a maximum. But given that the market is pricing somewhere between 1 or 2, anything that's 2 or more, I think would be very dovish and dollar negative. So we do think that the inflation numbers will get better, and we think that the labor numbers will get worse within a couple of months, and that will precipitate more aggressive cutting by the Fed than the market is now pricing.
Okay. 4 cuts this year definitely makes you a serious minority. But what is the course of the U.S. yields as you see it? We saw a high of 4.8. Are we, is that behind? What would be the range for the next quarter?
I think that yields are more likely to come down even from these levels, but probably not very much. I think the inflation numbers that we've had recently have looked very benign, so we've already reacted to that, and there was some risk premium that was priced into the market, and that's come out. But we could go closer to 430, I think, on the 10-year, maybe 440. But I think we're not going to see 3 again. And once we actually get to the period of time, likely in the second half, when stimulus hits, I think we'll be trading, well north of 4.5 again. So I think there will be a temporary period of lower yields, but it's not going to last.
See it going below 4.5, that's very important because that will shape what the Reserve Bank is thinking. What's the future course of the dollar index, you think? It went as high as 110 last month, but today it hasn't moved after the Fed statement. Inched up a bit. Stays at 107.8 for the last couple of days. What's the future course?
I think that ultimately the dollar will follow yields and come off. But again, we would characterize this as a correction. We don't think that we've seen the peak of the dollar, but we think we've seen local peaks, and that there's room for the dollar to drop, say 2, 3, maybe 4%, as the macro picture becomes, visibly more benign. But ultimately, we do think that the dollar is going to rebound, that they're really determined to stimulate the economy, and that's likely to renew dollar strength. But we think that's going to be a second half of 2025 story rather than a first half.
Okay, but that's still important. If you're seeing yields higher and the dollar index also higher, that definitely makes life difficult for EM central banks. Now, just a word on US inflation. Given that Trump is serious about tariffs, though he has not announced anything, and has actually done deportation, so serious about immigration, how do you see inflation rising in the US?
Well, it does worry me about inflation going forward, but I don't think it's an immediate threat. I think, again, it'll take a while for tariffs to have an impact. It looks at best that they're going to implement them gradually for the most part. I think that for the next 2, 3, 4 months, the inflation picture is going to look much better. The second half could be a different story again, where inflation picks up again. But I think we're likely to go, down to 2.5 on core inflation in the first half of this year. So I think that the Fed and the market will take some comfort from it. But tariffs have a cost in terms of higher prices, and immigration has a cost, or less immigration. I think it will be harder to get people to staff certain kinds of jobs, and But that would be a slow working inflation process. It doesn't mean that it's not for real, but it means that it's not immediate.
Not an immediate threat. Stephen Englander, I really appreciate you staying up for us this late. Thank you very much indeed for joining us. We've got the key things from the US in terms of Stephen expecting that the dollar will continue to remain strong and US yields don't go down much at all. I think around 4.5 is what he was expecting. Let me welcome Neeraj Gambhir, the Group Executive and Head of Global Markets for Axis Bank. Neeraj, thank you very much for finding time for us. Well, Fed has not moved. The Fed Watch tool seems to give the impression of at best 2 hikes, some think even less. Sorry, 2 cuts, some think even less. Do you think the Reserve Bank has much elbow room? What about February 7th itself?
So, Lata, my view is that Fed is on an extended hold. I think if you go through the Powell's, conference call yesterday, it's very clear that there is a lot of uncertainty that they're dealing with, and they have practically no clue as to which way these things are going to play out, right? So I do feel that Fed is going to wait and watch for policies to be announced, study the effect of those policies on the inflation, growth, and various other parameters before they start making their mind about whether the next step is a cut or stay on hold, or maybe a very low probability event of a hike if the inflation doesn't behave well in US. Given that background, I think there is no real pressure from a global monetary policy cycle perspective on the RBI to cut at this point in time. I think the backdrop of a strong US dollar means that we are seeing continuous intervention in the FX market. And that intervention basically means that there is an impact on domestic liquidity. And in that backdrop, and the fact that our inflation is still somewhat higher, we are not seeing as much disinflation in the vegetable prices as was expected. Next year's view on inflation is also of close to 4.5%. I don't see a very real case for a policy rate cut in the February meeting at this point in time. However, there is some conversation about the fact that the growth has slowed down and there has not been as much of a pickup in the second half as was expected. So there are some arguments from the growth side, but I think at this point in time, Reserve Bank can also potentially wait and watch for some more time before taking that step. In any case, the elbow room to cut rates at this point in time doesn't seem to be very, very large. I mean, if you expect the inflation to settle down at 4, then our overnight rate cannot be, significantly lower than 6%. We need to have at least 200 basis points of gap there.
No, exactly. And if the US Fed also is only going for 2 more rate cuts, then they are stabilizing at around 4. The inflation differential between the 2 countries is at least 200 basis points.
That's right.
If it is 4.5, so interest rate differential also cannot be less than 200 basis points. One would assume. Right. Okay, so you're betting on a non-rate cut.
Sorry, on that point, Lata, if you just allow me, if the total leeway that we have at this point in time is 50 basis points, I think the Reserve Bank should potentially keep that for a later date to see how the growth plays out. For example, if the growth weakens significantly from here onwards, then that's the time to use that tool.
Okay. Point taken. But how have you interpreted the liquidity easing measures? Some said that the liquidity has been eased so that when the rate cut comes, it will be passed on. Basically, your takeaways on the liquidity as well as this argument.
Yeah, so I think in the current context of where we are, liquidity is a far more important variable than rates, in my opinion. I think if we need to really be focused on the fact that liquidity in the system is well managed. The banking system is seeing a significant deficit of approximately 3 lakh crores at this point in time, which Reserve Bank has been supplying on a daily basis. But it is having some impact on, for example, the CD market rates, the bulk deposit rates, etc. So we do need longer-term structural liquidity in the system, durable liquidity in the system. What Reserve Bank has done so far is supplied 1.5 lakh crore. That durable liquidity is also being made available over a somewhat elongated time frame. I think it goes all the way up to February end. I think we need more liquidity and more durable liquidity in this quarter than what Reserve Bank has so far supplied. I think my guess is that between 2 to 2.5 lakh crores is the amount of liquidity that we will require in this quarter on a durable basis for markets to settle down and not have too much of pressure.
Okay, I'm being warned. This is my last question, so I'm going to pack 3 questions. 1, do you expect a CRR cut? 2, what's your dollar-rupee range, say, for the next 6 months? And the yield range?
I don't expect a CRR cut anytime soon. I think Reserve Bank will try and manage the liquidity situation using the other tools like OMOs and buy-sell swaps and VRRs. CRR cut is a more blunt and more longer-term tool, so they would probably want to keep it for a later date if required. I do expect dollar-rupee to weaken, but I don't expect it to weaken too much. I think there is the volatility is being managed. There is active intervention from Reserve Bank, so I think 87, 87.5, provided dollar continues to be fairly strong. I think there is some argument for the yields to drip down a little bit more from here. So my range for yields will be somewhere between 6.5 to 6.75 for this quarter.
Oh, thank you so much for packing in so much in so short a time. Neeraj Gambhir, I'll take a rain check from you to speak with you after the budget numbers are out, which anyway people believe is not going to be terribly bond market moving, especially if the borrowing, if the fiscal deficit is going down to 4.5%. Thank you very much for this conversation. We wrap up on Bazaar on that note. Chartbusters coming up.
We have achieved from 2007 onwards, so we will always be grateful to our Prime Minister. Long before he became Prime Minister, he foresaw that India needed Atmanirbharta in energy. Over 20 years ago, he told me he wanted Gujarat to lead the nation in energy and energy products. He also told me that Gujarat should take the lead in cultivating world-class human resources needed to achieve India's clean energy ambition. That is how he helped establish this pioneering university. Friends, there are many things that we learn from our beloved Prime Minister. Let me mention just 2 lessons here for all of us. 1, Modi ji never lets a good idea go to waste. His Man Ki Baat inevitably becomes his Man Ka Sankalp. His Sankalp is always Vajra Sankalp. His determination is as hard as a diamond. He does not rest with simply making a Sankalp. He knows how to turn his Sankalp into success. In the last 10 years, the world has seen how he especially chooses impossible-looking tasks and transforms them into reality. This, for all of us, is lesson number 1. Lesson number 2 is about his boundless energy. Narendra Bhai Modi's name stands for Anant Shakti, infinite energy. Since PDEU is an energy-focused university, all of us should learn to be as energetic as our Prime Minister. People often ask the question, where does Modi ji take rest? Or does he rest at all? I can tell you that I know the answer to this question. The answer lies in what Pandit Deen Dayal Upadhyay ji has said, who is the founder and whose name this university bears, has said about rest or Vishranti. He has said, Kaam mein badlav hi Vishranti hai. Change of work is itself rest. And I think this is our Prime Minister's motto. This should be our motto, dear students, also. Therefore, when we think about these 2 lessons, how to turn ideas into action and how to work tirelessly, we cannot escape the conclusion that Narendra Modi ji is not only India's Pradhan Mantri, but for us and this university, he is our Gurudev, our respected teacher, and we will follow his learnings.
Tata Motors skids more than 7% on the back of a weak quarter. The margins miss estimate despite the PLI benefits. Brokerage firms Jefferies and UBS issue bearish calls on the stock. Meanwhile, CLSA has an outperform rating.
Bajaj Finance, on the other hand, climbs more than 3% after reporting numbers in the third quarter that were above estimates. Deposits rise nearly 19% on a year-on-year basis. Management in the conference call guides for AUM growth of 25% in the next financial year.
Whirlpool tanks after its parent Whirlpool Corp announces that they plan to trim stake in the company further to around 20% by mid or end of this year.
Voltas slips more than 11% on the back of its third quarter numbers. The earnings miss estimates largely due to lower unitary cooling product margins.
Hitachi Energy rallies 20% on the back of a solid showing in the third quarter. The revenues are up by 27% on a year-on-year basis. The margins expand as well. The management tells CNBC-TV18 that they endeavor to improve margins on a sequential basis, and they are due to receive some HDVC orders as well. Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. And as we speak, the market's at the high point of the day. So no worries on the headline index. The Nifty Bank is well up close to around 200 points. I'll tell you what, the Nifty Bank is holding above the 20-day MA. The Nifty is getting very, very close to that 20-day MA. And we had Rahul Sharma a couple of sessions ago who said he's expecting more than a 1,000-point rally. Guess what? From that day onwards, in fact, we've already seen 500 points out, so maybe we'll get Rahul to revisit that call out there. But it was a brave call, Mangalam, and it seems to be working at least as of now.
A brave call indeed, and we're going into important events as well over the next couple of days. So we'll keep an eye out on how this pans out. Meanwhile, a bunch of stocks doing extremely well as well. From the broader markets, the mid-cap index is outpacing the frontline indices over the last couple of trading sessions. That telling you about the confidence, though we've seen some bit of profit booking from the highs on that index itself. We'll do one thing. We'll take a short break, come back on the other side. We'll get you a lot of corporate conversation, starting with excerpts of our conversation with Rahul Bharti, who's the Executive Director of Corporate Affairs of Maruti Suzuki India. Stay tuned.
We must aim higher. Within a couple of years, India will emerge as the third largest economy in the world. No power on earth can stop India's growth trajectory. I can clearly foresee that India will become the most prosperous nation in the world before the end of this century. But India, with other large economies, also has a big responsibility. We must not allow economic growth endanger planet Earth and further worsen the climate crisis. Therefore, the transition from fossil fuels to clean and green energy has to be accelerated. I am supremely confident that green technologies and green enterprises can reverse the ecological degradation and indeed make our planet more beautiful, more livable for future generations. Our Prime Minister wants India to become the greenest nation in the world. For this purpose, India is also transforming itself into a deep tech nation with advanced manufacturing capabilities. This is the context in which PDEU should see its future role and responsibility. My dear PDEU family, therefore, here are my 3 expectations from all of you in the PDEU family. My first expectation, PDEU should further improve the quality of research and make it application-driven. We should specially focus on newer areas like bioenergy, which have the potential to help our farmers and boost employment opportunities. My second expectation, we should simultaneously increase our internal strengths and also forge national and global collaborations so as to enhance our leading position in research and academics. My third expectation, the intersection of green energy, green materials, and artificial intelligence.
Welcome back. Well, Jindal Stainless reported a more or less inline set of numbers. In fact, from the lows of the day, the stock has recovered considerably. It's up close to around 7% from the lows of the day. To understand what's the way ahead, we're joined by Mr. Anurag Mantri, the Group CFO and Executive Director of the company. Hi, Mr. Mantri. Good morning. Always a pleasure to have you on the show. Let's get two big numbers out of the way. You started the year hoping for volume growth of around 20%, which was scaled down to around 10 to around 15% or thereabouts. Now you're in high single digits at around 8%. What do you end this year with in terms of volumes? And consolidated EBITDA, I see, is at around 20,000 rupees per ton. You hold on to this. Will it get better?
So good morning, Nigel. So like as you said, the volume guidance, what we are expecting this year to close at around close to 9%, which is around 2.35 or 2.36 sort of million ton number. This is primarily because of, and this is still almost a 95% achievement, what we said earlier, despite our export market didn't pick up and there is a continuous dumping happening in the domestic market. On EBITDA guidance side, still we are holding to a consolidated EBITDA guidance of around 20,000 to end the year with, which include the JSL and JUSL combined EBITDA per ton, which we were expecting to move towards 21,000, but still we are will be able to close the year with the 20,000 plus sort of the EBITDA per ton guidance. So we are more or less, despite the challenging market, on track in terms of balancing our volumes and EBITDA earnings.
So now you'll grow by 9% for this fiscal year and your EBITDA per ton will be at around 20,000 rupees per ton. Are we getting that correct?
Yes.
And for the following year on this low base, FY26, will things improve and also your export contribution, will it go up?
So next year, at least volume side, we are hoping that we should be moved to again back to a double digit territory. So if you see last 2 years, if I take this year of 9% but the previous year we delivered 23%. So CAGR wise, we are still delivering 16% growth in last 2 years. Next year, we are hoping to move to a double digit sort of number next year from this base. Now, it's a bit early to give the exact guidance on the EBITDA and this because there are two factors to watch carefully. Is that one is that what's happening in the US, which is our key export market, and we'll have to watch for how the US market evolving. We are so besides, I'm not keeping aside the tariff part, which we will come to know within few days. But otherwise, we expect with Trump coming, there should be a push on the infra, and we should be getting a better traction in the market. We have already also what we as a US strategy, we started pushing the value-added product in the US market. So we are already seeing a good traction on our US order book in last quarter. So last quarter 3, we saw a good traction as compared to the quarter 2, almost 1.5x of the increase in our US order book. And if the Trump pushes the infra development, I think that should give a good foray into this. Obviously, that the tariff have to be watched for, because if they put up a high tariff, though we still have a 25% tariff. So right now they have been saying only for Mexico and Canada. So we are hopeful that India should be insulated, but let's see, we'll have to watch that factor. And second is that on the domestic market, the continuous dumping in China. So our request, already there is a petition filed with DGTR for 25% safeguard duty, which we expect, we hope that the government should take cognizance of.
All right, we take that point. Hi, Mr. Mantri. Just a couple of questions from my end. I just wanted to know your outlook on debt from here on. Close to around 1684 crores is your net debt as of December. Where does this number go over the next couple of years? What's your cost of finance here? And club that with CapEx as well. What's needed over the next couple of years?
So our CapEx, currently running CapEx, what we said is this year we said our CapEx spend should be around 5,500 crore. There could be some spillover, but more or less because some of the CapEx we may defer to next year. But more or less, most of the CapEx almost were related to the acquisition of our NPI, our acquisition of Chromeni assets, which we acquired. Also the melt shop capacity, which we are putting up in Indonesia with joint venture. So those CapExes were committed CapEx, and those are already have been spent. So with this, what our guidance, if you recall, Mangalam, we said that this year we will be ending with around close to 5,500 crore of debt. Despite the lower number of the volume growth, we expect that we will still be in this range and maybe some better than this range. So we expect the debt to reduce from our previous guidance slightly better than the previous guidance. And the next year CapEx, what we have planned right now, as per the planned CapEx, is around 1,800 crore. And plus any of the spillover CapEx which goes from this year.
Okay, 1,800 crore for next year. And for this year, I'd missed that number. What is the CapEx?
This year, our guidance is right now 5,500 crore of the capex spent. Mostly, I think we may be lower than this because we may get some of the capex may get deferred to next year. But most of the capex have been spent. So I think 90% capex should be spent in this year itself.
Got it. All right. And your debt will peak out at 5,500 crores. Are we getting that correct?
5,500 crore. We will try to do better than that, I think. But the guidance for the year end is 5,500.
The big focus is going to be budget 2025. And Mr. Mantri, you briefly mentioned that imports also are worrying you in the export market as well. There's uncertainty. So what is your plea? I missed that number. What is the current duty in place? And where do you see that duty headed to?
So budget, our key request is that the basic custom duty on the non-FTA countries is currently 7.5%. So our recommendation is to increase to 15%. So at least level playing field is established for the domestic player from non-FTA countries specifically. This is beside separately the database safeguard duty, which has been requested for 25%. Plus our second request is on the continuation of especially the moly and the graphite electrode to reduce the duty on that, because graphite electrodes are the key for the electric arc furnace based production. So our request is to government to reduce the duty on the graphite electrodes imports in the country.
For the year, you've given a 20,000 crore EBITDA target, which includes JUSL. Specifically for JUSL, what is EBITDA likely to be this year and next?
So JUSL typically runs in absolute EBITDA terms close to 700 plus to 750 crore sort of range. So we are expecting JUSL to continue delivering those numbers. Therefore, if you see on a consolidated basis, broadly, if in a per ton I convert it, it will always remain 3,000 ton plus 3,000 ton and the positive side of 3,000 ton per metric ton. That's why I'm saying so totally we should be able to still deliver 20,000 EBITDA per ton of the numbers for this year.
Got it. Appreciate you joining in, Mr. Mantri. Thanks a lot for joining in. As we said earlier, the stock has seen a good recovery, factoring in a better performance in FY26. We'll slip into a short break. Come back. We'll be joined by a couple of managements. Don't go anywhere.
To shape the future of humanity, I would like PDEU to gain a leading position in this synergy. Talking of artificial intelligence, I have a piece of advice to our young students. You must be good at using AI as a tool of learning, but do not give up your own critical thinking. ChatGPT का ज़रूर से इस्तेमाल करो, लेकिन याद रखो, आर्टिफिशियल बुद्धि से नहीं, खुद की बुद्धि से हम आगे बढ़ेंगे और आप आगे बढ़ सकते हैं.
Welcome back. Let's talk about Maruti. The stock is in focus on the back of their numbers. They were in line with estimates. The management commentary is what's pressurizing the stock. Parikshit Ludra spoke to the management, and here's what they had to say.
We've just taken a price increase, a minor price increase. We had to pass on some inflationary pressure to the market, which our cost reduction could not take care of. So our effort would, of course, be always to make our prices more comfortable for the consumers.
Right. And going forward, what are the factors which are impacting margins right now? Would there be an urge to increase prices again?
If there are inflationary pressures, we'll have to take stock of them. Whatever is not possible to offset through in-house cost reduction, we will have to pass on in a very calibrated manner to the market. Of course, we would never like that to happen, but sometimes pressures need to be passed on. So in this quarter, we had higher sales promotion, 20 basis points, higher advertisement also 40 basis points. There was adverse Forex of 20 basis points. Depreciation of some of the facilities of the Kharkhoda plant set in by 20 basis points. Of course, we had positive factors also, like commodity favorable by about 40 basis points. We had operating leverage because of good volume growth by 30 basis points. Going forward, it is uncertain. Commodities and Forex always determine our margins, but the biggest margin comes from volumes. And for volumes, we will have to get into newer segments like more launches in SUVs and maybe increase our exports big time.
Going forward, what is the kind of export growth you expect?
So this financial year, we hope to do more than 3 lakhs for sure. And we want to take it up to something like 7.5 to 8 lakhs by the turn of the decade. And what will be very helpful will be the e-Vitara exports to about 100 countries of the world, including in Europe and in Japan.
Okay, all right, let's get straight to our next management. IMFA, Indian Metal and Ferro Alloys, the company reported a weak set of numbers. It seems the street wanted something more as well in those numbers, because from yesterday till today, the stock price has corrected close to around 15%. But we have the main man with us, Mr. Subrakant Panda, the managing director of the company. Hi, Mr. Panda. Good morning and good to see you. And as always, before we get to the numbers, the street seems to be speculating there's something more on the cards with regard to a corporate action. So could I ask you about that? Is there any inorganic opportunity that IMFA is looking at? Currently, your capacity is 2.5 lakh tons. Organically, you're going to 3.5 lakh tons. But the street seems to suggest maybe there are a couple of assets. Maybe Tata Steel's asset is what you're looking at as well. Can you clarify?
Good morning, Nigel. So as you would know, it's not possible for me to comment on rumors. And, that's the problem with street expectations that, when something goes around, it's a little difficult for us. But be rest assured that, as and when there is something reportable, we certainly do that at all points in time. What we are focusing on at the moment, as you mentioned, is our organic growth. We are expecting to start construction on our phase 1 expansion from next month and have that commissioned in the first quarter of FY27, which is the April to June quarter of 2026. We are also starting work on our ethanol project soon, and that will also be commissioned by the end of this year or spilling over maybe into January next year. And we have in principle approval for our phase 2 expansion. So one way or the other, we are going to grow. And of course, we remain open to opportunities, but nothing that I can specifically comment on at this point in time.
Are you actively pursuing anything?
Sorry, I couldn't hear you.
Are you actively pursuing anything, Mr. Panda?
As we are actively pursuing growth, for sure.
So the growth would include some inorganic growth as well, because we understand Tata Steel has shut down one part of their unit, and it could, at least from an analyst perspective, it makes, fundamental sense that IMFA could look at that asset. So if it is on the block, part of that ferrochrome business of theirs, will you be interested?
So as I said, let me reiterate that, we are clearly pursuing growth. I think we are primed for growth, and we are going to get there one way or the other, whether it is organic growth where phase 1 is being executed and phase 2 is on the cards, And if any other opportunity comes along, we certainly remain interested. But I think, it's not proper for me to comment on specifics when there is, nothing specific to talk about.
Right. We understand that there is nothing specific, but what we also want to understand is at what stage of pursuing this growth, the other way, are you at right now? You said one way or the other. The other includes organic. There is, chatter around something happening. We just want to understand your thoughts as to how advanced those stages are when it comes to any sort of, deal or any growth opportunity that you would get on an inorganic basis.
We can go at it from several angles, but the answer remains the same, which is that we are pursuing growth. And as and when there is something to be reported, we will. As of now, there is nothing that requires to be reported. But if that were to happen, we would certainly, come out and you'd be one of the first to know. But either which way, next year, we are going to be up 40% in terms of capacity. And, if we pursue organically, then another 2 to 2.5 years, another 50% growth. So that visibility is there about our growth plans. And we always remain open to opportunities.
Got it. So by the end of 2026 calendar year, your capacity will be up by 40%. And say by the end of 2028, your capacity could be closer to around 400,000 or maybe 450,000. Should that be an aspiration? 450,000 to 500,000 actually.
That's not just the aspiration, but a very clear, plan of action in place. So, it's a question of whether that can be accelerated in some manner, but either which way, we are certainly getting close to 500,000 tons in the not too distant future.
And as of now, you're talking about this, by 2028, it will be organically, the 500,000 tons.
That's right.
And then we'll have to quiz you whether or not you go even more than that, Mr. Panda. We'll wait by for that. Let's take a couple of points on both and with regard to your numbers. The margins, they saw some kind of compression. What is the outlook with regard to margins? And also importantly, ferrochrome prices are a little bit softish. It could be a seasonal factor because of what's going on in China. But how much lower are ferrochrome prices today in comparison to your Q3 averages?
So, clearly, what is happening in the commodity sector in general, metals in particular, and ferrochrome is no exception. That prices are soft. That is on account of global conflicts, of demand worldwide being subdued, and of course, economic data coming out of China is not very hot at all. And let me straight out acknowledge something that in one of our earlier interactions, I had said that we expect H2 to be better. And that was basis the assumption that the stimulus measures being put out by China would stabilize their economy, and cause it to grow, which has not really panned out in that manner. So what you're seeing at the moment in Q3 is soft prices compared to a year ago. We're about 10,000 rupees a ton lower in terms of realizations. That is clearly translating into the softer margins that you see. And actually, the worst, if I can put it, is December, January, and February, because the Chinese monthly prices have gone down to about 75 cents, which translates to 87,000 rupees a ton in India with the new exchange rate. And that's simply not workable for most players. In our case, as you know, we have the advantage of backward integration. We have the advantage of a debt-free balance sheet. And that is what has helped us, report a decent set of numbers. As far as the ongoing quarter is concerned, we will see a little bit of a contraction for the simple reason that in Q3, you saw the lower prices being there for 1 quarter. In Q4, you are seeing it. You will see it for 2 months, which is January and February. But I think this is the worst, if I can put it that way, because it is simply not workable. These although prices in India are higher than that, but it's still below the variable cost of most producers, not us, of course. It's below the variable cost of most producers, which is why you're seeing lots of cutbacks of production. And this is simply an untenable situation. And Nigel, the one thing I wanted to point out is if we go back about 6 to 7 years, in a similar sort of an environment, IMFA had swung into a loss in Q4. But today we are in a very strong position where even though in Q4 we will see a slight contraction, but it will still be a healthy profit. And what used to happen earlier is the sector used to be in distress when we hit 10 to 12% EBITDA margin. Today, because of our stronger balance sheet, the sector goes into distress when we are at 16 to 17% EBITDA margin. So, I only see upside from here on. in terms of Q1 and Q2 of the next financial year.
All right, we take that point, and I'm sure the street very well understands the cyclical nature of this business and your outperformance in that as well. Just a final question before we let you go, Mr. Panda. The chrome ore situation in South Africa, I mean, is it still challenging or has it improved? What's your comment here?
So actually, more than the chrome ore situation, Mangalam, I think it is the power situation that one needs to keep an eye on, because South Africa has become a high-cost economy for ferrochrome, where power tariffs are in the 650 to 7 rupees per unit range, which is which is unbelievable. If you looked at it 10 or 15 years ago, if somebody had told me this, I wouldn't have believed it. And Eskom, which is the state utility, has proposed a 36% increase in power tariffs, which is under consideration. But even if that is cut down by 50%, it's still a huge power increase. So that's a huge tariff increase. So that's that is something which is providing a base to how low ferrochrome prices can go. And yes, chrome ore transportation remains a concern because of their own inland logistics costs, the fact that they're exporting out of Mozambique, etc. So all of this, when you have a major producer like South Africa sort of moving into a high cost zone, when you have China, which is the world's largest producer, being relatively high cost because they import all the chrome ore, then for a fully integrated producer like us, as I said, you can look at us as a glass half full or glass half empty. Certainly half empty if you're looking at slight contraction. Yeah. But I've always said, INFA cannot be viewed on the basis of 1 or 2 quarters. It has to be a long-term view. Growth is what we are pursuing. Growth is what we'll get to. And certainly, I see it at not just half full, but much more positive than that. Leaving aside the immediate ongoing quarter or something of that sort.
All right, thanks a lot for that, Mr. Panda. Appreciate you joining in and giving us all of those details. Wishing you all the best. Look forward to chatting up with you soon. Well, on that note, we'll have to wrap up on Chartbusters with news that the Nifty Bank has seen a sharp slide, but you stay with us. Trading Hour comes up next.
sharp insights in the political arena to all the excitement from the world of sports.
Good morning. Welcome to Trading Hour. It's a Thursday morning. I'm Reema Tendulkar. With me is Vivek Iyer. We're in the green, but coming off from the session highs. The Nifty today, on an intraday basis, has scaled past 23,300. So compared to that level, there has been a bit of a give back, at least in the frontline indices and even on the mid-cap end of trade, though the advanced decline ratio stays positive.
Good morning, Reema. Like you mentioned, advanced decline ratio stays positive. Mid-cap and small-cap end of the market is doing a lot better. Well, couple of stocks or couple of sectors that we could have a look at. First up has to be the pharma pack, a very sharp bounce back post the steep fall that most of these stocks saw. So companies that have exposure to ARV, especially with HIV drugs, those are the ones that have bounced back very sharply. Loris is up over 7% in the session today. Stocks that are reacting to very strong results. Look at Hitachi Energy, Bajaj Finance, as well as Allied Blenders. In fact, we will be speaking to the management of Allied Blenders in a while as well. But on the other hand, some results misses. Tata Motors Voltas seeing very steep sell-off after results missed the street expectations. And one stock today, that's seen significant selling pressure, Reema, is actually Whirlpool. The parent is looking to go ahead and further trim stake. And this is something clearly that the street doesn't like. Along with that, there are also concerns whether royalty payments and technical know-how fees that the Indian entity pays to the parent, whether that will continue. So many questions as far as Whirlpool is concerned. No wonder then today the stock is down 20%. It's at the lower circuit.
Indeed, right? If the promoters had to sell, they should have sold it when the stock practically doubled, but they're back to selling it at the price that they had done in the first.
Well, they expected it to be 20% higher, but probably didn't factor in the...
But some other stocks which are reacting to numbers, one of them is Sami Hotels, where the numbers look pretty okay. There was a margin expansion. Margins went up from 31.7% to 37.3%, but the stock is reacting on the way down. So that's a stock which is under pressure. Keep your eye out on NetWeb. Second day running, the stock is reacting, positively to the management, comments which they made to the exchanges, saying that this entire DeepSeek AI disruption is actually an opportunity to go deeper as other clients embrace the AI infrastructure. So there is an opportunity for the company. So NetWeb continues to gain, and KPIT Tech, that's also higher. It rallied 9% yesterday. It's followed it up with another 5% up move because the management is saying that the deal pipeline is higher by 20%. Secondly, they're also saying the deal conversions have improved on a sequential basis, and there is scope to double their wallet share with their existing clients. So those statements are taken pretty well. But let's get to Allied Blenders and Distillers. The company reported a strong Q3. The stock today is up only about 2%, but in the last 3 months, it's seen a gain of close to about 22%. Revenues have surged nearly 8%. The EBITDA has doubled, and the company saw its margins rise in the quarter gone by. Alok Gupta, Managing Director of Allied Blenders and Distillers, is now with us on the show. Thank you very much for joining in. This is Reema here. First, explain the margin expansion to us, and can you build on margins from the current level?
Thank you so much for inviting me on the show. On the margin expansion, there are three key drivers. One is sort of market share improvement in higher margin accretive markets. Secondly, continuous focus on our cost optimization program. And third is some packaging substitution that we've been doing. And these three things put together are consistently helping us improve our gross margins. To your second part of the question, will our gross margin improve? The answer is yes. As we have already explained earlier, that we are on our capex journey. We are going from being captive on ENA to 100% captive on ENA, similarly on malt, and similarly on one or two packaging items. So over the next course of 2 or 3 years, we believe there is significant scope for us to improve our gross margins.
How much in 2 to 3 years from the current 12%? Can you scale it up to 15%?
Yes, we have been consistently talking about getting to an industry parity EBITDA, which we have put at 15%, and all the work that is currently happening is in that direction. So we believe we are on the right track.
Mr. Gupta, could you help us with the volume and realization targets, number one for FY25? So Q4, what can we expect, as well as FY26? Also, you mentioned that you're looking to increase the captive ENA mix as part of your input strategy. Where is it currently, and when will it get to a total 100%?
So as we speak, we are currently at about 1/3 capacity on our ENA. We have acquired a unit in the state of Maharashtra that will allow us to add another 5% of our capacity. So that will take us to broadly about 40%. On the same acquisition, what we've done, we're going to put another 150 KL plant that gets us to about 2/3. So over the next 2 or 3 years, we'll get to about 100%. So I would say exiting FY27, we will move from being 40% captive to about 100% captive.
And the volume and realization targets for 25 and 26?
The P&A share of our volumes has increased by another 2% Q3 over Q2. We have targeted to get to 50% of the P&A volume. That should also have a significant impact on our volume, our NSV realization, which are up by about 1.3%. We think the same trend will continue. On the volume side, we've grown about, my sense is we should look at early double digit in Q4 is what I think where we'll end up.
Okay. And you can maintain this double-digit growth even in FY26 in terms of volumes?
Well, the target is to get into early double-digit volume growth and maybe mid double-digit value growth. And the strategy and the brand portfolio, the way it's getting curated, is towards achieving these two KPIs. One is double-digit volume and maybe mid double-digit value growth.
And then eventually 15% margins as well in the next 2 to 3 years. So talking about strategy, you've made a strategic investment in Good Barrel Distillery, which is a premium rum brand, Rock Paper Rum. Now, you're acquiring only a 51% stake. You're paying about 9 crore. So take us through this investment. Do you have plans to raise your stake further from the current 51%? And what do you hope to achieve from this investment?
Well, the way we've structured the deal is that we are acquiring 51% with an option to buy 100% over a period of time. I think this is a brand that is coming off from very exciting startup world. We definitely want the founder CEO to be completely invested on the brand in terms of sort of building the brand and building the brand narrative, not just for India, but beyond India. This segment where this brand is operating is between 3 to 4 million cases, high gross margin, reasonable double-digit growth. So it's part of our premiumization strategy. We believe that there is only one significant brand in this segment, and I think consumers are looking for newer brands. So Rock Paper Rum has been around for a year and a half. They already have 5 very exciting variants. So we believe that we should be targeting high double-digit share from this 3-odd million cases in time to come.
Mr. Gupta, we want to understand whether do you have any overdue spending as far as the southern states are concerned. In fact, one of your peers, UBL, had significant issues with Telangana, quite a lot of to and fro over there. And also, how has the Andhra market picked up? So any overdues there, and how is Telangana as well as Andhra looking?
So first, a quick one on the Andhra market. In Andhra market, post the new policy implementation, we have gone up from about 1.8 million cases that we did last year to about a 3 million ARR. So it's been very, very beneficial for us in terms of volume growth. The entire ordering process, collection, replenishment model is working to our satisfaction. So Andhra market is running stable state, and we've grown from 1.8 million to about a 3 million case ARR. Telangana market, the good news is that we are consistently getting our payments month after month. However, there is an overdue overhang, which we think will take a little bit of time to correct. That's our outlook currently.
Thank you very much, Mr. Gupta, for joining in, and wish you all the very best. Look forward to these conversations. Get into a break. As we do that, it's time for a growth code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, an exclusive interaction which Prashant Nair had with SEBI's whole-time member, Mr. Anand Narayan. He asked him about the risks of overtrading.
Markets are all about activity, and we track it every day. But SEBI, you publish so many papers which kind of show overtrading and the risks of overtrading, and also just, the chances, the probability of actually what percentage of people make money. Just pure trading, right?
Sure.
So just talk to our sort of audience regarding that. What is your own perspective? Are you saying the more you trade, the less you make?
Absolutely, Prashant. There is plenty of research to suggest that at an individual level, precisely what you said, the more you trade, the less you tend to make. And there's a very rational explanation for this. Every trade comes with transaction costs. There's typically intermediary charges, there is taxes, there is exchange fees, and a whole bunch of things that go with every single trade. So the odds are stacked against overtrading.
Typically, nobody talks about those things. You just look at, well, you bought something at 10 rupees, I've sold it at 15 rupees, well, this is what I've made. But there is all these other things which you spoke about, right? Which you must take into account.
That's right. And there is plenty of research, both at a global level as well as at a India level, which suggests that the more you trade, the less you tend to make. For instance, we did an analysis in SEBI, which looked at the activity of intraday trading. So those who took part in intraday trading, what we found is that over 70% of those people tend to lose money in those trades. In January 2023, we found that 89% of all individual traders in F&O markets tend to lose money. When we updated that research later in 2024, we found that 93% of individuals over the last 3 years have actually been losing money.
We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and
Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today we are focusing on gold.
Oh, well, yes, Vivek, the uncertainty from the US markets, which is bothering other asset classes, clearly is proving to be a boon for the gold buyers there, because we are trading at an all-time highs in sense of gold for the Indian markets. We've broken above 81,000 rupees per 10 grams as well. For the international markets, we are still $30 away from its all-time highs, but the prices have been pivoting around that level for sure. So when you look at this year until now, we've gained up by 6% for the gold prices. This is after gaining 28% in the previous year as well. So there have been various supportive factors, whether it's about the interest rate trajectory. Bank of Canada also already has cut interest rates. ECB could be doing that today. The US Fed, of course, hasn't given a guidance, but the strength in US dollar index seems to be weighing slightly onto the markets here. The other part is the tariffs and the uncertainty, and that continues to support gold prices there. Well, for the Indian markets, though, there's a bit of a problem here. One, because you're looking at the gold prices on a discount of $30 to $35 an ounce. That is one, because a lot of bullion dealers and importers are trying to sell gold ahead of the budget. The expectation is, or there is a concern, that you could be looking at a reviewing of the import duty on gold, which was cut in the previous budget. So ahead of that, they want to clear a bit of their inventories. The second point is that you are looking at weaker demand because of these high volatile prices from the retail consumers as well. That has led to this discount coming in for the Indian markets there. It also has to do with the global space, where you are looking at Chinese buying slightly on the weaker side. The central bank, the Indian central bank, that is, after buying all the 11 months in the year 2024, did not buy in the month of December. That's yet another thing that the street is watching for. But it is lower volumes as well ahead of 1st of Feb, especially ahead of our budget, and of course on what the US president does in sense of tariffs. So a bit of a volatility, but clearly gold seems to be taking all of that in sense of gains.
Thank you very much for that. Get into a break. On the other side, we'll focus on the infrastructure stocks. And what are the infrastructure companies expecting from this year's budget? Full tilt on that.
Most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
History as the first woman finance minister to present her 8th consecutive union budget. From replacing the colonial era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her leadership. Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The credit guarantee scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this scheme provides collateral-free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme. Announced in the budget 23-24, this initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers taxpayers a chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of measures supporting MSMEs and businesses were introduced under this initiative during the
Welcome back. Here is a very, very important update. Market regulator SEBI has, released clarifications on the existing guidelines which govern finfluencers. Now, SEBI says live market prices cannot be used for stock education purposes by finfluencers. If you have to use it, you cannot use live, but you have to use prices which are 3-month-old. And they will also impose a penalty, suspend or cancel registration if the rules are violated. They further add that brokers, mutual funds, investment advisors, exchanges and other market participants cannot be associated with unregistered influencers either directly or indirectly. The advisory further notes that educators should not provide investment advice without SEBI registration, and they cannot make performance claims without the SEBI permission. So these are very, very important rules. They've been in existence since, I think, August of 2024, but these are clarifications on the existing investment advisory. So we need to pay heed to that. But let's get to the budget, right? 2 days left, and infrastructure is always an important focus area.
Absolutely right, Reema. So, just before we get into a discussion with Vinayak Chatterjee, let's have a look at what exactly is the industry expecting as far as the entire infra space is concerned. Number one, government is likely to ensure, as per Morgan Stanley, a continued improvement in the quality of overall expenditure, mainly through higher capital spending directed especially towards infrastructure. A major lift to infrastructure spending, close to 3.5% of the total GDP, could create upside as far as industrials are concerned. Along with that, what they are expecting is an 8 to 10% increase in the overall allocation. This includes both budget as well as outside budget allocation. Now, along with that, what Jeffries has to say, Jeffries saying a potential disappointment, which is a little less than 15% growth in government capex, may actually be a negative as far as EPC contractors are concerned, especially names like L&T and the broader industrial sector will see some negative surprise. Now, along with that, remember, central government capex has surged almost 3x over the past 5 years already. This includes the spending as far as FY25 is concerned. Overall, a very important development for the entire infrastructure space is what we are anticipating from the budget. Higher capital allocation over there should lead to upside for industrials as well as large EPC players like L&T.
In fact, let's get in Vinayak Chatterjee, founder, managing trustee at InfraVision Foundation. So thank you for joining in. This is Reema here. The number is key, right? Last year's budgetary allocation was 11.1 lakh crore rupees. We didn't end up spending the entire amount because of the slowdown by government capex. But this year, what is the number that you're watching?
Just like the conversation that preceded your question, the elephant in the room question is to what extent would the finance minister use infrastructure outlays and allocations to pump prime the economy. Please remember that from 2014 onwards, the NDA government has consistently used large outlays in infra to keep pump priming the economy. Also, in the absence of any pickup in private capex in infra, or what we popularly call PPP. So in the years that have passed, you have seen 30% increases year after year in infra allocations in the budget. 5 lakh crores to 7.5, 7.5 to 10. These were all 30% increases. It is only surprising that in the last interim and final budget, that the increase was only 10%, and that took 10 lakh crores to 11.1 lakh crores, as you just mentioned. So the big question before this budget is that in the backdrop of slowing down of capex, slowing down of state capex, a slowdown of private sector capex, etc., the slowing down of consumer demand, as all of these have been documented, there is a very strong need to pump prime the economy, and no better than infrastructure, because all research has shown now that a rupee spent on infra generates 3 rupees of GDP, whereas a rupee spent on direct benefit transfer results in 90% of GDP. So nobody is disputing the fact that infra spend is the biggest lever that the finance minister and the government has to pump prime the economy. So to answer the question, what is the extent of outlay that we are looking at this year in the forthcoming budget? Now, if the government were to consistently step to 3.5% of GDP as the arithmetical norm for infra outlays, then we will get an allocation of 13 lakh crores. But 13 lakh crores will only be a 17% increase over last year. And is that sufficient? If we actually go on to levels higher than that, let's assume that the government uses infra really to get on overdrive and, in a sense, take it to a 15 lakh crore outlay in the union budget, that would be an increase of 35%. And if the government feels no, the sector has matured, it can do with off-budget capital routes like InvITs and REITs and private capex and all of that, then it may take a conservative view and say only a 10% growth. And that would take 11.1 to 12.5. I would certainly bet that this budget would not go anything lower than 20%. So we could expect an infra budget between 13 to 15 lakh crores. Let's say midpoint 14 lakh crores is what I would expect. And that would be the appropriate response to the fact that there is no dispute about infrastructure pump priming the market. But that's been a lot of maths for your viewers. Over to you.
Mr. Chatterjee, one more question. FY25 first half, you saw both execution as well as tendering slow down. This is on account of the election ongoing. So there'll be quite a lot of pushing out of projects to FY26. So FY26, do you expect to see a lot more tendering activity and also any kind of monetization assets in the pipeline as far as NHAI is concerned?
Look, your first question first. There has been a slowdown in central and states, and it is popularly attributed to three areas: very heavy rains, a spate of elections, and insufficient capacity, political and bureaucratic, to push aggressively sanctioned projects. Now, assuming all these three factors are taken care of, I certainly see a very major push in project execution in the forthcoming quarters. And I think most analysts are also predicting that the graph is not going to go down any further, it's only going to go up. So now that was your first question. Remind me of your second question.
So a monetization pipeline as far as NHAI assets are concerned?
NHAI is anyway the best in monetization. They have monetized road assets through InvITs and TOT and others. And their monetization has crossed 1 lakh crores. So across the last few years. So if my memory serves me right, they're probably at levels of 1.25 lakh crores on monetization. That is the best that any ministry has done. I think the question really is that can other infrastructure sectors learn from NHAI's experience? For example, what has been the monetization in railways? Practically zero compared to all the talk over the years, from running trains to privatizing stations to, having sections of the dedicated freight corridor on PPP mode. So railways is actually the next biggest infrastructure sector that has to monetize. The power sector already has a fair amount of private capex in play on generation, transmission, and maybe distribution is the big politically hot potato up for privatization or second licenses or whatever you have there. But if you ask me, the next NHAI is doing well. We should encourage that. And it is time for railways to step up the pace of monetization. Back to you.
Thank you so much, sir, for joining us. We'll get you once again on the show post the budget to go ahead and understand the fine print and understand who exactly benefits and what's actually slipped as far as the entire infrastructure space is concerned. Thank you once again. As we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an attractive destination for global investments. The optional personal tax regime, or the new tax regime in 2020, now simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes. Another such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments. The abolition of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year.
Welcome back to Trading Hour. I'm intruding because we have an important bank joining us whose results we will be discussing. Indian Bank is the company in question. A very good set of numbers if you looked at the way in which the asset quality has panned out, the way in which the margins have been held on at 3.5%, in fact improved by 4 basis points. It's definitely a good set of numbers. Joining me now is Mr. Binod Kumar, the Managing Director and CEO of the bank. Mr. Kumar, good morning and thank you very much indeed for joining us. Your results make it difficult for a journalist to ask a difficult question, but I have spotted one, and that is your deposit growth. That's the only thing that has disappointed. The year-on-year growth is only 7.4%. Can you explain, is it just a temporary phase? Will it get better now with the Reserve Bank introducing liquidity steps?
Thank you, Lata. Thank you for hosting me. Lata, if you see my number, actually you have bang on the number. Deposit growth is little bit slow. It is around 7.31%, whereas we have given guidance of 8%. But in the quarter, we have been able to raise infrastructure bond at a very good rate of 7.24% and 7.12%. So our cost of fund requirement has been met, and that's why we didn't wait for raising any costly deposit. That's why, and it was part of a strategy that we will not go for very costly deposit, and we are mindful of the cost of the fund also.
Oh, that makes perfect sense, and that's a good strategy as well to maintain your margins while raising money from sources other than deposits. The other thing that I'm not very clear about, your asset quality is overall very good, but did you notice any pain in your retail segment, especially in your unsecured loans? If you can tell us what is the percentage of unsecured loans and whether there was any pain at all there.
No, Lata, our unsecured book is very less. It is less than 1.5%. Total, it is in absolute number, it is 9,700 crore. Out of that, around 6,000 is from salaried and pension funded pensioners. So we are not seeing any stress in that.
Okay, those were the two things that I wanted out of the way. Now let me come to how what your strategy may be in the quarter going forward. Will you continue to persist with raising long-term funds, either CD or infrastructure, or will you now start going for deposits?
So my strategy will be a mix of both. I will go for raising some long-term deposits also, and focus will also be on the CASA. We have a plan for also raising some infrastructure bond in the ensuing quarter, around 5,000 crore we are planning. Simultaneously, I will also focus on the increasing our CASA, which we have been able to maintain this far, and my endeavor will be to maintain that share.
Okay. Okay, yeah, you've got about 38.5% of current and savings account, which is a good number. And you've almost maintained that. You're around that ballpark quarter on quarter. What about the margins itself? Therefore, can you maintain at 3.45?
A margin in this quarter, we have been able to maintain at 3.45 and have given a guidance between 3.40 to 3.50. That has been driven by, if you see, my yield on advances has gone up by 15 basis points, whereas cost of fund has gone up by only 5 basis points. So, and going forward, if there is no rate cut, margin will also depend on the rate cut. If there is rate cut, there may be some moderation, but there is no rate cut. Our endeavor will be to maintain this margin, but definitely it will be within our guidance of 3.40 to 3.50.
Okay, got that. That is okay, averaging 3.45 only. What about cost of funds? Any guidance? Will it remain where it was in the third quarter?
Yes, we will be able to maintain cost of fund if because we will be very mindful of raising costlier deposit, and as we have also planned of raising around 5,000 of infrastructure bond, around 2,000 of tier 2 bond we may also raise during the quarter. So 7,000 of approximately that will also be cost of fund, which can be deployed in case of need for the loan.
Okay. You know, you have an excellent ROE. So would you care to raise equity capital at all? I mean, tier 1?
As of now, we don't need actually. If you see, my tier 1 is a healthy. Even capital position is 15.92%. And if I profit, which is not plot back so far, 7,962. And including March profit, I will have enough liquidity. So there is no need as such for raising any dilution of equity or going for QIP or other mode. But yes, if market conditions are conducive, then we may think of, but there is no plan as such now.
Okay. Well, now a couple of hypothetical questions, because I don't know whether the Reserve Bank is going to push for ECL, that is expected credit loss accounting, anytime soon, considering that, you know, markets are going through some kind of a churn. What is your, if they were to introduce the new liquidity rules and separately the new ECL rules, what may be the impact on your numbers? First, if you can tell us about LCR.
LCR, we have healthy LCR. On an average, we are maintaining 125%. And the impact of LCR now, which is proposed, is around 8 to 10 basis points. So even if LCR norms come, we will be able to maintain healthy LCR coverage of around 110 to 115 basis points. Coming to ECL. ECL, ECL is a guidelines is only draft guidelines, and let us wait for that, because many calculations are involved there, because ECL is a function of PD and LGD. If PD, we have to see how many years the regulator is prescribing. Similarly, LGD, what they are proposing. So, talking about the impact of ECL will not be right now.
I agree, and it is anyway in a state of indecision as to when and whether it will be introduced. I guess it will have to be introduced at some point in time. Very quickly, loan growth. You've done very well quarter on quarter. Advances have grown by about 5% almost. Are you seeing any capex revival? What is your guidance on loan growth?
Loan growth, if you see, we have grown by 10%. Out of that, majorly it has been contributed by the RAM sector.
Okay.
So our guidance is, we are continuing with our guidance between 11 to 13%, and primarily our focus will be on RAM sector, and within RAM, my focus will be on MSME. Having said that, capex, I mean, there are some green shoots, but it is not as we have expected earlier. Let us wait and watch.
Okay. Just one number. What is the credit deposit ratio at the moment?
79.63%.
Okay, then you're comfortably off. You can, for some time, lay more emphasis on credit than advances. Thank you very much, Mr. Binod Kumar. It was a pleasure speaking with you, and all the very best for
Thank you, Lata.
Okay, well, that's the set of numbers. Actually, that's a very important revelation he made, that the deposit growth looked small, but they've raised money through infrastructure bonds. And that explains why they've been able to maintain the margin despite not raising deposits.
Thank you very much for that. From Indian Bank, we'll move to another corporate, and that's TeamLease. Ramani Datti, the CFO of the company, will join in to discuss the Q3 numbers on the other side of this break.
Have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18, weeknights at 7 p.m.
Welcome back. As promised, let's invite the management of TeamLease on the show now. The company reported the Q3 numbers. It was a good set of numbers. The top line growth for the company came in at 19.5% on a year-on-year basis, and on a quarter-on-quarter basis, top line growth was close to about 4.5%. The company managed to grow their top line by 19.5% despite a near 7% drop in the specialized services segment. Margins were stable at 1.2%. Ramani Datti, CFO of the company, is now with us on the show. Ramani, it's a good showing, 20% top line growth. Do you have the visibility to maintain 20% growth in Q4? And what are you likely to end the year with? And what happened with specialized services?
Good morning, Rima. Yes, definitely the 20% top line growth is something that we are confident to maintain in Q4 as well as for next financial year. While we got hit with the BFSI, huge insourcing in BFSI segment for the quarter as well as in Q4, we are getting good contribution in terms of hiring volumes from sectors like quick commerce, e-commerce, retail, FMCG, and industrial and engineering. So with this 20% top line growth is something that we are confident of. Specialized staffing, almost after 8 quarters in a row, this quarter we have finally turned net positive in headcount addition, which is a very positive sign that we are seeing green shoots in IT hiring finally. And we are seeing the momentum even from IT services in small numbers. However, we believe that it may take another 1 or 2 quarters for large volumes of hirings in IT services to come around. However, GCCs and tech hiring in non-tech companies will continue to contribute to us in IT staffing growth. Specialized staffing, mainly because of headwinds in IT services segment, we have seen the drop of 6%. However, we are maintaining the profit run rate quarter on quarter, thanks to contribution coming from GCCs. And in terms of net profits, EBITDA this quarter, we have grown about, we have been kind of flattish, mainly because of delay in EdTech. That's one area where we fell short of our own internal estimates this quarter. Otherwise, at PBT level, we have managed to get to double-digit sequential growth, and PAT also we are maintaining double-digit sequential growth.
Can you repeat what happened in the HR tech where you said it's fallen short of your own estimates? What exactly happened?
In HR Tech, our main business is the EdTech business, where we do build the universities for the student admissions and conducting online examinations for the distance degree students. So this year, because of UGC guidelines, many universities have to revisit their entire programs following the new education policy guidelines. So because of that, some of the large universities have delayed conducting examinations, because of which whatever billings we are supposed to do in end of Q2 and Q3 got deferred to Q4. On a full year basis, we are confident of maintaining 6 to 7% EBITDA in HR services. It's only a timing issue, not a loss of revenue or anything of that sort.
Ramani, you've also announced the acquisition of an 80% stake in Ikigai Enablers. Last time around, when you spoke to us, you had hinted at a couple of acquisitions in the pipeline. So what is it that you've paid for this particular acquisition? How does it help? And when do the numbers start coming into your top line?
Yeah. Ikigai is a small entity, and which is currently having about 20 crore in revenue and breaking even at bottom line. So we paid about 5 crore for the 80% stake in Ikigai. But more than the consideration, we are focusing on how we can leverage our existing client relationship in India and our delivery capabilities in terms of hiring. So we will use our India team to deliver for the open positions, mainly in Middle East and Singapore regions. So Ikigai is operating in both these geographies, and we believe we will be able to utilize this opening balance and build on top of that. While for the next quarter, there won't be any contribution from Ikigai, we are confident that for the next financial year and from there on, there'll be a meaningful contribution from Ikigai, both on top line as well as profitability for IT staffing business.
Is it possible to put a number? What is meaningful in terms of a contribution?
Yeah. On top line, currently, as I said, there are about 20 crore, and with the kind of discussion and pipeline that we have for these two geographies, we are confident of more than doubling that revenue for next financial year. And profitability, this business can maintain 7 to 8% EBITDA margins, and that contribution will be presented under our IT staffing segment for next year.
Okay, one more question. Last time around, there was significant impact coming in for the entire staffing space from the budget. So this time around, what is it that you're expecting from the budget? Any specific segments that you will be looking at, and what is it that we should be watching keenly?
In fact, in this budget, we are expecting more clarity on what was announced earlier, especially in terms of employment-linked incentives with respect to EPF-related benefits and other subsidies. Because while the announcement was made few months back, so far there hasn't been any notification or any kind of guidelines on how those subsidies would be implemented. So we are expecting that in this budget, there'll be more clarity on that front. As well as on the internship and apprenticeship programs, we are expecting more clarity in terms of the subsidies or the directories to the companies on what percentage availment can be done for apprenticeship and internship.
But has there been any benefit seen in the last 1 year based on the budget announcements, or because of lack of clarity, there hasn't been any movement on it?
Yeah, as of now, there hasn't been any moment. I think we need the notification on how these programs are going to get implemented. So only then we can actually assess what can be the potential upside on these initiatives.
Okay, so going forward, FY25, FY26, could you give us a guidance in terms of where exactly you expect to end the year, including all of the acquisitions in terms of top line margins as well as bottom line, both for FY25 as well as FY26?
FY25 and 26.
Ramni, we can't hear you. Okay, but she did indicate that, they will be looking at a 20% growth in Q4 and even in FY26. Ramni, you were telling us, and even give us a margin guidance.
Yeah, because I think margins is something that the street is looking at.
Yeah. So Q4, we are expecting a very steep improvement in the margins as well as absolute profits because, as we mentioned earlier, the entire profit of EdTech cluster has been lumped into Q4. So we are expecting.
Oops, we can't get through, but Team Lees, again, just to reiterate what she said so far, 20% top line growth in Q4, confident about achieving that in FY26 too. In Q3, the margins were a bit suppressed, particularly in one of their verticals, the EdTech comes in HR Tech. If you look at the different verticals, there were some headwinds there, but all those, it just got delayed and therefore it will be accounted for in Q4 and therefore the company is expecting a pickup in margins in Q4. But that's Team Lees for you. It's been a fairly good quarter for the company. For the market, still holding up with a gain of close to about 0.5%. The Nifty is at 23,280. It's been a stable, positive morning so far. Get into a break. We'll come back with more.
History as the first woman finance minister to present her 8th consecutive union budget. From replacing the colonial era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her leadership. Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The credit guarantee scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this scheme provides collateral-free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme. Announced in the budget 23-24, this initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers taxpayers a chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of measures supporting MSMEs and businesses were introduced under this initiative during the pandemic, emphasizing self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an attractive destination for global investments. The optional personal tax regime, or the new tax
Welcome back to Trading Hour. Well, the Nifty as well as the broad end of the markets continue to build on to gains. Reliance Industries, that is the stock on the radar, trading near the day's highest point. The other stock that's doing very well in today's trading session is Mahindra & Mahindra. That stock too is seeing a sharp up move. Bharat Electronics that announced an order win yesterday, that's the top Nifty gainer. And also keep an eye out on Tata Communication. A few minutes back, you saw some news flow on your screen, and Tata Communications, on the back of that particular GPU-related news, is now trading near the day's highest point. But on the other hand, there are quite a few stocks that are seeing some selling pressure emerge, and it's the mid-cap IT that is seeing some profit booking emerging. Have a look at names like Mphasis, have a look at a name like a Coforge. Both of these stocks today have seen cuts of over 3% each. Persistent also joins the mid-cap IT space in seeing some selling pressure emerge. On the other hand, have a look at a name like Bosch. Yesterday, firstly, the results came out. Yesterday, the stock reacted to the results. But today, have a look at that particular name, almost 3% higher. And remember, this particular stock is a highly priced stock in terms of the actual price itself, almost 29,000, gaining almost 760 rupees today. But with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Now, a simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes. Another such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments. The abolition of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India in with us.
Celebrating 25 years of CNBC-TV18.
Stocks climb in the run-up to the union budget despite soft overnight cues, with the US Fed pushing out a possible rate cut. Realty and oil and gas are the big gainers, while consumer durables and IT are the big drags.
Tata Motors misses profitability estimates by a wide mark, and while it holds on to JLR's margin guidance for the year, worries over demand and growth in China and Europe are a big worry for analysts. The stock, on the back of that, slumps.
After trimming its stake down to 51% last year, Whirlpool plans to pare its stake to 20% in its Indian arm, reducing it to a minority investor. High relative valuations and the need for cash are likely drivers, but the move leaves shareholders in a whirl. The stock is down 20%.
SEBI spells out what amounts to violation of its rules that bar registered entities from engaging with unregistered parties, read finfluencers, offering stock advice or masquerading as investor educators. SEBI says it could suspend or debar violators. You're watching us here on Halftime Report. Good going for the market. Well, it's up and away. In the last couple of trading sessions, we've seen a near 500-point rally on the Nifty itself. But it's important to know that as we move forward, could there be some sort of selling that comes by at the higher levels? The reason why I say that is because, one, it is expiry, and secondly, we are going into an event which starting tomorrow, which is the economic survey, and thereafter there will be the budget. So all those factors keeping in mind, the market's doing well in today's trading session, but how well can it do from here on is the big question. I'm Mangalam Malu, with me, Hormaz Fatakia. Hi, Hormaz.
Good afternoon, Mangalam, and it indeed is a good afternoon. It's been a good last couple of days for the benchmark indices, and in the market too. The index still hovering around that 20-day moving average is the Nifty. The Nifty Bank as well facing a similar trajectory. As Mangalam just said, it is the monthly expiry today, so we'll need to keep an eye out for any potential volatility that comes in the second half of the trading session. But the focus before going into the budget has been on earnings. Good earnings getting rewarded, bad earnings / bad news getting hammered, as is the case with stocks like Voltas. The stock is down 12% after its results that were a miss on expectations, despite returning to profitability compared to a loss last quarter, 11.5% lower there. Whirlpool, as we just mentioned in the headline as well, down 20%. After the promoter announcing plans to pare down stake further. It's been in a lower circuit since the start of the session, and it remains at that. But the star of the day has been Hitachi Energy so far, a 20% upper circuit today after some good numbers and some very positive management commentary as well.
We'll talk about that as well. And, to power the market ahead, we have some milk numbers coming in. Dodla Dairy up 56% on the net profit. Margins have taken a slight dip year on year, but I reckon the revenue would have grown. Yeah, revenue growth of 21% in a sector which is partial growth. This is a good, growth that we've seen as far as Dodla Dairy's revenues are concerned. 21% growth out there. My sense is that it would be led by some of their market expansion, capacity expansion plans, milk prices increasing itself, and significant contribution coming in from value-added products. So we'll keep an eye out on Dodla Dairy and other dairy companies as well, though we got some poor numbers from Hatson Agro earlier in the week. Hormaz, but you want to talk about Whirlpool a little bit, because you did allude to that being down about 20%, and we know the management the promoters first sold their stake in February. Thereafter, the stock actually rallied, and then now they want to sell more. What exactly is happening here?
Very interesting developments that are taking place. Earlier this morning, Whirlpool Corp reported their numbers in US hours and extended trading, and they announced that they are going to decrease their stake further in the India entity down to 20%. They do this either by the mid or by the end of this year is what they have said. Now, at the start of 2024, the parent entity had 75% stake. Then come February, they sold around about 24-25%, bought it down to 51%. And now from 51%, they intend to bring it down to 20%. So there's a further dilution that the promoters are likely to do, which is a parent company. Now, in February last year, they had sold that 24.7% stake in the block deal that was valued at around about 4,000 crore rupees. They sold that stake at an average price of 1,280. So after this 20% fall, the stock is now below the average price of that block deal itself. Now, why did they do so? Well, they said that they are going to use these proceeds to pare down their debt and strengthen the balance sheet. And for this year in 2025, they intend to bring down debt by a further $700 million is what Whirlpool Corp said in its earnings release last night. Now, and they had their reasons as well, right? Mark Bitzer, who's the CEO of Whirlpool Corp, he was on CNBC network at the end of the stake sale in February of 2024, and he mentioned that when the parent entity is trading at a 50-time multiple and your own company is trading at a far less valuation, it is an asset arbitrage, and that is what it is. They took some money off the table, but they remain confident of the prospects of the India business going forward, and that valuation point still holds because even today at the current price, Whirlpool India is trading at a price to earnings multiple of 41 times. And the parent entity is trading at 9.5 times. So it shows the valuation gap that comes in as well. And as you mentioned, the stock price also had rallied quite a bit after the stake was sold. At the closing of February 19, the stock was priced at 1330. By October of last year, the stock was at 2450, and then since then the stock has corrected almost 35 to 40% from those levels. Now, in shareholding terms, well, after the promoter sold its stake, that stake was increased significantly by mutual funds. They held around about 31% stake in March, which is down to 28% at the end of December. FPIs have increased their stake to around 3.5% in December of 23 to around 10% in December of 24. But the retail investors have not, they've chosen to stay away from the stock despite this massive supply that came in to the market as well. So as of now, if the stake sale happens, the minority shareholding, the shareholding will drop to 20%. That will make them a minority shareholder, and as a result of which they will not be able to block any resolutions if the stake falls below 26%. And what they also said is that the stake sale is for a greater autonomy for the India entity, but it will continue to remain a relevant part of the business. But the street does not like it. It's an overhang that has come in now, and as you can see in the price, down in a lower circuit of 20%.
It's an interesting overhang. You know, if they take their stake below that 20% mark, does it make it susceptible to some other activity in terms of, a hostile takeover, etc., or not, is one of the questions that we'll keep an eye out on. But that is for the time when the stake is sold itself. For now, important to know who on the other side is when it comes to Whirlpool buyers. No dearth of demand yet, but at the same time, no dearth of supply in the market too. But speaking about markets and specific stocks, Bansal Wire is the first management on the show today. The company reported a good set of numbers. The revenue surged by almost 54%, margins expanded as well. Stock holding up with a gain of almost 2.8%. Pranav Bansal, who's the managing director at the company, joins in now. Pranav, thank you for joining in. First up, what exactly was your volume growth in the third quarter? If you could detail that for us. And where does the capacity utilization of the company lie at right now? If you could give us a sense of the volume growth for the third quarter, the outlook here, and the capacity utilization.
Sure. So the third quarter has been quite eventful for us. We came up with a lot of new products, and definitely there was a lot of consolidation that happened within the group as well. Therefore, you see a good jump in revenue as well as EBITDA number. As far as volume is concerned, we were at about 92,000 tons of volume in the last quarter, which was significantly higher by about 50-60% if you compare it with last year.
All right, and the capacity utilization for the new Dadri unit, because I believe a lot of this volume growth would have come on the back of increased capacity as well.
Absolutely. So the new Dadri unit, which was set to start within this year and is going as per plan, we are already at 25% kind of a capacity utilization. So out of the 92,000 tons, about 7-8% has come from Dadri, which is only a start. Dadri, as you might know, is a plant where we are looking at least 3.5 lakh tons of capacity, which has already been installed. Out of that, we are utilizing 20-25% already.
Pranav, firstly, good afternoon. Thank you for joining in. Now, what are you expecting in terms of volumes for the next financial year? There's a report from Investec which says that you will be around about 5.05 lakh metric tons in FY26. Do you believe that it is a fair assumption that the brokerage is making, or do you expect to be much higher than that estimate?
I think it's a fair assumption because we would already be at 6 lakh tons of installed capacity by the start of next year. So, and looking at our volume trajectory right now, if everything remains the same, we should be able to achieve those targets.
I have a two-part question. One is, as utilization at Dadri increases, do you see better margins? What's your margin metric that one should look at, either in EBITDA per ton or, absolute margins per se? If you could give us a sense of that for the end of this year and next year. And at the same time, if you could give us a sense of how your export contribution is likely to be. Last known, that number was close to 11.5%. You were tapping some export markets. So on margins and export contribution, what's the guidance?
So as far as export is concerned, although we took a dip 2 years back in export, which was growing at about 100% every year before that, we are now back on track, I would say. Absolute numbers also, there's a good increase in Q3, and the next quarter and the year ahead looks positive for exports. But with that being said, the kind of increase that we are looking at as a company, I would not say in percentage term export would be any better here. Apart from that, when we come to margins, the right matrix for us is EBITDA per ton. But even that varies because of the 5,000 different products that we today manufacture. All those products have a different kind of an EBITDA level and a different product share within our portfolio. Going ahead, we are looking at ramping up low carbon wires, which is relatively lower EBITDA margin products in terms of EBITDA. But in terms of our return ratios, they are similar. So for next year, our focus would more be on volumes and top line. Our margins might reduce slightly, but in absolute numbers, even they would grow.
You said your margins will reduce slightly. Would you quantify that? If you could give us a number, by how much?
It's hard to say today, depending on the product mix again, because it's all in percentage. In terms of absolute numbers, we are still looking at a good increase in margins.
Can you define good increase?
So if you look at our numbers or our volumes today, we are at about 95,000 tons. And for the next year, we are looking at 5 lakh tons of volume. So you will see a 25% jump in volumes for the next year. Although it would not 100% correlate to EBITDAs, but I mean, it should give you a fair indication of, where we are looking at.
So the EBITDA will grow just about in line with the volume growth, as against further than it, or maybe lower than it as well, or maybe about 80% of that, roughly, because there would be higher contribution coming in from lower margin products.
Yes, absolutely. So therefore, EBITDA might not increase at the same pace as revenue, but there would still be an increase.
One final question from my end, Pranav. Your finance costs have moved to around 7 crore rupees a quarter. You had earlier mentioned that you would become debt-free post the IPO. Now that your expansion plans are coming into place, are you planning on taking on more debt, or do you expect that finance cost to remain at that level as 7 crores a quarter, or do you expect that to trend down?
So actually, the current finance cost is also increased only because of revenue numbers. We've done a 30-35% increase in our revenue because of the consolidation also that has happened within the group. Going forward, there is no major capital expenditure that we have planned. The main capex was for the Dadri, which we have already incurred. So there is no major capex that we look at in the next 1.5 years. If there is anything, I am sure we should be able to fund it with internal accruals and a very reasonable amount of debt.
You said low carbon will increase in its contribution. It's currently close to around, 57%? How does that product mix of the company change over the next couple of years? And what's your targeted return ratios? Because the first half you've done 17% ROE, 23.5% ROC. While it's a low margin business, it's a high return ratio business. So where do you look at, your product mix and return ratios?
So, in fact, this is the right matrix for us to quantify our margin. We look at our return ratios more than the percentage of EBITDA or per ton EBITDA that we make, because that's the only thing that really matters, right, at the end. So our return ratios is something that we focus on every day. And even for the year ahead, I would say we are looking to expand those further, whether it is ROC or anything else.
And you are giving us directional indicators. We're looking for some ranges as well. You said that, yes, EBITDA will not increase as much as volumes, 20-25%, 5 lakh tons plus the volume that you're talking about. But if you could give us a sense, would we see mid-teen sort of growth in EBITDA? Would we see a couple of 100 basis points improvement in return ratios? Just directionally, if you could give a sort of range to the street as well, that'll be great before we let you go.
So our target for ROC is to always remain above 20%. Which is what we are aiming for the next year. As far as EBITDA is concerned, it will depend a lot on the market situation there. Definitely, we've taken a call where we do not want to sacrifice any volume growth because of slight margins. So we are ready to compete on margins front, but to gain on volume. Therefore, there should be some decrease in per ton EBITDA as well. But of course, compensated by higher volumes.
All right, Pranav, thank you so much for sparing time and joining us today. Wish you good luck on the road ahead for the company. That was the management there of Bansal Wires, 4% higher on the stock after its results at 414. Time to take a short break, but before we do that, here's some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips, as Mangalam is doing so just right now. You can download the app just like he has from the Apple Store or your Google Play Store, or just scan the QR code that's just come up on your screens. Take a short break, back on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back. Continuing with our series of corporate conversations, Aarti Drugs is the next management on the show. The company reported a weak third quarter. Their margins also came in on the healthier side, but the API segment continues to witness some pressure. To discuss this on the road ahead, we are being joined by Adish Patil, who is the CFO of the company. Adish, good afternoon. Thank you for joining in. You start off with the API segment, right? You also mentioned that it continues to face pressure because of pricing and because of weak demand as well. So just summarize this for us. What are the trends that you're witnessing on ground currently? Has pricing improved by any means, or has even the demand situation improved?
Yes. So mainly, if you look at the December quarter, the export demand was quite good. It was healthy, and that is why the gross contribution actually improved for December quarter in API segment. But in domestic market, the antibiotic segment did not do well, and that was the main reason why there were a little bit fall in volumes as well as far as domestic market was concerned. But export is doing well. And as far as the pricing scenario is concerned, if we look at YOY numbers, December 24 versus December 23 quarter, there is hardly around 2.5% negative price variance. If I compare with the September quarter, Q on Q, again, it's limited to around couple of percent negative price variation, and mainly on the account of antibiotic segment. But in some other products, in fact, we have also seen some upward trend in the prices. And going forward, if the sanctions on the Russian crude is implemented strongly, and if the crude goes up, then we might expect a little bit of upward trajectory in the solvent prices, intermediate prices, and hence the API prices as well.
Right. I was just hanging there. We have some comments coming in from SRF as well. They are positive on the HFC business going forward in the fluorochem, outlook at least, and the packaging film as well. They believe that this demand-supply imbalance will continue, but will soften. The stocks move to the high point of trade on that itself. But let's get back to our conversation with Aarti Drugs. Adish, when you started the year, you were looking at 7 to 10% growth when, the prices were anticipated to fall by about 5 to 8%. 9 months of this year, your revenue is actually down 10%. And like you pointed out, prices haven't changed much from last December to now. It's down about 2% or so. Yeah. What does that do to your guidance for this year? Are you still hopeful of double-digit revenue growth this year? Looks unlikely. And what's your target for next year?
Yeah. So what happened this year was that though the prices are negative 2% for December quarter, but for the first 2 quarters, that is June and September quarter, the negative price variance was quite high, around 7 to 10%. And that was the main reason why the overall revenue did not do well, mainly because what volume growth we were expecting did not come. And main reason for that, we account to the export market in the first half of the year. Because of a lot of elections, the tender business was not that high. And in turn, we did not get any API demand for exporting the API. And that was the main reason. And the second main reason was our salicylic acid plant. We had commenced the plant in the beginning of the year itself, but because of the teething issues, we were not able to scale up that. And had we be able to scale up that, then the volumes would have been really good. So those were the major 2 factors why revenue did not do well. So as far as this year is concerned, though March quarter might do well in terms of volumes, but overall, we will see flattish revenues, as you correctly pointed out. If we look at FY26 projections, then if we considering that the salicylic acid plant will be well on track, and also the Saika plant will be coming online in this quarter itself. So both those plants operational, probably we can have healthy volumes next year, around 15 to 20%. Let's see, we hope so. There might be a slight negative rate variation of about 2 or 3% for the entire year, considering the first half of the year had better prices in FY25. So overall, probably, in mid-teens, we will try to achieve the revenue growth for next year.
Very interesting. Mid-teens is what you're trying. But you said that this year you will end flattish on a revenue basis. But that also puts a lot of pressure in the fourth quarter, because the first 9 months your revenues are actually down 10%. So you're confident of doing flat also, which means that you'll have to grow a lot more.
Yeah. So it is definitely challenging. But the positive side is our salicylic acid plant, the teething problems are over. So that we have, first of all, I would like to point out that this process for salicylic acid was developed in-house. And that is the main reason why it took so much time to scale up at the plant level, but finally we are able to do it. So we have already scaled up in the month of January, and February and March it will go up and up. And definitely it will add to revenues, but then yeah, probably we might fall short of achieving last year's revenue numbers, as you correctly pointed out.
Now that if is a very big caveat, right, Adish? You mentioned that you will grow at least back to flat growth on the top line front by the end of the year. What about margins? Where do you expect to end this year? And what about FY26? Because you say that you are confident of 13 to 14% margins. You're currently at 11.5. What will contribute to that margin expansion from 11.5 to say 13 or even 14 for that matter?
Yes. As if you talk about margins, so there are three main reasons. One is that because of the salicylic acid, we have been taking quite a bit of hit on our P&L. We were expensing out everything. So now that teething trouble is over, even if you do break even, it should improve the EBITDA margins by more than 0.5%. And plus, if you go in positive, then it will definitely add on to that. That is one main reason. Second main reason is the Saika plant. Now the Saika plant, that process is not in-house. So it is a proven technology. So we don't expect so much teething problems for Saika plant as we saw in the salicylic acid. And that is a backward integration project, basically the methylamines products. So that will definitely help our gross contribution, because anti-diabetic segment is almost contributing around 12 to 14% to our standalone revenues. So it's a big chunk. And plus we'll be selling those spec chem products outside at the outside market as well. And the third is the higher contribution of exports. Now we also got USFDA approval, which is a very big achievement, because we were under import alert almost 10 years now. And that was not only hampering the US sales, but also the European sales from that facility. So once we go more and more into regulated market, the margin profile is quite different than what it is in the ROW market. So that should also help us grow the EBITDA margin. So that is why we feel that 14% upwards is fairly reasonable to achieve in the next financial year.
Well, that's quite interesting, because when we spoke to the analyst on you getting the USFDA approval, they said that this plant could do revenues of almost 60 to 80 crores on a full-fledged basis. Just a final question before we let you go. You had said that formulations would double as a proportion of your overall sales. Instead of doubling, it's actually declined from the last time we spoke. It's about 8% of your overall sales. So where do you see this number going? And what happens to your 4,500 crore revenue target in 3 years, which, when you said, meant that you'd reach that number by FY28? Are you still targeting that?
That 4,500 would be slightly revised down to around 4,000 crores because of the current rates, what rates are ongoing. But if the rates goes up again, then obviously that number is still achievable. But considering the current rates, it should be revised down to around 4,000 levels at the console level. As far as the formulation business is concerned, definitely we saw a bit of hit in the December quarter. First of all, we would like to point out that even at the formulation side, we got USFDA approval for the first time for our oncology segment. And we also got UK MHRA approval for our oral solid dosage facility in the same vicinity. So, and plus our export is currently around 47-50% of the total formulation revenues, the formulation exports, that is. So we definitely, and we have a lot of
Right. We were getting some more details from the management. Unfortunately, there was a glitch in the feed, but we did get the management's confidence of getting mid-teens volume growth, margins upwards of 14% in the next year. And hopefully formulations business also picks up as they've gotten out of the regulatory, or they've gotten regulatory clean chits from the US, and that will impact some of their business in the Europe positively as well. The stocks move to the high point of trade on the conversation that has come by from the management, though the first 9 months of this year have been rather weak for them, and they will struggle to reach last year's revenue this year as well. But with that, we'll talk about Growth Code, an initiative by Grow and CNBC-TV18 offers valuable insights on strategies that may help you make well-informed trading decisions. This week, in an exclusive interaction, CNBC-TV18's Prashant Nair interviewed SEBI's whole-time member, Mr. Anant Narayanan, and asked him about the risks of overtrading.
Markets are all about activity and we track it every day. But SEBI, you publish so many papers which kind of show overtrading and the risks of overtrading, and also just, the chances, the probability of actually what percentage of people make money. Just pure trading, right?
Sure.
So just talk to our sort of audience regarding that. What is your own perspective? Are you saying the more you trade, the less you make?
Absolutely, Prashant. There is plenty of research to suggest that at an individual level, precisely what you said, the more you trade, the less you tend to make. And there's a very rational explanation for this. Every trade comes with transaction costs. There's typically intermediary charges, there is taxes, there is exchange fees, and a whole bunch of things that go with every single trade. So the odds are stacked against overtrading.
Typically, nobody talks about those things. You just look at, you bought something at 10 rupees, I've sold it at 15 rupees, well, this is what I've made. But there is all these other things which you spoke about, right? Which you must take into account.
That's right. And there is plenty of research, both at a global level as well as at a India level, which suggests that the more you trade, the less you tend to make. For instance, we did an analysis in SEBI, which looked at the activity of intraday trading. So those who took part in intraday trading, what we found is that over 70% of those people tend to lose money in those trades. In January 2023, we found that 89% of all individual traders in F&O markets tend to lose money. When we updated that research later in 2024, we found that 93% of individuals over the last 3 years have actually been losing money.
I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs, and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now, and happy to see what it's doing today. And I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think
Welcome back. Key indices holding on to gains but still off highs for the Nifty Bank as well as the Nifty. So we'll keep an eye out on that as there is expiry. So good time to get you the F&O perspective. The key levels to watch for the market will be both the 20-day moving average on the Nifty Bank and the Nifty. The Nifty Bank has conquered that, is sitting above that. So that will be an important support zone to watch out for. For the Nifty, on the other hand, that will be a resistance zone to watch out for. Today's high on the Nifty corresponds very closely to the 20-day moving average there itself. Meanwhile, just keep an eye out on the 23,300 call. That's fairly active, 44 rupees premium, telling you again 23,350 would be a bit of a resistance zone to watch out for. At the lower level, though, the highest open interest is at the 23,250 put. And we continue to see writing that, telling you around 23,185 to 23,200 would be the support for the frontline index. For the Nifty Bank, it's the 49,300 and 49,200 calls, both of them extremely active. So sustaining above 49,350 would be extremely crucial. Whereas the lower level, 49,000 put, has the maximum interest. So that is something that we'll watch out for too. Take a short break, come back. On the other side, we have the management of Radico Khaitan joining in to detail their third quarter earnings.
Control. Auto as a sector, auto and FMCG and even PSU, these three baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind you, if you look at the mid caps and small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again, please look at the context of the rise in mid caps and small caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible. I think the biggest disconnect for most market participants in India is, for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market, because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets, because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So a deeper cut from current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here and possibly get past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think will be very critical to the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited, but as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited. For the last 4 years, since the time we started rallying from the COVID lows,
Welcome back. You're with us here on Halftime Report, continuing with our corporate conversations, and we are now being joined by the management of Radico Khaitan. And the company reported a good quarter, and now we are being joined by the company's managing director Abhishek Khaitan to discuss the third quarter performance. And Abhishek, thank you for joining in. Abhishek, Radico, it's a strong quarter this time around. You could please run us through the key drivers that you've seen this quarter.
October-December quarter for Radico has been absolutely a fantastic one. After a long time, we've seen the volume coming back and the consumer demand picking. In fact, our volume growth for the current quarter has been 15%. And most importantly, our P&A has grown by 17.7%. And Radico has registered the highest ever sales in any quarter, which is 1,294 crores. Our volume also has been the highest at 8.4 million cases. And also our EBITDA has grown by 30% to 183 crores from 142 crores. And also our PAT has increased to 95 crores, which is 30% over the corresponding quarter.
You know, the contribution from prestige and above was closer to 76% last quarter. This time it's come down to 72.5%. Why was there a slight decline? Can you help us understand this? Because, you know, we've seen this trend reverse in all the other companies where the prestige business is doing a lot better.
See, if you actually see our regular brands were degrowing, and this is the quarter where the volume has come back, and our regular also has grown by 13%. So, and P&A has grown by 17.5%, which is much higher than our 6 months growth of 13%. So overall, the volume has gone up, and the regular also has started doing well. Most importantly is our luxury and semi-luxury segment has registered a sales of 100 crores for the first time in this quarter. Last 9 months, the total sale has been 250 crores. And going forward, we are very confident the way Royal Ranthambore is doing, Rampur, Jaisalmer, Sangam. We expect next year, FY26, to touch 500 crore sales of the semi-luxury and the luxury segment.
What about gross margins? Because they expanded on a year-on-year basis, but there has been a 60 bips decline sequentially on account of the food grade inflation. Now, what's your outlook on that front as you go forward?
It's too early to say, but what I feel that the raw material prices has peaked and it will be on a declining trend. As far as the margin goes, our margin has been 14.2%, our EBITDA margins. And going forward, we feel for the next 3 years, each year we should increase our margin by 100 to 125 basis points.
Well, that would be good if that happens. 100 to 125 basis points improvement in margin on account of premiumization. You did speak about some of the brands doing close to around 500 crores together in the next year. Overall, what's your volume outlook for FY26?
Our concentration has been always on the P&A category and the luxury segment, where we expect to grow by more than 15% year on year for the next 2 to 3 years. And also, like the regular segment, we feel that the growth would be around 6 to 7%. And overall, we should have a growth of about 8 to 9% in volumes going forward. And EBITDA margins, as told earlier, is this year also we have increased by 150 basis points. So for the next 3 years, we feel that the EBITDA margin should increase by 100 to 125 basis points year on year for the next 3 years.
What's the situation that you're facing in Telangana currently? Because the other alcohol majors have been demanding their dues. So how's the scenario for you? How much is pending from the government side, and how have the discussions been with the government so far?
As far as the overdue goes, I think it will be a matter of months before which the government will clear the dues. And right now, whatever we are selling, they are paying the money.
And how much is pending from the state, if you could share that number?
See, right now, I would not have the figure at the top of my head, but I think it will be close to about 100, 150 crores.
All right, short on time, but not short on questions. Mr. Khaitan, we'll speak to you on another occasion, hopefully very soon. But until then, good luck for the remainder of this quarter and the next year as well. We'll take a short break, come back on the other side, get you more stock-specific action. Stay with us.
Been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a charts perspective, your maximum downside is about 2 to 4% from here, and upside is about 20%. So as an investor, I want to plan for the same.
first woman finance minister to present her 8th consecutive union budget. From replacing the colonial era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her leadership. Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The credit guarantee scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this scheme provides collateral-free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme. Announced in the budget 23-24, this initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers
Still at 23,260 is the index, holding on to gains of about 100 points as we move further into the monthly expiry and we count down to the end of the January series. It's still remaining around those levels at around 23,250. But Olectra Greentech is one stock that has surged in the last few minutes, 11% higher now on the stock. You remember, it's an earnings reaction. It had opened higher and has now since then built on to those gains. Almost 12% higher now is Olectra Greentech. Also pull up SRF. Some positive management commentary coming in there with regards to the future of its various businesses, and that stock too has surged to the highs of the day, 4% higher on SRF. We spoke of Whirlpool as the top loser. What is also among the top losers now is Deepak Fertilizers, because after its results yesterday, the stock was up 14-15% and it seems to have given up almost all of those gains in today's trading session. That stock too trading at the lowest point of the day, 11% lower is Deepak Fertilizers. But take a short break. We get you more on the markets and specific stocks on the other side. Stay tuned.
the chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of measures supporting MSMEs and businesses were introduced under this initiative during the pandemic, emphasizing self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an attractive destination for global investments. The optional personal tax regime, or the new tax regime in 2020, a simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes. Another such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments. The abolition of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating.
Let's talk about jewelry. House of Rose has unveiled its new flagship store in Mumbai's Balad estate. Manisha Gupta caught up with Biren Vaidya, who's the managing director of House of Rose, to discuss key trends in the sector. What jewelry sector also expects from the budget 2025. Take a look.
The luxury customer is loyal to themselves and they want everything in every category. So though we started off the House of Rose with jewelry, we realized over a period of time that the customer was inclined to be going into other categories and other brands. So what we do best is be like water, get every international brand that is looking to come to cater to the Indian HNI and bring their products here in India.
Mr. Vaidya, when we talk about jewelry luxury, would you say this as a category has grown over the years? And if yes, would you be able to share a percentage, approx number onto that?
So numbers is something that I really don't get into because India has been a very dynamic market, and with the kind of population we have, whatever statistics that come out are only on very, very marginal slices, and that really doesn't give the whole picture. But the answer is yes, the luxury market has grown. The jewelry market existed right from the time when I started in the 80s, where though 1% of the population was paying tax at that time, 70% of the Indian population had more than 1 tola of gold. Okay, the Indian families. So that really showed how important jewelry was. However, saying that, the luxury category has expanded because today with the exposure to the younger generation through digital, through media, they have got a lot of exposure, education and wealth, and they want to enjoy it. And with the opening of the economy, you're seeing that happen. And from 5 cities, we have grown to more than at least 100 cities that can be called metropolitan cities.
Oh, well, absolutely. So, Mr. Vaidya, from looking at gold and silver and jewelry and diamond as investment, where you're anticipating returns, when you talk about luxury jewelry, this is an area where you look at it as wealth creation and not exactly for returns going forward. Would you say category in that sense also has grown?
Yes, it has, because people have now got an understanding that it's not only the materials that create the wealth, it's also the goodwill of the brand. So for example, if you were to buy a steel watch, that also appreciates in price. So in the same way, when you're buying something precious that's in gold, diamonds, emeralds, and if it comes from a brand of a standing, the aspiration and the value goes up purely not because of the materials and the asset value of that, but also about the value and goodwill of the brand.
Rose, as you've created as a large enough brand of very strong repute and standing in the Indian markets, with budget around the corner, what is your expectation from this budget as a luxury brand, as a growing market, and also with the kind of business that you're in?
So every time one doesn't have to always look at the government for something more. I think they've done an exceptional job on how they've positioned jewelry in luxury with the 3% GST. I think that's fair, and that should be okay with the size of the market that is going. But if luxury watches and luxury other products are heavily taxed, that will create the customer picking it up overseas. So if the luxury customer is willing to enjoy it and buy it locally, why not give him that advantage of picking it up here rather than going overseas and bringing it? I think that's one thing they should consider before they increase the GST on any of the luxury categories, because that is something that one tends to see happening. If they look at it from that perspective, is keep the purchases domestic rather than overseas, it would really help, and it would lure the market to grow here. It will lure a lot of international brands to come, and when more brands come, the markets get bigger. It's not only about imports, but it's also about exposure and people buying in India itself.
The Indian market really seems to be growing when it comes to jewelry, coming back to that. And we're looking at more corporates getting into jewelry as a business. There were a lot more IPOs in 2024 as well. And the way the jewelry market is talking to us, they tell us that there are 3,000 new shops opening in next 2 years. The expansions are coming in, etc. How are you looking at the sector overall and its growth?
So for me, jewelry has always been an art form. So one may talk about growth and patterns of scalability in the number of stores, but eventually one must understand, for it to grow in the correct direction, you need to have the right kind of understanding of design for the target segment that you are doing, whether it is mass or class. If it is generic, if it is just put out there to bring numbers, it really doesn't bring the value. If you see the largest brands in the world, even a brand like in silver like Pandora or Swarovski in fashion, they've identified their DNA. So by just opening stores is not the question, but like a child, you have to make the brand create its DNA, and with design, with innovative marketing, with strategy, and then it's easy to grow. But what I see is if things are done in a haste, where I see a lot of the Indian retail brands, especially in jewelry, growing, where they're going just with the herd mentality that if A has opened here, I need to open here. It may bring you business, but on an overall picture, if it's not identified with you as a brand, it is not going to work. So when you were to see a Cartier or a Bulgari or Rose that matter, there is a distinct style of jewelry. So a customer is coming for that. And when you see Pandora or you see any of the international brands, even the fashion jewelry of Chanel, it has its own style. So that is very important. You have to have a character, a DNA for the brand. It's not how many you open, but how well you manage it and strategize it.
All right, and while we were hearing that conversation, we had the numbers of Bajaj Finserv as well. The stock mildly in the red right now. In the early part of the day, it was doing well because of Bajaj Finance doing well. This is the holding company of Bajaj Finance. The company has approved an appointment of a CFO. Ramandeep Singh joins in as the CFO. But importantly, the numbers, if you look at them, the net profit has grown by about 10% The revenues also have seen a bit of a growth. So what we'll do is that we'll take net profit has grown by 3.5%. Revenue has grown by 10%, beg your pardon. For Bajaj Finserv, the more important numbers are the ones that come in the presentation and some more internal details. We'll await that, and as we do, we'll wrap up on this edition of Halftime Report. You stay tuned. Business Lunch will take all the action ahead.
Of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencer.
Stocks climb in the run-up to the union budget despite soft overnight cues, with the US Fed pushing out a possibility of a rate cut. Realty and oil and gas are the big gainers, while consumer durables and IT drag. Tata Motors misses profitability estimates by a wide mark, and while it holds on to JLR's margin guidance for the year, worries over demand and growth in China and Europe are the big worry for analysts. The stock slumps. After trimming its stake down to 51% last year, Whirlpool plans to par its stake to 20% in its Indian arm, reducing it to a minority investor. High relative valuations and the need for cash are likely drivers, but the move leaves the shareholders in a whirl. The stock tanks. SEBI spells out what amounts to a violation of its rules that bar registered entities from engaging with unregistered parties, offering stock advice or masquerading and as investor educators. SEBI says it could suspend or debar violators. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at the markets today. It's a day of green again coming in for the benchmark indices as well as the broader markets. Nifty holding on to gains of 0.5%, almost near the day's highest point. 23,250 as of now is what the Nifty is managing to hold on to. Sensex 2 is holding on to good gains as of now of 0.4%. Top contributors for the Nifty 50, we have Reliance that's doing well, HDFC Bank, M&M, Bajaj Finance, among some of the names that are pulling up the markets and supporting the markets. On the flip side, we have drags coming in from Tata Motors, Infosys, L&T as well as Kotak Mahindra Bank on the flip side is actually among the drags for the Nifty 50. Mid and small cap that is performing decently well in tandem with the benchmark indices. Nifty mid cap is up 0.4%. The outperformance, a bit of an outperformance today, is coming in from the Nifty small cap that is holding on to gains of almost 0.7% in trade off the day's highest point, but nonetheless 0.7% of gains is what we're seeing there. Nifty Bank opened up in the red and then has moved to the green side, trading at the day's highest point. As of now, 0.3% of gain is coming in for Nifty Banks. Sector-wise, when you're looking at top sectoral gainers coming in are Nifty Realty, Energy as well as Nifty Pharma, which is managing to hold on to very, very strong gains in today's trading session. While among the top losers, we have Nifty IT that's not doing well. And you saw on the Nifty 50 side as well, Infosys was among the names of the drags coming in for the Nifty 50. A lot of mid and small cap and names coming in from the Nifty 500. So Electra Green Tech, JBM Auto, Laurus Labs, Vijay Diagnostics and Hitachi Energy are among the top movers coming in for the Nifty 500 side. But yes, that's how the market shape up is looking like. As of now, managing to hold on to the green. Budget is just around the corner. Let's see how that keeps going in the next couple of days. But let's move on and get started with the show now. Market regulator SEBI has actually released a clarification that tightens the news on associations of SEBI registered entities with influencers. Yash is joining in with us to actually give us more details on what this is actually saying and what is this regulation coming out. Yash, good afternoon.
Good afternoon. So, of course, if you remember, in August 2024 is when SEBI had come out with regulations against financial influencers and other unregistered entities. The intention back then was to disrupt the financial model for these influencers so that the relation between registered and unregistered entities can be broken at that point itself. Now what SEBI has done is that through certain clarifications, it has told market participants how to sort of disassociate themselves, the registered entities, to disassociate themselves from these financial influencers to make sure that there is no ambiguity on the table. Firstly, what are SEBI regulated entities? Stock exchanges, clearing corporations, depositories, mutual funds, asset management companies, as well as the agents, they are regulated entities. What has SEBI said? SEBI said that financial influencers or unregistered entities cannot provide any advice or any recommendation directly, indirectly related to any security on their behalf or the behalf of their client. Second thing that SEBI said is that financial influencers cannot make any claim of returns or performance explicitly or impliedly related to any security. Now, what constitutes an association between a financial influencer and a SEBI registered entity? Association can be in the nature of money or money's worth or referral of a client or interaction of information technology systems. Now, very importantly and interestingly, SEBI had exempted investor education from the bracket of these regulations, and that continues to be the case, but it has filtered the word investor education. What SEBI has said is that financial influencers cannot use stock price for illustration, which is of the previous 3 months, which means the illustration stock price can only be used which is of 3 months ago for any of the education that they want to give. Also, educators cannot make performance claims without SEBI permission. This is a very important distinction which SEBI has made. Of course, the whole intention is to break down the model for financial influencers and disassociate regulated entities from these influencers.
Okay, Yash, thank you so much for the latest update coming in on that front. But let's move on. And Union Minister Ashwini Vaishnaw today announced that India will have its own AI model in the next 8 to 10 months, adding that the world is looking at India as a major contributor to artificial intelligence. He also added that India has over 10,000 GPUs that will power the AI ecosystem. Listen in.
In the India AI mission, we had taken the common compute as the most important part of the mission. And very happy to say that against 10,000 GPU, which was our target, we have actually empaneled 18,693 GPUs. Overall, net high-end GPUs अपने पास 15,000 आ गए हैं. The second big mission, as you know, was to develop our own model. And over last almost 1.5 years, our teams have been working very closely with the startup ecosystem, with the researchers, with many professors, और उन सब के साथ बातचीत करके we have created the framework which will be launched today. We are calling for proposals to develop our own foundational model, and we believe that there are at least 6 major developers who will be able to create foundational models in the next 8 to 10 months on the outer limit. So today, most of the major chip designers of the world are willing to work with India for developing a GPU on an architecture which can be very innovative, which can be more efficient compared to the existing ones. So that possibility is available to us today, and we are working on it, and hopefully I'll be able to share with you more details in coming weeks. The world definitely recognizes India as a major talent pool, and I'm sure you would have seen those parliament questionnaires, the answers that we had given in the parliament questions. Stanford University, they have evaluated many countries, and India ranks among the top on the AI skills and the AI talent which is available anywhere in the world.
Okay, let's move on. Maruti isn't focused on the back of its numbers. The company posted Q3 numbers that were in line with the estimates. Earlier, we caught up with the management of the company, Rahul Bharti, the Executive Director of Corporate Affairs, and he spoke about the company's export plans for FY25. Listen in.
For the first time, the India-made 5-door Jimny was unveiled. It debuted in Japan, and we hope to increase its volume. You would recall that some time back, we had started the exports of the Francs in Japan in August. And very soon after launch, it has done exceedingly well in Japan. We've done almost 10,000 numbers of the Francs in Japan. We hope to follow it up with the Jimny. And this is the third model being announced, including our e-Vitara, which will be exported from India to Japan.
Okay, on that note, we're going to step into a very short break. When we return, we'll get you the updates on the mid-air collisions that took place in the US earlier today, so stay tuned in for that.
Celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back and thanks for staying tuned into Business Lunch on CNBC TV18. Now, moving on to some national news that we have for you all. Now, following the stampede incident in Mahakumbh that claimed at least 30 lives, the state government has rolled out stricter measures to handle the crowds. The administration has implemented 5 major changes, including declaring the entire fair area or no vehicle zone. A one-way traffic system has also been enforced to streamline the movement of devotees. UP Chief Minister Yogi Adityanath also held a late-night video conference with the officials to review the situation. And in another unfortunate incident, an American Airlines passenger jet and a U.S. Army helicopter crashed into the Potomac River in Washington after a mid-air collision late last night. Officials say at least 60 people were on board of the aircraft, and take a look at the visuals.
Multiple deaths have been reported after a passenger jet and U.S. Army Black Hawk helicopter collided mid-air and crashed into the Potomac River Wednesday night near Reagan Washington National Airport. Police said several agencies were involved in a search and rescue operation in the river. The airport said late on Wednesday that all takeoffs and landings had been halted as emergency personnel responded. The Federal Aviation Authority said PSA Airlines was operating a regional flight for American Airlines, which had departed from Wichita, Kansas. American Airlines said 60 passengers and 4 crew were on the plane. A U.S. official said 3 soldiers were aboard the helicopter. Senator Ted Cruz of Texas said on social media that, quote, "We know there are fatalities," though he did not say how many. NBC reported that 4 people had been recovered from the river, while the Washington Post said multiple bodies had been pulled from the water. The National Transportation Safety Board said it was gathering more information on the incident.
And following the incident, American Airlines CEO Robert Isom issued a video statement saying that they were working with local authorities for emergency response efforts and were cooperating with all investigations. Listen in.
First and most importantly, I'd like to express our deep sorrow about these events. This is a difficult day for all of us at American Airlines, and our efforts now are focused entirely on the needs of our passengers, crew members, partners, first responders, along with their families and loved ones. We're cooperating fully with the National Transportation Safety Board in its investigation and will continue to provide all the information we can. Our cooperation is without pause, and we want to learn everything we can about today's events. Please know that we'll continue to share accurate and timely information as soon as we can, but anything we must report must be accurate. We owe that to everyone involved.
Okay, just quickly before we move on, just Mark Adani Ports. We had the numbers that came out for the company. The stock is holding on to gains of 1.2% as of now. They've said the FY25 guidance has been increased by the company. FY25 EBITDA guide, this is the EBITDA guidance I'm talking about. So EBITDA guidance is now at 18,800 crore rupees to 18,900 crore rupees. Previously, the guidance was 70,000 crores to 18,000 crore rupees. So keep an eye out on that. We had the numbers that just flashed on the screen at the bottom of your the screen. And you are seeing the guidance that is flashing at the bottom. They have revised the guidance upward as well. But let's move on that note. And US President Donald Trump also responded to the incident and took to his social media platforms, Truth Social, to call the air crash, I quote, a bad situation that looks like it should have been prevented, end of quote. He also added that the control tower should have alerted the helicopter in advance, since it was a clear night and a plane was likely to have been visible. Okay, on that note, we're going to slip into a very short break. But here's some good news for you viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from Apple Store or Google Play Store, or just scan the QR code on your screen.
I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs, and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now, and happy to see what it's doing today. And I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think the bulls take some control. Auto as a sector, auto and FMCG, and even PSU, these three baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind you, if you look at the mid caps and small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again, please look at the context of the rise in mid caps and small caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible. I think the biggest disconnect for most market participants in India is, for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market, because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets, because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So a deeper cut from current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here,
Welcome back, and you're watching Business Lunch on CNBC-TV18. Now let's focus and talk about MSC REIT. They reported their third quarter numbers marked a 13% rise in terms of distribution and a growth of 9% in terms of EBITDA. We do have the management of the company joining in with us, Ritik Bhattacharjee, who's the CEO at the company, to discuss about the quarter that's gone by. Ritik, thank you so much for joining in with us on the show. It's a pleasure having you on the show. I want to just talk about the net operating income guidance that you've spoken about for FY25 of 3,280 crores, as well as the DPU guidance of around 22.7 rupees. Now the numbers, we're almost through with the year, but is this something that is achievable? And, are you on track to meet the guidance right now?
Yeah, first of all, Vinny, good to be here, and thank you very much for having me. Let me sort of put the performance in context, because your question, I think, is a lead-up question. We delivered effectively the highest revenues, NOI, and distributions that we had on quarterly record. In fact, our revenues crossed 1,000 crores, so this is effectively tracking as a 4,000 crore business. The DPU growth of 13% growth is effectively what the market's been waiting for. And I think all of that points to a very robust environment for us, both from a leasing perspective, as well as sort of the overall demand that we're seeing for our premium product in commercial real estate. So with that, I feel extremely confident that we're on track to deliver our guidance, both for leasing, which is 6.5 million square feet, that's upsized leasing guidance for FY25. And conversely, all of that also flows into us absolutely meeting the NOI guidance that we put out. We did put out a range of around between 3,215 crores to around 3,345 crores as a range, and we'll certainly fall very comfortably in that.
Absolutely. But, for next year also, do you think, you would like to give us some numbers on that front as well? What should we be expecting in terms of the NOI guidance or anything for FY26? Do you think this growth is sustainable?
It's premature for us. We've always sort of set the trend in making sure that we look out as far as we can in our business. But I'll say this, I couldn't be more excited about what's coming up in the upcoming year. Calendar year 2024 was a record year of absorption in the Indian office market. We expect the same tailwinds to continue in 2025, and obviously financial year 2026 should reap the benefits of that. For that, we have a development pipeline which is primed and ready to lease to GCCs. We've got 1.4 million square feet. We're actually delivering in February. Beyond that, we've got 3.2 million square feet upcoming for FY26. And really, all of this points to just us, catering to the immense demand that we're seeing, particularly from GCCs and effectively the world's best companies that are looking for all the talent that's available, particularly in anchor markets like in Bangalore, in Mumbai, in Chennai, all of which are markets that are running at over 90% occupancy and will continue to be massive growth catalysts for us. So I can't give you an exact number of guidance yet. I think we'll have probably more to say in the coming quarters, but really could be more excited about the business.
Absolutely. Ritik, if you could just give in some color in terms of the trends that you're seeing also in terms of your leasing side or any demand side, and indication that we could get in from you in Q4, how that is shaping up.
Sure. So just if you take Q3 and just even the quarters before, this has been a very GCC dominant business. So we lease approximately close to 70% was by GCCs, which continues to, I think, be a trend that's going to be on an exponential sort of multi-year cycle of demand. Secondly, we see a lot of demand continuing to come across a variety of different sectors, be it, banking and financial services has always been a staple in our portfolio, but we're seeing demand from engineering, manufacturing, technology. I think, even if you sort of throw the words AI into it, and you think about every single piece of architecture and business that people are doing inside our parks, there's just a consistent theme of, people across sectors, clients across sectors looking for space. The second thing I would say is that a lot of the demand is effectively non-SEZ, which continues to be sort of a theme that is playing out. We've actively sort of denotified and demarcated over 6.4 million square feet. And that's something we're just going where the demand is. So over time, over the next few quarters into sort of the next, call it 2 to 3 years, I think this is just the start of a multi-year early cycle for Indian office.
Okay. On that positive note, Ritik, we're absolutely out of time on this edition of Business Lunch. But thank you so much for tuning in and giving us those insights in terms of overall trends as well as what to expect from the company in terms of meeting their guidance also is what we're watching out for and better outlook going forward. Thank you so much, Ritik, for joining in with us. That was the management of Embassy REIT joining in with us on the show. But with that, we are absolutely out of time. So thank you so much for tuning in. Up next, your Midcap Radar.
Past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think will be very critical to the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited, but as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited. For the last 4 years, since the time we started rallying from the COVID lows, every time there has been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a charts perspective, your maximum downside is about 2 to 4% from here and upside is about 20%. So as an investor, I want to plan for the same.
set to create history as the first woman finance minister to present her 8th consecutive union budget. From replacing the colonial-era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her leadership. Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The Credit Guarantee Scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this
Final couple of hours of the January series expiry. You're joining us on Midcap Radar on CNBC-TV18. I'm Hormuz Fatakia. With me is Vivek Iyer. Vivek, good afternoon. You're slightly off the highs of the day. A slew of earnings reactions coming in, but there are important subjects that we need to tackle on the show as well.
Absolutely right. It's a packed show. We'll start off with the top headlines immediately. Well, first up, stocks climb up in the run-up to the union budget despite soft overnight cues, with the US Fed pushing out a possible rate cut. Realty and oil and gas are the big gainers, while consumer durables and IT drag. Mid-caps relatively underperform.
Pharma stocks like Laurus Labs and Aurobindo Pharma have surged after the US government announced a waiver on its 90-day funding pause on HIV medication. The waiver will also allow people in several countries to continue accessing the life-saving HIV drugs.
ABB India under pressure after its parent ABB Global reports Q4 CY24 numbers. Order inflow growth for India region declines 21% on a year-on-year basis. Stock loses nearly 5%.
India gears up for the AI race as the centre launches common commute facility for 18,000 GPUs. GPU provider Tata Communications has surged over 2.5%.
After trimming its stake down to 51% last year, Whirlpool plans to pare its stake to 20% in its Indian arm, reducing it to a minority investor. High relative valuations and the need for cash are likely drivers, but the move leaves shareholders in a whirlwind. The stock tanks.
The broader markets have cooled off from the highs of the day. They're almost turning into the red is the mid-cap index. Same is the case for the Nifty as well. But there are plenty of movers in the mid-cap universe, and Vamakshi is joining us to tell us just that. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Yes, plenty of movers in the mid-cap space. And let me first look at some of the stocks that are gaining a momentum in trade today. First up is Archean Chemicals. That stock saw an uptick of almost 12%. In fact, the stock had surged higher in the day, and that with that, the stock saw the biggest intraday gain since its IPO. The other mover in trade today is JBM Auto. That stock is up nearly 8.75%. Laurus Labs also seeing its biggest intraday advance since June 2021. Netweb, on the other hand, is up nearly 6% today. The stock has been recovering over the last couple of sessions, and since its low, the stock has recovered over 15%. Next up are some earnings reaction. We have Hitachi Energy, of course, up and away in trade today, locked in the upper circuit today at 20% higher on the back of a good set of numbers as well as robust order inflows. Electra Green Tech is another counter that is up nearly 8%. We also have Ask Automotive in focus. That stock is up nearly 2%. Whirlpool, apart from the news, also reacting to its numbers, down nearly 20%. Samhi Hotels also down nearly 5%. Let's also look at some of the realty counters, because all of the realty stocks are up and away in trade today. We have several counters like Puravankara, Godrej Properties, Macrotech Developers, Prestige, as well as Phoenix that are up and away in trade today. And lastly, let's also focus in on some of the top losers this time around. Deepak Fertilizers is seeing the biggest intraday fall since June 2021. The other counter that is declining in trade today is CAMS, down nearly 8.5%, Balrampur Chini down and out nearly 4.5%, eClerk Services and Craftsman Auto both down somewhere around 4%.
Actually, thanks a lot for that. Some interesting names there in the broader markets. We'll take a short break, but just before we do that, quickly pull up Adani Ports, and we'll get you more on that as the show goes by. But the stock is down almost 7% after its earnings announcement. The company increased its guidance, is seeing some recovery from the lows, but still down around about 5%. But before we take that break, let's introduce Growth Code, an initiative by Grow and CNBC-TV18 that offers valuable insights and strategies to help you make well-informed trading decisions. This week, in an exclusive interaction, CNBC-TV18's Prashant Nair interviewed SEBI's whole-time member Anant Narayan and asked him about the risks of overtrading.
Markets are all about activity and we track it every day. But SEBI, you publish so many papers which kind of show overtrading and the risks of overtrading, and also just, the chances, the probability of, actually, what percentage of people make money? Just pure trading, right?
Sure.
So just talk to our sort of audience regarding that. What is your own perspective? Are you saying the more you trade, the less you make?
Absolutely, Prashant. There is plenty of research to suggest that at an individual level, precisely what you said, the more you trade, the less you tend to make. And there's a very rational explanation for this. Every trade comes with transaction costs. There's typically intermediary charges, there is taxes, there is exchange fees, and a whole bunch of things that go with every single trade. So the odds are stacked against overtrading.
Typically, nobody talks about those things. You just look at, well, you bought something at 10 rupees, I've sold it at 15 rupees, well, this is what I've made. But there is all these other things which you spoke about, right? Which you must take into account.
That's right. And there is plenty of research, both at a global level as well as at a India level, which suggests that the more you trade, the less you tend to make. For instance, we did an analysis in SEBI, which looked at the activity of intraday trading. So those who took part in intraday trading, what we found is that over 70% of those people tend to lose money in those trades. In January 2023, we found that 89% of all individual traders in F&O markets tend to lose money. When we updated that research later in 2024, we found that 93% of individuals over the last 3 years have actually been losing money.
Free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme announced in the budget 23-24. This initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers taxpayers a chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of measures supporting MSMEs and businesses were introduced under this initiative during the pandemic, emphasizing self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an attractive destination for global investments. The optional personal tax regime, or the new tax regime in 2020, a simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes. Another such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments. The abolition of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 20.
Welcome back to Midcap Radar. Well, we are now joined by Sandeep Parekh, Managing Partner and Founder at FinSec Law Advisors, and Deepak Shenoy, Founder at Capital Mind. Both of our guests have joined us today to discuss some very interesting rules that have come about from market regulator SEBI that actually go ahead and have caused further restrictions as far as the activities of influencers are concerned. It's a very important development, a very interesting development. First up, Sandeep, let me come across to you. How do you go ahead and implement these further restrictions that have come in from SEBI? You will have to go ahead and ensure that all of the activities of influencers are being regulated.
Right. So I think this is actually more of a clarification. The rule has already been implemented, I believe, in August of last year. And I think it's completely impractical to implement this because it's kind of asking, again, if somebody's a full-time influencer or something, you can probably track that person. But this seems to kind of go way beyond that. And it's expecting, let's say, for instance, a mutual fund AMC to track all the behavior of all the distributors, saying they're your agents and therefore we want you to kind of make sure that they don't do any illegal behavior. And this is practically impossible because a mutual fund can have hundreds or even thousands of distributors. How do you control their behavior on the side unless, you kind of looking at every action of theirs, you maybe put some spies outside the house of the distributor. It's completely impractical to kind of, even if you are able to monitor your 20,000 or 5,000 distributors, how do you implement action against them? You have no power over them, really. So just by calling somebody your agent doesn't give you any access or power over them. So I think it's completely impractical what SEBI is trying to do with respect to these norms. Again, the restriction is not just influencers. They've made it very broadly. Anybody who gives any sort of advice.
Right. Deepak, good afternoon. Thank you for joining in. SEBI is putting curbs on all of this, but the buck to a certain extent stops at the retail investor as well, right? Yet despite the numerous studies, warnings, and so on and so forth, if they continue to engage with the influencers, how do you track that? How do you curb that? You can't monitor every single individual, right?
Yeah, I think, firstly, I think Sandeep is absolutely spot on, is that the range of the interpretations of this law are so wide that I don't think even SEBI will go down and say, we will implement this to the absolute T, because it's almost like saying you cannot live on the road where potentially anybody has committed a crime. You have almost no way to figure out that by yourself, and at some level it's difficult to kind of practically do it. But more importantly, how do you, for instance, what do you call of influencer? That's also clear. And what do you call association? It is an indirect or direct payment to a person who has either recommended stocks or securities, or who has claimed that I have given you so much performance. So given that, my feeling here is SEBI is only going to go after those people who are pretty much like saying, listen, buy this stock. Look, I have done 40% in the last 1 year. Therefore, you should listen to me or pay me or something like that. But this person puts a YouTube video, then a mutual fund AMC maybe has a YouTube advertisement of itself. And in that YouTube video of that influencer, an ad of the mutual fund shows up. So this is almost like, listen, your ad effectively goes to pay that video guy. So you should somehow not include that influencer in your ad list. Difficult to implement perhaps, but still doable, because you have a list of people who are perhaps abusing the non-registered part of the investment advisory kind of universe. And therefore you are aware of such people, and therefore you can say my ad should not show up there. That is more practical to think about, but I think can you stop people listening to influencers? No, and I don't even think that's the objective. They don't want. SEBI saying we can't stop your media freedom to listen to whoever, or the media freedom for anybody to do this without a registration. But if you do these things, then be sure that you will not get paid by a regulated entity that is owned by SEBI or regulated by SEBI. That's all I think the intent is. And I think they will only go after the extremely highly, people who are probably abusing it and causing damage to investors rather than against everybody. I know it's a sad state of affairs that, the rules are so wide, but, I think that's the practical implication of it.
Thank you so much, Deepak. But Sandeep, I believe the main purpose of this particular exercise is to ensure that under the garb of education, influencers might be getting away with going ahead and manipulating and also doing recommendations as far as stock prices is concerned. That is also one of the reasons it appears as though SEBI has strictly mandated that they use 3-month-old charts instead of live charts. So how do you differentiate between what is education, what is influencing the stock price, and what is essentially manipulation when it under the garb of education?
So I think, first of all, before you answer the question, I think this is kind of a lazy way of regulating, really. Instead of going after the person who's violating the law in terms of making recommendations without license of either research or investment advice, you're basically saying, like Deepak said, anybody who walks in a road which has a criminal, you'll be liable for his action. It's not much narrowed than that, because how do you control that person? Even if you know that person, at the most, you can say that now I know about this and therefore I won't associate with that person. But making you responsible for that somehow, falls outside, number one, my ability of my knowledge of that violation, and number two, my ability to control that person. It's SEBI's job to control that person. And therefore, I think they really need to kind of relook at this. Certainly, anybody who is making giving stock tips, giving investment advice, etc., is in direct violation of not being registered as an investment advisor before giving such tips. And the answer has to be with proper enforcement against the wrongdoer, rather than kind of making it a responsibility of private entities who have very little to do with that person.
All right, Sandeep, Deepak, this is a very, very wide debate of discussion, but we're running out of time. So thank you so much for sparing time and joining us today on this issue of the SEBI's latest clarification on the moves to curb influencers. And we take a short break here on Midcap Radar. On the other side, we connect with Nishant Arya of JBM Auto to discuss their quarterly performance and the road ahead. Stay tuned.
of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets.
Welcome back. Getting back to corporate conversations then, JBM Auto reported a steady quarter this time around. Both the component and the OEM division saw margin expansion. Profit also increased from last year. To discuss more on this, Nishant Arya, who is the Vice Chairman and the Managing Director at the company, is joining us now. Nishant, good afternoon. Thank you for joining in. Your quarterly performance has been steady so far, right? Your profits were up almost 8%. And in terms of its revenue as well, for the first 9 months, you are up around 8% for the top line. What do you expect to end the year with? And do we expect double-digit growth in FY26?
Yeah, definitely. The guidance which we have given for FY25 has been more than 6,000 crores. So we would be maintaining that guidance. And definitely the profitability has gone up. So if you see that in Q2, or if you look at on YOY numbers from Q3 of FY24 to Q3 of FY25, we've jumped by more than 2% on the EBITDA level. So our focus has been top line and bottom line. So the company's asset utilization and productivity is going up substantially. And we are well prepared because Q4 is always the best quarter of the year for the company. So we are fully geared up for that.
Good afternoon, Nishant. Nishant, while there's been significant margin expansion, operational excellence that is seen across a couple of the divisions that you just mentioned, what's missing traction? It's the bus segment. So when can we expect a revival over there? How's the order book in that particular segment looking? Have there been any lumpy one-offs that have led to a muted show this time around?
No, not a muted show because of elections and because of market expansions and Maharashtra elections. I think the first 6 to 9 months have been more stable, and a lot of the things got pushed out to the fourth quarter. So I think fourth quarter would be capturing a large part of the year, which it always does, but this year it will be even more significant. And with that, we would be crossing 6,000 crores of top line as a company.
What about the latest launch that you have made, Nishant, the electric medical mobile unit? What kind of incremental revenue you are expecting from that going forward? And also part 2, what is the launch pipeline looking like for the next year?
So we have launched 4 new products this year in the Bharat Mobility Show. So we launched Galaxy Hybrid, Seater and Sleeper. And this is first of its kind, which is getting deployed everywhere, which has either full seating capacity in the ultra luxury bus or half seating, half sleeping or full sleeping. And that's received a huge traction. And parallelly, MediLife, which is the mobile medical unit, as you rightly mentioned. Then we have launched Express, which is the intercity bus. And fourthly, we've launched the full new platform of 9-meter low floor, which is for city and airport applications. All put together and all our existing products put together, we have an order book of about 10,000 plus buses now. And we would be looking at delivering these buses over the next quarter and the next 2 years. So we are fully booked and having a very good capacity utilization and order book to give us a clear headway as we move forward.
Nishant, you've told us that you have an order book of in excess of 10,000 buses. We also understand that when it comes to the ordering pipeline or the tendering pipeline, competition in this particular segment has become very fierce. Does that mean incremental order book accretion will come in at lower margins? The second question is, we've asked this to you a couple of times in the past as well. You were looking at acquiring an asset. We understand that you were in talks with SML Isuzu. Will you still be looking at inorganic growth as well?
No, we are always open to new opportunities whenever they come by. And definitely we keep evaluating them wherever it has a strategic alignment with our existing business. So that is a primary focus, because idea is to grow the business exponentially, organically and inorganically. So that is a part of our strategy wherever that opportunity comes to us.
And competition in the buses segment?
Competition in the buses segment is definitely going up, but they are very limited EV ecosystem players. So we are across lithium batteries, across bus manufacturing. We have the largest capacity in the country. And then we provide our own charging solutions. So we have end-to-end technology, which covers about 65-70% of the whole ecosystem requirements, where we don't depend on third parties. So I think that gives us an edge. And that is why you see that even PM E-Bus Seva 1, we had more than 65% market share. And in PM E-Bus Seva 2 also, we see that as things unwind, we would be working on the best-in-class cities across the country and states, and parallelly delivering products which are having the right technology and are well equipped to deliver the performance in the coming days and months.
Very quickly, Nishant, to finish that inorganic growth point, is there something that's in the offing anytime soon?
Nothing in the pipeline which is concrete as of now.
All right, Nishant, thank you so much for sparing time and joining us today. Wish you good luck on the road ahead as well. That was the management there of JBM Auto. The stock reacting to results slightly off the highs of the day, but still holding on to gains of around 6.5–7%. By the way, the index has cooled off from the highs as well. Now below the mark of 23,200. Some expiry-related plays coming into force. Now the Nifty trading below the 23,200 mark. A lot of movers in the broader markets. Archean Chemicals has now surged to the highest point of the day, 11.6% higher on the stock. And this is a sudden mover in the last few minutes of the trading session, and that too is seeing good traction. We spoke of JBM Auto, so can't not talk of Electra Green Tech. That too is an earnings reaction and is trading with gains of around 7%. And Laurus Labs holding on to gains of around 6% after the funding renewal coming in from the US when it comes to the HIV medication. So 7.75% higher on Laurus Labs as well. But at that, it's a wrap on this edition of Midcap Radar. From Vivek, me and the show team that put this show together, thank you so much for watching. MF Corner on the other side.
More. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Hello, good afternoon and welcome to Mutual Fund Corner on CNBC-TV18. I'm Vinny Motiwala in the Mumbai studio. Today, we'll start by discussing and focus on systematic investment plans. SIPs have emerged as a cornerstone of retail participation in the equity markets. The latest AMFI data has also shown a very interesting data point that equity fund inflows have jumped 15% to 41,156 crore rupees in the month of December. However, what would you do when you encounter negative returns in the current volatile market? What are the factors to analyze and what should you consider while actually seeing this negative return? Should you actually switch? What is the word coming in on this front? We'll discuss all of this with our expert for today. We have Tarun Birani, founder and CEO at TBNG Capital Advisors, joining in with us to talk to us about all of that. Tarun, thank you so much and good afternoon. Let's start by talking about this. Investors often start panicking when they see a negative return that comes in on their SIPs. How should they interpret such a phase that comes in the market? And I'm sure everyone faces this in the market once in a while. Given that it is the market, you will see ups and downs. What should the investor do at such a time?
Good afternoon, Vinny, and thank you for having me on the show. I really love the topic today because I feel this is so relevant in the today's times where we are today. So let me just first give a quick background, and SIPs I think is like a cornerstone for Indian economy now, right? I think it has emerged like most of the retail participation of equity markets is coming through SIPs. And as we talk, there is almost like 26,000 crores of SIP on a monthly basis, which is going every month. And most of the FII outflow, which has happened in last 6 months to 1 year, I think most of the DIA money has come, the domestic investor money has come through SIP board. And this has really helped the equity flows in the market. So I would say SIP is an extremely important part of capital markets as we talk today. Now coming to your important question that what should investor do when their SIP turn negative? I feel we are trying to talk about the what should be the medicine. I think before that, most important part is we need to talk about the diagnosis. And according to me, the most important part is why do SIPs fail? Most of the time, SIPs fail because most of the investor do these investment because of the rear view, mirror view. They just look at current momentum strategies, momentum funds, past performance, and these are the strong big reasons to invest into market. SIPs have not been made to align with their long-term financial goals. These are done more to benefit from the current markets. So I think from an approach point of view, these are big reasons for SIPs failing. Again, over diversification of SIP schemes, investors end up taking 15, 20 schemes in their portfolio, which doesn't really help in creating wealth creation. So again, not aligning for long term, from a short term point of view, looking at SIP also has been one of the biggest reason why SIPs fail. And apart from that, thematic funds, right? Most of the times I have seen last 1 year, themes like defense, infra, all these have been like, because the past returns were very good, lot of fund flows has happened into these strategies, and SIPs also have been started in this. But if you look at returns, I think all these strategies have really given bad returns in last 1 year. Again, now I am coming to the solution part, right? What should be the medicine right now? One should take. I think investors need to look at SIP returns from a 5-year plus point of view. I feel 1 year, 2 year, 3 year returns are not a right benchmark, first of all, to look at the returns, because it could be because of the market cycles, and a market cycle takes almost like 3 to 5 years for a full cycle to complete. So looking at SIP returns just from 1-2 year returns, I don't think is the right approach. Again, the SIP actually thrives on rupee cost averaging. And the whole benefit of rupee cost averaging happens when the market turns negative. So actually, these are the times, interesting time to actually increase your SIP,
Sure.
not to stop your SIPs. Yeah.
Okay. Increase your SIP, not to stop your SIP. Obviously, that's important coming in. But, any specific factors that investors should analyze before deciding in terms of continuing, stopping, or maybe even increasing your SIPs? What are these factors that one should watch out for during this downturn?
So I think the most important point one should look at while deciding to stop, continue, or increase their investment in SIP is first is their financial goals and timeline. I'm a strong believer these investments are not done to make short-term returns. These are wealth creation tools. The compounding magic comes if you really invest for a longer period, right? So the financial goals, I think that's the most important cornerstone one should look at to decide whether to stop or continue your SIP. If your investment objective is 5 to 10 years away, a temporary dip need not derail your SIPs. Equity investment actually required time to unlock the compounding benefit. Again, the second factor could be the fund performance vis-a-vis the benchmark. If you're consistently seeing over a 3, 5, 7 years, your fund is underperforming their benchmark. So let's say a Nifty 50 or a Nifty 500 stocks, you are continuously underperforming. I think it is time for you to actually reevaluate whether to continue that strategy or not. Again, another reason could be to stop your SIP, could be your risk tolerance and life stage. Young investor with a longer horizon can ride out a market cycle much more comfortably. Those nearing retirement or with liquidity needs might be more cautious. So again, this can make you decide whether to continue or stop. And again, your financial stability, if you have emergency reserves and stable income, consider leveraging the downturn to increase your SIP allocation, actually. But buying low forms the backbone of the wealth accumulation in your portfolio.
Okay. Tarun, what I want to also understand is historically how long-term SIP investors have benefited despite the short-term negative returns. If you could give that analysis or some example on that front as well, help viewers understand that they should not panic at such a time and maybe not just step out of their SIPs or just stop their SIPs. Could you give us an example there?
Yeah, so I think the most important and a simple example could be, let's say, if you are doing a 10,000 rupees monthly SIP and you are at let's say, 85,000 Sensex level, your NAV could be 12 rupees at that time. So the number of units you are buying is much lower compared to the units you would be buying at, let's say, 75,000 index level. So if the NAV turns to 10 rupees, I think you would be actually buying much more units. So actually the rupee cost averaging starts happening over a long period of time when you see a full scale cycle of 5, 7, 10 years. And that is where the actual benefit of SIP really comes into play. And the most important part is the compounding. If your money is growing at 12%, every 6 years, you are doubling your money. And if your money is growing at 15%, you are doubling your money in every 5.5 years, right? So again, these compounding benefit actually can happen only through SIP mode, because when you invest over a lump sum period, you are actually every time thinking whether the markets are good, bad, or ugly, right? But when you are doing a SIP mode, you are actually buying on a regular phase, right? So that really helps you to compound in that period. Again, we have done some studies wherein, say, 10 years back, if you would have invested as a lump sum versus invested through SIP mode, and you have seen a lot of market cycles like Brexit, COVID, all these geopolitical tension, Fed rate hikes, everything. I have seen in the lump sum thing, investors would tend to pull out their money much faster. But if you've done the money through SIP mode, you tend to retain your money. There has been a study done of investor return versus investment return. And we have seen almost like 3-4% return difference because investment has not been kept for a longer time. And due to that their investment returns have been compromised. So I feel over a long period of time, the compounding magic is the large reason of that SIP giving you better returns.
Absolutely. The compounding magic always works, and I think everyone always suggests that compounding magic. So just do wait on and be patient, I think. That's an important cue that comes in, and you have to understand on that front. Tarun, on this topic, what I also want to know, are there any tactical steps, I beg your pardon, that a viewer should take, something like a top-up SIP, especially during these market corrections, that would benefit them in the long run or improve their returns in the long run?
Absolutely. I think during these market corrections, consider a lot of tactical approaches, like one can do top up or step up SIP. You can increase your monthly contribution, which can harness the lower unit prices. Again, it is potentially boosting your returns in the recovery phases, right? Again, lump sum investment. You can plan some lump sum investment to ensure your rupee cost averaging benefit become much stronger in your portfolio. And in these market dips, so say 20, 30%, 25% fall actually warrants some bit of lump sum investment to come in. And apart from that, rebalancing your portfolio. If you have defined your target allocation of a portfolio, let's say 70-30, 70 equity and 30 debt, and due to market fall, you are observing that has gone to 60%. It is actually a great time to actually pull up your target allocation back to 70% and increase your equity investment by 10% in the portfolio. So I think these are some of the ways through which investors can benefit from these corrections in the market.
Okay, these are some of the ways that maybe you can benefit from the market. So do not just get out of the SIP. Wait and look at the long-term returns, right, Tarun? If I'm summing it up right, wait and look out for long-term returns. And there are steps you can improve your returns, step up SIP, lump sum SIP, and other methods that even Tarun mentioned.
I feel the most important part is before you start, have a purpose when you start SIP. You need to have a very clear purpose when you are investing and doing investment. I have seen 50 to 70% of the time it is random investing. And due to this, most of these SIPs fail.
Absolutely. So have a purpose also for your SIP, have a goal. That's the word also coming in from Tarun. But on that note, we're going to step into a very short break. But on the other side of the break, we're going to be discussing an exciting topic where SEBI's initiative to lower SIP threshold to 250 rupees with Tarun himself. So don't go anywhere. We'll be back.
I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs, and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now, and happy to see what it's doing today. And I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think the bulls take some control. Auto as a sector, auto and FMCG, and even PSU, these three baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind you, if you look at the mid caps and small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again, please look at the context of the rise in mid caps and small caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible.
Welcome back and thanks for staying tuned into Mutual Fund Corner on CNBC-TV18. We still have our expert with us, Tarun Birani. And now we're going to shift focus and talk about SEBI's initiative to lower the SIP threshold to rupees 250, which I think is a very essential stride towards democratizing investments. Now, what does this mean for investors? What does this mean for the industry as well? We'll talk about all of that. Tarun, it's a very interesting move that has come in. Now, how do you think this reducing the amount to 250 rupees as a minimum investment will impact retail participation? Do you see more investors coming in the industry? And overall, how do you see this move?
Absolutely. So I feel on the regulatory front, SEBI initiative to lower the SIP threshold to 250, according to me, is an essential step towards democratizing investment. And again, this aims to bridge the financial gap between the high-income urban segment versus the first-time investors in the smaller towns as well as in urban towns, right? So again, it will really help in deepening the financial inclusion across India. So I feel this push for micro SIP directly supports India's broader growth narrative, which actually hinges on the expanding participation beyond large metro. I feel India has a very, not a great social security system, unlike the developed markets, though we have NPS and all these catching up. But I think most of the Indians don't have a social security in terms of retirement corpus and all these benefits. I feel with the capital markets doing so well, and given this stride towards putting smaller amounts in investment, I feel every strata of society can actually participate in the Indian growth story. And that can really help investors to create a long-term social security for themselves. So I feel it's a great move in a country where the social security is not that great and retirement benefits and all these things are not available to the tune it should be.
Right. Tarun, will this move primarily benefit first-time investors or encourage existing investors to increase their participation? What is your thought on that?
So I feel actually it's advantages to most advantages to the first time investor who are unsure about locking in large amount monthly. They can test the waters with actually a smaller amount and can see how it works, and based on that they can plan the investment. For existing investors also, it opens up in terms of investing avenue. I think they can start doing some additional SIPs with a smaller amount. So I think, yes, both the first time and existing will benefit from this.
Okay, and your thoughts, especially coming in terms of the penetration we could see for mutual fund industry in smaller town and rural areas. Do you think this will, something increase the penetration there and more participation would come in from that front?
So actually, if you ask me, it's actually start to happening with the wealth creation happening in the equity markets. We have observed many tier 2, tier 3 and towns are also participation with good mutual fund flows coming from there. But I feel with this move, it will actually deepen the penetration beyond the metros. And people in tier 2, tier 3 and rural segment can actually start building portfolios even with a modest monthly investment. Again, with the digital accessibility available, I think we have so many such great platforms available, often with eKYC and UPI option. It makes it simpler for remote investor to set up SIPs. And again, it will shift from the traditional saving habit. So if you ask me, the asset classes where most of the Indians invest is gold and real estate, which are physical in nature, right? Again, this shift can really bring in a lot of financialization and a lot of benefit to the economy and growth of this country. So I think it will really help in penetration.
Okay, it will help in penetration, especially in the smaller towns and rural areas also. And thoughts in terms of boost for financial inclusion, or do you think it's more likely to be just a psychological nudge for these investors, given that it's such a small amount that you could invest? What do you think these factors are going to play?
I think it's actually both, right? By design the lowering of SIP amount broadens the investor base, an explicit step toward financial inclusion. Yet the psychological shift is equally significant because many potential investors perceive mutual fund as high risk, requiring large sum. So with a smaller amount, it's a great nudge for anyone to see, experience how it works, and accordingly they can increase or reduce that same.
Okay, and how do you think investors should actually think about starting this 250 rupees SIP in terms of wealth creation and the potential that is there, in this SIP? What is it that one should watch out for?
I feel it should be used as a wealth creation tool and building a saving habit, right? Culturally, I think we Indians are great in saving. It's just that the saving is not going in the right places. So if it starts going down from the lowest level also, I think it will really, really bring in a lot of prosperity in this country. So I think building a saving habit, again, it has a lot of room to grow as the income rises or the comfort with market volatility improves. You can easily step up your SIP contribution. And again, the large part is compounding, right? As you will start observing the compounding benefit, I can see most of these smaller investors will turn into large investors in times to come. So I think it's great from that point of view.
Okay, maybe start small and then become big investors. But, what would you advise? Right now we were talking about previously also as an option is step up investments and step up SIP. Even though it's such a small amount, would it make sense maybe to go in for step up SIP? Does that make comprehend to the factor that it's such a small amount?
Yeah, I think step up SIP is nothing but at times when you see the market levels are correcting, and at that time you can actually buy more units. I think it's a great strategy to increase your investment, right? So I think a step up is actually benefit from that.
Okay, and your thoughts, this is coming right now, but should a viewer start this sort of an SIP, even if it's a small amount right now? Is this the right time to begin this?
Yeah, I think for investors who have not experienced mutual funds, for them, I think it's a great thing. And now is the right time. I don't think one need to time the things. I think one should actually define a purpose and a goal and accordingly start investing. So now is a great time and look at things with a 5 to 10 year point of view. And I think compounding benefits start coming in.
Okay, so you look at it with a 5 to 10 year view. It's a good move that's come in from the regulator itself as well, especially to support in terms of financial inclusion, increase it towards the participation, mainly coming in from smaller town cities, and people who do not have a large amount also can start this and benefit from the compounding interest. Am I summing it up right now, Tarun?
Correct. You are absolutely right.
Absolutely. So, just one thing that, when this move comes in, do you think for an industry perspective, is there something that one should be watching out for? Like from the mutual fund industry perspective, how is the costing going to be from the industry side I'm talking about?
I think definitely to increase a penetration with such lower SIPs and all that, I'm sure the incentivization and all that need to be done at a larger scale. So definitely in the start, it will involve the expenses and all that will be higher. But once it start trickling down and with the kind of digital platforms available, I think it should be taken care of. So I don't see this becoming as a very large expense item for them. But it has a huge implication in terms of building a sustainable flow for the markets. So as a DII, I think domestic investors will continue to participate, and you will see this will bring in a lot of positivity, even in terms of whenever global geopolitical actions happen. At that time, the country can continue to perform well, right? So it's a great move.
Okay. Tarun, thank you so much for joining in with us today and explaining us both in terms of the SIP, which will be starting as low as 250 rupees, a new regulation coming in from the SEBI, as well as in terms of what should one do when SIP returns are negative. Thank you so much for joining in with us on the show today.
Thank you.
But with that, we're absolutely out of time on this edition of Mutual Fund Corner on CNBC TV18. Thank you so much for tuning in. Up next, you have Closing Bell to take you through the next hour of trade.
I think the biggest disconnect for most market participants in India is for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So a deeper cut from current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here and possibly get past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think will be very critical to the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited, but as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited. For the last 4 years, since the time we started rallying from the COVID lows, every time there has been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a charts perspective, your maximum downside is about 2 to 4% from here, and upside is about 20%. So as an investor, I want to plan for the same.
History as the first woman finance minister to present her 8th consecutive union budget. From replacing the colonial era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her team.
Nikkei is trading with gains of almost 0.1%, while Australian index ASX 200 is holding on to gains of almost 0.5% in trade.
22,786 is that number on the lower side, which should not be broken.
Bajaj Finance has beaten Apple both with respect to NII as well as the PAT. Overall, EBITDA was down 15%. Margin has come in at 11.5%.
Indices is absolutely flat, blinking like a traffic signal. 23,180. It's red and green, but no change to show on it.
I believe that this is still a correction within the larger bull market because I think we saw a massive run-up for about 18 months.
Taken a price increase, a minor price increase. We had to pass on some inflationary pressure to the market.
Nifty today, on an intraday basis, had scaled past 23,300.
Firstly, what are SEBI-regulated entities? Stock exchanges, clearing corporations, depositories, mutual funds, asset management companies, as well as their agents. They are regulated entities.
Slightly off the highs of the day, a slew of earnings reactions coming in.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
I think we are back to where we started this morning. We started with nothing on the index, and there is nothing on the index now as well. Just 2 points, 23,160. So everything said and done, all told, I mean, the market, I began by saying market opening as a traffic light, right? It's back to being a traffic light.
I do.
Nothing at all. Guys, hi, afternoon.
I think there's some private joke between the boys this afternoon. I'm being left out.
No, I like the way Prashant put it. Nothing was nothing.
There's nothing going on maybe at the index level, but my God, it's exhausting to go over the number of results because the action is entirely individual stock specific. So many stocks are flying around. Hitachi, Strides Pharma, on the upside, there's KPIT, Solar Industries. We'll go on and on. We'll talk a lot more about these stocks, but it's more on the stock level.
Make sure you don't get too exhausted, Surbhi. This evening at 4:30, you have a live on YouTube, and the viewers would like to know what you have to say with regard to the budget. So that's going to be important. And then you have the big budget. Normally, you get excited about truncated weekends.
Excited about elongated weeks.
6 days. So brace yourself. Plenty of action in store. Have a cup of coffee and let's go for it. Prashant, you want to take us through the market action?
By the way, Nigel, it's not just on YouTube, it's on TV also. So 4:30 to 5:30, all of us are going to be doing some batcheet on expectations and really what the market is making of it. But, for now, and more numbers as we speak, right? Max Healthcare numbers are at the bottom of the screen, is widely tracked, well owned. EBITDA looks like strong numbers. EBITDA operating profits are up 30%, 32% to be precise on Max Healthcare. Stock is seeing a bit of a reaction as we speak. Margins 27.3 compared to 27.9. We, by the way, speaking with the management tomorrow morning as far as Max Healthcare is concerned. But just a couple of points on the market here and now, really, before we go any further. So off highs, Nifty barely in the green, now a little bit in the red, but flat basically. The high point, we did almost hit the 20-day moving average, which is, so the high is about 23, I think 330 or so. The 20 days about 23,350. So we almost got there and then reversed. And now we're down in the negative. Bank Nifty is faring a little better. At least the last I checked as it was coming in. That still had about a 0.25%, 0.18. It's still trading above the 20-day, which is 49,191 or so for the Nifty Bank. And mid-cap and small-cap indices are also off the highs of the day. So lots of stock-specific reaction, I think. That'll dominate the conversation here over the next 60 minutes. Surbhi.
Absolutely. While yes, it is a very stock-specific market, there's no taking away from the fact that it's disappointing that the market hasn't been able to hold at highs. Look at what's happening to the global backdrop. European markets are up anywhere between 0.5% to 1% right now. They've had a good session so far. US futures are also decidedly higher, not like flip-flopping. They're properly higher. The Nasdaq futures, for instance, are pointing towards a 1% up move. So global equities are fine, but I think we've been dancing to our own tunes, earnings, and of course the big budget announcements that will come. Just some stocks I want to sort of highlight, and we'll talk about them as we go forward. Hitachi, we've been making the point since morning. You heard the management. Stocks not budged one bit from that 20% upper circuit mark. Strides Pharma numbers came out a while back, 10-11% higher there as well. Then you have, names like Olectra, which have been well received. Dr. Lal came out with numbers 3% on the higher side. So these are some of the key movers and shakers. On the way down, the reaction to Voltas has been very severe. Absolutely two different sort of themes. Voltas on one side, and if you're looking at Blue Star's numbers, of course, were relatively better off. But Blue Star also is down 1.5%. Vedant Fashion's numbers came out, and the market doesn't like them, 6% down. So it's a long list, largely earnings driven, and we'll talk more about these stocks as we go forward.
What about ABB? The global outlook.
6% down.
6% down, but Vamakshu is making a very, very important point that there is a very low correlation between what the global parent announces and what the Indian listed company announces. So you need to take note of that, and at some point of time we'll pull up that chart for you as well, because it's happened at least in the last few quarters. This says there's not a very, very strong correlation, because for the global ABB they have unlisted companies as well in India, so that as well gets included into that. So just keep that in mind. For the time being, the street is nervous. The stock is down at the low point of the day, 6.5% lower. After that news piece came out, well, we did see that the stock moves to the low point of the day. Well, let's get in Mitesh Thakkar to help us out with the trade right now. Hi, Mitesh. Good afternoon and good to see you in. Well, we're almost done with the first series of this calendar year, 2025. And we're going to end mostly with a cut of around 2.5% or thereabouts. What's your view?
Good afternoon. So, Nigel, I think, by being positive for the last 2-3 days, today I think we've seen first sign of some supply coming at higher levels. And, getting a reversal typically isn't very easy. So my sense is that with today failing to get past and sustain about 23 23,350 on the Nifty. We kind of got a high of 23,311. I think we are back to some kind of a range of 23,350 to about 23,000. There's no sign of downside. So, and the upside has failed. So I'm assuming that we'll just consolidate for next few days. I guess Saturday could be an event day which could give us some kind of directional bias. Till then, paid with stock-specific bias, I have a buy on HUL with a stop at about 23.75 for targets of 24.60. And HDFC Life after a correction is coming back. So buy here. Keep a stop at about 624. Look for targets of 655.
Okay, all right, got it. Thanks very much for the trades at this hour. Mitesh, we'll come back to you in just a bit. But let's start addressing a lot of these stocks that are bouncing around today. Pharma stocks in particular are in focus, and this after the US approved a waiver which will allow people to continue accessing HIV treatment funded by the country across several countries. We've got Vinny joining in with more details. Vinny, what could this potentially mean for some of the Indian drug makers?
Absolutely. So, this is sentimentally surely positive that comes in for them, an important one, because over the weekend on Sunday, what announcement came in was that first the US Department said, and what President Donald Trump also had done is that they'd announced an immediate 90-day fund freezing pause for all foreign assistance, and this was to the WHO. So this was the PEPFAR funding, which is very important. Now, obviously, this is something that caused a concern, and we saw the stocks falling in trade on Monday and Tuesday. Now, overnight, what we saw as an announcement that came in is that the UN agencies said that now US has said that they're going to give a waiver for this 90-day freeze, which they said for HIV treatment funding. So the PEPFAR funding, which is mainly used for HIV treatment, that they've given a waiver for that. So that funding will still continue. There is not going to be any freeze on that front. So this is a decision that is keeping the funding alive for HIV treatment. This waiver will allow people in several countries to continue accessing these HIV treatment funds. And obviously this comes in as a bit of a positive for Laurus Labs when you look at it, because the company had spoken to us and they had said that yes, it's a small part of the business, not too much of a dependency, but still, almost 3 to 4% of their EBITDA comes in on this front from this side. So it's positive for that front. Aurobindo Pharma, also a small portion of the business comes in from this PEPFAR funding side. So yes, sentimentally positive for all these companies, and that is why we're seeing a buzz for all these stocks in trade today.
Okay, Vinny, got it. So that explains a little bit of excitement around some of these pharma stocks. Thank you for joining in. We've got Deven Choksi with us this afternoon to make sense of a lot of these news events, numbers, and of course, cues that we're getting. Deven, great to have you on. Let's actually start with pharma. I don't know if you had a chance to go through this, latest development on HIV treatment or not. Of course, we've got lots of numbers as well in the last couple of days. Cipla reported. Cipla's US business actually did really well. You've got, of course, Strides this afternoon. Strides is finally in a profit compared to a loss last quarter, same quarter last year. What do you like? And specifically, do you have any preference for some of the US focused companies?
Yes, very good afternoon. Well, I think in particular, the standout numbers came from Laurus, and particularly, I think the Laurus's margin improvement, along with the higher amount of business contribution coming from CDMO segment, is definitely impressive if one wants to look into that part. Maybe I think whatever the previous investment that they did in building the capabilities for delivery, which was up till now struggling to materialize largely because of the customers not taking the material, the offtake was relatively smaller, which probably has started working well for the company now. And that's where we believe that the Laurus holds, I think, significantly large amount of potential for an upside, particularly in the CDMO contribution which is coming in. Cipla too, in a way, I think I would say that I think has surprised the numbers as well as expectation. And probably, I think the one conclusion which comes out clearly that the complex generics is definitely working better for them on the margin front. And that also, the trend is likely to continue. So we have selectively seen some of the pharma companies and believe that the stable margin is going to be ruling the performance in coming years from now as we see it.
Okay, all right, Deven, thanks a lot for that. Deven, I wanted to ask you about a couple of other names. We had Tata Motors. That stock got a hard knock today. And from a 52-week high that we saw in July 2024, it's at a 52-week low today. Your view on the stock?
Yeah, Nigel, good afternoon. Well, I believe that I think the restructuring part of the activity is by and large complete for commercial vehicle in particular. Having said that, in 25, we are likely to see the commercial vehicle business getting separated from the parent company. And that is a good sign that I think most of the restructuring related part is complete. Of course, I think they have seen the fall in the business in this particular quarter, which I believe that I think may not be seen as a very permanent kind of a fall, particularly because in this financial year, the government spending on the infrastructure has relatively started late. And as a result of which, I think most of the companies are likely to show the performance in subsequent quarters. If the third quarter is not completely in tune with that, I think maybe in the fourth quarter, we are likely to see the stability in the margin and the bounce back in the commercial vehicle business. Good part is JLR is, I think, turning around in a good way with the higher number of profit margin that we are talking about. So in my viewpoint, yes, I think it was a disappointing quarter for Tata Motors. But the fact remains that I think majority of the pain is behind it, as I see it, largely because of the fact that the potential remains on the higher side for all the verticals that are operating.
Okay, all right. Devin, stay with us. Just coming back to you. This is something which market regulator SEBI has put out. It's not exactly connected, of course, with what the market is doing, but it is also because finfluencers have been such a big sort of part of this market expansion over the last many years. SEBI, of course, came out with rules and regulations last year, and they put out a set of FAQs, frequently asked questions, and have answered them. And I think this is important to take note of. Yash is here with some details. Yash.
Well, Prashant, the intention from SEBI after issuing the guidelines on finfluencers last year and with the current regulations is very simple. They want to put these regulations in black and white and have no grey areas in between. They want to leave no ambiguity in terms of what influencers cannot do. And hence the latest set of clarifications which have come from SEBI. Firstly, let's just understand what are the regulated entities that SEBI is talking about and asking them not to have any sort of relation with unregulated entities, specifically financial influencers or finfluencers. These regulated entities include stock exchanges, clearing corporations, depositories, mutual funds and asset management companies and their employees and agents. Now, what has SEBI asked is two things. These unregistered finfluencers or unregistered entities will not provide any financial advice or recommendation in terms of stocks, in terms of financial products, in terms of mutual fund products, investment advice directly or indirectly. Second thing is that they cannot claim the returns of past performance through any of the content which they put out. These are the two things which SEBI thinks listed entities or regulated entities should follow when it comes to not having association with these unregistered entities or influencers. Very importantly, investor education as per the previous regulations was also out of these regulations, and it still remains to be the same, but SEBI's filtered the term investor education. What SEBI said is that investor education and these investor educators will be allowed to use prices, charts of companies in terms of their illustrations, but these prices cannot be for the previous 3 months. It will have to be much before those 3 months which they use for their illustration. Also, these investor educators cannot boast about their success rate, their success and sort of performance which they've delivered in the past. So, of course, SEBI's intention is pretty clear to break the revenue model of unregistered financial influencers, asking regulated entities to not have any associations with them. If any of the violations comes through, then there will be penalty, debarment, as well as cancellation of licenses.
Got it, Yash. Yes, that indeed is an important clarification, this FAQ that has come in today to further pinpoint what is and isn't allowed in terms of, giving any sort of stock market commentary or, advice or education online. Okay, thanks for that. Back to the markets now. Devin, one sector that I want to sort of discuss with you is the consumer durable space, especially some of these, big air conditioning and room AC players. And we've got some very sharp reactions today. Voltas, I guess the market's not happy with this big decline in margins, over 200 basis points. But Blue Star's numbers looked okay. That stock's also sulking. And Whirlpool has bigger problems. Whirlpool, the global parent, wants to sell its, a huge chunk of its stake. If you could just give us quick takes on, these three companies.
So I think on the face of it, I think Blue Star definitely stands out, I think, in comparison to others. Of course, I think one will have to go into the details about what went completely wrong with on the margin front with Voltas. I think one will have to go into that part of the detail. But on the face of it, I think the air conditioning business part for Blue Star seems to have worked well. As I said, that I think let's review the details more and then probably I think further analysis of the companies.
Devin, I don't know if Whirlpool is under your coverage, but I mean, even if there's no direct call on the stock, in general, how would you view this development? Because now the global entity has said that they want to reduce their stake to 20%. They're at 51% now.
Challenge would be, I guess, I think in this market because many of these companies haven't been able to, I think, gain the same kind of market share that they would otherwise hold in their parent company's domain. I think that India market remains extremely price competitive, and I think the distribution reach holds the key. Some of the newer players like Havells, among others, have created that kind of a reach within these deep markets. So maybe I think that competitive pressure, I think, which is coming in, is basically asking them to stay put on creating further presence in the market, like India.
Okay, all right. But by the way, Adani Ports, Devin, at the bottom of the screen, they've upped their guidance. Stock, though, from the level it was trading at before that flash came, is actually lower, if anything. Any thoughts here?
Yeah, Prashant, I think the blended mix of the cargoes is definitely working well for this company. And even though the performance is not fully consistent with what exactly one has seen in the previous quarter, would like to believe that the targeted volume that they are talking about for handling is giving sufficient amount of confidence for the growth in the business. And fortunately, I think the entire subject, I think, is basically assuming higher amount of growth largely because of the trade activities happening big time. And as a result of which, I think the movement of cargoes are definitely picking up. At the same time, the company has been systematically implementing some of the strategies, including the automation processes at the port, which gives the confidence about driving the higher margins going forward. So the blended mix of higher yield, along with, I think, the increase in the volume, both goes well for this kind of a business for sure. And I think this company is champion on that front, I believe.
All right, Devin, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18, and look forward to our next one. Pokarna numbers for the third quarter at the bottom of the screen, 50 crores compared to 45 year-on-year. That's about a 12% growth. We'll have Ajay Tyagi with us of UTI Asset Management Company on the other side. His thoughts on the market and what UTI AMC has been up to in markets over the last many weeks.
Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The credit guarantee scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this scheme provides collateral-free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme. Announced in the budget 23-24, this initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers taxpayers a chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of measures supporting MSMEs and businesses were introduced under this initiative during the pandemic, emphasizing self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an attractive destination for global investments. The optional personal tax regime, or the new tax regime in 2020, a simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes. Another such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments.
Okay, welcome back. We've got the market up just about 10 points, and 2 hours back, it was a pretty healthy looking screen, at least on the index. Not so much anymore. Although I have to say that broader market, there is still a fair bit happening on the upside. Here also, I mean, the advanced decline is narrowed down quite a bit. So about 1,500, just under 1,500 stocks are higher, and about 1,230 stocks are lower at this point in time. But lots of 5, 7, 10% movers with volumes in terms of trade coming through. Let's welcome in Ajay Tyagi, Head of Equity at UTI Asset Management Company, who's with us with some perspective on things. Ajay, good to have you back. It's been a while. Thanks for your time. And tell us, Ajay, what have you been doing? Did you typically, I don't think you guys take cash calls one way or the other, right? So remain fully invested, but what kind of activity have you seen? I mean, you know, your fund managers, your team, etc., at UTI AMC, with regards to sort of buying, deploying more money which is coming in, or just give us a sense.
Sure. Yeah, Prashant, good to be back. See, I mean, our view over the last 12 months or thereabout has been, cautious about the markets, and more particularly cautious about mid and small caps. You know, you can say that we are slightly early in terms of sounding cautious, but over the last few months, the markets drift downwards. We think this drift will continue for some more time, possibly a few more quarters, and looks like 2025 would be the year of consolidation for the markets. The primary reason for our call is basically the valuations. If you put the valuations in context of what they have been over the long range, even now, after this 10% fall from the top, or maybe 15% fall from the top, you still see these valuations to be scary. So, our view remains, that of caution. As far as our activity is concerned, in line with our overall thinking, we have been, circumspect about, some of these mid and small caps and some of these hot sectors which actually blew the lights off in 2024. And we would say without any real fundamental improvement in quality of earnings. I think that is already starting to reverse, but we may see, more of that coming quarters. Yeah.
Okay, Ajay, got that. Good to have you on the show this afternoon. It's been a tough patch for the market now, running into several months. So, any key changes to the portfolio that you've been making in terms of perhaps, easing out positions, taking some profit, and now that we're down so much, maybe fresh purchases in areas where earlier you found valuations to be too high?
See, as you're aware, I can't be very specific about our actions, but what I would certainly say at this stage is that things have gotten slightly better from where they were, but not to a level where we are comfortable. I think, the market got overdone on the way up. Now, every 5 or 10% correction obviously looks to be an attractive position relative to where we were in August and September. But if you look at valuations from a slightly broader term perspective, we still haven't got into comfortable zones. I would say the pockets of comfort remain the same. Private sector banks is something we've been comfortable of. That's one area which still looks very comforting. The earnings quality for some of these banks is actually improving. So that's one area of comfort. I would say auto OEMs is another part of the market where valuations didn't go overboard. And I think that's, again, one area where we are finding opportunities which are favorable in terms of risk return. For most other parts of the market, things have improved, but not come to a level where we want to use our dry powder yet. Yeah.
All right. Hi, good afternoon and good to see you, sir. Wanted to ask you about some of these fancied sectors, the delivery companies like Swiggy, Zomato. People wanted them at higher prices. We were getting lazy, a lot of usage out there. But these stocks have come off dramatically from the top. You're interested?
Again, I'm afraid can't be very stock specific, but let me give you the broad thought process.
On the theme, sir. On the theme. Do you think that, yeah.
See, let me just take a step back. Anything which is high beta in nature, regardless of the underlying earnings and the underlying strength of earnings into, both the near future and the medium term, would obviously fall more whenever there's a slightest of correction in the market. I mean, if you go back and look at, for instance, since you're speaking about new age companies or tech platforms in India, if you go back and look at the behavior of some of the tech platforms in the US between 2000 to 2024, regardless of what they delivered over a 2-decade period, they were the ones which were pummeled the most whenever markets saw the slightest of correction. That's just the nature of this beast. High beta names, high P stocks at the slightest of correction in the market fall disproportionately. So one must acknowledge the fact that this is how the price of such kind of stocks would always behave. Now comes the other thing. How are the fundamentals tracking? I would say yes, the anxiety in these names and this sector per se is on account of competition heating up. Some of the competitors actually giving discounts because of which the incumbent players are seeing their margins getting pushed out into the future. To our mind, that seems to be a phase which will go on for a few quarters. It can't go on endlessly. Remember, the challenger is also wanting to IPO at some stage, and obviously this IPO can't happen if losses continue to widen. So there will be some sanity returning back in terms of margins. The opportunity seems to be very, very large, and nowhere in the world has a proof of concept been established for quick commerce companies, but here in India, proof of concept has already been established. So, despite this breakneck speed of growth, the leader barely burns any cash. So yeah, I mean, that's my comment on the fundamentals, and I already spoke about the fall in prices. Yeah.
So broadly, the view is you are saying maybe slightly sideways for at least a few more months, right? As far as the market is concerned, nothing exciting, not the fast and furious game once again, at least not for a while, that we all have become very used to. But as we come back, do you think it happens quite often that for example, EMS, etc., have been leaders of the last, I mean, this big phase, absolutely at the frontier. Will those be once again at the frontier whenever the market starts to look better? Or you think, I mean, there'll be a factor change? What's your sense?
Prashant, that's an excellent question. I would say there is always a bit of rotation whenever the markets rise back, from a correction and after having a bloody nose, so to speak. But there are some themes which go beyond just an interim correction. If the Indian government is really serious about making India a manufacturing hub, if they come back with a PLI scheme on components, which is what we keep hearing about, if they are serious about giving subsidies for making fabrication units here in India, I would say that some of these EMS companies would have a very, very long growth runway. Do remember, the Indian government has also been talking about export opportunities beyond just the domestic demand. So I would say a lot depends on the government policies. As of now, we do hear that while the PLI assembly is going to end in 2026, but before that, we're going to see a PLI for components so that we can capture a larger share of bill of materials. And if that be the case, that's going to be good news and would add a further growth driver for EMS companies. Yeah.
Okay, so that could be a space to look at as well. Ajay, it's been a pleasure having you on the show today. Thank you so much for joining in and sharing some of those insights with us. That's a view coming in from UTI AMC. Back to the market, it's very, very quiet out there, not much moving, 20 points lower. On the Nifty, the mid-cap index is also completely flattened out. On the Nifty, BEL is actually doing rather well in this otherwise dull afternoon, 4% higher. BEL is the top winner on the index at this point in time. Let's move on. We actually have some snippets coming in from New Delhi on India's AI dreams. Union Minister Ashwini Vaishnav today announced that India will have its own AI model in the next 8 to 10 months, adding that the world is looking at India as a major contributor in artificial intelligence. He also says that the country has over 10,000 GPUs that will power the AI ecosystem. Take a look.
In the India AI mission, we had taken the common compute as the most important part of the mission, and very happy to say that against 10,000 GPU, which was our target, we have actually empaneled 18,693 GPUs. Overall, net high-end GPUs अपने पास 15,000 आ गए हैं. The second big mission, as you know, was to develop our own model. And over last almost 1.5 years, our teams have been working very closely with the startup ecosystem, with the researchers, with many professors, और उन सब के साथ बातचीत करके we have created the framework which will be launched today. We are calling for proposals to develop our own foundational model, and we believe that there are at least 6 major developers who will be able to create foundational models in the next 8 to 10 months on the outer limit. So today, most of the major chip designers of the world are willing to work with India for developing a GPU on an architecture which can be very innovative, which can be more efficient compared to the existing ones. So that possibility is available to us today, and we are working on it, and hopefully I'll be able to share with you more details in coming weeks. The world definitely recognizes India as a major talent pool, and I'm sure you would have seen those parliament questionnaire, the answers that we had given in the parliament questions. Stanford University, they have evaluated many countries, and India ranks among the top on the AI skills and the AI talent which is available anywhere in the world.
Of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
From sharp insights in the political arena to all the excitement from the world of sports. budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters macroly?
Welcome back. Markets back up closer on 60 points as we speak. So that's good news. Expiry related factor as well playing its role, I think so. So last 25 minutes, but plenty of action in store. To help us out with what's going on D Street Chatter, Nimesh joins us to tell us exactly that. Nimesh, what's the buzz?
And a good day of consolidation after the recent pullback. Market Nifty has been pretty much range bound. We have this volatility because of the expiry as well. But from a technical point of view, watch out for 23,300. That's a big resistance level to watch out for. And of course, we are heading into the big event that is budget on Saturday. So maybe tomorrow may not be a very large day in terms of volumes because everybody would like to be on the sidelines. But again, that's one big trigger to watch is the budget announcement. So that's going to have an impact for sure. From a sector point of view, a couple of sectors which are seeing some bit of buying interest. One is the entire rate-sensitive basket, so NBFCs, banks, and especially the real estate names is where there is a lot of bidding interest from larger institutions. So that clearly is a sector which stands out from a flow perspective. The other sector which has seen a bit of hope trade is the PSU names today. A lot of PSU stocks are buzzing out of the budget announcement. So that's something to watch out for if there is something meaningful in the budget as far as capex is concerned. But broadly, I guess the cash volumes are on the lower side. But because of the expiry, you might see this volatility in the last 30 minutes of trade.
All right. So that's essentially the broader sense. But what about stocks, Nimesh? What's on your list?
So the first name, Prashant, is PFC. I spoke about a bit of buying interest back in the PSU names. This is one stock which stands out in terms of very aggressive buying from larger FIs. So they expect high delivery volumes and looks like some bit of interest is back in the PSU names like PFC. The second stock is Crompton Consumers. That stock has been under pressure in the last couple of days. I understand a leading global fund is an aggressive seller of late. And that's the reason why you're seeing selling continue in that particular name even in today's market. The third is Dreamfolk Services. Again, while the stock has been consolidating of late, I understand specifically for today there is a MOC sell flow at a leading FID. So maybe in the last 20 minutes you might see some reaction in Dreamfolk as well. And the last is a couple of large liquid names, TCS and Axis Bank. I spoke about buying in PSUs and other stocks. The large cap banks and IT names are seeing a bit of selling pressure. So both these stocks have seen sell flows, and there is clearly selling in stocks like TCS and Axis Bank in today's market.
Nimish, any feedback on Whirlpool? I mean, if you've spoken with fund managers or generally from the market, I mean, down 20.
Well, it came as a bit of a surprise, right? I mean, last time when there was a large block, it was very aggressively lashed up by domestic funds. This time, now that they're already at 51, they're talking to come back to 25, 26%. So it's a bit of a shocker that they're looking at such a large dilution and a block sale. So it came as a bit of a surprise for sure, Prashant. I don't think Street was anticipating such a move from the parent after just 1 year of selling a large chunk.
No, absolutely. Not even saying they'll do like 5%. and stagger it out straight away. And they're saying, I think in a year or two, they want to sell the whole thing down to some 20-odd%. Got that point.
I think the problem is the kind of debt they have in their book, right? More than $7 billion or the
global parent.
Yeah, absolutely. So they're trying
Cash
to.
out.
Yeah, I mean, I wonder what those are feeling who took it in the first block.
Plus, I don't know how if they sell such a large quantum in a market like this, and with the earlier guys not having made enough money on it, I don't know how they'll manage to get the placement.
We know who's not interested though, Blue Star.
yeah. Nigel tried planting that idea in the Blue Star management's head, saying, "Why would you look at Whirlpool?" They said,
if you looked at it yesterday, today is getting it 20% lower.
By the way, guys, the market has come back sharply. Actually, look at the Nifty now, 90 points. It was absolutely flat, and I think in the last 5 minutes or so, you see that surge which is starting to appear out there. So yeah, 23,250 odd is where we're trading. The Dabur numbers, by the way, are also on the screens. It's, almost exactly what was expected. 515 was the profit expectations. 516 is the actual number. You'll hear, by the way, from the management in just a bit, in the next 5 or 10 minutes or so, here on the channel. Dabur is also seeing a bit of a spike as we speak, but I think it's the market more than anything else, which is looking complete sort of turn as we approach the last 15 minutes or so of trade. Mitesh is with us with what he'd want you to do. Mitesh, what do you have?
Yeah. So BTST on SRF, I think, is closing with a very strong level. In fact, it can be trading buy as well, but for the timing of BTST with a stop at 28.20 for targets of 28.80. And the other one which I like is Hero Motors. Disclaimer, I have positions. Disclaimer, it's also a recommendation to my clients. There's clearly vested interest, but at the day's high and reversing from extremely oversold levels, so BTST is what I would recommend for Hero Motors. Keep a stop at about levels of 41.65 and a target of 42.20.
Okay, all right. Got that, Mitesh. Thanks very much. By the way, that's an inline performance from Dabur. Profits in line. The volume growth is just 1.2%, but then that's what the poll was suggesting anyway. And on margins, we'll get the margin number as well. Margins are not expected to inch up, and that's what the company had already guided in its update. So let's see. We'll put that up. 3353 is the top line number that's come through, which is mildly higher, very, just a shade higher than expectations, if you want to call it that. But otherwise, looks like an inline set of numbers. Could be a issue of no further negatives and the stock already having been beaten down, which is why we're seeing a bit of a positive reaction. Plus, of course, the fact that overall mid caps are pulling back. Let's move on now. We'll get more from the Dabur management in a bit. But moving on to L&T, set to report numbers today. Vivek is here. Vivek, what can we expect?
Well, L&T expect domestic execution to be muted, international execution to be much better. Top line on the back of that seen higher by close to 15.5%. Revenues are in excess of 63,750 crore. EBITDA is seen in excess of 6,600 crore. And margins, the consolidated margin is the one that we are talking about, is seen almost flat on a year-on-year basis at 10.4%. Profitability is seen higher by 27.6%. What is it that we need to watch out for? Number one, does the company go ahead and maintain all of the margin guidance, top line guidance, as well as the profitability guidance that are given as far as FY25 is concerned? Key to watch out would be order inflows and the order prospect pipeline. Along with that, Q4, Q3, we believe that the time has now elapsed, but does the company announce any buyback or any such move or a special dividend in order to go ahead and prop up its ROE? What is it that Kotak is expecting? Kotak is expecting weakness in domestic execution to be compensated by strength in the overseas execution. Along with that, they expect the core engineering as well as construction division EBITDA margin to come in at 7.9%, up 20 basis points. Remember, as far as L&T is concerned, core E&C margin has been the weak point or the sore point that analysts on the street have been waiting to go ahead and inch up. What does BofA Securities expect? They expect L&T to meet or slightly beat its FY25 guidance on all fronts, order inflow, revenue as well as ROE. Remember, order inflow guidance that the company had given on a very strong base for FY25 was 10%, top line guidance seen at 15%. Important set of results come back, it'll come post-market hours today.
Okay, all right, got it. Vivek, thanks very much. We actually do have the Dabur management with us now to talk about the third quarter performance and more importantly, the outlook going forward. Mr. Mohit Malhotra, CEO of the company with us. Mr. Malhotra, great to have you on. Thanks for joining in. Now, you had already sort of kind of prepared the street to temper its expectations, right, with that update that came through. So let's talk about what happens from here. The volume growth is just about 1.2%. Take us through the contours. What do you see ahead? Is there any light at the end of the tunnel in terms of better demand, consumer demand? And how is the fourth quarter shaping up?
Yeah, hi Surbhi. Thank you for having me. So I think overall, I think in terms of the market, we think we've already bottomed out here. So from here, there should be recovery. As you know, rural is already showing a upswing. And I think urban is also bottomed out. We have a lot of expectations from the budget also. Hopefully, I think there will be some sort of softs which will be given to improve the urban demand. And I think because of bottom out, things would only look better from here. Our volume growth has been in the range of around 1.5% odd volume growth, in which our 50% of the portfolio, home and personal care, has had a volume growth of 6%, which is the bellwether of how the economy is doing, which includes hair care, oral care, home care, skin care, etc. Our food business got impacted because it was winter, and the food business got impacted. The core Badshah business has actually grown by 15% in terms of volume, and healthcare also got impacted because of the season being delayed winters and contracted winters for us. So overall, I think it's been a good quarter for us, but for beverages business, and because of season, we got impacted in Chyawanprash specific case. But rest going forward, I think we are targeting a mid-single digit kind of a growth backed by volume only, and low to mid-single digit kind of a volume growth going forward in the next quarter. And for the full year, if the market supports us, then we look at high single digit, partially volume and partially price growth next year.
Mohit, hi, afternoon. So FY26, you're saying, could be 8 to 10% possible?
Yeah, so we are in the process, Prashant, of making our budgets yet. But that's what we should aspire to go, and mid to high single digit kind of a growth rate next year.
And we always talk about the impact of quick commerce on retail companies, but on a company like yours, Mohit, I mean, has there been a discernible impact one way or the other?
Yeah, I think quick commerce is a basic tailwind for us. We've grown quick commerce as a business by 75%. You can imagine, while the GT is suffering, which is general trade is suffering, quick commerce is blowing out of proportion, 75% growth, and it's already contributing to around 50% of our total e-commerce business, which has also grown by around 30% for us. So I think this is an emerging channel which we are wanting to double down on in terms of innovation, in terms of engaging and doing joint business planning with them. So that's a definite vector of growth going forward.
How big is the e-commerce part of the business for you?
So total e-commerce contribution is around 8 to 10%, depends upon quarter to quarter. If it's a big billion quarter, it goes up to 10%. Otherwise, it's around 9%, Nigel, broadly.
And you see this number, I mean, going by the kind of growth rate that you're talking about, it'll only go, increase from here on, right?
Absolutely, absolutely. Yeah.
So where do you see it headed then?
So I think year on year, it will only go up because the number of cities that quick commerce people are going is increasing. So there's both organic growth and also inorganic growth. Inorganic growth by way of adding number of towns and cities, and organic growth by adding assortments and increasing the total ticket size. Average order value for quick commerce has moved up from 300 rupees to around 500 rupees. From 500, it will only move on to around 700. So this will go on. So I think 10% broadly is what should be next year going forward, e-commerce contribution to overall business. And within that, quick commerce will be in the range of around 50% or so.
Okay. And they'll stay at 50, quick commerce will stay at 50% of the total e-commerce sales.
Yes, so I imagine for the full year. Because this used to be 30 has become 50, and I think 50 will get sustained over next year, if not grow from there as well.
I guess, Mohit, I mean, all e-commerce, I mean, that's one way, viewpoint that all e-com will become quick com. I mean, faster and faster delivery, right?
Yes, absolutely. Correct. But the product portfolio, I think the total spread of the portfolio will only increase from there. Earlier, quick commerce guys were only stocking grocery. Now from grocery, they've expanded their entire portfolio, and also so many of them are also stocking durables. So I think as the assortment grows, the order value will grow, and the break-even will become even more faster for them.
The FY26 sort of mid to high single-digit volume, total growth, volume plus price is dependent on some stimulus from the government. You briefly did mention budget.
Yeah, because I think we expect the government to give some sort of support to the consumer spending, because urban India is actually struggling with the real wage growth actually in the negative radar, and the rural real wage growth is actually +5. Urban real growth is in the range of around -7 or -8. So definitely expect the government to do something, but I don't know what will actually happen. But our expectation is definitely there. Yeah.
No, so are your expectations contingent on something coming?
No, not really. No, okay. I think we expect the some stops to be given by the government to improve the consumer sentiment from here and increase consumption.
All right, fair enough. Mohit, we'll leave it there. Thank you very much for joining us. You started by saying maybe we've hit a bit of a bottom and things should improve with or without a little bit of help from the government with respect to the budget or otherwise. So 1.5% volume growth, mid-single-digit volume growth ahead, and then maybe mid to high single digits in FY26. That's the word coming in from Dabur at this point. Well, the government's received feedback about the need to put more consumption power in the hands of middle class, support MSMEs and manufacturing. Some quarters of the government believe there is an urgent need to support the middle class to increase consumption and growth through tax relief. So will this translate into income tax relief for the middle class and ease of taxation for the Indian industry as well? Parishad is here. He's picking up important information right before the budget. Parishad, over to you.
Well, simplification of the tax system, ease of paying tax and putting more money in the hands of middle class are going to be big themes in the union budget. Sources tell us that in interministerial consultations, some quarters of the government have expressed the need to provide relief to the middle class. And the expectation here is, and the feedback here is, that there should be relief in income tax, also hiking exemption limits, at least for people who are earning up to 15 lakh rupees. Now, how does this take shape in the new tax regime? That is something that remains to be seen. Earlier, we have reported that the government is likely to announce more tweaks in order to encourage people to join the new tax regime. Having said that, many people in the government have been saying that we need to put more consumption power, more money in the hands of middle class to consume more, and also put growth back on track. So driving consumption, the growth agenda for the long term will be major focus areas. When it comes to manufacturing, there have been PLI schemes which have been announced by the government over the years, but this time measures are being considered to support labor-intensive manufacturing in sectors like textiles, furniture, food processing, where India can have the China +1 advantage. So we could possibly see some measures, some ease of doing business measures, or maybe fiscal measures to support these industries as well. Decriminalization of laws. There has been a lot of feedback from the industry that many of the tax laws, many of the other legislations in the country need to be decriminalized, and a very strong message on that needs to go out from the government. So we are likely to see that in the union budget. Simplifying the way in which taxes are paid both by the common man and the industry. That is something we could see. Also, measures to support ease of living for the middle class. That is something we might see in the union budget. And finally, a significant support package for MSMEs. This has been the ask. And there is a feeling that MSMEs need hand-holding and financial support. So let's see what the finance minister does on that front.
All right, Parishad, thank you very much for that. That's important information right before the budget, day after tomorrow, coming in from Delhi. So we'll have to just wait and watch. This is all source-based information to CNBC TV18. We take a quick commercial break here. More on markets on the other side when we return.
Start Wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back. Markets moved to the high point of the day. ITC is moved higher and HDFC Bank as well. Both those two big boys rocketing as we speak. And, we're going to end lower for the series itself. But a good fight back is what we're seeing from the day's low. Amrish Palekar joins us to help us out with, his take on various stocks. Amrish, first you go for it. Tell us that one stock that you're giving us for today in terms of which is fundamentally placed and you believe that our viewers should take a look at it.
Good afternoon, Nigel. My pick is Vedanta. Our company has operations across various verticals. Aluminium, they are the largest aluminum producer in India, around 45% of domestic market share. Leaders in zinc, lead, silver. Oil and gas, they are the largest private sector oil producers. When you talk of iron and steel, one of the largest Indian private sector exporters of iron ore. In power, they should soon become the second largest private player. And in copper, it's got one of the largest smelters in India. They, in fact, clocked a record production of alumina, and zinc in the last 9 months. And currently, plans of setting up a 1 lakh crore aluminum refinery in Odisha. One of the major issues for this company was the debt burden and its maturities. That's more or less got postponed to FY27 and beyond. Already they have reduced debt by about $4.5 billion. And also now they've got credit upgrades from 3 global credit rating agencies. So that's another positive. Dividend yield works out to about 4 to 5%. But the major trigger going ahead is the proposed demerger, which will create those independent global scale companies. Normally, whenever there's a demerger from a global scale, one or two of the companies which are demerged become much smaller. But here, all of them are going to be of global scale. And that should happen by June 2025, possibly a month or two later. And this, I believe, should be wealth accretive for the shareholders. So valuation-wise, on a consolidated basis, I'm expecting an EPS of 59 for FY26. So the target price on a pre-demerger equity is 590, Whereas post-demerger, I think the sum of parts could be much higher.
Okay, interesting. Well, quite bullish on Vedanta. That's the stock that Amrish is looking at. Amrish, we have a few more queries to you. But for the time being, let's take a look at some of these stocks. Vari Energies, the top line is more or less flattish, but the net profit has moved up. Remember, now they're getting into backward integration. The capacity as well has moved up. And the stock has seen a sharp correction from the peak. So for the time being, the stock has now moved to the high point of the day. I'm waiting for the operational performance, because on the top line, there doesn't appear to be any kind of growth. In fact, there's a mild degrowth. We need to wait for what is the EBITDA number out there. So that's one stock that we'll keep on your radar. The other couple of names, well, you have numbers coming from JSPL post-market hours. That stock has suddenly moved to the low point of the day, so that should be the one that you should keep on your radar. Dabur bursting away, stock up close to around 4%. As the management just told us, they believe the worst is behind and they're hoping for things to pick up from here on. Towards the end of trade, you had stocks like IRFC as well that did spike up in trade. So it's a good close to a weak series for the bulls. The Nifty goes home with a cut of close to around 2%, but a fight back is what we saw on the final day of the series.
Okay, I think just about, there you go. That's the closing bell. 130 higher on the Nifty finally. 23,300 is where we're at. So, about 50 points under the 20-day moving average for the Nifty. I think the Nifty Bank sort of closes above the 20-day. Yeah, I think we do. So 49,400 almost. So we did actually pick up a little bit. At 230, we're about 0.18% gains. We're about 0.5% higher in the Nifty Bank at 330. So, some up move is what we have seen. These are quarter-on-quarter numbers on Vari, but I don't know why we should look at quarter-on-quarter. If you do have year-on-year, we should actually put those up as well. But for now, we have the Q1Q figures for Vari that's coming through, recent listing there. We'll take a quick commercial break here, and we're going to come back with Markets Forward, which will put up everything you need to know as far as tomorrow's session goes. Coming right back.
I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs, and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now, and happy to see what it's doing today. And I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think the bulls take some control. Auto as a sector, auto and FMCG, and even PSU, these three baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind you, if you look at the mid caps and small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again, please look at the context of the rise.
The market ends higher despite cues indicating a possible rate cut coming from the Fed. Mid-cap index ends flat but relatively underperforms.
Bajaj Finance trades in green after delivering a good third quarter number. Tata Motors stock sinks after it misses profitability estimates, however holds on to JLR margin guidance.
Hitachi Energy hits upper circuit after saw multi-fold rise in its profit after tax. ABB sinks after the parent company in its earnings indicates a decline in orders in the India region. Voltas slips in trade over weaker than expected third quarter numbers. Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you up to speed with regard to today's trading action and gear you up for tomorrow as well. I'm Nigel and with me is Vinny. Hi Vinny, it was another good session actually for the Bulls. It was expiry related and by the end of it, at least the Bulls went home with some green.
Absolutely. Bulls went home with some green. But, Nigel, I'm wondering what happened to the mid-cap, right? It ended pretty flat, a bit on the negative side, slight bit of a negative bias, but not a bad day coming in, almost near the day's highest point is what we're
Well, that's right. And in the next 30 minutes, Vinny and me will take you through all the market cues. We'll tell you what went on today, stocks that were moving around, and we'll also get you all the top market voices that we heard during the course of the day. First up, though, let's take a look at, the Nifty. The Nifty ended higher with a gain of around 150 points. It was a steady trading session. At around 2 p.m., we had a bit of a dip, but that dip got bought into. Keep in mind that for the series itself, that's the first series of 2025, the Nifty goes home with a cut of around 2%, but a fight back is what we have seen from the recent lows. Close to around a 450 fight back is what we've seen. So the Bulls will take heart from that fact. The Nifty Bank, for majority of the trading session, traded in the green. It went home with some mild gains by the time we wound up, 150 points, in the green. The problem was the mid caps ended more or less flattish, a bit of an underperformance coming out from there. But I'll tell you what, the Bulls will take some kind of consolidation after the rocky start that we had to the week.
Absolutely. And Nigel, today we've seen that Nifty Pharma coming back in action. Yeah. We've seen a good move coming in for Nifty Pharma. And a lot of pharma names have been in focus. So look at Laurus Labs, Granules, there was a news flow that came in, Cipla, Aurobindo Pharma. All of them actually ended on with a strong footing. Even Realty names did quite well. So yes, keep an eye out on Realty going forward. But Nifty Realty also among the top sectoral gainers today. But well, here's a lineup for you all of what we have in store for you all in today's show. We start with the top movers and shakers of the day with Urmas, and moving on we'll go to Whirlpool, which has been in focus after Whirlpool India made waves on the street as its parent company eyes a big stake cut to 20%. Earnings season continues to heat up with stocks like Hitachi Energy and Voltas posting the Q3 numbers. Stay tuned in as we get you more on that. Last but not the least, we will delve into actually what are the key market events to watch out for in tomorrow's trading session, so don't go anywhere. But starting up the show, let's go across to Urmas, who's here to tell us which were the top movers in today's trading session.
An interesting day of trade, and as expected from the expiry, right? And there were plenty of stocks that were in action in today's trading session. We start off with some of these names that were the earnings extremes, if you can call it that. Hitachi Energy was the star of today's trading session, a 20% move there. The accident of today's trading session, of course, was Tata Motors ending at a 52-week low, as did Voltas with a 14% cut. Welspun Living also fell to the lows of the day after its results announcement, and BEL seeing a very convincing beat compared to estimates, ending 4.5% higher there as well. The rebound continued in a lot of these real estate stocks in today's session. So almost every stock in the real estate index ending higher with gains of anywhere between 2 to 3% in today's trading session. Profit booking was seen in IT names, particularly the mid-cap IT stocks that have been outperformers in the recent past, be it Mphasis, Coforge or Persistent Systems. All of them ended lower, anywhere between 3.5 to 5%, and Infosys and Wipro also contributing to the downside, barring a slight spike towards the close of the trading session. The newsmaker of the day undoubtedly was Whirlpool in terms of the news flow. 20% lower, started that way, ended that way. No change there, absolutely. Laurus Labs ending at the highs of the day with some positive news flow coming in from the US. NetWeb continuing to build on yesterday's rebound. SRF, some positive management commentary coming in there as well. And Solar Industries too having a good day at the office. And lastly, some volume-led movers in today's trading session. Some of them also are earnings reactions like Electra Greentech and JBM Auto. Deepak Fertilizers gained 14% yesterday, ended 13% lower today, giving up everything that it gained. Back to you guys.
Okay, all right. Thanks a lot for that. Hormuz, all those stocks that are moving around. Let's go across to our market gets though. Amrish joins us to help us out with the fundamentals. And Ruchit will give us his take on the technicals. Hi, gentlemen. Thanks a lot for joining in. Ruchit, you go first. Rocky series for the Bulls. They'll be happy to have, they fought back towards the end. But do you think there is some more in store in terms of a pullback? We're down 2% for the series, but actually looking at the way we started off the week, the Bulls will say, no worries, we live to fight another day.
Yes, hi, very good afternoon, Nigel. Very good afternoon to everyone. Well, definitely, I think some of the global factors have helped us to show this pullback move. Primarily, if we look at last few months since the month of October, the rising dollar index and the rising 10-year US bond yield, where we have exact inverse correlation that was going against the market. And hence, we have seen this sharp correction. Now, in last 10 days, the dollar index has cooled off from that high of 110 to 107, 108 now. So I think and our markets generally, generally reacts to that with a time lag of about 1 to 2 weeks. So I think this is one factor which will support our market. And technically also 22,800 to 22,500 was a very strong support zone. So we believe that markets have started the process of forming a short-term bottom. Of course, some volatility in the short-term, event-related volatility could be there. But any dip, if we get again towards the 22,800 or 22,500 range, I think that's where the support base would be formed for the next leg of uptrend. So downside seems to be limited. We are giving an opinion that any dip, event-related volatility, in this event-related volatility, if we get any dip again, that should be used as a good buying opportunity.
Okay, any dip should be used as a buying opportunity in the market right now, and obviously the levels that you mentioned over there is something that one should watch out for. But let's move on and talk about Whirlpool. And Whirlpool India hits lower circuit after the stock plunged by 20%. And this came in after the parent company has decided to trim its stake in its Indian arm to 20%, reducing it into a minority investor. Let's go across to Hormaz, who's here to tell us the impact on the Indian business. Over to you, Hormaz.
Interesting news flow coming in earlier this morning with Whirlpool Corporation deciding that they are going to pare their stake further just a year after they had sold at mega 24% stake in the Indian entity. And they said that they plan to bring the stake down to 20% by the mid or the end of this year, is what they said. They started off 2024 with a 75% stake. Then they sold 24% in the month of February, bringing it down to 51%. And now they plan a further dilution to bring it down to 20%. Now, the last time around they did this, they currently hold 51%, of course, but the last time they did this, they sold around 24.7% stake in that block deal that was well over 4,000 crore rupees. They used that to pay debt, strengthen the balance sheet at the parent level as well. And they also said that this stake sale is to ensure greater autonomy to the India business and that they will remain relevant to their core portfolio as well. Remember, the CEO, when the block deal had happened, the parent company CEO had come in and said that they took some money off the table because the Indian entity is trading at 50 times while the own parent entity is trading at a far lower valuation. And that holds true this time around as well. At the current price, Whirlpool is trading at around 41 times. The parent entity is trading at just 9.5. So the street has not taken it well. An overhang that has developed here on when it comes to the promoter stake sale, and that showed in the way the stock reacted in today's session.
Absolutely, Hormaz. Thank you so much for that. But, Amrish, coming to you, what are your thoughts on Whirlpool India? And do you think, this worry that has come in today is something that could go on going forward as well?
Yeah, surely. Because, see, the way I would see it is clearly a collateral damage because of the debt of the parent. And the worst thing is announcing that they'll sell in the market. 30% selling in the market, I think it's huge. If they were to sell to a strategic investor, it would have been completely different. But then, just like last time, they sold in February 2024 and the stock had cracked at that point of time. But the saving grace at that point of time was that the promoter still held on to 51%. But now reducing to 20%, why not sell the whole thing to any strategic investor? What's the point of holding 20%? And I mean, if they hold 20%, then going ahead, we don't know what's going to happen to the royalty as to how much they'll try to increase that. On top of that, they may float a 100% subsidiary also. I think with this, I mean, at least the Indian shareholders would have completely lost faith in the parent, and it's better that they move out. Otherwise, it'll still be a wealth destroyer. And at this point of time, I mean, even if there are one or two more circuits, I would not say that this is a buy. I mean, if you get a chance to exit.
I think, Amrish, whatever it hits, one or two more circuits, the promoter will say we don't want to sell. Maybe, the bulls will like to think so. It's come so low, we thought we'll sell it at, whatever, 1,500 rupees odd. Today I saw 1,250, couple of circuits lower, 800 rupees. We'll go back on that plan. Cool, we take that point. But let's talk about happier. Yeah, Amrish.
And I think the only trigger can be if there's a strategic investor or a buyer coming in. I think that's the best thing to happen.
Indeed. Let's talk about happier times though. And Hitachi was one that gave good news today. The stock was at upper circuit. Vamakshi joins us to tell us what all favored the stock today. Vamakshi, take it away.
Well, Nigel, a blockbuster set of numbers coming in from Hitachi. When we look at the revenue, that it came in at 1,620 crores. This is an uptick of 27%, although 1% lower than what the street was expecting. But the EBITDA margin saw a substantial improvement of around 500 basis points to 10.3%. The net profit too came in at 137 crores. Now, this is before adjusting for notional forex gain, and that is the reason why the net profit saw a very sharp bump up. But when we adjust for the notional forex gain, the net profit actually stood at 85.5 crores, which is still nearly 8% higher than what the street was anticipating. When we look at the ordering activity for the company, that was also very robust. Keep in mind that they received a substantial order from, Power Grid. Then this was in a consortium with BHEL. This was a large HVDC order, which is why the order inflow went up from 1,235 crores in the same quarter last year to 11,594 crores. And with that, they also posted the highest ever order backlog of somewhere around 19,000 crores. So overall, good set of numbers. The order activity picking up bodes well for Hitachi.
Okay, absolutely, Vamakshi. But, also to tell us about ABB India, because that has also seen a bit of a slip coming in trade on the back of some global commentary from its parent company.
Well, absolutely right, Winnie. The global parent reported its numbers, and in its presentation, the global parent mentioned that order inflow growth for the India region has declined by 21% on a year-on-year basis. So, because of that, there was some pressure on ABB India. But, it is important to note that the correlation of these global numbers for the India region with the Indian entity, that is ABB India, is not very direct, and that is because ABB Global looks at third-party customers in India who give orders to ABB India, other ABB entities and ABB companies outside India, which is why there is some bit of a disconnect, if I may say, between the numbers that are reported by the parent as well as the numbers reported by the Indian entity. Case in point, when we look at the quarter 3 numbers, we saw an uptick of almost 11% in the Indian entity, while for the global company, they posted a growth of 9%, and so on and so forth. You can see that there has been a disconnect. Keep in mind that ABB India is expected to report its numbers on Feb 18th. As of now, because of the overall decline that the India region saw, the stock, that is ABB, was under pressure today.
Okay, Vamakshi, thank you so much for that. But Rishita, I want to come to you. Hitachi Energy, when you're looking at it in terms of a move, last 1 year, 120% uptake. Today also, the stock was in upper circuit that we saw, right? So, good numbers surely is there, fundamentals is there. But on the charts and technicals, what is Hitachi Energy indicating now?
No, really the good thing is that the stock had already seen some correction before the numbers itself. In the month of October, the stock price made high of around 16,500, from which along with the broader markets, the stock corrected to even sub 9,000 just day before yesterday. So I think this was a good thing that the price-wise correction was already done, due to which the overbought setups have cooled off. And the kind of volumes that we have seen in today's trading session after the numbers, this clearly indicates a good buying interest in the stock. So I think this should lead to a resumption of the uptrend. And probably if one is looking for some positional perspective, then one can expect new highs very soon in this one.
Got it. Okay, all right. Let's focus on the next one. Voltas. That was a disappointing set of numbers that did come in. Revenues were in line, margins were a miss. Upasana is going to dissect those numbers for us. Upasana, take it away.
Well, numbers missed our poll estimates. The miss was largely driven by lower than anticipated
UCP margins. Now talking about the key segments of the company, the UCP revenue growth stood in line at 20% on a YoY basis, while margins were weak, down about 240 basis points at 5.9%, likely on higher competitive intensity. Now company's EMPS segment saw strong revenue growth of 21% on a YoY basis, while company's EPS segment saw muted performance this quarter. Now speaking of Voltas Beko, this JV reported a loss of about 31 crores but saw 56% volume growth in home appliances in 9-month FY25 on increased market share for refrigerators and washing machine. The washing machine market share surpassed 10% mark in this quarter. Now, company says that it continues to remain market leader in both split and window AC with a market share of 20.5% as of December 2024. Now, let us talk about the numbers. The revenue saw an uptick of 18%. PAT stood at 130 crore versus a loss of 27 crores. EBITDA margins were down about 77 basis points at 6.3%, while we were estimating it around 7.07%. So clear miss on margins, PAT and revenue in line. So all in all, the numbers were a miss.
Okay, miss came in on Voltas, but Amrish, your view coming in for Voltas, what are you watching out for here? And consumer durable space as a whole, do you think that the miss that we've seen in Voltas could continue for other companies on the AC front as well?
Yeah, I mean, talking of Voltas, yeah, clearly, I think on the revenue front, it was decent in line, but then rest of it, whether you talk about EBITDA or the net profits, both were much below market expectations. That's the reason we've seen this cut. And the sort of a slowdown which we have seen in this space, I think, can continue for a quarter or two more, and it is bound to affect the rest of the companies in this space.
Okay, Amrish, thank you so much for that view coming in on Voltas. But thank you, Amrish, as well as Ruchit, for joining in with us on today's show, for giving us key market insights over there. But with that, we're going to slip into a very short break and we'll get you top corporate voices along with the key market events to watch out for on the other side of the break.
Caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible. I think the biggest disconnect for most market participants in India is, for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market, because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets, because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So
welcome back to Market Forward on CNBC-TV18. Now let's get you some corporate voices we had over the course of the day. Blue Star, a manufacturer of air conditioning and commercial refrigeration system, is expecting a good fourth quarter for the industry. The company's room air conditioner market share reached an all-time high of 14% in December quarter, and the target to achieve 15% market share. The company guides to maintain growth of 20 to 25%.
Next up, KBI IT Technologies management says that the company is making significant investments to enhance productivity through AI. The management expects improvement in margins due to better product mix and productivity in this quarter. Adds that looking ahead, Asia will be the company's key growth driver, and they're optimistic that the US business is picking up, while deal flow from European business as well remains strong.
And in some more management commentary, Dabur reported in line set of Q3 numbers. Management says that the urban market has bottomed out, but will see improvement going forward. The company guides for mid to high single-digit growth going forward, and also expects the budget to boost urban demand. And before we wrap up this edition of Market Forward, we bring you some of the key events to watch out for in tomorrow's trading session. Let's go across to Mangal Amunzio to give us those details.
Let's start with stock-specific details. Stocks that will be reacting to numbers post-market today. Tomorrow would be L&T and Tata Consumer Products from the Nifty end. And the companies that report their numbers tomorrow, we have quite a few. But, among them, the most notable ones include the likes of Marico and Nestle. We also have some others reporting their numbers too. We'll keep an eye out on, the Feb series that begins tomorrow. And we have 4 stocks, NBCC, Phoenix, Solar Industries, and Torrent Power, all of them actually trading in F&O from tomorrow's trading session. Earlier, we had Castrol and Gland as well, but those were later removed. Thereafter, we'll keep an eye out on, the Finance Minister, Nirmala Sitharaman, presenting the economic survey in the Parliament one day ahead of the budget. So macro cues would be extremely crucial. Speaking about macro cues itself, we will watch out for the 8 core industries data for December that comes by post-markets tomorrow.
Okay, all right, Mangalam, thanks a lot for that. Well, on that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates, so stay tuned.
Current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here and possibly get past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think will be very critical to the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited. But as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited. For the last 4 years, since the time we started rallying from the COVID lows, every time there has been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a charts perspective, your maximum downside is about 2 to 4% from here and upside is about 20%. So as an investor, I want to plan for the same.
History as the first woman finance minister to present her 8th consecutive union budget. From replacing the colonial era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her leadership. Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The credit guarantee scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this scheme provides collateral-free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme announced in the budget 23-24. This initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers taxpayers a chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of measures supporting MSMEs and businesses were introduced under this initiative during the pandemic, emphasizing self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an attractive destination for global investments. The optional personal tax regime, or the new tax regime in 2020, a simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes. Another such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments. The abolition of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18. Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty gained for the 3rd straight day after a range-bound session. The Nifty moves past 23,200. Mid-cap index closes flat.
We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy.
The U.S. Federal Reserve leaves the key interest rates unchanged in a widely anticipated move after 3 consecutive rate cuts. Fed Chief Jerome Powell says no need to hurry and adjust the policy stance. President Trump blasts the Fed, saying it failed to control inflation and did a terrible job on banking regulations. Microsoft earnings beat street estimates, but the cloud business growth hits a speed bump. Stock slips on the back of a weak revenue guidance. Meta shares surge after the company reports a beat on revenue and profit. Zuckerberg hints at a really big year in artificial intelligence. Tesla misses estimates. Automotive revenue drops 8%. SEBI restricts financial influencers from using livestock prices to give trading advice, even under the guise of educational content. Says that they can only use stock prices with a 3-month delay, bars regulated entities, including exchanges, from associating with those who violate the rules. With 48 hours to go for the union budget, sources say the government is likely to announce measures to provide some relief to the middle class and increase their spending power. Weighs potential tax relief for those earning up to 15 lakh rupees an annum. Also considers steps to boost manufacturing and MSMEs. That's an exclusive. The Union IT Minister Ashwini Vaishnav confirms that India will launch its own artificial intelligence model within the next 10 months. Says at least 6 developers have been identified who can roll out within this time frame. Says the government brings to the table the compute power of 18,600 GPUs, of them 10,000 are already in India. Union Minister Vaishnav also says the government will soon host Chinese AI platform DeepSeek on Indian servers. The move is aimed at addressing data privacy concerns and enhance India's AI capabilities. An American Airlines passenger plane with 64 people on board collides with the U.S. military helicopter mid-air near Washington's Reagan Airport. 19 bodies have been recovered so far. The U.S. figure skating team was reportedly on the flight. But straight to the day's trading action. The last street ending largely higher, with the market managing to close in the green for the third day. The Nifty held on to 23,200, supported by Reliance. The Sensex up by 226 points, 146 points higher on the Nifty, with the mid-caps absolutely flat, closing in the red today, down by about 5 points. So nothing much to speak about there. But the big global story, the U.S. Federal Reserve left key interest rates unchanged in a widely anticipated move after 3 consecutive rate cuts. Addressing a press conference, the Federal Reserve Chief Jerome Powell said the central bank is not in a hurry to adjust policy stance as the U.S. economy remains strong. The central banker also reiterated the Fed's commitment to achieve the 2% inflation rate. Furthermore, the Fed said that he had no contact with U.S. President Donald Trump. Trump, however, renewed his attacks on the U.S. central bank hours after the decision. In a social media post, Trump said the Federal Reserve and Powell had failed to stop the problem that they created with inflation. Listen in to Jerome Powell's comments on the rationale behind the Fed's decision, as well as Trump's World Economic Forum speech last week, where he demanded that the interest rates drop immediately.
With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
That's the Fed chief saying no contact with President Trump. In global earnings, tech giant Microsoft's Q2 earnings ahead of street expectations. However, the company provided a disappointing quarterly revenue forecast. On an annual basis, the company's revenue grew 12.3%, marking its slowest quarterly growth since the middle of 2023. Its cloud computing business growth was lower than expected as well. However, Microsoft has started the growth of its artificial intelligence business after raking in $13 billion in annualized revenue. That's Microsoft for you. Meta's Q4 numbers ahead of estimates on all counts. Revenue for the quarter at over $48 billion. Earnings per share came in at over $8. Sales jumped 21% on a year-on-year basis. The tech giant's Meta AI chatbot crossed 700 million monthly active users. The company said it expects user count to reach the 1 billion mark this year. Meta announced a $65 billion capex investment to fuel its AI strategy. It also plans to cut 5% of its staff in the coming weeks. Tesla reporting a weak set of numbers in Q4 on both revenue and profit. The company's revenue stood at over $25 billion, registering a 2% growth sequentially. The core automotive revenue down 8% to nearly $20 million. Net income dropped a significant 71% on an annual basis. That's Tesla for you. But the terrible news coming in from the U.S. An American Airlines aircraft carrying 64 people on board collided with a U.S. Army helicopter mid-air just moments before landing in Washington's Ronald Reagan Airport. Both the aircraft crashed into the Potomac River. At least 19 bodies have been pulled out so far. As per last available information, the flight was arriving from Wichita in Kansas. This appears to be the worst air accident in the country in the last 15 years. Massive search and rescue operations began after the incident, with around 300 first responders arriving at the scene. All takeoffs and landings from the Reagan National Airport have been temporarily halted. U.S. President Donald Trump called the crash a bad situation that should have been prevented.
Multiple deaths have been reported after a passenger jet and U.S. Army Black Hawk helicopter collided mid-air and crashed into the Potomac River Wednesday night near Reagan Washington National Airport. Police said several agencies were involved in a search and rescue operation in the river. The airport said late on Wednesday that all takeoffs and landings had been halted as emergency personnel responded. The Federal Aviation Authority said PSA Airlines was operating a regional flight for American Airlines, which had departed from Wichita, Kansas.
I'd like to express our deep sorrow about these events. This is a difficult day for all of us at American Airlines, and our efforts now are focused entirely on the needs of our passengers, crew members, partners, first responders, along with their families and loved ones.
The number of people on each aircraft, 64 people on the American Airlines plane and 3 people on the military helicopter. The focus now is rescuing people.
American Airlines said 60 passengers and 4 crew were on the plane. A U.S. official said 3 soldiers were aboard the helicopter. NBC reported that 4 people had been recovered from the river, while the Washington Post said multiple bodies had been pulled from the water. The National Transportation Safety Board said it was gathering more information on the incident.
Well, terrible tragedy there in the U.S. Back home, SEBI has restricted unregistered financial influencers from using live stock prices to give trading advice, even under the guise of educational content. The market regulator's new rules mandate the use of stock prices with a 3-month delay. Yash is standing by now with more. Yash, tell us about the other curbs that have now been imposed by the market regulator, taking away any ambiguity that may have existed.
Well, in August 2024, market regulator SEBI had come out with regulations which essentially were intended towards ending the association between SEBI registered or regulated entities and the unregistered financial influencers and other unregistered entities. The final set of regulations or the clarifications to the previous regulations could well prove to be the final death blow when it comes to eliminating these financial influencers out of the system by breaking their revenue model itself. What market regulator SEBI has said is that financial influencers which are unregistered cannot provide any advice or recommendation directly or indirectly about any security. They also cannot make any claim of returns or performance through the content which they put out. The onus or the responsibility will be on the listed or the registered entity to not have this association with unregistered influencers. Otherwise, there could be penalties, there could be cancellation of licenses as well as far as these registered entities are concerned. One very interesting distinction which SEBI has made between investor education and promoting financial products by unregistered financial influencers is that it has said that any financial influencer, if is interested in promoting investor awareness, investor education, then for any sort of illustration, if he's using a price of a security or the chart of security, it cannot be off the previous 3 months. It will have to be before that. Also, these influencers who are wanting to promote investor education cannot sort of express the kind of past performance that they've had or sort of show the results that they've provided to their subscribers in any form through their content.
This is kind of a lazy way of regulating, really. Instead of going after the person who's violating the law in terms of making recommendations without license of either research or investment advice, you're basically saying, like Deepak said, anybody who walks in a road which has a criminal, you'll be liable for his action. It's SEBI's job to control that person. And therefore, I think they really need to kind of relook at this. Certainly, anybody who is making giving stock tips, giving investment advice, etc., is in direct violation.
Well, that's the latest there from SEBI, a chokehold on financial influencers and the manner in which they've been operating. The government held an all-party meeting ahead of the budget session of Parliament. The meeting was convened by Parliamentary Affairs Minister Prahlad Joshi and saw representatives from various political parties. The budget session will begin tomorrow with the tabling of the economic survey. The union budget will be the day after, on the 1st of February, and the session will conclude on the 4th of April. On to CNBC-TV18 exclusive. With 48 hours to go for the union budget, sources tell CNBC-TV18 the government is likely to announce measures to provide some relief to the middle class and increase their spending capacity. The government is also considering steps to boost manufacturing and MSMEs. Parikshit standing by now with more. Parikshit, the budget countdown underway. What are you hearing?
Well, we are hearing that different government departments have been giving feedback to the finance ministry, and some quarters believe it is time to give some relief to the middle class to increase their spending power. And this will be essential to revive consumption sentiment and also India's growth trajectory. Having said that, the government has been considering measures to give higher tax exemptions, tax relief to people who are in the range of 10 to 15 lakhs in the salary bracket. So it's possible that there may be measures to support the middle class through tax exemptions and tax relief. Now, when it comes to growth areas for the budget, we believe that there could be measures to support labor-intensive sectors. Now, this would be certain low-volume but high-value sectors which can also generate a lot of employment, because labor and employment has been the focus of the union budgets over the last few years. So sectors such as textile, furniture, food processing could get some impetus. When it comes to also simplifying the tax system, there have been suggestions to the government that the tax structure needs to be simplified. Honest taxpayers need to be rewarded. So there may be measures to simplify the tax system and also ease of living for the middle class. So we will see some measures on that front as well. On MSMEs, there is a suggestion that the government should come up with a strong financial support package for MSMEs for the next few years. So it remains to be seen whether the finance minister will actually come ahead and deliver on those as well.
All right, Parikshit, many thanks for joining us. In Earnings Corner, Dabur's Q3 numbers have come in line with street expectations. Net profit rose 2%. Revenues grew more than 3% on an annual basis. Speaking to CNBC-TV18, the company's CEO Mohit Malhotra said that Dabur is targeting low to mid-single-digit volume growth. He also said that Dabur's food business was impacted due to winter. Bajaj Finserv's net profit rose by 3.4% in the third quarter of the fiscal. The company's revenue grew 10%, while assets under management surged by 28%. A significant contributor to growth was Bajaj Housing Finance, which recorded an AUM growth of 26%. The company's asset quality has seen a slight deterioration, with both gross and net non-performing assets rising marginally. KRBL, the maker of India Gate Basmati rice, has undergone a brand revamp after 25 years. The company has plans to move more consumers from unbranded to packaged rice. Shilpa spoke with Ayush Gupta on the idea behind the revamp.
E-commerce, modern trade are becoming more and more salient. And, their packaging has started to play a critical role in making consumer choice, in driving brand preference. And we felt our original packaging, while it was nostalgic, while it connoted trust and legacy to the consumers, we were losing out on some bit of premiumness. We have an aspiration to grow our market share, which is at a 38-39% and at a general trade level to a 55 to 60% in the next 3 to 5 years.
Well, we will head into a break, but up next, Union Minister Ashwini Vaishnav says the government will soon host Chinese AI platform DeepSeek on Indian servers. How? We'll explain when we return. As we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India in with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets. Union IT Minister Ashwini Vaishnav has announced that India will begin work on creating its own foundational artificial intelligence model along the lines of ChatGPT, Gemini and DeepSeek. Now, speaking to the media today, Minister Vaishnav said 6 major developers have expressed interest in a large language model will be ready within 10 months. That's the target that the government is working with. The minister also said that India now has a robust compute facility with roughly 10,000 graphical processing units or GPUs currently available. The overall target on computing power stands at 18,600 GPUs. For context, the Chinese AI model DeepSeek, which has rattled Silicon Valley, claims that it was trained on 2,500 GPUs, this as per the Chinese company. Minister Vaishnav also said that India will soon host DeepSeek on our servers. This is aimed at addressing the data privacy concerns surrounding the Chinese chatbot. Take a look.
The second big mission, as you know, was to develop our own model. And over last almost 1.5 years, our teams have been working very closely with the startup ecosystem, with the researchers, with many professors, और उन सब के साथ बातचीत करके we have created the framework which will be launched today. We are calling for proposals to develop our own foundational model, and we believe that there are at least 6 major developers who will be able to create foundational models in the next 8 to 10 months on the outer limit, or every system which needs to be tested on security parameters will be tested and decisions will be taken. Good thing is DeepSeek is an open source model, and we are very soon going to actually host DeepSeek on Indian servers. We'll be hosting that entire, the way we have hosted Llama.
Well, let's go across to Ashmit Kumar to understand what the statements made by Minister Ashwini Vaishnav mean and the impact on India's AI ecosystem. Ashmit, many thanks. Lots being said there by the minister to give us a status check of where things currently stand as far as the India AI mission is concerned. But let's talk about this DeepSeek, Ashmit, and DeepSeek being hosted on Indian servers. Explain to us the implications.
Well, clearly this is a bit of technology that has created a flutter. The fact that this press conference happens only a few days after DeepSeek has made headlines is not a coincidence. There is clearly a response from the Indian government. But as far as the technology itself is concerned, the model itself is concerned, there is a significant advantage in having it here in India as well. The core concerns as of right now is privacy. That what happens when one downloads this application? Does that data go back to China? Does it get utilized in some way? Does that pose a security risks. These are the challenges coping with which the Indian IT Minister, Ashwini Vaishnav, today clarified that there is now a move being made to host the DeepSeek AI model now onto Indian servers. Now, what does that mean? Now, let's keep in mind that DeepSeek, the AI model that was introduced by China, is an open source model. What that effectively means is that the core code, which is the heart of this AI model, is publicly available. So essentially, that model, that recipe, can be brought here and then can be replicated on Indian servers. The advantage would then be that if it's hosted on Indian servers, then the data will remain on Indian servers, will not travel to China, and therefore beats the security concerns. And not just that, the niggles that were initially seen in DeepSeek, where it wouldn't answer questions accurately on contentious issues such as the 1962 war, such as Arunachal Pradesh, such as the Tiananmen Square, those niggles can also be resolved by Indian engineers. So a more comprehensive version of that model can be developed here locally. That's the main push, the main thrust of what Ashwini Vaishnav is saying. And just for caveat, this has already been done before. Llama, which is Meta's AI model, is already hosted on Indian servers, Indian government servers, on CDAC servers. So clearly there's a precedent. The government looking to do another effort along those lines for DeepSeek to bring the Chinese model here to Indian users.
All right, thanks very much, Ashmit. SoftBank in talks to invest up to $25 billion in ChatGPT owner OpenAI, which will make it the startup's top backer. In fact, in November, OpenAI allowed employees to sell about $1.5 billion worth of shares in a tender offer to SoftBank. SoftBank could now invest anywhere between $15 billion to $25 billion directly into OpenAI. Some of these funds will be used by OpenAI to pay for its commitment to Stargate. Remember, Stargate is a joint venture between Oracle, OpenAI and SoftBank, and has called for billions of dollars to be invested in US's artificial intelligence infrastructure. Now, the Uttarakhand government has released rules for live-in relationships under the Uniform Civil Code. The new system will require couples to register when they enter and terminate a live-in arrangement. If the couple fails to comply with this rule, they could face a jail term of up to 6 months. The Maharashtra government has withdrawn funding for eggs and sugar from the midday meal scheme in public schools. The state government has said that sweets and eggs will be served only if public schools arrange the funds. Eggs were introduced in the midday meal scheme in November of 2023. As per reports, Maharashtra spent 50 crore rupees annually to provide 24 lakh school children one egg per week. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Don't go anywhere. We're back in a moment with more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs, and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now, and happy to see what it's doing today. And I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think the bulls take some control. Auto as a sector, auto and FMCG, and even PSU, these three baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind you, if you look at the mid caps and small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again, please look at the context of the rise in mid caps and small caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible. I think the biggest disconnect for most market participants in India is, for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market, because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets, because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So a deeper cut from current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here and possibly get past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think will be very critical to the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited, but as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited. For the last 4 years, since the time we started rallying from the COVID lows, every time there has been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen, because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a charts perspective, your maximum downside is about 2 to 4% from here, and upside is about 20%. So as an investor, I want to plan for the same.
History as the first woman finance minister to present her 8th consecutive union budget. From replacing the colonial era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her leadership. Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The Credit Guarantee Scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this scheme provides collateral-free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme. Announced in the budget 23-24, this initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers taxpayers a chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of
India's GDP growth rate is near a two-year low. Inflation is above the RBI's comfort zone. The Indian rupee is under pressure, trading near record lows against the US dollar, and the global geopolitical environment remains uncertain. It is in this complex backdrop that Finance Minister Nirmala Sitharaman will present a record-breaking 8th consecutive union budget. Hello and welcome to Budget Banter. I'm Shireen Bhan and I'm joined by my colleagues here in New Delhi and in Mumbai. And over the next 1 hour, we will put the spotlight on what you want from the union budget. So do post your questions and queries to us on our YouTube page. Recommendations, comments, suggestions, everything is welcome. But before we begin the banter, CNBC-TV18's Diya Epan spoke to people like you and me to find out what they anticipate the budget to do this time around. Let's take a look.
Is there something that you have in mind that you want to see this year?
I'm expecting some benefit for the middle class on priority, basically. And since I'm working in the travel sector, probably some benefit for the travel sector, like some GST benefits.
The government should be taxes less on at least daily routine items. Right. If you are going to gold and all, we don't care. But we are middle class person, so we need to my daily budget going very high. So we want to do some reducing to daily items, product taxes should be addressed.
Going forward, the government should focus very less on freebies and more on welfare. They should reduce these freebies and put more where it is needed.
They should focus on medical and education for the poor people as well as rich, whoever.
I think it's extremely hard to save in this economy. So I'd like to see some provisions where I can afford to save a bit more. So maybe that's with lower income tax slabs or because I just want to be able to pay my electricity bills, lower petrol rates and all of that.
India is now getting a lot more tourists and travelers. I think a better development and infrastructure for travel and tourism would be nice.
Already काम धंधा नहीं है और ऊपर से इतने टैक्स पे टैक्स एक तो ऑलरेडी आदमी कोई चीज़ लेने जाता है उस पर भी टैक्स दे रहा है ऊपर से गवर्नमेंट भी टैक्स मार रही है तो कितने टैक्स भरेगा आदमी.
Give some tax relief to people who don't make that much money. You should have slabs ranging till 50 lakhs until 30 lakhs at least. I think you guys should knock off the taxes.
Well, that's what the Aam Aadmi wants Finance Minister Nirmala Sitharaman to deliver. And as I pointed out, budgets are always complex and challenging, and this one is going to be particularly so for all the factors that I pointed out. So, some like us here in Delhi, have chai and biscuits and chips with us, and all of our colleagues sitting in Mumbai have nothing. So that is what at the end of the day the budget is going to do. Some will be left with a little bit more on the table, and some will be left with exactly what they started with. So let me introduce my colleagues. It's the band of boys in Mumbai, along with Surabhi, Nimesh, Nigel, Prashant and Mangalam. Thanks very much for joining us. And right here in Delhi, it's really the hard-working team of reporters that's been pounding the ministries, the streets, to try and get us a sense of what Budget 2025 may in fact have. Parikshit, Sapna, Timsy are here with us. Tax, that's the big word that everyone is keeping a close watch for. But it looks like the budget might bring some good news for the middle class. That certainly is the hope. Sources have told CNBC-TV18 that the government may announce measures to provide some relief to the middle class and increase their spending power. But guys, let's get straight into that. You know, for the benefit of our viewers, North Block, that is the Ministry of Finance. It's called North Block popularly, and we don't have access to North Block. It goes into what is called quarantine. So it's blocked for all reporters, for anybody else besides the budget-making team, a month before the budget-making process starts. And it will only reopen once the budget is in fact presented. So it's very hard to get information on what is finally going to be in the budget. So these are all, source-based, educated guesses that we are putting together. But Parikshit, the growth thrust, the employment thrust, that will continue to drive the policy decisions that this budget also takes forward, right?
Absolutely. And, Shireen, this budget is coming in a certain context when you've got low consumption, you've got inflation as a problem, you've got global uncertainty. The sense that we get by speaking to different government departments is that this could be a budget which would be a feel-good budget. It wouldn't upset anyone, and the government would want to ensure continuity in some form. Definitely focus on middle class because they need to be given more consumption power, focus on labor-intensive manufacturing sectors, which increases employment potential, increases our exports as well, decriminalization of laws, and simplifying the tax structure overall.
Yes, those are some of the aspects. But, we've been talking about consumption. I mean, every budget discussion that we've had, the number one ask from industry is increase the power of consumption. Let me get Mangalam into the conversation since FMCG is his life. Mangalam, let's talk about the pain as far as consumption is concerned and what industry is telling you, and really what the expectation is from the budget as far as consumption is concerned.
So, it's such an interesting thing when it comes to consumption because just in the previous budget, which was the interim budget, it was the time when rural India wasn't doing particularly well. So the hope was that there should be more hands in the money of rural citizens so that they can prop up that. 6-7 months later, because of the inflation that we've seen in urban India and the kind of growth that we've seen earlier as well, it's urban inflation and urban consumption which is under pressure as well. And both of them are extremely important. Why is that? Because rural accounts for 2/3 of volume, urban accounts for 2/3 of sales. So if you want FMCG companies to report volume growth, you have to prop up rural consumption. If you want FMCG companies to drive up premiumization, better margins, you have to prop up urban consumption as well. The good part is that because of good monsoon, because of better income in the rural India, you have rural consumption which is picking up gradually. But it's hit a bit of a wall in the urban centers, and that's what we've seen in the numbers as well. So more money in the hands of middle class is something that we require. That's what all the FMCG companies are asking as well.
We were just, Shireen, we just had the manager of Dabur with us on closing. And they were telling us that 1.5% is the volume growth.
Yeah, 1.2%. But that's not just Dabur. If you look at HUL, 1% volume growth. The Godrej consumer, absolutely flat. That was Godrej was 0. HUL was 1%. And we have bunch of companies reporting anemic volume growths, and most of them citing weakness only in urban India. And that's exactly what the real concern is out here. Urban. If the government can somehow put more money in the hands of urban citizens at large in general, then maybe they can go out and purchase some of these discretionary consumption items. And that's exactly what we're looking at from an overall consumption standpoint.
Because our memory is so fresh, right, with regard to Dabur, you were talking about that 1.5% volume growth that they got. And they said that they expect things to improve from here on. The markets got excited even with that. So we actually start seeing growth from here on. Markets will latch onto that. I think Dabur is one of the top gainers in the last 30 minutes of trade post those numbers. So it seems there is an expectation out there. The management also said that they believe that things will improve from here on, Mangalam, right?
That's been the belief for the last 2 or 3
But the market bought it today.
The market bought it today because these stocks have
also corrected so much. The valuation is in their favor.
Absolutely.
Stocks have corrected very sharply.
Absolutely. Look at Godrej after they came out with that quarterly update. The stock got tanked on that day, and after that, I think it's bounced big time.
Guys, but I want to actually ask a question back to Shireen and maybe Parikshit or even Sapna, Timsi, if you guys can kind of chime in. While we have conversations with the market participants all the time, I don't remember in recent memory that every single market participant that I've spoken to has actually said that yes, some personal income tax, leeway will be good. Usually we are so used to them frowning on it, right? Freebies, income tax cuts, you're slipping on fiscal. It's a bad thing. The stock market hates it. But the view from Mumbai this time is it's okay. If you're going to, cut income tax, if you're going to give some help, it's better off. So your thoughts, and Shireen, we remember, I want to take everybody back to 2019, which is when we had the corporate income tax rates cut. So corporate India was given that big thrust to go out there, manufacturing and, basically spurring the economy with the hope that it'll trickle down, it'll help consumption. But a couple of years down the line, I don't know if that's entirely played out. Your thoughts, Shireen, on, what you're hearing and what your sense is on the budget?
And I'm glad that you point out, because if we look at what the budget has done, or specifically how this government has approached even through the COVID period, it hasn't been the approach of putting money in the hands of the people. The government has actually taken a very measured approach when it comes to putting money in the hands of the people, and they've now feel that they stand vindicated, because look at the inflation problem in the rest of the world. We didn't do that. We didn't take that approach in India, and so we were better off when it comes to inflation. So it's been this, let the government spend on infrastructure, let the government spend on capital expenditure. That has been the way forward. That has really driven growth, and that has kept the engines of the economy going. Now, one of the arguments that the government has presented, Surabhi, and guys, and Sapna, Timsi, Parikshit, we've all been reporting on this, is that because of the elections, there was a pause in government spending. There was no cut in outlay, but there was a pause in government spending because of the election code of conduct. It is now taking time for those taps to come back on stream, and so the expectation is that growth will start to pick up both at the end of the center as well as the state. So I would still be a bit measured about how much we can expect as far as tax relief is concerned, or things like Ficki's suggestion about consumption vouchers and so on and so forth. I would still be a bit circumspect on that. I think we are probably going to see, as Parikshit was also pointing out, much more continuity in policies. But let's address the income tax issue, because, we've seen many people, including, people who are very vocal on social media, and people like Mohandas Pai, saying that this is the budget that the government needs to deliver for the middle class and provide some income tax relief. So let's start with that. Timsi, for the government to spend from its wallet, we need to understand how much the government has in its wallet to start with. So let's look at the tax collection story so far. How much room does the government have for you and me?
Well, as you rightly said, that we need to first see what is available in the pocket to see how much government can actually spend. What is the cushion that the government has to provide the so-called and much asked for a tax relief? When we look at the numbers, it is very clearly visible that the indirect tax side is facing a heat because of the slow consumption that we are seeing in the economy. Manufacturing is slow because people are not buying, and similarly, the impact is also on the services because people don't have that much of money available in their hands. So the consumption part has slowed. So the indirect tax cycle is facing a heat. But yes,
when it comes to the currently on indirect taxes?
When it comes to the shortfall, it is somewhere around 25 to 30%, which is estimated right now, because we see a lot of indirect tax collections coming in with a lag.
Yeah, and we still have a quarter to go.
Most of the indirect tax collections are paid in the last quarter, because we see a lot of customs, excise duties coming in the last quarter, a major chunk of that. But yes, when we look at the cushion, that really is coming from the direct taxes.
Absolutely.
When we see direct taxes, the outlier being securities transaction tax, for example. We've seen that the budgeted target of 37,000 crore rupees is already met, and we still have a quarter to go. Now those collections will come later on, and we've already surpassed that, and that too by a good number. 37,000 crores was the target, and we are already sitting at 44,000 crore rupees. So there's a cushion there. When it comes to personal taxes, almost close to 95% collections are already in. when we talk about the corporate taxes, 90% collections are in. We still have a quarter. People will pay their advance taxes, all the corporates by 15th of March. Then closing will happen, and then the real tax number will figure in. But yes, that direct tax is going to give a cushion, which clearly indicates that yes, there will be a revised estimate, that too an upward trend. And most importantly, as Surbhi said, that till 2019, the clamor was reduce the corporate tax, and an impact of that is visible in the last 5 years with the reduction in the corporate tax rates, the personal income tax collections vis-a-vis the corporate tax collections. Now, they have grown. Personal income tax share has increased by 7%, while corporate tax share has increased by only 4 to 5% in last 5 years. So when you look at the last 5 years and you see, as you said, continuity, that is going to be the theme.
No, that will be the theme, but you know that's important, and that's why we wanted the numbers to be put into perspective there on what the finance minister is actually working with. But Prashant, you know, you guys were having a very interesting conversation with Neelkant and a bunch of other market economists. You know, what is the room available for the government? How much is the government? How much does the government have to play with to be able to provide some relief for people like you and me?
I mean, you know, Shireen, if you believe Neelkant, and Neelkant is sort of as good as they come in terms of just the fiscal math and the overall picture, about 80 to 100,000 sort of lakh crores, 80,000 crores to about 1 lakh crores is the room available, according to Neelkant. And on a budget, which is about 54 lakh crores, I mean, that is actually not a very large amount. So you can increase, according to Neelkant and others as well, I think it's widely understood, you can't do very much. You can't massively change things because there are interest payments. You know, there is defense spend, there are salaries to be paid. So those are all fixed costs for the government. So there is a limited amount of room which is available for the government to play around with. But just one thing, Shireen, with regards to exactly this, right? There is the fiscal equation as well. You know, this is an interesting year because the FRBM, and I think Sapna and Timsy may also like to add, the FRBM mandates that the fiscal deficit as a percentage of GDP, it comes down to 4.5% in FY26. But that's essentially where it stops. When the government presents the budget on Saturday, will they actually present another new roadmap for sort of, you know, taking that fiscal deficit even lower to say 3.5% over the next couple of years or so? I think that is the other debate. As Surbhi also said, stock markets always like fiscal consolidation. They don't like, you know, they don't like money to be handed out. But this time, I think...
To be fair, Prashant, to be fair, the government has delivered on its fiscal consolidation roadmap. Yes, there has been slippage, but by and large, they have stuck to the fiscal consolidation glide path. But Sapna, you wanted to...
I just want to... Very important aspects Prashant has flagged.
Just one thing.
A couple of things that we need to keep in mind now.
Yeah, go ahead.
Sorry, I just want to complete that point. What I was saying is the market actually would like it if they do not put out a future roadmap. Enough fiscal consolidation.
They're saying now give some money.
Exactly.
Let people spend and consume so that capex, and you know, Prashant, we talk about private capex not picking up. Well, unless and until demand is absolutely robust and certain, perhaps corporate India is sort of still looking for reasons to start deploying more capacity.
So this year 4.8%, next year target 4.5%, and stop. And then you basically come down to reducing the absolute debt level. And that can...
Government debt.
Government debt. That is essentially what the FRBM says.
Hey, Delhi is waiting to jump into the
Can I add?
debate. Yes.
So excellent points that you have raised, and that's definitely how it's going to be. That is the game plan. So basically, once you have FY26 in fact, even for the current revised estimates for FD, because government capex has been on the lower side. So, you know, there quote unquote, there is an expectation, hope, you know, that they might use some bit of that to better their FD, which is not actually a priority. Even if they're at 4.5%, this is what they have indicated earlier, they have promised, and that is good enough. Next year, next year's number. So this year also, if they're at 4.9, sorry. It's good enough, and next year is already 4.5. The point is that look at how government has used its good fiscal strength so far, or a good cash position so far. They have been doing a very calibrated, very targeted and consistent government bond buyback program. And if you look at some of the rough estimates as of now, in terms of the FY26 borrowings, which are expected to be actually on the higher side because of heavy redemptions, especially in terms of the COVID loans which have been taken.
Right.
So on that front, already around close to 60,000 crores worth of FY26 debt securities, G-Secs, they've already bought back.
Right.
Right? So, I mean, so there is a fiscal cushion available, definitely.
Yeah.
But how are they going to use it? That's the whole point. And as
that's the
Shireen and
question.
everybody was pointing out, CAPEX is a priority which this government cannot give up.
And that has been the preferred route that the government has taken. But Parikshit, you wanted to make a point as well.
Just excellent points by Sapna and Timsi and Prashant. But one thing that I also just picked up, you know, when the Prime Minister had a meeting with economists, we hear from sources that there were a couple of economists in that meeting who said that, you know, having a fiscal deficit roadmap and target is good, but slight slippage is fine in the current environment if it helps you to revive consumption and growth. So that was just a suggestion from a few economists, but let's see what the government
does. And I would like to just add something more to this. So if you look at this year's nominal numbers, obviously GDP is lower, and it's lower by a massive 2.65 lakh odd crore. We all know that all the budget estimates are done on nominal GDP. So they had targeted 10.5, so obviously it's 9.7 now as per MOSPI. So these are the estimates that they'll be working on.
And MOSPI, for those of you who don't know, is the Ministry of Statistics and Program Implementation. Sapna's throwing all the finance
statistics and planning implementation.
I just want to say...
But okay, guys, this is the number one question that everybody's asking us. What happens as far as income tax relief is concerned? Timsi, what are you hearing? What is likely?
Well, what I picked up from my sources 15 days back was very clear. When it comes to the old regime, nothing is going to be changed. Forget it. Government has put that on the back burner. Yeah. When it comes to the new regime, government is cognizant that yes, something has to be done. North Bloc, in now this sort of a situation, what it does is it prepares the top 2 to 3 agenda points that it wants Prime Minister's office to okay on.
Okay.
And now what are these top 2 to 3 asks that they have put on the paper for PMO to approve? Firstly, move the slabs a bit on the other side, which is the latter half of the slab structure, coming down to, say, something at 15%, something at 18, say,
so
coming
move 15%, move 15 lakh to 18 lakhs, basically,
yes.
And that's why, so
and that
could 30% start coming in?
Yes, 30% need to start at a later stage, maybe at, say, 20 lakhs and above. Similarly, creating a slab in between. So 10 lakh to 20 lakh, which is the heavy loader, which shoulders the major burden for the country when it comes to yielding the taxes. That is where the relief needs to be, because the government feels that a relief in that bigger bracket can actually help boost consumption, because these people are going to buy more services. These are the people who are going to buy more goods. For example, cars. Cars are not selling, and they want the people in this pay bracket will have the power to buy these and then move the manufacturing cycle.
That's possibly one of the things that the government is actively working on. But as Timsi pointed out, it will require the Prime Minister's office and the stamp of approval from the highest authority to take that forward. But, you know, Surabhi, let's come to you now and talk about what tax experts make of the possibilities of this slab rejig and what kind of relief we could actually be talking about here.
No, I completely am with Timsi on this. I don't think anyone in Mumbai is expecting anything on the old regime, because it's kind of been, you know, sort of put in the graveyard. And the FMS said it several times that they want everyone to move to a new regime with lower deductions and exemptions and lower rates. Now, having said that, let's also remember that in July 24, the small tweaks and sweetening happened at the lower end of the slabs. I mean, that is when, just to jog everybody's memory back, we moved to a structure of 0 to 3, 3 to 7, and 7 to 10. So that's where these changes happened. And at the same time, standard deduction was increased in the new regime from 50,000 rupees to 75,000. Now, if you're in the old regime, you get 50,000 standard deduction. New regime, it's 75,000. You know, I've been speaking to a lot of people, and again, this is more hope, and maybe Timsi can talk more about this. There is hope. There is a lot of focus on housing, and we all know that when you're taking a home loan, whatever little relief you get, which is also stayed static in time, the principal is part of the ATC limit, which is 1,50,000. The interest is capped at, the reduction on the interest is capped at 2 lakhs. Now, there's a big push from the real estate lobby, even tax experts talk about this, that, you know, it's really housing for all. So why do you want to restrict this to people who've opted for the concessional tax regime or the new tax regime? But I don't know. My point is, if you start, and same applies to, by the way, health insurance premiums. Again, the deductions only there in the old regime. Well, if you start offering this in the new regime, because health is important, housing is important, then what's the difference? So I don't know how they'll do this balancing act. Maybe Timsi, Sapna, anybody, if you guys want to come in.
And this has been much debated, and at least previously the response from the bureaucrats has been, if you want a lower rate, then you have to let go of the exemptions. But there's also been talk about bringing back some sweeteners to incentivize people to switch to the new tax regime.
I agree. I would like to add over here on this. Firstly, let's see what the government has been saying so far. An exemption-free roadmap of reduced rates. Government is not in favor of giving any more exemptions, which is why the two regimes are there. And when, as Surbi pointed out, the last budget gave a sweetener in the lower part of the tax slabs, government was very clear that only now those who have a home loan would like to stick to the old regime. Others should move to the new regime, and that was the estimate, which to an extent has actually yielded the benefit of moving the taxpayers from the old regime to the new regime. Now, when it comes to the sweeteners, the two sweeteners which Surbi talked about is something that everyone wants, because traditionally we all were in the old regime because that was the only regime available. We all, at least from the middle class side, they have an aspiration to have a home, which is why having a home loan at a cheaper rate was a concept which got introduced in the economy, and government wants to actually push that further, and which is why that particular sweetener in terms of exemptions and deductions in the tax regime is something that people have been asking for, that should be replicated in the new regime. Secondly, as we started becoming more insurance-linked people, we all have a personal health insurance along with our corporate health insurances. So that again is something that a sweetener can be given. Recently on 24th January, SBI came out with a report, a budget analysis. And in the three scenarios that SBI, from the economy belt of SBI actually suggested, the suggestion was, why don't you get back these two sweeteners in the new regime as well, so that the money goes out, and yes, we get exemption, we have that sort of a cushion internally within my income, without any change in the tax slab.
Perhaps those two can find their way as possible sweeteners and also provide relief for those who are opting for the new tax regime or are in the new tax regime. But, you know, guys, I want to...
open the floodgates?
Well, it may open the floodgates.
Down the line.
As I said,
no,
so far they've maintained that we're doing away with exemptions, so one will have to wait to see. But I want to move this conversation to the markets as well, because, you know, there were changes on capital gains. Yes, Prashant, go ahead.
No, all I'm trying to say is, if they, as Surbi is pointing out, as Timsi is saying, they do nothing for old and they incentivize new, right? One sector to watch out from a market perspective is going to be life insurance companies, because it becomes unattractive. Life insurance is exemption under the old tax regime, and if you don't do anything on for the old and don't incentivize life insurance in the new, and do other things like, for example, taking the tax bracket, starting taxing at a higher rate, etc. So, that's I think about 5 or 7% of the premiums collected are sort of, are dependent on this. That's there was a report to this effect. So life insurance will be one space to watch if this is essentially how it pans out. And on taxes, I just wanted to say on a lighter note, I think Donald Trump in the US is saying abolish personal income tax.
We had the viewer, right, when we started this conversation.
Only because he hopes that tariffs can replace them, Prashant. So, we'll have to wait to see.
Just one point. I was just doing some calculation.
But abolish income tax, Donald Trump, Subramaniam Swamy has been at it well before Donald Trump. So we've had our own advocates for doing away with income tax for very long.
And not to forget, Donald Trump has introduced a regime to make in US at 15%, which India already had, and India has phased it out also.
Go India.
So India has been ahead on these two fronts already.
We might bring that back. But Nigel and Nimesh, let's talk about the markets now, because the expectation is let's leave things as is. We've already gone through a change as far as taxation for the markets are concerned just last year. So let there be status quo. What's the mood, Nigel?
Well, a couple of points, Shireen. I look at the live data with regard to cement as well as steel and how much is being moved via rail. Till around 10 days ago, it was actually a negative number if I look at January in comparison to last January. And the total amount of cement and steel that moves via rail is quite a large sum. And I'm taking note of this because it could be close to around 50%. But I'm just looking at the graph 6-7 days later, that graph has improved a little bit. So the need of the hour really is that capex spend, that capex number, because we're going to fall short from a market perspective as of what was budgeted as of last year. But on that low base, we want to see some kind of growth. So Nimesh, I think, from a market perspective, the need of the hour is stick to, that capex spend, need to boost up the economy. And just to be fair, the kind of measures that have come in from the RBI, I was reading a Macquarie note, I think there was a deficit in terms of liquidity, and there have been a couple of measures in that direction. Come February 7th, you're hoping that you'll get that rate cut as well. And there are some measures that have been taken in the recent past that suggest that maybe this budget will be good for the economy and in turn for the markets as well. But Nimesh, what else? I want, what I want? Nimesh, I go on talking about these SIPs, some tax exemption. You're putting money in this thing. If you put in your SIPs for the next 4 years, 5 years lock-in, you get some exemption. That's just my wishness.
So again, Nigel, from a market point of view, the biggest thing is, as what even Parikshit said, it's going to be a feel-good budget. Market only wants a feel-good budget. No negative news or no negative surprise will be really cheered. And simply because we've seen a very deep correction in the last 1 month, right? The mid-cap index, small-cap index down almost 15-18%. Nifty is down almost 10%. So there is a bit of carnage in the broader markets in the last 1 month itself. And now the hope is that budget will bail them out. So I guess, from a market point of view, I think, a lot of investors are waiting for this budget to bail them out. I don't know how much there could be
praying
in terms
for
of
deliverance. That's the last sheet for you. Praying for deliverance. That there'll be a magic bullet or bazooka that Madam Finance Minister will deliver on Saturday.
But Shireen, I want to ask you and the Delhi team is
again, I find this, and we've gone through this exercise for the last 25 years. Every year, the expectation is that there will be big bang reforms. Honestly, I think that we have to also be realistic about what the budget can do in terms of big bang reforms. And I think, we need to temper the expectations. I think as long as there is policy continuity, as long as the promises that you make are actually operationalized. I'll give you one instance for, today we're all talking about DeepSeek versus OpenAI versus India AI and so on and so forth. There was a 1 lakh crore rupee R&D allocation that was made in the budget, and a year down the line, in February, and a year down the line, it has not been operationalized. And here we're talking about, how much money is required for India's AI mission to sort of compete in the AI wars and so on and so forth. So I think if, we need execution of the ideas that have already been announced. There was the internship program announced in the last budget. Many of these programs are sort of, still work in progress. But I think the number one thing that, if there is a substantial increase, last time around, there was an 11 lakh crore rupee record capex number announced by the government. If they continue to go at that run rate, I think industry will be happy because let's be clear, that's still doing, the government spending is still running the economy. They're still doing the heavy lifting. What is private consumption at this point in time?
So if you look at the latest GDP numbers, it's virtually stagnant. So whatever lift you have got in the GDP so far,
because of the government.
Yep. I mean, they have sizably increased their capex from 6.5 lakh odd crores. They've gone to 11 lakh odd crores. And I don't think in this coming budget, whether the offtake has been lower this year for known reasons because of elections and etc. etc. But I don't think the government is in a mood or anybody can afford for the government to actually step back. They have to keep the foot on the accelerator. Maybe the pace of growth will come down as it did in the July budget also.
Correct.
They have paced it up. They made it more calibrated. But to say that they'll go back or something,
there's no question. There's no question
absolutely.
of the
In fact,
government
you can expect a higher number. You can expect a higher number, and a very quick, roundup of some numbers in the GDP internals, which came out on 7 Jan. So if you look at the gross capital fixed capital formation, 33.5% share in the GDP in the real terms in FY23, 33.5. It moved to around 33.8. It's again back to 33.5. I mean, it's just around.
Yes, it hasn't changed. It hasn't changed. That's telling you the story there as far as...
Despite the fact that the size of the economy has grown, but
exactly. So the share of private capex remains pretty much at status quo for the last...
I would like to add over here, just supplementing what Sapna is saying and what you are talking about. When it comes to capex, definitely the foot on the accelerator is something. And as you had pointed out in the beginning, because of the elections, there was a little pause. And that has had a trickle effect along with the global uncertainties. And now the government, when it comes to the implementation on ground, what I've been picking from my sources is very clear that a lot of these programs are work in progress. They could not see the initial push because of elections. And now government is very clear that the capex has not picked up to the extent, which is why expenditure has not happened the way they had planned. But this cushion also will now help them to shift a lot of those programs in this year. Again, when it comes to Manrega jobs, when it comes to a lot of infrastructure building, a lot of cement will get sold, a lot of steel will get sold.
But that's the hope, and that's what Nigel was pointing out to.
And yes, that's what government sources tell me, that this will also create a lot of jobs where there was a pause.
But also let's keep in mind that the rural economy apparently is doing slightly better than the urban economy.
That was the point. That was the point that Mangala was
So the
making.
jobs, requirement of jobs under Manrega actually has come off.
Yeah, because it is a demand-based scheme, and that was the point that Mangala was making, that the pain is shifted to urban as opposed to rural. Guys, we need to take a break, but a last very quick point from Bombay before we take a break.
So Shireen, from you and from the team in Delhi, the other ask from the budget, especially this year, this time from the market point of view is, will there be anything, with regards to attracting FDI and FII capital? That's something which a lot of experts have been talking about, on whether there could be anything that this government can focus on.
Okay, should we respond to that after the break? We'll get a biscuit here in Delhi and come back to you after a break. Stay with us. You're on the budget banter. There's a lot more coming up once we return with our team.
SMEs and businesses were introduced under this initiative during the pandemic, emphasizing self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an attractive destination for global investments. The optional personal tax regime, or the new tax regime in 2020, a simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes. Another such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments. The abolition of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our silver jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Well, the budget countdown has begun. Tomorrow is the day that the economic survey will be presented, and we will present the budget along with the Finance Minister Nirmala Sitharaman live here on CNBC TV18 on the 1st of February. We've, of course, been talking to all of our editors on what we're hearing about what the budget could possibly have. More importantly, we've been focusing on the pain points being addressed or being expressed by industry and being expressed by the Aam Aadmi, by citizens like you and me, and talking about the possible measures that the budget may in fact unveil. Just before the break, Nimesh, you were talking about what can the budget do as far as FDI is concerned,
exactly.
And is that likely to be a focus?
Yeah, that's what a lot of market participants want to listen to. Whether they will focus, whether they will do some schemes, they'll attract some FDI capital, or they will somehow do something for the FI investors as well. So that's a hope.
So Nimesh, if I could just add to this, because tax comes into the picture as well. Now, whether or not they do anything for FPI specifically, I don't know. FPIs have bbeen sort of crying about this for a while, that 12.5% capital gains is a lot when there are hardly any capital gains. But I'm leaving the FPI part of it aside. On FDI, Shireen, what I've been hearing from the tax world is that the rate of income tax for foreign companies is still higher than the 25% average corporate tax rate that Indian companies pay. So I don't know, if a foreign company decides to set up big manufacturing here in India and decide to commit big dollars to the ground here, whether they can get some sort of a concessional tax rate or not. Maybe that could be something to think about. Because anyway, Timsi has been reporting, even for Indian companies, I suppose that 15% tax rate for new manufacturing companies, that is supposed to come back in some format. Right, Timsi?
Yeah.
Well, yes, that's what sources had indicated to me middle of January also, that a concessional rate for setting up new manufacturing units, as we saw. And now we have Donald Trump actually talking about the same scheme in US. So that could put a pressure on the government, just giving that additional push to, yes, let us go back and reintroduce the concessional corporate tax regime.
Which was just phased out in 24.
Just here, March, we already saw 1 year extension on that because the government felt that, yes, due to the COVID lag, due to the 2 years that were lost during the COVID time, the scheme was launched in September 2019. It came in and immediately we had COVID. So to that, they tried to give a cushion of 1 year of extension. Earlier, it was supposed to phase out in March 2023. Then they tried to delay it by 1 year to make up for the losses to the COVID. And now the buzz that is there, or what sources are indicating, and as per the industry demands also. Remember, all of this is not just purely what government is also getting as a feedback,
so basically,
and then reacting to
so
it.
we're possibly likely to see the concessional scheme for new manufacturing units, whether it's a 15% rate or an 18% rate, may find its way back in this budget. But, you know, other important aspects, Sapna, and this has to do with the insurance FDI. That bill is likely to be brought in the budget session as well. You know, there was also the promise of overhauling the FDI regime itself that was promised in the last budget. Direct tax overhaul, but that's likely to be more on the lines of simplification, not rate changes.
Absolutely. So picking up first with insurance, you know, this has been since what, July, August last year that we have been talking about it, expecting it to happen. So the expectation was that probably in the winter session the government would have brought its bill. But that has not happened. We're given to now understand that obviously budget session is in two parts. So post-recess, 100% this FDI insurance cap is likely to be raised.
Right.
But there's one just small little point that I'd like to mention here is that even under the existing FDI cap for the insurance sector, probably the investments are not to the extent which are required, or they're not really touching or crossing the threshold. Probably what the government here is attempting to do is give a signal to the foreign investors. Exactly what we're talking about at the moment, apart from, of course, making a host of facilitations internally for the domestic players.
As she says this thing, that the second half of the budget session could be crucial when it comes to, again, signaling to the domestic players. There could be a new law on the income tax side, which is expected. Government in the July budget actually laid a clear roadmap that come the next February budget, the full budget that we are going to see, where we are likely to present a simplified direct tax regime, replacing the age-old Income Tax Act of 1961, which is too complex, way too complex. Too many additions have happened over the years. And this time it is morely on simplification of language, bringing in certainty that, yes, what we spoke about, we are getting it. Similarly, on the manufacturing side, almost 200 plus exemptions under the custom duties are right now under review. That was also a roadmap laid by the finance minister in the July budget, that could come in and again, it would need some approvals from the parliament. And as Sapna pointed out, the second part of the budget session, which meets after the recess in March, that is going to be a crucial one to look out for these changes.
We've got questions coming in. Ayush Khandelwal writes in saying, will the budget introduce a subsidy for higher education loans? There was some measures that happened last time around, Parikshit.
You know, one definitely can't rule that out, and I hope there is a good amount of support for education, Ankush. The reason why I say that, you know, in the last budget, Shireen, the outlay was 1.26 lakh crore overall for the education sector. We're expecting a higher outlay this time around. Last time in July, the finance minister had announced that there will be financial support for loans up to 10 lakh for higher education, direct e-vouchers to 1 lakh students, annual interest subvention of 3%. My sense is, and what we get to know is that considering the big focus on AI, semiconductors, skilling in future technologies, it could be higher education in these sectors which could be given an impetus.
Okay, so we'll have to wait to see what the finance minister does decide to do. Another question, Disha Gala writes in saying, what are the big measures the government can announce to reel in inflation? Sapna, on the supply side, you know, any measures expected?
Well, not really as part of the finance minister's budget speech, so to speak, so to say. And also, let's keep in mind one thing, it's basically not the headline inflation, which is a very big worry at the moment.
It's food inflation.
It's basically food inflation. That too has been trending down. If you look at the last couple of months, or like 3 odd months, though of course the food inflation rates are much higher for rural India rather than urban India. So that's where the action is required. But then again, the trend is coming down.
And it's not so much an issue as far as the budget specifically
Absolutely, but
is concerned.
But on the macro level, this is something that
the macroeconomic stability.
And government has been addressing it.
Absolutely. Sarath Rajkumar writes in saying, year after year we talk about tax reforms and job creation. Will Budget 2025 address these long-standing issues, or will it be more of the same? I'm going to throw this to all of you in Bombay to respond to.
You know, let me try and get a quick dipstick going, Shireen, from the Bombay panel here. We've discussed, FDI, FPI, we've discussed CapEx, we've discussed the big budget numbers. But, quick quiz. If the budget does not address consumption at a middle mass level, it's always the fag end or maybe the super rich. If it doesn't address the bulk of the middle India consumption, will the market fall or not? Prashant?
Look, it depends on the size of this, whatever stimulus or whatever we're calling it, right? Is it meaningful? But if there is nothing, look, this is, I think my Shireen has done 25 budgets. This is, I think, 20th or 21st. I think, my lesson is keep expectations low. The key to happiness in stock markets. And
not answering.
It's not, because I think it's, there is very little leeway. Actually, if you ask economists,
that is the message.
Keep expectations low.
Yeah, I'm telling you, because we at this time particularly expectations are running low, and I think it's a good thing. Expectations are low.
If I've been hearing everybody say no, consumption. Okay, Nigel,
I'll tell you my take. I think the markets will look at that capital expenditure number. That is the most important number according to me. That is on this on February 1st.
CapEx.
On February 7th, they will look at the RBI to hear about what kind of liquidity they can inject. These are the two most important triggers.
We'll learn to live with it. If there's no tax cut, we'll learn to live with it.
Prashant are great friends, and but I think the stock market participants are expecting something from the government.
I agree with that.
They don't want anything negative with regard to the taxation. And if we get these three, that is no tinkering with regard to taxation of on the stock markets, getting a good capital expenditure number as well, and we'll get the liquidity infusion, from the markets will see a solid rally from here in the near term.
So even if there is no tax cut,
for me,
the
capex
market
spend is most important. Capex is most important.
ये biscuit का growth कैसे होगा?
Very quickly.
Let me just say one thing. You can pencil in the Nigel. Problem is not the capex number. The capex number is strong last time also.
No, the deployment. I'm saying deployment.
Execution of capex.
Execution. This time also, capex is we're going to spend 15% less than what was budgeted.
So on that base, we should see a good jump.
11 can go to 12, 12.5. But that is
I think the highest estimate is 12.
Correct. So it can go to 12. But the point is, there is only so much state capacity to deploy. That is essentially the point which many have made.
Yes.
So,
but I'm asking a bigger question. I'm not diluting or debating the point on capex. I'm saying, is the market's mood different? Capex we say every year. This year, is consumption the big cry? Nimesh?
I don't think so. So from a market point of view, what Nigel said, even I believe, see, there were two reasons why markets was not doing good. One was the liquidity problem, which I think the RBI to some extent is addressed. Maybe further will come in terms of rate cut. The other was the lack of execution in terms of government capex. If the government focuses on that, this is the capex number, and we are going to give a roadmap on the execution part, I think we are done. Markets will cheer, and it will take care of the two big problems which have crippled the markets in the recent memory. So only two things: one, RBI policy, and second,
let me ask
if they focus on capex.
The in-house consumption king, because till now this panel is saying it's okay, even if we don't get those personal income tax cuts, as long as capex is there, the market will rise.
I want to add a question.
Yes.
I want to add a question for the consumption king. Ria Shah has written in saying, how much longer will FMCG stocks pinch my portfolio? Mangalam, all yours.
What do you think, Mangalam?
Just a couple of things, Ria. Most important for the budget is that, yes, they can do capex, they can do all of that, but I'll go back to what Parikshit said. It has to be a feel-good budget, nothing else.
Absolutely.
Because from a number standpoint, they can't do much. You're talking about standard deduction, just adding a number to that. From 75,000 emails, that goes up to 1 lakh rupees. That gives you 625 rupees extra per month. What are you going to consume with that? So the only way consumption can be... More of this, perhaps not. The only way consumption can be pump-primed is if you have better job opportunities, you have more, or at best you can pump prime, say something like auto consumption or housing, etc., where people, high ticket items are, sort of incentivized to consume. Low ticket, perhaps not. From an FMCG standpoint, and one of the questions, which is most important from the audience standpoint, and none of them dare to ask it on television, will my cigarettes become expensive?
I was about to this. I was about to tell.
Stock to play
on the budget day, watch out for Mangalam.
Exactly.
Talk
The
about
only
ITC.
stock
That's
to
been
play
the
on the budget.
No sympathy item that budget addresses.
No sympathies
sin
there.
items.
No sympathies there.
Absolutely
Even
no
if they
sympathies there.
do decide to hike taxes there, no sympathies
Shireen, we totally agree.
on that front.
No sympathies on that front. No encouragement of smoking. Absolutely, on it from a principal standpoint, but from a portfolio standpoint. And since Ria asked as well, the most important thing, the only stock to play on the budget is ITC. The maximum range available in terms of a high to low in a stock on the budget day is only ITC. So if you had to summarize the budget in just one stock, irrespective of all the numbers that we're talking about, ends up being ITC, because the budget makes or breaks ITC.
And
one thing we're looking at,
and I'll just add
5%, if the overall tax incidence on cigarettes is more than 5%, it's mild negative. But then if it's below that, then ITC is the stock that you have to look at.
And I'll tell you what, the person who will tell it to you is Mangalam. He's got it spot on. All the last few years, we sit together, so I know that. The minute...
There is also, 6 mm, the 15, all that, right?
64 mm. That's
I'll
manage that.
I'm telling you, Mangalam, full teetotal or not, he knows, these numbers.
Shireen, can I ask, I just had one question. Will we see big changes in customs duty, etc.? I mean, in the budget, is that an expectation? Because because of what's happening,
there are likely to be changes. But the question is there likely to be any preemptive action on duties? Remember, India has been hiking import duties over the last several budgets now. Are we likely to see any move there beyond the correction of inversions and so on and so forth? This is a Trump regime. Trump has gone after India, saying that, look, you better be careful. We will retaliate with tariffs. You need to do more as far as cutting down tariffs is concerned. Is this going to be the budget that does something on tariffs to send out a signal? And Parikshit, you wanted to make a point on that as well.
On tariffs, especially, our priority would be to attract more investments and have a close relationship with US under Trump. Now, a lot of this may happen outside the budget as well. We will be negotiating a trade deal. It's definitely on the table. So we'll see that. And on FDI and attracting more investments, as Nimesh was pointing out, even if there are no new measures, the government in the previous budget had said that we will make moves towards easing the ecosystem for overseas investments. But at the same time, there may be a messaging that we will make the taxation system completely simple. We will decriminalize laws. We'll protect honest taxpayers. Ours is a stable tax regime, and there is policy continuity. There will be... The industry hopes that there will be no new laws. The existing ones will be better implemented. So this is the kind of messaging that the industry is hoping for.
No, absolutely. And I think that's the point that's been made here by all of our editors, that the hope certainly is that the government sticks to what it's been doing and what it's been doing well, which is actually doing the heavy lifting as far as infrastructure spending is concerned. That should continue, and that has been driving growth. And hopefully that will provide the kind of consumptive power that everyone's been talking about, provide some relief. The bottom is clearly, the middle and the bottom are hurting at this point in time. What can be done there to alleviate some of the pain? We are likely to see some sweeteners being provided, some relief being provided. That's a given. The quantum, of course, is up for question at this point in time. And finally, I think signaling that, deregulation, ease of doing business, readiness and willingness to integrate with global supply chains, policy continuity, predictability, I think that will be the key messaging that the finance minister will hope to deliver on as she presents. And guys, this is going to be a historic 8th budget for Nirmala Sitharaman, as she stands in Parliament to deliver her 8th consecutive budget. And of course, remember, it is a Saturday, it's a working weekend, the markets are going to be open. And we're going to be open decoding and analyzing the budget, but we have to banter down now. We're completely out of time, but it's been fun. It's been fun chatting.
Shireen, when you started the show, you said y'all had the biscuits and tea. Well, we got even with y'all by the end of it. Biscuits and tea.
That's exactly what the budget is, right? Some get it at the start, some get it at the end. In the end, everyone goes happy, just grabs a biscuit. And maybe that's how we end the banter.
That's what the budget is about. That's what the budget is about. Some start with more in the beginning and some end up with more at the end. And that is certainly going to be the hope that a lot of people will have with the budget this year. But thanks very much, guys. Surbhi, Nigel, Mangalam, Nimesh, Prashant, Timzi, Sapna and Parikshit for joining us here on the Budget Banter. We're going to take a break. Remember to tune into CNBC-TV18, India's budget headquarters for the last 25 years. TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now, and happy to see what it's doing today. And I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think the bulls take some control. Auto as a sector, auto and FMCG and even PSU, these three baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind you, if you look at the mid caps and small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again,
please look at the context of the rise in mid caps and small caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible. I think the biggest disconnect for most market participants in India is, for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market, because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets, because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So a deeper cut from current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here and possibly get past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think
Hello and welcome to the CNBC-TV18 special. We're coming to you from Davos 2025, and as I've been telling you here on the program, there is a different approach that India has taken, and here's what's new, here's what's changed. It is an all-in-one. So you have, of course, the central government here, headed by Minister Ashwini Vaishnav, who's here with us, but you also have India being represented by states, but the states now are all housed, well, technically under two roofs, but nevertheless, it's an all-in-one approach that's been taken. Mr. Vaishnav, many thanks for joining us. You know, this is a first that India is doing, and this is what's different this time around. Take me through what was the thought process here.
Well, the thought process was that India Pavilion should be unified pavilion. It should be integrated. And our Prime Minister, Shri Narendra Modi ji, got this feedback last year after last Davos. And he insisted and he gave us a very clear thought process that we should have all the state pavilions integrated within the India Pavilion. Then we spoke to the chief ministers, and all of them were very happy to actually be a part of this thought process. And that's why we have this entire India Pavilion.
Yes.
One unified, one integrated pavilion.
Absolutely. As I said, technically under two roofs, because you have Maharashtra, Andhra Pradesh, and the third one over here was...
so logically it is one.
Yes, that's right.
The same
that's
thing.
right. And then, of course, you have on the other side, you have Telangana, UP, and Kerala. But Mr. Vaishnav, let's start by talking about the pitch here that you continue to make to investors in an AI-driven world, in an AI-led world. You've just finished a roundtable with people in the semiconductor space.
Yeah.
What's the feedback that you're getting? What's the status update on semicon?
So the confidence that people have on our government, on our policies, on our leadership is huge. What we can see very clearly is people had a lot of skepticism a few years ago, but now they are very clear that India is having a consistent growth. India's policies are very clear. Prime Minister Modi ji's entire thrust on having a very strong technological base in our country is very real. So people today in the morning, they were saying, just 3 years back, we heard that there is a semicon program starting in India. And today you have 5 units where the construction is in very advanced stage. And the first chip will roll out in this year itself. So that gives a lot of tremendous confidence to the people. So we just had a small kind of announcement that Inox will be the materials partner for Micron as well as Tata's. And that's a very big thing, because we were used to manufacturing in parts per million. Now we have to manufacture chemicals, gases in parts per billion purity, right?
Yes.
So that requires tremendous investment in R&D, in your manufacturing capabilities, in the process. purity. So all that thing is happening now. So that gives a lot of confidence. The second thing is people know that we have a huge AI talent pool in the country, and people have taken very strong note of the approach that we have taken. We have taken this approach of having public investment to create a AI 10,000 GPU compute facility, which will be available to everybody. So I heard in the morning session as well as yesterday and in this session also, people really like this facility because the startups don't get the opportunity to have that compute facility. And in our case, because our Prime Minister always says that we must democratize technology. So democratized technology means it should be accessible to all. And this is one construct that we have been able to very successfully create. So this was also highly appreciated.
You know, you're talking about the compute power and of course the 10,000 GPU order that the government has put in place, and the RFP of course is out also. But I'll ask you about the big announcement that's come in from President Trump overnight, and that is the $500 billion Stargate fund, you know, with Sam Altman and Masayoshi Son and Larry Ellison and others getting together. When you see capital of that kind, Mr. Vaishnav, and you look at what India's aspiration is to play in the AI game, do you think we need to do much more in terms of portioning capital for, especially on the infrastructure side?
That's very true. But of course, even in that, rather I would say, every project which is happening across the world today, India is a big contributor to that. Our talent pipeline is the biggest pipeline that we have, right? And the quality of talent is improving every day with the Future Skills program, with the way the industry is so closely integrated with our talent development program. So this is another thing that we heard from multiple number of meetings that we have had, that this whole idea of integrating industry and university system is very good. So that's being appreciated. So yes, we definitely, our approach of having the 10,000 compute is great, but definitely we need to do much more. We are also looking at, we are actually evaluating, developing 25 chipsets which are critical for our industry, critical for our strategic needs, where we can have those chipsets designed in India, then fabbed in India. With the fab coming up, we are looking at the next phase of the fab. We are right now working at 28 nanometers. Can we have that next level 14 nanometer where the IP also is vested in our country? Right. So we had very good discussions today morning, and the approach that the Japanese have taken probably will take the same approach, where we partner with some R&D institutes. We have shortlisted 2 of them, already have some MOUs with them. Take that IP from where it stands today and build upon it. So multiple things are happening. So that's why I would say that in every program which is happening in the world, India will have a major role.
Major role, but you know, just on the capital side, do you believe that Semicon 2.0 will require a higher allocation?
We are working on it, and our approach again, as you would have noticed, right from day one we were very clear that ecosystem has to be developed, which means the gases, the chemicals, the equipment. So we will be focusing a lot more on the ecosystem this time. We'll have a lot more allocation and a lot more focus on getting the chemical and gas manufacturers properly settled in India, established in India. And we'll also do a lot more on the design side. So once we have the fab, then the right time to have our own products in place. That's the that will be the focus of Semicon 2.0.
Okay, let's talk about the other big development, in which is President Trump in the White House. Of course, the External Affairs Minister has met with his counterpart in the US post the inaugural. We have the ISET between India and the US, which focuses on the partnership on critical and emerging technologies. What's the expectation? There was a lot of progress that was made on these areas under the Biden administration. What's the hope that you have now with this present regime?
I think this will accelerate. The fundamental point of Prime Minister Modi ji's thinking in terms of technology, in terms of economy, in terms of foreign policy is trust. And trust is a very important element in our relationships with US, with Europe, with Japan, and that has really helped us get the MOUs and MOCs signed because people really believe that yes, India is a country, India is a geography, it's an economy which can be trusted. And that trust is going to accelerate our cooperation, I would say.
So what would the expectation be? What would be the focus areas that you would like both sides to prioritize when we talk about technology?
So critical minerals will be a very important priority. Then we would have quantum, we would have AI, the way models are getting created and the way models will be used in future. Can we have more focused models which are suitable for our own needs, for solving our problems? These will be important. Semiconductor supply chain, value chain will be a very important part of it. Apart from that, many emerging technologies where we can contribute a lot through our talent pipeline. They will also be part of the, and research, well, where we have last year we decided to take up some joint research programs. That will also be a focus area.
You talked about some of the countries that we enjoy a trusted relationship with, but let me talk to you about China, because that has been, of course, a fraught relationship, but there is now a movement as far as the border-related issues are concerned. Will that lead to engagement on the economic side as well? And I'll ask you this in the context of the aspiration that we have for electronic production in the country. We've done very well on that front in the last 2 years specifically, but there are now concerns of perhaps a slowdown on the part of the Chinese from the movement of people point of view as well as components. Do you believe that there is a need for engagement on the economic side with China?
As our External Affairs Minister, Dr. Jaishankar, has said, it's a very complex relationship where the governments of both the countries are deeply engaged in finding the right way forward. What I would like to say is that our next step of having the component ecosystem in India, that's progressing very well. We have completed the entire structure of it, which are the focus areas where we would put the maximum energy on. And what has happened, you would have noticed yourself since you do that very interesting program of Young Turks. So you would have noticed that quite a few supply chain partners, quite a few Indian manufacturers have really gone up on the learning curve. And the confidence that many of these players have is phenomenal. I was just talking to the HP laptop manufacturing, the head of that company, HP, Mr. Lores. He said that now we are feeling so confident within such a short time frame of 2 years that we would like to set up a complete R&D facility, complete design facility in India now, along with the partners that they have selected. Same is the case with the HP Enterprises. Server manufacturing, the HP Enterprises chief told me that they are now ramping it up to almost 4,000 servers a month. And the entire design work will be done in India. So what I would like to say is that the learning curve challenges that we had, let's say 5 years ago, 7 years ago, that is significantly lesser now. Yes, there would always be, when you want to start something new, it will have its own challenges. But I think our country, our industry, and our policy framework is today capable of taking it.
Well, talking about policy measures and PLI scheme for the electronic component space has been talked about. Is that likely to be announced anytime soon, sir?
We are working on it, and very extensive. As you know, we believe in extensive consultations with the industry. So that consultation process is practically in its last rounds. I would like to announce it once it is approved by the cabinet. As you know, that's the right way to do things.
And how soon before you take it to cabinet?
I think it should be, we should be able to launch the program in coming couple of months time frame.
In a couple of months time frame. So that's as far as the electronic component PLI is concerned. You know, when we were here in Davos the last time, sir, you had spoken about why you believe that there was legitimate reason to bring down import duties on some components, and that continues to be the ask from industry on more components and a tariff reduction in general. With the Trump regime in place, do you believe that the need of the hour will be to preemptively look at what we can do on tariffs across the board?
It's more of simplification and having lesser number of slabs, so that the confusion between one component to other component is not there. As you know, in electronics, the way components can, so each component has to pass through multiple borders by the time it becomes a module. So that means a component with, let's say, another very, very small subcomponent added to it can change the classification. So what we want is a very simple, very clearly defined classification system, and we'll continue to work on that direction.
So not a rate reduction necessarily?
That comes as a part of it.
Okay, so that will be, so a rate reduction as well as simplification is what you're hoping for?
So yeah, it's a more complex thing than these two words put together.
I would imagine, but is it likely to be linked to the budget?
Let me not speculate anything on that, but yes, we are constantly engaged with the industry.
Okay, let me also ask you this in terms of what you're hearing from industry, and as the former telecom minister, the AGR issue continues to be on the table, and one is hearing that perhaps the government may provide some relief there, even though there are Supreme Court rulings against that. Do you believe that there is a need for the government to look at further intervention to provide some relief and support when we talk about the outstanding issue of AGR? Reports certainly seem to suggest so.
You'll have to ask this to Mr. Sandhya.
But as the former telecom minister, what do you feel, sir?
I wouldn't like to comment on that.
Okay, fair enough.
To the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited, but as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited. For the last 4 years, since the time we started rallying from the COVID lows, every time there has been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen, because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a charts perspective, your maximum downside is about 2 to 4% from here, and upside is about 20%. So as an investor, I want to plan for the same.
History as the first woman finance minister to present her 8th consecutive union budget. From replacing the colonial era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her leadership. Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The credit guarantee scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this scheme provides collateral-free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme. Announced in the budget 23-24, this initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers taxpayers a chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of measures supporting MSMEs and businesses were introduced under this initiative during the pandemic, emphasizing self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an
Welcome back. You're watching our conversation here from Davos 2025. We're talking to Ashwini Vaishnav, who heads the delegation here for India. Mr. Vaishnav, we were just talking about the progress being made as far as the AI mission is concerned. What will be the priority in 2025?
So, three topmost priorities will be getting the compute power ready, where we have completed the RFP process, and very soon the price discovery and everything else will be in place. Second will be talent development, as you have seen in the other programs on technology. Our focus on talent development is very much aligned with the industry. So in case of communications, we had labs, 5G labs set up in 100 universities so that the students can get the real hands-on experience of working on 5G technology. In case of semiconductor, we have it in 240 universities where students are actually designing chips using the latest tools. Same thing we are doing in AI. So very large number of universities we are tying up for getting the AI readiness as well as AI research and getting the application experience. That's the second thing. Third is a very interesting approach, getting the data sets ready for AI, right? We have large data sets of non-personal data, transportation data, we have agriculture data, weather data, logistics data. How can we use it to create data sets which are ready for AI? That's the third thing. Outside these three top immediate priorities, we are also working with the industry to understand how we can have our own models, what kind of models we should prepare. Should they be general models or should there be focused models?
Right.
And in parallel, we are also working with the industry to look at, in a time frame of 3 to 5 years, can we have our own GPU?
Okay.
And all these developments are happening in a very systematic, very methodical way. Hopefully in a near time frame, near future of let's say 6 to 8 months, we would have crystallized these thoughts on model as well as chip. But the other parts, we are moving ahead in the execution phase.
Let's also talk about the rules that have finally been put out by the government, and of course the consultation process is on for the data privacy and protection rules. There has been feedback that's come in from industry. There's been feedback that's come in from the side of the advocacy groups as well on balancing the interests of consumers and citizens. And I was speaking with the secretary, and he said, well, if both sides are unhappy, then it means that we've done something right. But how do you look at the feedback that's come in, and do you believe that you may need to extend the consultation period before you notify the rules?
We must understand one thing, that the rules are basically within the ambit of the Act.
Yeah.
And the Act was drafted with very, very extensive consultations, going over many years, in fact. And the consultations led us to a framework which is the right balance between innovation and regulation. And I think even here at Davos, people have noticed it, and people have, in fact, somebody has, a very senior person has actually said it, that this is the template that the world will follow now. It won't be the GDPR anymore.
Because you believe that stifles innovation.
That stifles innovation, you're right. So within that ambit, the rules have been framed. And so far, the feedback that we have got on rules from practically every stakeholder is very positive. a few tweaks here or there. That's all that is needed. Otherwise, everything is... See, the approach is very practical approach, very commonsensical approach. The approach is that technology will change. We must not hardcode things. We must not make things prescriptive. We must, as the act was, we must have the rules also very principles based.
Right.
And as you know, it's a complete digital implementation. So that entire framework has also been prepared. So I think we are in good shape.
Okay. Let me move from digital infrastructure to real infrastructure and the physical infrastructure. And that's where the government has been doing the heavy lifting as far as capex is concerned. And that has been, of course, driving growth in the last few years. Do you, believe that that is going to have to be something that the government continues to do, because private capex is still, not at the level that is required for us to be able to drive the kind of growth rates that we aspire for? And specifically from a railway standpoint, what's the expectation as far as capex goes?
Yeah, 3 questions in one question. So I would like to take the third question first. Railway, our capex, we have already done about 77% of the capex for the year by now. It's progressing very well. We should be able to complete 100% capex program somewhere in the middle of March, so which is very good. And the progress on the grassroots at the ground level is very clearly visible. Our mobility has improved, our punctuality has significantly improved, safety has substantially improved. We are able to carry more people. Last year we carried about 695 crore people, and this year we'll be doing about 750 crore people. We carried almost 1,600 million ton cargo last year. This year we'll be doing 1,630 million ton cargo. So that is very good growth, and that is helping us meet all the costs that we have. Electrification is practically about to be completed, and the pace of construction is very good. Station construction, coverage installation, everything is, I would say that it's as per our expectation it is going on. On the first and second question that you asked, see, our economy in our GDP, because of the policy paralysis of the UPA government, the capital investment as a percentage of the entire GDP had gone down to as low as 27%, 28%. That has now steadily come up in the last 10 years, and today it has already crossed 30%. It's now 31%, which means in an economy of about 300 lakh crore rupees, 31st March it will be 320 lakh crore. In that economy, 30%, so 90 lakh crore, right? Government capital investment is about 11 lakh crore. So 90, 11, right? That's the balance is the private capex. That balance part is private capex.
Right.
So people must, I would request the economists and others to do this math before saying that private capex is not there. Private capex is there. Yes, it must have a much greater pace.
Right.
It must be much more broad-based. And that's our approach. That's the way our finance ministry is driving the policy. That's the way our finance minister and the Honorable Prime Minister is driving the entire policy paradigm. I think it's a very steady growth. I think it's a very steady economic policy. Today morning we had a session with many funds. Most of the funds believe that our trajectory is very steady in a good 6 to 8% real growth rate with moderate inflation. So most people believe that yes, this is a good strategy, a good consistent growth rate that India will have.
And the policy will continue to be with the government spending on government capex and growth being driven by government capex, at least for now.
So that's that I would say is one of the triggers.
Right.
But other triggers like manufacturing, the triggers like housing, the drivers like getting the innovation and efficiency, the productivity, and all those triggers all help in growth of GDP.
So let me end by
yes,
of course. Let me end by asking you, Mr. Vester, before we let you go, what will the headline be then for 2025 from an India standpoint?
Trusted country, very clear, very stable political regime, very stable policy regime, good focus on inclusive growth, what we have done in the last 10 years, yes.
Well, we wish you the very best of luck here in
Thank
Davos,
you.
and thank you very much for joining us here and for explaining to us the areas that you will focus on and what some of the opportunities that the government hopes to leverage on will entail in terms of policy action and policy measures. That was Ashwini Vaishnav, the man who is leading the Indian delegation here at Davos 2025, giving us a snapshot of what the year ahead looks like. We will take a break. There's a lot more coming up with our conversations that continue here, but don't go anywhere. We will join you again from the World Economic Forum's annual meeting right after this.
For global investments. The optional personal tax regime, or the new tax regime in 2020, a simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes. Another such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments. The abolition of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty gain for the third straight day after a range-bound session. The Nifty moves past 23,200. Mid-cap index closes flat.
We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy.
The U.S. Federal Reserve leaves the key interest rates unchanged in a widely anticipated move after 3 consecutive rate cuts. Fed Chief Jerome Powell says no need to hurry and adjust the policy stance. President Trump blasts the Fed, saying it failed to control inflation and did a terrible job on banking regulations. Microsoft earnings beat street estimates, but the cloud business growth hits a speed bump. Stock slips on the back of a weak revenue guidance. Meta shares surge after the company reports a beat on revenue and profit. Zuckerberg hints at a really big year in artificial intelligence. Tesla misses estimates. Automotive revenue drops 8%. SEBI restricts financial influencers from using livestock prices to give trading advice, even under the guise of educational content. Says that they can only use stock prices with a 3-month delay, bars regulated entities, including exchanges, from associating with those who violate the rules. With 48 hours to go for the union budget, sources say the government is likely to announce measures to provide some relief to the middle class and increase their spending power. weighs potential tax relief for those earning up to 15 lakh rupees an annum. Also considers steps to boost manufacturing and MSMEs. That's an exclusive. The Union IT Minister Ashwini Vaishnav confirms that India will launch its own artificial intelligence model within the next 10 months. Says at least 6 developers have been identified who can roll out within this time frame. Says the government brings the table the compute power of 18,600 GPUs. Of them, 10,000 are already in India. Union Minister Vaishnav also says the government will soon host Chinese AI platform DeepSeek on Indian servers. The move is aimed at addressing data privacy concerns and enhance India's AI capabilities. An American Airlines passenger plane with 64 people on board collides with the U.S. military helicopter mid-air near Washington's Reagan Airport. 19 bodies have been recovered so far. The U.S. figure skating team was reportedly on the flight. But straight to the day's trading action. The Lal Street ending largely higher, with the market managing to close in the green for the third day. The Nifty held on to 23,200, supported by Reliance. The Sensex up by 226 points, 146 points higher on the Nifty, with the mid-caps absolutely flat, closing in the red today, down by about 5 points. So nothing much to speak about there. But the big global story, the U.S. Federal Reserve left key interest rates unchanged in a widely anticipated move after 3 consecutive rate cuts. Addressing a press conference, the Federal Reserve Chief Jerome Powell said the central bank is not in a hurry to adjust policy stance as the U.S. economy remains strong. The central banker also reiterated the Fed's commitment to achieve the 2% inflation rate. Furthermore, the Fed said that he had no contact with U.S. President Donald Trump. Trump, however, renewed his attacks on the U.S. central bank hours after the decision. In a social media post, Trump said the Federal Reserve and Powell had failed to stop the problem that they created with inflation. Listen in to Jerome Powell's comments on the rationale behind the Fed's decision, as well as Trump's World Economic Forum speech last week, where he demanded that the interest rates drop immediately.
With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
That's the Fed chief saying no contact with President Trump. In global earnings, tech giant Microsoft's Q2 earnings ahead of street expectations. However, the company provided a disappointing quarterly revenue forecast. On an annual basis, the company's revenue grew 12.3%, marking its slowest quarterly growth since the middle of 2023. Its cloud computing business growth was lower than expected as well. However, Microsoft has started the growth of its artificial intelligence business after raking in $13 billion in annualized revenue. That's Microsoft for you. Meta's Q4 numbers ahead of estimates on all counts. Revenue for the quarter at over $48 billion. Earnings per share came in at over $8. Sales jumped 21% on a year-on-year basis. The tech giant's Meta AI chatbot crossed 700 million monthly active users. The company said it expects user count to reach the 1 billion mark this year. Meta announced a $65 billion capex investment to fuel its AI strategy. It also plans to cut 5% of its staff in the coming weeks. Tesla reporting a weak set of numbers in Q4 on both revenue and profit. The company's revenue stood at over $25 billion, registering a 2% growth sequentially. The core automotive revenue down 8% to nearly $20 million. Net income dropped a significant 71% on an annual basis. That's Tesla for you. But the terrible news coming in from the U.S. An American Airlines aircraft carrying 64 people on board collided with a U.S. Army helicopter mid-air just moments before landing in Washington's Ronald Reagan Airport. Both the aircraft crashed into the Potomac River. At least 19 bodies have been pulled out so far. As per last available information, the flight was arriving from Wichita in Kansas. This appears to be the worst air accident in the country in the last 15 years. Massive search and rescue operations began after the incident, with around 300 first responders arriving at the scene. All takeoffs and landings from the Reagan National Airport have been temporarily halted. US President Donald Trump called the crash a bad situation that should have been prevented.
Multiple deaths have been reported after a passenger jet and U.S. Army Black Hawk helicopter collided mid-air and crashed into the Potomac River Wednesday night near Reagan Washington National Airport. Police said several agencies were involved in a search and rescue operation in the river. The airport said late on Wednesday that all takeoffs and landings had been halted as emergency personnel responded. The Federal Aviation Authority said PSA Airlines was operating a regional flight for American Airlines, which had departed from Wichita, Kansas.
I'd like to express our deep sorrow about these events. This is a difficult day for all of us at American Airlines, and our efforts now are focused entirely on the needs of our passengers, crew members, partners, first responders, along with their families and loved ones.
The number of people on each aircraft, 64 people on the American Airlines plane and 3 people on the military helicopter. The focus now is rescuing people.
American Airlines said 60 passengers and 4 crew were on the plane. A U.S. official said 3 soldiers were aboard the helicopter. NBC reported that 4 people had been recovered from the river, while the Washington Post said multiple bodies had been pulled from the water. The National Transportation Safety Board said it was gathering more information on the incident.
Well, terrible tragedy there in the U.S. Back home, SEBI has restricted unregistered financial influencers from using live stock prices to give trading advice, even under the guise of educational content. The market regulator's new rules mandate the use of stock prices with a 3-month delay. Yash is standing by now with more. Yash, tell us about the other curbs that have now been imposed by the market regulator, taking away any ambiguity that may have existed.
Well, in August 2024, market regulator SEBI had come out with regulations which essentially were intended towards ending the association between SEBI registered or regulated entities and the unregistered financial influencers and other unregistered entities. The final set of regulations or the clarifications to the previous regulations could well prove to be the final death blow when it comes to eliminating these financial influencers out of the system by breaking their revenue model itself. What market regulator SEBI has said is that financial influencers which are unregistered cannot provide any advice or recommendation directly or indirectly about any security. They also cannot make any claim of returns or performance through the content which they put out. The onus or the responsibility will be on the listed or the registered entity to not have this association with unregistered influencers. Otherwise, there could be penalties, there could be cancellation of licenses as well as far as these registered entities are concerned. One very interesting distinction which SEBI has made between investor education and promoting financial products by unregistered financial influencers is that it has said that any financial influencer, if is interested in promoting investor awareness, investor education, then for any sort of illustration, if he's using a price of a security or the chart of security, it cannot be off the previous 3 months. It will have to be before that. Also, these influencers who are wanting to promote investor education cannot sort of express the kind of past performance that they've had or sort of show the results that they've provided to their subscribers in any form through their content.
This is kind of a lazy way of regulating, really. Instead of going after the person who's violating the law in terms of making recommendations without license of either research or investment advice, you're basically saying, like Deepak said, anybody who walks in a road which has a criminal, you'll be liable for his action. It's SEBI's job to control that person. And therefore, I think they really need to kind of relook at this. Certainly, anybody who is making giving stock tips, giving investment advice, etc., is in direct violation.
Well, that's the latest there from SEBI, a chokehold on financial influencers and the manner in which they've been operating. The government held an all-party meeting ahead of the budget session of Parliament. The meeting was convened by Parliamentary Affairs Minister Prahlad Joshi and saw representatives from various political parties. The budget session will begin tomorrow with the tabling of the economic survey. The union budget will be the day after on the 1st of February, and the session will conclude on the 4th of April. On to CNBC-TV18 exclusive with 48 hours to go for the union budget. Sources tell CNBC-TV18 the government is likely to announce measures to provide some relief to the middle class and increase their spending capacity. The government is also considering steps to boost manufacturing and MSMEs. Parikshit standing by now with more. Parikshit, the budget countdown underway. What are you hearing?
Well, we are hearing that different government departments have been giving feedback to the finance ministry, and some quarters believe it is time to give some relief to the middle class to increase their spending power, and this will be essential to revive consumption sentiment and also India's growth trajectory. Having said that, the government has been considering measures to give higher tax exemptions, tax relief to people who are in the range of 10 to 15 lakhs in the salary bracket. So it's possible that there may be measures to support the middle class through tax exemptions and tax relief. Now, when it comes to growth areas for the budget, we believe that there could be measures to support labor-intensive sectors. Now, this would be certain low-volume but high-value sectors which can also generate a lot of employment, because labor and employment has been the focus of the union budgets over the last few years. So sectors such as textile, furniture, food processing could get some impetus. When it comes to also simplifying the tax system, there have been suggestions to the government that the tax structure needs to be simplified. Honest taxpayers need to be rewarded. So there may be measures to simplify the tax system and also ease of living for the middle class. So we will see some measures on that front as well. On MSMEs, there is a suggestion that the government should come up with a strong financial support package for MSMEs for the next few years. So it remains to be seen whether the finance minister will actually come ahead and deliver on those as well.
All right, Parikshit, many thanks for joining us. In Earnings Corner, Dabur's Q3 numbers have come in line with street expectations. Net profit rose 2%. Revenues grew more than 3% on an annual basis. Speaking to CNBC-TV18, the company's CEO Mohit Malhotra said that Dabur is targeting low to mid-single-digit volume growth. He also said that Dabur's food business was impacted due to winter. Bajaj Finserv's net profit rose by 3.4% in the third quarter of the fiscal. The company's revenue grew 10%, while assets under management surged by 28%. A significant contributor to growth was Bajaj Housing Finance, which recorded an AUM growth of 26%. The company's asset quality has seen a slight deterioration, with both gross and net non-performing assets rising marginally. KRBL, the maker of India Gate Basmati rice, has undergone a brand revamp after 25 years. The company has plans to move more consumers from unbranded to packaged rice. Shilpa spoke with Ayush Gupta on the idea behind the revamp.
E-commerce, modern trade are becoming more and more salient. And, their packaging has started to play a critical role in making consumer choice, in driving brand preference. And we felt our original packaging, while it was nostalgic, while it connoted trust and legacy to the consumers, we were losing out on some bit of premiumness. We have an aspiration to grow our market share, which is at a 38-39% and at a general trade level to a 55 to 60% in the next 3 to 5 years.
Well, we will head into a break. But up next, Union Minister Ashwini Vaishnav says the government will soon host Chinese AI platform DeepSeek on Indian servers. How? We'll explain when we return.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now, and happy to see what it's doing today. And I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think the bulls take some control. Auto as a sector, auto and FMCG and even PSU, these three baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind.
Well, less than a week is left when Delhi goes out to vote, and today we are joined by two senior leaders, sitting CM Atishi and Manish Sisodia from Aam Aadmi Party. Very warm welcome to our show. To begin with, as we know, 5th February when Delhi goes out to vote, 8th February is the verdict. What do you think? BJP is also pulling up the fight, so is the Congress, and you also have seen the anti-incumbency, how it works in the political scenario. 10 years already people of Delhi have voted for you. How are you going to contest? It is a strong fight this time. That's what we understand from polls and what feelers we are getting from the field.
See, this is this is a fight between two kinds of politics. On the one side, you have a certain set of educated people who have come into politics, educated professionals, honest people who have come into politics, who are asking for votes on the basis of the work that they have done. So be it water, electricity, education, healthcare. जब हम वोट मांगने जाते हैं, हम अपने काम के आधार पे वोट मांगने जाते हैं. On the other hand, एक दूसरी पार्टी है जो सुबह से लेकर रात तक गाली गलौज करने के अलावा कोई काम नहीं करती है. तो ये दो मॉडल्स आज दिल्ली के लोगों के सामने हैं कि उन्हें काम पे वोट देना है या गाली गलौज पे वोट देना है. देखिए, हम तो अपने काम पे वोट मांग रहे हैं. बीजेपी वाले ये बता दें, अपने पूरे कैंपेन में वो एक बार भी अपने 10 साल के काम की बात नहीं करते हैं. नाउ दिल्ली इज अ हाफ स्टेट. इसमें आधी पावर हमारे पास है, आधी पावर बीजेपी के पास है. प्लस बीजेपी सेंटर में है. वो इतने स्टेट्स को इतना पैसा देती है, इतने प्रोजेक्ट्स करती है, लेकिन 10 साल में उन्होंने दिल्ली में एक भी काम नहीं किया. 10 साल के बाद प्रधानमंत्री आए और 3 कॉलेज का शिलान्यास करके गए. शिलान्यास, फाउंडेशन स्टोन, नॉट इवन ओपनिंग द कॉलेजेस. मुझे लगता है शायद 10 साल के बाद, 2 चुनाव के बाद वो अब उन 3 कॉलेजेस का एक कमरे का उद्घाटन, हाँ, एक कमरे का उद्घाटन करेंगे.
आप कह रही हैं कि आपकी पार्टी काम के आधार पे वोट मांग रही है जी. वो ये नहीं कह रही कि हम ये कर रहे हैं, वो कर रहे हैं. वो काम करके दिखा रहे हैं और उस पे वोट मांग रहे हैं, चाहे वो हेल्थ हो, चाहे वो एजुकेशन.
और बीजेपी वाले क्या कर रहे हैं? वो हमें गाली करते हैं. वो सुबह से लेके शाम तक, आप टीवी ऑन करके देखिए, आप तो देखते ही होंगे, बीजेपी के दिन में 4 प्रेस कॉन्फ्रेंस होती हैं. एक सुबह 9 बजे, फिर 12 बजे, फिर 3 बजे, फिर 5 बजे, राइट. उनकी 4 प्रेस कॉन्फ्रेंस होती हैं. उनके अलग अलग नेता आते हैं. सुबह कहेंगे केजरीवाल की जैकेट ऐसी है, दोपहर को कहेंगे केजरीवाल का मफलर ऐसा है, केजरीवाल खांसी क्यों करता है, केजरीवाल ऐसे घर में क्यों रहता है, केजरीवाल ये खाना क्यों खाता है. ये उनका एजेंडा है.
हमारा क्या एजेंडा है सर? आपका क्या एजेंडा है? आपने तो हेल्थ को लेके भी काम करा, आपने कोविड में हेल्थ पे बहुत ध्यान दिया, एजुकेशन का सारा मॉडल रिवैम्प आपने किया. आपका क्या एजेंडा है?
नहीं, हमारा एजेंडा तो आम आदमी की जिंदगी है. एक आम आदमी अपनी मेहनत से ज़िंदगी जीता है, वो चाहे झुग्गी में रह रहा है या बड़ी बड़ी कोठियों में रह रहा है. उसका एक ही ख्वाब है कि मैं मेहनत करूं तो सरकार मेरे जीने में मदद करे. एक बेसिक चीज़ है. उसके बच्चे अच्छे से स्कूल में पढ़ जाएं, उसको घर में कोई बीमार हो तो सरकार ये देख ले भाई इलाज मिल जाए उसको ठीक से. दूसरी तरफ वो चाहता है कि वो सिक्योर्ड रहे, उसकी महिलाएं सुरक्षित रहें घर की, वो कहीं उसके शोरूम खोल के बैठा हो तो उसके सामने गोलियां ना चलें. वो
पर पुलिस तो दिल्ली सरकार के अंडर है. मैं
कह रहा हूँ कि आम आदमी सरकार से चाहता क्या है? वो चाहता है कि मुझे कुछ धमकियां ना मिलें, लोगों को पता चले भाई ये पैसा कमाने लगा है, इसका शोरूम अच्छा चल रहा है, तो कोई रैंसम की धमकियां ना भेजे. तो उसमें से आधा काम हमारे पास था, आधा भारतीय जनता पार्टी के पास था. हमने स्कूल अच्छे किए, हमने अस्पताल अच्छे किए, हमने बिजली 24 घंटे कर दी, हमने जो गरीब लोगों के लिए बिजली फ्री कर रखी है, हमने इतनी वेलफेयर स्कीम चलाई जो सक्सेसफुल चल रही हैं. इनके हिस्से एक ही काम था मेन, लॉ एंड ऑर्डर ठीक करना. 10 साल से उसमें बुरी तरह से फ्लॉप हैं. अब ये कह रहे हैं कि जी हमने पुलिस व्यवस्था तो फ्लॉप कर दी, खूब गोलियां चल रही हैं, खूब रैंसम की धमकियां आ रही हैं, चेन स्नैचिंग और इन सब की तो बेइंतहा घटनाएं हो ही रही हैं. तो हमसे पुलिस तो संभली नहीं, अब हमें स्कूल दे दो संभालने के लिए. कैसे दे दें? मतलब जैसे पुलिस बर्बाद कर रखी है, जैसे लॉ एंड ऑर्डर बर्बाद कर रखा है. अब ये कहती है कि भाई इस देश का गरीब, दिल्ली का गरीब से गरीब आदमी और मिडिल क्लास सारा आदमी, इवन अपर क्लास आदमी, सारा सिस्टम हमें उठा के दे दो ताकि हम उसको भी सत्यानाश करते हैं उसका. तो हमारा एजेंडा है कि हम उसको सत्यानाश नहीं होने देंगे.
एंटी इनकम्बेंसी से कैसे फाइट करेंगे? क्योंकि ये एक मॉडल ऐसा है जो पॉलिटिक्स में अक्सर देखा गया है कि 2 बारी के बाद शायद थोड़ा सा रुझान बदलता है वोटर्स का भी. वोटर्स भी चाहते हैं कि कुछ चेंज हो. ये नहीं मिला, वो नहीं मिला.
यही ताकत है केजरीवाल जी की. केजरीवाल जी का पूरा गवर्नेंस मॉडल आज भी लोगों की नज़रों में एक उम्मीद है. और पिछले 10 साल में हो सकता है कहीं किसी वजह से किसी की नाली टूटी हो, उसको लग रहा हो यार ये नाली ठीक हो जानी चाहिए थी, पर आज उसको ये भरोसा है कि केजरीवाल जी को जो कहते हैं वो कर देते हैं, या केजरीवाल जी जो कहते हैं वो कर देते हैं। एंटी इनकम्बेंसी का कोई ऐसा फैक्टर, कहीं कोई छोटी मोटी किसी की नाराजगी होगी वो होगी, लेकिन उसके बावजूद उसका भरोसा है कि मेरी नाराजगी या मेरी परेशानी की जो वजह है उसको केजरीवाल ही ठीक करेंगे। और लोगों को ओवरऑल जो भरोसा है कि यार अरविंद केजरीवाल जी की पूरी ये टीम पढ़े लिखे लोगों की, प्रोफेशनल्स की टीम है। एक तरफ गाली गलौज करने वाले गुंडे लोग जिनका काम है मकान कब्जा करना, जिनका काम है मतलब जगह जगह सरकारी ज़मीन पे कब्जा करके प्लॉट बना देना, फ्लैट बना देना, उनकी जगह हम स्कूल बनाने वालों को चुने ना, अस्पताल बनाने वालों को चुने ना, नौकरियां देने वालों को चुने ना। तो कहीं ना कहीं लोगों को ये कॉन्फिडेंस जो है वो एंटी इनकम्बेंसी जो छोटी मोटी कहीं होगी उसके ऊपर ओवर एंड अबाव कॉन्फिडेंस बहुत जबरदस्त है केजरीवाल जी के ऊपर।
उनको पता है बीजेपी की 20 राज्यों में सरकार है, कहीं पर 24 घंटे बिजली नहीं आती, कहीं पर सस्ती बिजली नहीं मिलती, कहीं पे फ्री इलाज नहीं होता। आप बीजेपी वाले हम पे बड़ा आरोप लगा रहे हैं कि जी इन्होंने आयुष्मान भारत नहीं इम्प्लीमेंट किया, ठीक है जी, ये हम पे एक बहुत बड़ा आरोप है। प्रधानमंत्री भी बोलते हैं, अमित शाह
दिल्ली और वेस्ट बंगाल दो राज्य
कहते हैं। मैं आपको एक बात बताती हूँ, आप ना टीवी कैमराज आपके यहाँ पे लगे हुए हैं। LNJP हॉस्पिटल यहाँ से बहुत दूर नहीं है, दिल्ली सरकार का एक बड़ा अस्पताल है, उसके बगल में एक GTB हॉस्पिटल है, वो भी बड़ा अस्पताल है।
बिल्कुल
60% पेशेंट जो दिल्ली सरकार के अस्पतालों में एडमिशन लेते हैं वो उत्तर प्रदेश, हरियाणा, राजस्थान और मध्य प्रदेश से आते हैं, जहां पे भारतीय जनता पार्टी की सरकारें हैं, जहां पे आयुष्मान भारत लागू है। इसका मतलब वहां के रहने वालों को भी अपने बीजेपी के हेल्थ मॉडल पे कॉन्फिडेंस नहीं है, उनको भी केजरीवाल के मॉडल पे कॉन्फिडेंस है।
जब आप हेल्थ और एजुकेशन और इन सब की बात करते हैं, CAG की रिपोर्ट का एक मुद्दा वापस से उठा है। कल प्राइम मिनिस्टर ने अपनी रैली में फिर कहा कि ये पार्टी, आम आदमी पार्टी, CAG की रिपोर्ट पे जवाब नहीं देती। हेल्थ घोटाला, स्कूल घोटाला, लिकर स्कैम प्लस आपका शीश महल स्कैम जिसको वो फ्लैग कर रहे हैं, उस पे क्या कहना है कि CAG की रिपोर्ट पे आपका क्या व्यू है?
CAG की रिपोर्ट हमने भेजी है, हमने विधानसभा भेजी है। देखिए आपने दिल्ली के सिटिंग चीफ मिनिस्टर को 6 महीने जेल में रख लिया, फिर आप कहते हैं जी चीफ मिनिस्टर ने रिपोर्ट क्यों नहीं भेजी आगे। भाई अब आपने CM को गिरफ्तार करके जेल में रखा हुआ है, वो कैसे वहां से रिपोर्ट आगे भेजेंगे? तो बिल्कुल जब अरविंद जी बाहर आए उसके बाद उन्होंने इस्तीफा दिया, मैं चीफ मिनिस्टर बनी,
बिल्कुल
वो रिपोर्ट्स हमने दिल्ली विधानसभा में भेजी। अब वो लेकिन एंड ऑफ द टेन्योर हमारा आ गया, तो अब ऑब्वियस सी बात है कि जब आचार संहिता लगी हुई है तो अब तो विधानसभा का सत्र नहीं हो सकता, लोग अपना प्रचार करेंगे या विधानसभा में आएंगे। तो बीजेपी ने भी इसे बहुत मुद्दा बनाने की कोशिश करी, वो कोर्ट तक भी चले गए,
बिल्कुल,
लेकिन ये बिल्कुल साफ है कोर्ट ने भी उनको सुनने से इनकार कर दिया, क्योंकि रिपोर्ट्स विधानसभा में चली गई हैं, जब अगला सत्र होगा पेश होंगी।
CAG रिपोर्ट में जो CAG रिपोर्ट पब्लिक में है उसके बारे में तो बोल नहीं रहे, जो कहती है कि भारतीय जनता पार्टी ने बहुत बड़ा एक फसाद खड़ा कर रखा है, आयुष्मान भारत के नाम पे बहुत बड़ा झूठ खड़ा कर रखा है, प्रधानमंत्री मोदी जी की सरकार की खामियां गिना रही है, वो पब्लिक डोमेन में संसद में आ चुकी है रिपोर्ट, उन पे नहीं बोल रहे। एक CAG रिपोर्ट जो आई नहीं है अभी, जो अभी हाउस में टेबल नहीं हुई, वो उसके बारे में कुछ बीजेपी उल्टा लिख के सीधा लिख के प्रचार कर रही है कि उसमें ये लिखा हुआ है, जैसे इन्होंने लिखी हो, CAG वालों ने नहीं लिखी हो, उसकी चिंता कर रहे हैं। जो रिपोर्ट आ चुकी
तो आपका कहना है कि जब रिपोर्ट पब्लिक में ही नहीं है तो उसके बारे में बात कैसे
कर सकते हैं?
अब अगला मुद्दा जो कि बहुत बड़ा मुद्दा पिछले कुछ दिनों से बना हुआ है, यमुना का पानी पे।
दिल्ली में जो पानी आता है वो यमुना से आता है, दिल्ली में यमुना हरियाणा से आ रही है,
बिल्कुल।
फिर जो पानी आता है उसको हम, जो यमुना में पानी आता है उसको हम अपने वाटर ट्रीटमेंट प्लांट्स में ट्रीट करते हैं और फिर दिल्ली में अलग अलग जगह लोगों के घरों में जाता है। अब जो पानी हरियाणा से आता है उसमें एक एलिमेंट होता है, एक पोल्यूटेंट होता है अमोनिया। जब ये अमोनिया 1 ppm के लेवल तक होता है तो हमारे वाटर ट्रीटमेंट प्लांट से ट्रीट करके वो पानी आगे पोर्टेबल हो जाता है, हम भेज देते हैं। जब ये 2 हो जाता है, 3 हो जाता है तो उसको ट्रीट करना भी मुश्किल होता है। पिछले 2 हफ्ते से 2 और 3 लेवल अमोनिया तो छोड़िए, वो तो पिछले कई सालों में भी कई बारी हुआ है। पहले अमोनिया का लेवल 4 पहुंचा, 4.5, 5, 5.5, 6, 7 ppm अमोनिया तक 3 दिन पहले तक यमुना के पानी में आ रहा था। अब वो अमोनिया खुद तो पैदा नहीं हो गया ना,
बिल्कुल
ठीक है, वो कहीं से तो यमुना नदी में आया है। कहाँ से आया?
से आ सकता है, बहुत जगह से आ सकता है।
बिल्कुल सही बात है, लेकिन अगर वो दिल्ली के एंट्री पॉइंट पर आ रहा है 7 ppm पानी, तो वो हरियाणा की ही फैक्ट्री से आ रहा है ना, नंबर 1। नंबर 2, हमने जिस दिन से ये मुद्दा पब्लिक डोमेन में उठाया, हमने प्रेस कॉन्फ्रेंस करी, हम इलेक्शन कमीशन पे गए, अरविंद केजरीवाल जी ने बार बार अपने भाषण में दिया, ये अमोनिया कम कैसे होना शुरू हो गया। आज वो अमोनिया का लेवल 7 से गिरकर 3 पर पहुंच गया है। दैट मीन्स उनके ही कंट्रोल में था ना। जैसे उन्होंने अपने आप बढ़ाया, उन्होंने अपने आप घटा भी दिया।
तो ऐसा क्या प्रूफ है जिससे कि आप कह सकते हैं?
ये इसमें प्रूफ नहीं है, इसमें तो प्रूफ है, दिल्ली जल बोर्ड का डेटा बता रहा है,
पीपीएम लेवल है,
पीपीएम लेवल है, उसका डेली रिकॉर्डिंग होता है। अगर पीपीएम लेवल 3 ppm के ऊपर चला जाता है, 3 ppm तक तो आप एक्स्ट्रा पानी डाल के उसे डाइल्यूट कर सकते हैं।
बिल्कुल।
उसके ऊपर जाता है, हम वो पानी अपने वाटर ट्रीटमेंट प्लांट में भी नहीं भेजते। क्यों? क्योंकि वाटर ट्रीटमेंट प्लांट में जब इतना हाई अमोनिया क्लोरीन से मिक्स हो जाता है तो वो फेटल हो जाता है। सेकंड, हम बिना ट्रीट किए भेज दें। अमोनिया एक न्यूरोटॉक्सिन होता है, वो ब्रेन सेल्स को डिस्ट्रॉय करता है।
बिना ट्रीट करे तो भेज ही नहीं सकते।
बिना ट्रीट किए आप उसे भेज नहीं सकते हैं। ट्रीट करने के बाद वो जहर हो जाएगा, तो क्या करेंगे दिल्ली के लोग? या तो वो पानी पिएंगे नहीं, या उन्हें हम जहरीला पानी भेजें। और ये बात कि जब हमने इस मुद्दे को उठाया, उसके 3 दिन के अंदर कैसे ठीक हो गया। और चुनाव से 1 हफ्ते पहले अगर लोगों के घरों में खराब पानी आ रहा है, या अगर लोगों के घर में पानी ही नहीं आ रहा, तो ऑब्वियसली ये इलेक्शन के माहौल को खराब करने की कोशिश है। देखिए, मैं भारतीय जनता पार्टी से ये कहना चाहती हूँ, आपको चुनाव लड़ना है, आप मुद्दों पे लड़ो, आप हमसे आमने सामने आके लड़ो। आप अपने काम बताओ, हम अपने काम बताएंगे, लोगों को डिसाइड करने दीजिए ना। इतना नीचे आप गिर जाएंगे। इस चुनाव में जितनी नीचता हुई है, मैंने आज तक, हमें भी 10 साल हो गए, 10-12 साल हो गए राजनीति में,
कब से इलेक्शंस देख रहा हूं।
हम कब, और सर तो जर्नलिस्ट थे, वो तो कब से इलेक्शंस देख रहे हैं। इतनी नीचता मैंने आज तक कभी नहीं देखी।
And small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again, please look at the context of the rise in mid caps and small caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible. I think the biggest disconnect for most market participants in India is, for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market, because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets, because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So a deeper cut from current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here and possibly get past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think will be very critical to the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited, but as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited. For the last 4 years, since the time we started rallying from the COVID lows, every time there has been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a
इस बारी देखने को मिल रहा है कि तीनों पार्टी के मैनिफेस्टो सामने हैं। तीनों पार्टी विमेन वोटर्स को वू करने के लिए निकली हैं। कोई 2100 रुपए की राशि देने को तैयार है, कोई 2500 रुपए की राशि देने को तैयार है, कोई प्रेग्नेंट विमेन को राशि देने को तैयार है, कोई स्टूडेंट्स को राशि देने को तैयार है। क्या फ्रीबीज इतना दे पाना दिल्ली के फाइनेंसेस को सूट करता है? आप तो फाइनेंस मिनिस्टर भी रहे हैं दोनों, ये सिटिंग है, आप फॉर्मर रहे हैं। क्या दिल्ली के फाइनेंसेस को ये सूट करता है? कैसे फंडिंग करेंगे?
देखिए 2015 में जब हमने काम करना शुरू किया था, हमारे पास 30,000 करोड़ का बजट था, और उससे पहले 4-5 सालों में देखोगे तो वो 1,000 करोड़ रुपए हर साल का बजट बढ़ता था। 2015 से 2020 तक पहुंचते पहुंचते 30,000 करोड़ का बजट एकदम 60,000 करोड़ का हो। हमने टैक्स के रेट्स कम किए। जब वैट था, वैट रिजीम में हमने टैक्स के रेट्स जबरदस्त कम किए, 14%, 13% से उठा के 5% कर दिए, जिससे टैक्स पेयर के ऊपर बर्डन कम हुआ और उसने टैक्स देने में अपनी आसानी समझी, शान समझी। सरकार को ज्यादा पैसा मिला, उसको ईमानदारी से इकट्ठा किया, इससे सरकार के पास पैसा ज्यादा आया। तो पहले 5 साल में ही 30,000 करोड़ से बजट होके 60,000 करोड़ रुपए हो गया। ये सरकार के इनोवेटिव आइडियाज, जिसमें 12% टैक्स को कम करके, क्योंकि आपका तो बिजनेस चैनल है, हमेशा ये बात होती है टैक्स के बारे में, और मैं जीएसटी की मीटिंग्स में भी बहुत बार बोलता रहा हूं कि लोअर द टैक्स रेट्स मोर द कंप्लायंस। आप टैक्स रेट्स कम करते जाइए, जनता आराम से टैक्स देना चाहती है। आप हाइपोथेटिक टैक्स रेट्स लगाते हैं तो जनता भी सोचती है यार थोड़ा बहुत बच जाए तो बच ही जाए। तो जब हमने टैक्स रेट्स दिल्ली में कम किए वैट के रिजीम में, तो खूब पैसा आया और जम के पैसा आया। तो आज भी जब हम बात करते हैं कि सरकार के पास पैसे की कमी नहीं है, तो हम तो उसी कॉन्फिडेंस पे कहते हैं कि साहब जनता पैसा देने में कोई कंजूसी नहीं करती है। टैक्स का पैसा इकट्ठा करने में चोरी होती है और उसको खर्च करने में चोरी होती है। हमने दोनों जगह की चोरी रोक के उसको जनता के ऊपर खर्च किया। तो एक सेकंड, सरकार के पास तो पैसा होता है, अब सरकारों को तय करना होता है कि उसको खर्च कहां करना है।
बिल्कुल।
आम जनता के ऊपर या अपने चंद दोस्तों के ऊपर। 46,000 करोड़ रुपए का किसी का लोन माफ करना, या 40,000 करोड़ का, या 10 साल में, शायद एक सर ने भी पीसी की थी, पिछले 10 साल में 10 लाख करोड़ के लोन माफ किए हैं इन्होंने। छोटी रकम नहीं है। हमने 400 करोड़ रुपए में महिलाओं को बस फ्री कर दी। हमने 1,000-1,500 करोड़ रुपए में पूरी दिल्ली के लिए बिजली फ्री कर दी। वो ज्यादा अच्छा मॉडल। सरकार के पास पैसा होगा तो सरकार खर्च तो करेगी, उसको सरकार जेब में डाल के नहीं रखेगी, लेकिन वो आम जनता पे खर्च किया जाए जिससे कि जनता सुख से जिए, या चंद दोस्तों को दे दिया जाए, पहले उनको लोन दिलाए जाए, फिर उनके लोन माफ कर दिए जाए और सरकार अपनी किटी से उस पैसे से लोन पे करे उसको। 2 मॉडल हैं। इन दोनों मॉडल के बीच में दिल्ली में एक मॉडल ये है कि जनता के ऊपर उस पैसे को खर्च किया जाए, जनता भी खुश रहती है, जनता भी फ्लरिश करती है, सरकार भी फ्लरिश करती है।
इस मैनिफेस्टो में आपने बहुत सारी नई स्कीम्स भी लेके आए, चाहे वो पुजारियों के लिए स्कीम हो, चाहे वो स्टूडेंट्स के लिए मेट्रो में फ्री राइड की स्कीम हो, और भी बहुत चीज़ें हैं। क्या बजट तो आप लोगों को पहले ही पता है कि सरकार, दिल्ली सरकार के पास इतना पैसा है और इतना हम और पैसा जुटा सकते हैं। क्या आपने ऐसी कोई मैथ्स करी है कि हाँ, ये जितनी स्कीम्स हमने डिजाइन करी है मैनिफेस्टो में, इनको हम आसानी से फंडिंग कर पाएंगे?
बिल्कुल 100%।
कितना पैसा चाहिएगा?
देखिए, आप हमने 2100 का फिगर क्यों दिया? हमने 2100 का फिगर क्यों दिया? क्योंकि हम कैलकुलेशन करके आए हैं कि हमें 2100 रुपए की राशि अगर महिलाओं को देनी है तो उसका हम अपना बजट कितने साल में, कितने हमें बजट की रिक्वायरमेंट होगी। जिसको सरकार नहीं बनानी, वो तो कुछ भी प्रॉमिस कर सकता है। वो तो कहेगा 2100 रुपए क्या, मैं 21,000 करोड़ रुपए दे दूंगा।
ये स्कीम तो आपको पिछले, आप ऑलरेडी अपने बजट में अनाउंस कर चुकी थी।
बिल्कुल। और उसके लिए हमने अपने बजट में पर्याप्त पैसा रखा भी हुआ था। वो तो बीच में कई महीने का डिस्टर्बेंस आ गया जब हमारे चीफ मिनिस्टर तब सिटिंग चीफ मिनिस्टर जेल में थे, तो जब तक इम्प्लीमेंट हुई तो जो पहली किश्त है वो जा नहीं सकी चुनाव आचार संहिता लगने से पहले, लेकिन पहली किश्त बिल्कुल जाएगी, इस फाइनेंशियल ईयर के एंड होने से पहले जाएगी।
दिल्ली में सेंट्रल गवर्नमेंट वोटर्स बहुत हैं और 8th पे कमीशन की अनाउंसमेंट ऐसे समय पे आना, आपको क्या लगता है कितने वोटों पे इम्पैक्ट होगा? क्योंकि नई दिल्ली का इलाका हो चाहे कोई दिल्ली का ऐसा इलाका नहीं है जहां सरकारी अफसर नहीं रह रहा हो या सरकारी कर्मचारी ना रह रहा हो, और 8th पे कमीशन को लेके उनके व्यूज बड़े स्ट्रांग हैं। आप उनके लिए क्या कहना चाहेंगे? कैसे लगता है कि उन वोट्स को कैसे कैप्चर करेंगे?
देखिए, मुझे लगता है कि मेरा ऐसा अपना अंडरस्टैंडिंग है, खुद चुनाव लड़ने के बाद भी और इतने सालों से चुनाव देखने के बाद भी, वोटर को ना बहलाना बहुत मुश्किल होता है। पॉलिटिशियंस अगर सोचें कि वो किसी को बेवकूफ़ बना लेंगे कुछ वन टाइम प्रॉमिस करके, जनता बहुत समझदार होती है। वो हर पार्टी का, हर नेता का सिर्फ आखिरी 1 महीने का काम नहीं देख रही है, वो उनको 5 साल तक देख रही है। वो उनके काम को दिल्ली में भी देख रही है, दिल्ली के बाहर भी देख रही है। तो जो लोग अपना असेसमेंट करते हैं वो एक अनाउंसमेंट के आधार पे नहीं करते हैं, वो, और जो मनीष जी ने अभी बात कही ना, सिर्फ अपने पर्सनल फ़ायदे के लिए नहीं, वो देश के हित को भी देख के करते हैं। तो मैं ये मानती हूँ कि दिल्ली के लोग बहुत समझदार हैं और बहुत समझदारी से अपना वोट डालेंगे।
जहाँ तक रही बात वोट डालने की, आपने भी कुछ असेसमेंट करा होगा कि कितनी सीट इस बारी हम ला पाएंगे? क्या हम उस बम्पर चुनाव की जो पिछली 2 बारी आपको ब्लेसिंग मिली दिल्ली की कि 60 से भी प्लस, आपने कहा कि नहीं हम अच्छी खासी सीट, क्या मेजॉरिटी को भी ओवर पास करके चल रहे हैं? क्या असेसमेंट है?
ओवरऑल फीलिंग चारों तरफ से अभी यही मिल रही है सुनने को कि दिल्ली में तो जी केजरीवाल की सरकार बन रही है। हर तरफ बस स्टॉप पे बैठ जाओ, बसों में चले जाओ, झुग्गियों में चले जाओ, पार्कों में चले जाओ, बड़े बड़े उसमें, हर जगह नहीं, सरकार तो जी आपकी बन रही है। इवन जो बीजेपी के कट्टर समर्थक हैं, अब तो पहचानते हैं हम लोग भी, बात होती है उनसे, बोले जी हम बीजेपी के समर्थक हैं, लेकिन सरकार आपकी बन रही है, 2-4 सीटें आपकी कम हो रही हैं। वो इसमें भी खुश हैं कि जो 2-4 सीटें कम हो रही हैं, पर सरकार तो बन रही है। फील यही समझ में आता है कि किसी भी चुनाव में फिर जनता के ऊपर है कि जनता बम्पर पे कितना देती है।
बिल्कुल,
एक पूर्ण कंफर्टेबल बहुमत की सरकार अभी बन रही है और केजरीवाल जी के भरोसे में बन रही है। इतना मैं कह सकता हूँ। कितनी सीटें हैं ये तो फिर जनता जब देती है तो छप्पड़ फाड़ के देना जानती है।
तो आप कहना चाहते हैं कि पूर्ण बहुमत के साथ जरूर आम आदमी पार्टी फिर आएगी, पर देखते हैं 8 तारीख को क्या नतीजे रहते हैं।
Your maximum downside is about 2 to 4% from here, and upside is about 20%. So as an investor, I want to plan for the same.
History as the first woman finance minister to present her 8th consecutive union budget. From replacing the colonial era briefcase with the Bahi Khata to delivering the longest budget speech in history, her tenure has been marked by milestones and transformative policies that have shaped the nation's economic journey. Her maiden budget speech in 2019 set the tone for bold reforms, and she has since introduced several initiatives that left lasting impact on India's economic policy. Let's dive into the landmark schemes and key tax reforms introduced under her leadership. Now, Sitharaman's budgets have introduced numerous initiatives aimed at driving inclusive growth, like the PM Suryodaya Yojana in 2021. Announced in the budget 2021-22, this initiative aimed to provide solar energy to villages that lacked grid connectivity. It was a step towards clean and sustainable energy, empowering rural communities while promoting renewable energy adoption. The credit guarantee scheme for MSMEs was another such scheme. Revamped in budget 2024-25, this scheme provides collateral-free loans with a guarantee cover up to 100 crore rupees, addressing financing challenges faced by MSMEs. PM Vishwakarma Yojana is another such scheme announced in the budget 23-24. This initiative supports artisans and craftspeople with collateral-free credit up to 2 lakh rupees, toolkit initiatives, skill training and marketing assistance, helping preserve traditional crafts. The Vivad Se Vishwas scheme is another such milestone. Launched to resolve pending tax disputes, this scheme offers taxpayers a chance to settle cases by paying only tax amount with penalties and interest waived. PM Gati Shakti Master Plan in 2021. Now, a 100 lakh crore initiative focused on integrated infrastructure development, enhancing connectivity and reducing logistic costs. The Atmanirbhar packages in 2020 during the COVID-19 pandemic. A range of measures supporting MSMEs and businesses were introduced under this initiative during the pandemic, emphasizing self-reliance and domestic manufacturing. Now, the tax reforms on the taxation front have also been big. Sitharaman's budgets have implemented sweeping reforms to streamline the system and enhance fairness. Like the corporate tax reduction in 2019, the corporate tax rates were slashed to 22% for existing companies and 15% for new manufacturing firms, making India an attractive destination for global investments. The optional personal tax regime, or the new tax regime in 2020, a simplified system with lower tax rates but no exemptions was introduced, giving taxpayers the flexibility to choose between the old and the new regimes. Another such initiative was the capital gains reform of 2023. The government removed the indexation benefit from the debt mutual funds, bringing all asset classes, including equities, debt funds and fixed deposits, under the same tax regime. While this reform created parity in taxation, it also drew mixed reactions as it increased the tax burden on long-term equity investments. The abolition of angel tax was another such initiative for all classes of investors. In 2024, in the budget of 24-25, Sitharaman proposed abolition of the controversial angel tax for all categories of investors. This move was expected to bolster the Indian startup ecosystem, boost entrepreneurial spirit and foster innovation across sectors. Now, Nirmala Sitharaman's budgets have been a mix of bold reforms and targeted policies, be it support for MSMEs, sustainable energy or comprehensive tax reforms. As she gears up to present her 8th budget, expectations are high for announcement that she will steer India's next phase of growth.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one.
Hello and welcome to our first pre-budget town hall
which looks at the macro numbers and the macro thrust which the February 2025 budget will hopefully bring forth. First, the assumptions of GDP growth, tax growth, fiscal deficit, all these are going to be made at a time when the macros of the world and the country are in a state of flux. So that's the caveat. Now, the macro questions that we need to ask ahead of the budget are what we are going to do today. First, should the government stick to its program of cutting the fiscal deficit to 4.5%, especially when the economy is slowing and may in fact be in need of some stimulus? That's the first macro question. A second issue that the government has to face is that it has not quite been able to spend the capex money that it laid out in the budget estimates of July 2024. It was estimated that the capex will grow by 17% to 11.1 trillion rupees, 11 lakh crore. But the capex up to November has actually undershot, has fallen by 12.5% versus April to November last year, which means it's just about 5 lakh crore that has been spent. So should it blindly increase the capex budget at all when there seems to be a bandwidth problem? Third question, should it lower its tax estimates, its GST collections? Because the GST collections so far have grown at only 9%, whereas the budget estimate was 11%. So clearly, there is a consumption slowdown. However, on the other hand, income tax has grown by 23.6%, whereas, April-November, whereas the budgeted number for the full year is only 13.6%. So, should the government consider cutting personal income tax so that consumption can be boosted? That's one big question in front of the market. And finally, what should be the overall thrust of the budget? Should it continue with last year's theme of a thrust on employment, or should it promote exports and aggressively get into the global supply chains, given the likely Trump tariffs ecosystem? That's a point that we will discuss. Of course, we will also discuss the most important question facing the economy now. How will the pressure of the rupee impact the budget? What parameters may be pressured? Those are the questions. Well, there will be, of course, many more questions, but for that, let me welcome my co-anchor, Prashant Nair, onto the dais. Let me also welcome our guests. We have three top-ranking economists, Samiran Chakrabarti of Citi India, Neelkant Mishra of Axis Bank, and Sajid Chinoy of JP Morgan. Two of them, of course, Neelkant and Sajid, are also members of the PMEAC. And therefore, we are going to expect them to give us some idea of what kind of a thrust the budget may take. Gentlemen, take your seats, please. Prashant, you included. Well, let me start with a half volley. Okay, growth assumptions. We already have the MOSPI number, that is the Ministry of Statistics and Program Implementation. They gave us an estimate for the current year, which was, lower, 324 trillion, whereas the budget had estimated 326.3 trillion. We didn't make it to a 10% nominal GDP growth in the current year. So, okay, let me start with you, Sajid. Do you think this year we should have a lower growth estimate? Everything, lower tax estimate, simply because we are living in, look at what the stock market is telling us. Probably earnings are going to be lower, probably global headwinds are going to be terrible. So is it safe to assume a single-digit growth assumption?
The fiscal assumptions, for the most part, have been very conservative in the last 2-3 years. I mean, in years where people had higher nominal GDP assumptions, the budget was taking 10.5%. Last year, the gross tax collection number was 10.8% on that number. So it was quite conservative. Really, it'll come down to how policymakers, what they make of the global environment. As you mentioned, the last 2 years, nominal GDP has averaged less than 10%. So if one wants to really be conservative, I think a 10% number would be conservative. And on that, if you really, want to be conservative again on taxes, typically you tend to get higher tax buoyancy when there's an upswing, and when growth is in a kind of a cyclical slowing, tax buoyancy tends to soften. So I think a nominal GDP of 10% with a tax buoyancy of 1 would be quite a conservative assumption. But again, if the government were to assume 10.5, these are not very big changes. There are things that can be offset as the year goes on.
On buoyancy, it's different because we have assumed a higher buoyancy, just for the benefit of the audience, if there is a 1 rupee rise in GDP or 1% rise in GDP, a similar percentage is assumed in tax increase, that would be called a buoyancy of 1. But Neelkant, to you, same thing. Should we assume conservative than usual estimates and also be conservative in tax estimates? Simply because the wealth effect is eroding so fast that the stock market is taking it away.
Okay, so once you do the numbers, I think you have to get down to the weeds and look at different taxes differently. So personal income taxes, I think there has been a significant boost from capital gains. So the share of capital gains taxes in personal income taxes has risen very dramatically. From 2001 to 19, the personal income tax to GDP was rising at 5 basis points. Since 2019, it has been rising at 20 basis points. This year's number is 30 basis points. Now, I think that we have to be reasonable that with this kind of market, I think capital gains will be lower.
Gains also, the tax also was increased.
Yes, yes. So I think if you take a reasonable number, maybe an 8 to 10 basis point increase there, because see, there is an upward sloping curve there as India becomes more prosperous, more formal, that will improve. Corporate taxes so far is minus 0.5%. Now, given that even on reduced numbers, I know FY25 earnings for the listed space have been cut very sharply, but even on reduced numbers, we are still talking about 9 to 10% growth. Even if you assume that there is a significant negative impact from the unlisted space and the smaller firms, still I think this seems like a very low number. Very likely there has been a spate of refunds. That's something that has hurt, I think, December GST as well. The headline number looked scary, but the gross number was actually, the net number looked scary. The gross number was up 7.5%, 8%. So I would say that next year, if you assume a 3.02%, which is back to FY19 or 18 levels, that's a reasonable number, which will mean that corporate taxes could grow faster than nominal GDP. So once you look at all of this, there is no reason to be unduly pessimistic on the tax buoyancy question.
Right. I want to ask all of you a simple question. Is this a budget where, which needs to help the economy in some way by providing a little bit of fiscal stimulus, right? From a stock market point of view, that is a number one question. I think it's a number one question every budget. I think Sajid is smiling. I think going back how many years? Maybe 10, 15 years, but maybe this time especially because of what markets are doing. So, why don't we start there? Set the context for us. And then we'll get to if it is possible, because the global environment seems to be a little adversarial. Go on.
So first, from a budget-making perspective, the assumption that needs to be made is that how much of a recovery in the economy the budget will assume, or in other words, what is the assessment of the growth risks right now? And then the question will be that to what extent the fiscal policy is in a position to address that risk versus, let's say, monetary policy. And typically in the last few years, what we have seen is that fiscal policy has been very conservative. And one argument is that when anyway there is so much of global headwinds, including the pressure on the currency now, it makes sense for the fiscal policy to stay conservative. Add to it the fact that after 19 years, S&P has put us on a positive outlook with a chance of a rating upgrade a couple of years down the line. At the last mile of that, we don't want to deviate too much from that. So these are all arguments in favor of keeping the fiscal somewhat tight. The question is that why it becomes a closer call is if you assume that the growth slowdown is significant, that then a counter-cyclical fiscal policy might be required as well. To me, the big sort of uncertainty is that, let's say hypothetically you move from 4.9 this year to 4.7 next year. Is this going to at all stimulate the economy? But it's probably more difficult to have a fiscal deficit number higher than this year because of obvious reasons. So at the end, on balance, it might make sense to stay at that 4.5 kind of a number because you get all the benefits of macro stability associated with it and hope that the monetary policy takes more stimulus efforts. than the fiscal does.
Let me put it another way. Had it not been for this global environment, which is slightly adversarial, would you have said maybe make sense to expand the fiscal a little bit, not go to 4.5%?
See, that's the whole thing, that there is a credibility which is very difficult to quantify. This promise for last few years, every year, the fiscal authorities have met that promise. And that has created a certain amount of credibility. Sometimes when the credibility is there, we don't appreciate the value of the credibility. But at this juncture, whether it's worth losing that credibility just for 20 basis points of fiscal, I doubt that the government will go that path.
Well, you doubt the government will go that path, but we can argue whether that is needed now. It's not just meeting that 4.5. It also means crunching. You know, it is taking back a fiscal stimulus. It is reducing the support at a time when the consumption is clearly ailing. I mean, we can see that in the GST numbers. They are not coming up to even the nominal GDP growth numbers. So, Sajid, and you know, what are we faced with? A Trump who says that at 8% fiscal deficit, I'm going to cut taxes. I mean, what is so sacred, yaar? Nobody else is respecting it. Why should we?
So there are two ways to think about this, and it's an intertemporal trade-off, right? Short-term versus medium-term. The domestic versus global problem state in my mind is, how do you respond to a cyclical slowdown without letting your guard down on a very hostile global environment? And you have to get the balance right between fiscal, monetary and exchange rate. In the case of the fiscal, again, there are two objectives. I think the government has been very prudent in a correct manner for the last 3 years. And their objective in the medium term is very clear and the right one. We want to bring debt to GDP down over time. And you know why that is important? Because with nominal GDP below 10% for the last 2 years, despite deficits going down, combined public debt has inched up. Because at these levels of nominal GDP, debt is going up. Now, in this kind of world, you don't want to be in a situation where India is regarded so highly for macro fundamentals, for public debt to again start creeping up. So the right objective is to stabilize public debt and then bring it down. Now, the end state fiscal deficit for that, I would argue, is much lower than 4.5%. So eventually we have to go to a number much lower than 4.5 if you assume nominal GDP settles around 10 to bring debt to GDP down, which is the fiscal framework that the budget spoke about last year. The question really is the pace at which you get there. That's the only question really, that if we're starting at 4.9 and we eventually want to go to 4%, how should we stagger that? Now, there's a good case to say that maybe slow the pace, reduce the deficit, but slow the pace of consolidation so that fiscal tightening does not offset monetary easing. But as Shamaran said, it's a judgment call, because 20 basis points of fisc, how do you trade that off with the credibility and the risk premium that go down because of good fiscal marksmanship? And that's a judgment call that policymakers have to make.
You are in the camp of a 4.7?
Again, it's a judgment that has to be made about where will the global environment be next year. Remember, we also have, I know we're cutting it close, but Donald Trump takes office January 20th. Expect a raft of announcements right after that. The budget's February 1st. One can make judgments about how difficult the global environment gets. What does that mean for India? We hope to see some monetary easing. Will the economy recover over time? If there's a recovery, we'll get some tax buoyancy. What I will say is, if we are going to reduce the deficit, it should be a revenue-based consolidation, not an expenditure-based consolidation. That we should reduce the deficit based on revenues, not by cutting expenditure any further.
And let me get in 2 points here. The first is that look at what is happening to UK gilt yields. Look at what is happening to government bond yields across the world, and look at what has happened to our yields. They barely budged. So other than China and us, and Japan as well, most other yields have actually gone up.
UK specifically, it's growth is zero.
Yeah.
So, is it a slightly different situation as compared to...
But see, what I'm trying to point at is that the fact that our yields have not moved is something which is very positive. It's a big positive, and we have to appreciate that and not let go of that positive as we try to fight some other battles. The second thing we have to keep in mind is that as you rightly said, the fiscal deficit in the first 8 months being well below what is average for this period has been a headwind. But as the government tries to catch up on its spending, as we enter the new year, there will be a fiscal boost, meaning that all of this money, if it is spent, see, if the government is unable to spend what it has budgeted for, we will end up this year much below 4.9. If they're able to reach 4.9, will mean that there will be on this 4-month basis, there will actually be a significant fiscal stimulus. So to expect that you should let go of the 4.5% target for next year, when you're already going to have this stimulus next year, if you're not able to spend, then anyway, there's no consolidation next year.
Right.
And at some point, we'll get to the RBI and the credit growth as well. But let's not blame everything on the government fisc. How much space do you really have?
So if they say keep the fisc at 4.5%, with 4.5%, can they do within that 4.5% to stimulate the economy in some way? Or, you're actually, that's not going to happen. You're coming off, it's contractionary.
Macro theory says that an increase in fiscal deficit is a stimulus, a decline in fiscal deficit is a drag. So if you're bringing it down, you're theoretically,
taking away steroids.
Yeah, and the quality of spending is meaningful over a 2, 3, 4 year period. The multipliers come in. Because the first year, it's just the spending. And therefore, I don't think you can anyway do some magic and bring down the fiscal deficit ratio and still have a stimulus.
You can't rejig spending one way or the other in terms of priorities. Sajid, any?
We'll have to do that. 1 minute. We have to take a break. But that really is the big question. How do you rejig expenditure within it?
Spending
Will you do more
priorities.
revenue and less capex? That question is there. And there is the overall, to what extent is the ambience of pressure on the rupee and global headwinds going to impact budget making itself? All those key questions in a minute after this break.
Start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back to our first pre-budget town hall. We have with us Axis Bank's Neelkant Mishra, Samiran Chakrabarti of Citi, and Sajid Chinoy of JP Morgan, and we are discussing what should be the macro thrust of the budget. Okay, we will discuss the slowdown a little later because it's so all over the place that let's push the pessimism behind and see what can be done proactively. Okay, Neelkant, one of the problems appears to be the government has not succeeded in doing its capex budget. Sometime back, I remember you saying that it is not very easy to do expenditure.
Yep.
Maybe there is a bandwidth problem over there. They are just pushing the loans to the states and with conditions, and the states are not able to meet the conditions, so they are not spending. Should this whole, capex bogey be stopped for now, and you look at revenue expenditure in some ways?
No, so let's define the problem correctly. As per the Constitution of India, the central government can spend on national highways, railways, telecom, airports, national ports or the major ports. Major ports, airports don't need much capex. Telecom, once the BSNL 4G capex is done, is ruled out. So you are left with national highways and railways. How much capex can you do on that? In national highways, if you have 160,000 kilometers of national highways, if you are building 14 to 16,000 kilometers a year, once in 10 years you'll need to relay the road, so you can't do more. Railways can absorb more, should be doing more, and it is starting to grow, but you can't go from 1.5 lakh crores to 6 lakh crores in 3 years. So they've gone from 1.8 lakh crores to 2.5 lakh crores this year. Maybe they'll do 3 lakh crores and then 3.5 lakh crores next year. Where else will you spend the money? And which is why 2.1 lakh crores of this year's spending, so 1.5 lakh crores was the interest-free loans for capex to states, and about 64,000 crores is lying in the DEA budget, the Department of Economic Affairs budget. Some of it is that pre-commercial R&D, some of it is side pocket stuff, which is in case someone asks, we will give it to them. But this year, as people are struggling to spend what was given to them, that money may not be spent. So it tells you that there is a serious issue with how much the central government can spend by itself, and therefore, should it then plan different programs? And so policy making is about identifying problems and solving them. So is it that if urban infrastructure, where there is unlimited demand for infrastructure, should the government create programs and say that, okay, in the next 1 year, I'm going to allocate 2 lakh crores to, say, the top 50 cities, and these are the programs. And if that was to happen, I think the absorption will be much better. So it is about creating and designing those programs rather than just the scope to spend.
We can get onto a different conversation on this. I think fundamentally the central government made a mistake by taking away the shareable resources in the form of cess. If more was shared with the states, probably they would not have been in that position. But that's a separate debate to have. Samiran, even this year, if you looked at the expenses of the roads ministry, roads ministry could not spend its entire amount. What are your key takeaways from the current year's April-November budget numbers? This inability to spend, and therefore, what would you recommend?
I think I will agree with Neelkant that diversification of capex is the main theme that we have to work with. We can all discuss and debate what are the areas in which the diversification needs to happen. Let's say, for example, we are already seeing it in railways. If you look at the subcomponents of railways, the component which in FY25 itself saw the maximum jump is actually modernization of railways, which saw a 66% increase, not anymore laying tracks or electrification, which used to be dominating railway capex in the past. Similarly, Neelkant suggested one idea about urban development. For me, another idea could be to do a very large-scale social housing project in India, which has big forward and backward multipliers. So we can debate and discuss. There could be areas around water where public capex needs to come. But it's quite clear to us that roads and railways, and obviously defense also we count as part of capex. These three with more than 60% share cannot be driving this double-digit capex growth for very long.
But any thoughts on why? I mean, roads was a ministry which spent very well up until last year. What could have gone wrong this time that it is less than last year, April, November?
Sometimes it could be a bit of lead lag things also, because I don't think at least the highway data is showing any decline in actual real highway activity.
Maybe elections, maybe?
Yeah, but election, you could justify it for the first couple of quarters. But this continuing even in the October-December quarter is a bit of a mystery. But it could be a lead lag between the work happening, but the payment getting a bit delayed. We know that the payments can happen in a bunch also at one point of time. So we are still expecting that in the last 4 months there will be a significant increase in public capex, despite the full year number being maybe 1 trillion lower than what the budgeted is. We could still get a good 30% plus growth in the last quarter if those bunched up payments get cleared in that quarter.
Sajid, just your thoughts on what?
No, I think let's step back and look at the bigger picture, because before the pandemic, central capex to GDP was 1.7% of GDP. Nice. In 4 years, it's doubled to 3.2% of GDP. This year, we're targeting 3.4%. At some point, you can double fiscal resources, but doubling state capacity and absorptive capacity is a multi-year project. So you're going to have to face this point that at some point you're going to hit this constraint. Now, this year, I think there is an identification problem. How much of this is because of election? We saw in November, for example, capex has grown 20% year on year. So will the next few months make up for that? Or are we now hitting some absorptive capacity? Because it's not just at the center. There's so much focus on the center. Look at the states. And the states, I would argue, the problem's a little bit more pernicious, because if you look at the first 6-7 months of this year, the quality of spending has worsened because you've seen revenue expenditures and subsidies go up, but capex has come down. So I think it's important first for us to stabilize and consolidate where we are. We went as a country from 1.7 to 3.2. States last year went from 2.4 to 2.9. We don't want to erode this gain. So even in next year's budget, if we can just consolidate capex at a 3.2, 3.3% number for the next 3 years at that higher level, and while we're doing that, build state capacity, as Neelkant and Sabrina were saying, where are the areas we can spend? What is the public-private partnership that's involved? What is the state capacity requirements? That's the nuts and bolts of what needs to be done. But we have to be realistic here, that you can't be doubling capacity every 4 to 5 years from a state perspective.
So do you think, Neelkant, therefore, the big, one big